And speaking of that deal bloom, ITV very much in focus on this side of the Atlantic. Their Sky unit in talks to, Comcast Sky unit in talks to acquire ITV. So that's going to be one that we're going to keep a close eye on as well. And then IAG, we're going to see if the market in North America is actually weak. That's some of the commentary that's coming out of the airline. So we will see how it's received at the open, Guy.
Okay, talking of that open, here we go. It is time for the final session of the busy week. Let's take a look at the numbers that we are going to see being delivered. The FTSE 100 is expected to be fairly flat this morning. It's interesting to see how the pound will trade around the next few weeks and whether that will have an impact on the FTSE as well. Anyway, we're a little flat this morning. ITV could be a stock that stands out of the UK this morning. There's a few others. It's been a big week for the pharma space. So that's all we've got right now. There we go. Stock 600 basically pricing off a little bit of that as well. Wait and see what the CAC does this morning. We'll see what the IBEX, there's the IBEX up by 0.3%. I suspect we're going to have to wait a moment for the DAX this morning. There's a few things that need to be priced in there. There's some interesting stories floating around as well when it comes to what is going on in the chip space. The CAC 40 is up by 0.3%, Critty.
It is. I'm going to make an early bet here. I feel like the DAX is going to open higher because when you look at some of these individual movers, a good chunk of what you're seeing in the movers to the upside are actually German names. Siemens, SAP, for example, are all moving this market higher. I mean, even look at Commerzbank, but some of that might actually be this idea of yesterday's underperformers are this morning's outperformers. We do know the German index took quite a hit in yesterday's session. Let's talk about Novo Nordisk here. Those shares right out of the gates down about 1.5% and taking with it down the entire health complex. You can see it on your screen here. Green on the screen, except for in the healthcare space, Guy.
So it's interesting. So basically, the market is now increasingly worried, I think, about the possibility of A, overpaying, and B, this company getting tied up with a lot of regulation over in the United States as the FTC does take a look at this. I know that Mike was talking about this idea that actually this has nothing to do with the FTC. It's basically to do with the price that shareholders should be willing to take from either them or from Pfizer. But the FTC is going to have a look at it. So this is an interesting trade from a shareholder point of view. This is a company, Metsera, that's got circa 100 employees. It's got a pipeline, but it doesn't have products at the moment. It's a big bet. Don't overpay for it, maybe is the message coming out of the stock price this morning. It's
a fascinating story because Pfizer is on the one hand making kind of an Americana, basically, argument here. But on the other hand, they're talking about antitrust, which, again, under this administration, we've seen that in the deal boom on both sides of the Atlantic. I'm not sure how much weight that carries, but certainly something that's getting punishing the stock. What's interesting to me is that it's dragging down the entire index. So AstraZeneca is down about 0.6% as well. Roche is down. Sanofi is down. Any healthcare stock, at least in my view right now, is down. But the rest of the market is higher. Is this just kind of autopilot going into the weekend?
Well, it's some of the stuff that's been beaten up is coming back a little bit. So Siemens is up, SAP's up, ASML is tracking a little bit higher. So that tech weakness we saw this time yesterday is being a little reversed, maybe because you're starting to see a little at the margin traction over in the United States. The NASDAQ is pointing to a better start. So maybe we're just front running. Maybe a little bit of that.
Maybe just a little bit. Let's get an expert opinion here. Julius Bendikas, European Head of Economics and Dynamic Asset Allocation over at Mercer, joins us around the table. I love that dynamic is in your job title. It's like if it's not dynamic, you're not associated with it, clearly. Walk us through what you think of these markets. We have a 3% drop in the S&P 500 from its last peak. A lot of this is tech-driven. Does the selling stop now, or is there more to come?
Well, the market is certainly looking for plan B in terms of data, because plan A is not being published. So it has been a little bit gappy. And this week is an example of that. ISM through the market one way, Challenger Jobs through the market the other way. So we're in this kind of environment, and until we get more data, more clarity, I suspect the market will be behaving a little bit like this. Now, I think overall, the pullback in equity prices and the S&P is just a healthy reminder that equities can't keep popping forever. And they're risk assets, and they tend to get overbought at certain points, then tend to get oversold. And I think that's all it is.
Can't remember oversold. Feels like a long time ago. Overbought, so are we overbought? I don't know. That's the question.
Well, technically, in some market segments, we could be overbought. Some investor types are maybe a little bit too overweight. But broadly, I don't think we're in a position when everyone is long and they're struggling to find reasons to be pessimistic. I don't think we're there just yet.
But you mentioned the data earlier this week. We keep waking up every morning and we feel like tech is driving the story, not so much the data. So the challenger data, which has never been tradable before, is that tradable now? Is that what we're going for? That every alternative piece of data is now tradable?
I guess the market is attaching itself to what it can attach. And the secondary data appears to be the play right now. Historically, it hasn't been a big driver. This week, it has been a big driver. Now, we're not spoiled for breath these days in terms of data, so we look what we can. We engineer the data that we can. So our very skilled analysts at Mercer have been looking at the jobless claims from the state data, and they tell us that it's sort of challenger data is not really backed up by the jobless claims. So I would say it's an overreaction to that one data point, and look for more for a firm thesis to be constructed.
What would it take to get this market to go significantly lower, though, equities? Because of what I'm hearing from a lot of people, probably including you, is that the belief is still that actually there is still more to come, that equities can go higher from here. It's going to be difficult, but it can go higher from here. Why do you not believe that this is the moment when people say, you know what, actually, I've had a great run, I'm going to lock in some of my gains, I'm going to take some profit here, and then it starts to snowball a little bit? Why is now not the moment for that to happen?
Well, let me tell you what keeps me awake at night as far as the key risks.
Okay, you look pretty fresh this morning.
Well, thank you. So it would be a very hawkish Fed that would throw the markets probably lower via higher discount rates, and that would probably come as a function of high inflation prints. So that's one thing. I think one risk. Hawkish Fed and weak earnings. If you see weakness in earnings, I would say that'd be sufficient reason for markets to pull back. I don't see any.
Okay, let's throw a couple of things in that I think are relevant right now. IAG, owner of British Airways, has just opened. The stock has gapped sharply lower. The stock is down by nearly 10% this morning. It's down over a 2-day basis because we had Air France yesterday, down by a lot as well. 2-day basis is down by nearly 12%. So IAG is dropping really fast. The reason for that appears to be they're talking about softness in North America. Okay, so let's just talk about the North American market and try and figure out what is happening here. There was a great piece yesterday on the Bloomberg talking about it being a kind of Jenga economy. The upper echelons are being held up at the moment by the stock market, and spending is driving it. I think you've got 50% of the spending being driven by the top 10% of spending. And that's the kind of this Jenga economy. If we start to see weakness kind of further down, people sort of taking bits out of the Jenga pile as it gets higher and higher, if the stock market shows any weakness, is there a danger that US consumers, the upper end consumer, pulls back and this thing really starts to wobble?
It's possible, but propensity to immediately consume from a pocket of 10% in equities or a pullback in 10% in equities by the upper income quartile, I think is still fairly low. And I think it's a very resilient segment, and it's really hard to beat down. You need to have a very, very meaningful pullback in equity prices for that to hurt. And even then...
But does it become self-fulfilling at that point? Does it become... if you get a drop in equities, that cohort stops spending, and that's the final piece in the puzzle for the US economy that would kind of pull the rug under from that economy, which still looks fairly stable, still looks fairly good, but is being supported by that one group of of economic spenders.
I think there's some impact, but not enough. I think if equities pull back 20, 30%, I guess the very rich will still spend. And that is something that has always been the case as a bit of a backup to the US economic narrative. So I think it's still hard to bet against the US economy, even though it's fairly concentrated wealth-wise and spending-wise.
But to your point, you use the word overreaction in when talking about some of the alternative sources of data, including the challenger data, which to your point doesn't usually traditionally track always the labor market. In fact, kind of rarely, to be completely honest. But are we seeing this market because of those jitters, because of we're kind of waiting for the bubble to pop, as Guy was talking about? Are we seeing this market trade, or I should say treat, the U.S. economy, a slowdown in the U.S. economy, the same as a recession in the U.S. economy? Are those two trades starting to look more alike?
At this stage, I would say no. I would say if the market expected a recession, S&P would probably gap lower, yields would gap lower, dollar would gap lower, and the Fed pricing would be aggressive if there's a recession trade. If there's a cooling trade from 2 to 1%, I think equities just keep doing what they're doing.
That's what's happening right now. We're in the cooling trade.
I would say we were in a cooling trade, and now actually some of the data, if you look at the ISM survey, and labor market is one thing, but if you look at the high-level growth indicators, to the extent that we have them, economy is actually looking more resilient than before.
Is that because of the AI trade? Like, how much of this is down to the AI trade? And do you believe that all this spending that is being promised is actually going to be delivered upon?
Well, there's two questions embedded in that. CapEx is good for GDP right now.
Yes.
That's supporting activity. So that's what's helping growth. Now, is it going to deliver? That's another question. That's a question for equity market. And I think that's a question for 2026, 2027, whether we actually see the positive impact on EPS and productivity as a result of that. But for the time being, it's spend that is good for GDP.
Such a confusing economy, though, isn't it?
You mentioned CapEx is good for GDP, but CapEx ultimately has a lower fiscal multiplier and economic effect relative to R&D or innovation or some of the growth kind of investments that you can make. So if Apple, hypothetically, invests in, I'm just doing this for our global audience, invests in a factory in Phoenix, hypothetically, versus increasing in their R&D, the R&D, economically speaking, has a higher impact on GDP than the factory in Phoenix. So are you telling me that the increase in the CapEx, although it's being interpreted as good for the GDP right now, it is ultimately having a limited effect? I mean, isn't that what we've learned from the German economic story, that CapEx and industrial focus has a limited multiplying effect?
I guess it depends to what extent you think that actually boosts trend growth rate. So if you just build a bunch of factories that don't actually lift productivity in any shape or form, well, then it's more of a cyclical impact on GDP, and it's more of a 2026 story. But if it's all linked to R&D and creating new tech, and that's something that boosts long-term productivity, then great, you have a stronger trend GDP growth, and that will sort of give dividends over years to come. So there's a big nuance in this. I think at this stage is a little bit of both. You see, right now, GDP prints are benefiting from higher I in the GDP.
Yeah.
But equally, you see a bit of a productivity gains that could be the trend growth rate improving.
It's a very bullish take.
It is, but at the moment, you're not seeing... It's so hard to figure out what is happening in the US economy right now. You've got this K-shaped economy. You've got clear weakness at the bottom cohort and in the middle as well. You've got an AI trade that is ongoing, that is, A, supporting the stock market, which is supporting the upper end, but also potentially supporting the GDP story on the build-out. It doesn't fit together, and I'm wondering kind of at what point the fissures between these kind of areas start to become obvious. It's not obvious yet, but we're going to wait and see and figure out exactly what is going to happen. But maybe that is a 26 story. Julius, great to see you. Thanks for stopping by to see us. Julius Bendikas, European Head of Economics and Dynamic Asset Allocation over at Mercer. Quick look at what we're seeing in stock markets this morning. Bit of a reversal on what we got yesterday. You are seeing more of a trade coming back into some of the chip stocks. ASML is up. You've got Schneider rallying as well. Novo soft. It's raising its bid for Metsera once again. Little softness in Nestle as well. But let's go back to that Novo story and figure out what Chloe Melly makes of it.
This morning after it raised its bid for Metsera, for the obesity startup Metsera. So the shares had actually gone up when the offer was announced. But now it seems, as Guy was mentioning earlier, that there is some concern around potentially overpaying and also antitrust regulatory hurdles concerns arising now that it is upgrading this bid and that this takeover battle continues with Pfizer. So we have a little bit of weakness there, and shares are down 2.3% for Novo Nordisk. We have a very different market reaction to another M&A story story this morning, and ITV is up almost 17% after confirming that it is in talks with Sky to sell its media and entertainment unit for an enterprise value of £1.6 billion, and that seems to be received really well by the market. ITV will be left with only its studios division if that deal goes through, and that seems to be something that investors are quite happy to see happening. Moving on to Euronext, and the exchange operator is up this morning. It announced yesterday that it was launching a €250 million buyback. It also reported profit that came in ahead of estimates. The CEO mentioned the IPO pipeline was quite strong in Europe, and that is being rewarded this morning with shares up 2.3% for Euronext. IAG is a very different story. We are down massively. We're down 7.5% this morning. Apparently, people are not traveling between the US and Europe as much as they did, and that North Atlantic route, which is really important for IAG, has seen some weakness, and that led to the revenue missing estimates.
All right, Chloe Melly from our equities team walking us through some of those early movers. We thank you so much. Coming up, Chloe hit the IAG numbers. We're going to dive into a little bit more of the details as those shares continue to sink. The British Airways parent company missing third quarter revenue estimates. Does it stick? What are they responding to? What can we glean from it from an economic point of view? That conversation next. This is Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Versace in Tehran, and this is Bloomberg.
Welcome back. 17 minutes into the session. Equities up a little bit. We're not up a lot. You've got to look at the one-week chart, I suspect, in terms of getting a real story, in terms of the context of what is happening with this. But I think it's been a week of single stocks. It's been a week in some ways of corporate earnings and some real divergence. It's been a huge week for Novo Nordisk. Remember, so yesterday, Mike Dustar was at the White House. He's doing a deal there on pricing. He's got Medicaid access. He's doing a deal with Trump. Trump's in the room. This is the meeting we've all been waiting for. But while he was there, Trump's also asking him about this bid for Metsera, which, remember, we've now got a bidding war with Pfizer for this US company. And Mike Dustar's basically, it's about the price. That is what is going to drive this narrative. Listen to what he had to say.
As of today, our bid is higher. And our message to Pfizer is that if they would like to buy the company, then put your hand in the pocket and bid higher. It's a free market, and at the end of it, it has to do with basically the price that the seller is selling for their shareholders and the buyers willing to pay for it.
So Pfizer's been pushing this line that we're the American company. We should be buying this asset. They've been trying to get Trump's ear. They've been trying to get RFK's ear. That's been the line. We're the American company. So that's what Paul has been pushing. Mike's there kind of pushing back on that really, really hard. And actually, that was the line that really stood out of my conversation with him when I went to Copenhagen. What was it? Wednesday. This was him talking about the fact that he sees Novo as an American business.
We are more American than many companies that were born in USA. And the reason I say that is that long before many American companies started to think of developing and producing their raw ingredient in US, we were there doing that. We export more from our US site externally than we import to US.
Okay. Let's talk about this. Bloomberg's Ashley Furlong joining us around the table. It says we want to start on the kind of the Trump deal on pricing, but can I just start on the Metsera deal and its relationship to being American and then back to that kind of pricing deal? Because it all kind of came together yesterday in this amazing sort of cocktail at the White House. Where's the danger for Mike as he goes to the States, says I'm American, tries to bid for Metsera, tries to push the price higher and higher? Are shareholders starting to get nervous?
Shareholders are nervous. We can see the stocks down. The ADRs last night, when the announcement came out, went down. Everyone's kind of saying, are you overpaying for Metsera? This makes a lot of sense for Pfizer. Pfizer has to get into this space. Novo has a pipeline. Novo has obesity drugs already. The question that shareholders are asking is, why are you so desperate for this?
What does it say about your pipeline?
Exactly. That's the big question, and that's what there's a lot of uncertainty about. Is why is Novo so desperate for this deal? And potentially, are they overpaying? We're now looking at over $10 billion. That's a very expensive price for mid-stage a drug that's still in mid-stage trials.
They've got 100 people working at this company, just circa 100 people. It's a small company that we're bidding for here.
I wonder if those 100 people get a piece of the pie.
Sure.
Talk to us a little bit about, though, I mean, Pfizer, in addition to making the argument they're American and they can scale this and they need this, they're also making the argument that this is, on Novo's part, an antitrust conversation. Is it?
There's uncertainty around that. So by the time this drug actually comes to market, there's going to be a lot of other, competitive drugs. So that's what the Novo sort of, if you're backing Novo, that's your stance. Pfizer's trying to take this to the courts. That hasn't worked so far. The assumption is that in the next couple of days, this bidding war is going to be over. And obviously, Pfizer's not just doing the, taking to the courts. They're also saying we're also increasing our price. Novo's now saying that they've gone, over the latest bid, which we know was around $10 billion. When is this bidding war going to end, and what is the final price for Metsera going to be? That's the big question.
How important was the deal done on pricing in the White House yesterday for Novo?
So analysts are saying that it's potentially not that great for Novo. So this obviously gives them access to a very big market. These are, older people in the US who didn't have access to obesity drugs for obesity. They might have had access to them for, type 2 diabetes. So that's a very big market, but it's at a lower price point. So, and
the rebates were already big, weren't they?
Exactly. And Novo's saying, that this is going to impact next year, and there's uncertainty what this means for the longer term. The other thing that, potential positive is that both Novo and Lilly were given these, priority review vouchers, and that allows them to sort of speed up approval or the regulatory process for a drug. And so for Lilly, that is for their obesity pill coming next year. That's great news for them. For Novo, it's for also an injectable, a higher dose of Wegovy. So, and there's less certainty around how much that's going to help. That's coming to market sooner. So ultimately, this doesn't look like the greatest deal for Novo. And on top of the broader sort of sentiment about buying this new company, investors are not that happy. Let's just say.
All right, Bloomberg's Ashley Furlong, we thank you so much walking us through the dynamics of this deal. I'm sure she'll be back soon to give us another update. Let's go to another company we've got our eye on. British Airways owner IAG reporting a third quarter revenue that missed the average analyst estimate this morning while citing weakness in its transatlantic route. Joining us now is Benedict Campbell, Bloomberg's global aviation editor. Benny, just walk us through these numbers here. How dire is the weakness in North America?
Well, I think what really spooked people is the comments on the North Atlantic, and that is a route that is not to be underestimated for IAG. They get about a third of their capacity from that market, so any weakness in that market will really hit through to the sentiment, to the bottom line, and that's why we're seeing the stock down quite a bit today. This has not been a great week for airlines. It's sort of similar to what we had with Air France yesterday, also a pretty epic stock drop. Obviously, we have the issue in the US that are going on with the capacity constraints. So it's been a tough week, and IAG sort of is somewhat of a bookend to that. The numbers fundamentally not that bad. They were slightly shy on the revenue side. They were sort of in line on the operating profit side. But all it really takes is one comment that is badly received, and in this case, it's the comment on softness in the US market, or the transatlantic market, I should say, and that's really what's spooking investors.
In theory, they're not going to be affected by what is happening with the shutdown and the capacity restrictions we're seeing in the United States. They've said, the US authorities, that this is not going to affect international, but there must be some bleed across. So I'm interested in that as well, Benny. In terms of what we are seeing in the States, I'm looking at a shot of Philadelphia. I think I just saw one aircraft moving around, but maybe we're going to see fewer today. Just give us an update on cancellations.
So on your IAG point, yes, they won't be affected because international routes will still be happening. But aviation and air travel is always about sentiment, and if people feel unsure about their trips, and they might cancel. So that's something that will hit through to airlines everywhere. In the US, we are seeing sort of a cascading slowdown. Then they want to reach a 10% reduction in capacity in the next couple of days, but they're not going to do it in one fell swoop. So they're starting with 4% today, and then sort of gradually increase that over the weekend. A lot of the airlines have already taken some capacity out of the market. But to give you a little bit of perspective, we're talking about 25,000 movements a day here, and of that, give or take about 500 will be cancelled. So it's a manageable amount. Think sort of a winter storm or a disruption that you might have because of some outage. And airlines are generally fairly nimble and accustomed to this. So there will be annoyed people on the ground, yes, for sure. There will be disruptions, but it's not going to be, I would suggest, the epic breakdown. It might get worse going forward, but for now, it's probably a manageable situation.
Thanksgiving is not very far away. Benny, great stuff. Thank you very much indeed. Bloomberg's Benedict Campbell on what we're seeing this morning with IAG on a two-day basis. Take a look at IAG on a two-day basis, down and down hard. What are we going to talk about next? I got my coffee here. We're going to talk about coffee next. We're going to talk about chocolate. We're going to talk about soybeans as well. All of these things getting caught up in the trade story. The soybean story, absolutely caught up in that. Anyway, we're going to focus on what is happening with the ags next. We're back to the commodity trade. Tracy Allen, agricultural commodities strategist, joining us from JP Morgan next. This is Bloomberg.
it's maybe first country inspired to me to how can I use the different ingredients. First time I went to Peru, trying to culture food. I never had this ingredients never used in Japan. Kind of like a wow, you know, and cilantros, chili, garlic, and olive oils. It's a lot of good seafoods. Complete a different way. Example, they have the fresh fish, but Japan the fresh fish uses sashimi, but Peru use fresh fish make the called ceviche, cooked with the lemon juice. You never use the soy sauce. First time I eat this, kind of the, wow. So then after this one, my open eye more, my cooking style that change, combined to Japanese style and another country food, then make novel style.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
We're coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Welcome back to the opening trade. 30 minutes into today's session, seeing a little bit of a mixed index picture. Not a ton of action in either direction. It just feels like what we saw moving higher or lower earlier in the week has just rotated in the other direction in today's session. I do want to bring your attention to the FTSE 100, though, down about 0.2%. From a sectoral perspective, feel like healthcare is taking the hit. And, Guy, maybe that's what's showing up on the index level.
Absolutely. I'll show you that in just a moment. Let's talk about the market internals first of all. Higher 336, lower 239. I guess a reasonably balanced market. In terms of the average volume, we're pretty much on the average. So actually, in some ways, not much to see here in terms of the internals. Single stocks, though, are really where the narrative is in terms of what we're seeing. As Critty says, what was down yesterday, maybe up a little bit today. ASML is up. SAP is up. LVMH is up. Heavyweights that are driving this market this morning. Just a little bit of an upside in these stocks has quite a big impact in terms of the numbers you've seen at the top line at the index level. However, as Critty also mentions, there's some big downside moves into big stocks as well. So you've got Novo tracking softer this morning. We've just been talking about that with Ashley Furlong on why shareholders are getting a little bit nervous about the deal that was done in the White House yesterday, plus also what is happening with that Sarah. That stock is down by 2.23% in a week that it reported numbers. Rightmove. If you want some dismal news coming out of the UK housing market ahead of the budget, take a look at Rightmove's outlook for 2026. That stock is down by 18, nearly 19% this morning. And AstraZeneca, probably should have been over there, but AstraZeneca is down by 0.6%. Two big pharma giants this morning down, and that is certainly weighing on this market, Critty.
Lots to digest. We'll see if it sticks into Monday's session. In the meantime, a couple other things you need to know this morning. Let's kick it off with Tesla. Shareholders have approved, get this, a $1 trillion compensation package for CEO Elon Musk. More than 75% of the votes cast were in favor of the unprecedented pay plan. The outcome clears a path for Musk to become the world's first ever trillionaire and expand his stake in Tesla to a quarter of the company or more over the next decade. And in a Bloomberg scoop, we've learned that the Dutch government is prepared to suspend a so-called ministerial order that gave it control over Chinese-owned chipmaker Nexperia. The move would de-escalate a fight with Beijing that threatens to disrupt automotive production around the world. Sources say the suspension would be on the condition that China allows exports of its critical chips once again. And sticking with the geopolitics, U.S. President Donald Trump says he'll look to diversify critical mineral purchases as the U.S. seeks to address China's dominance when it comes to rare earths that are critical to advanced technology manufacturing. Now, Trump made the comments during a summit at the White House with leaders of several Central Asian nations. Guy?
Okay, let's carry on the conversation around what is happening with the agricultural space and the commodity space. The U.S. President, Donald Trump, telling reporters how his deal with China is impacting U.S. farmers and American soybean exports.
If you look at China, and I covered this yesterday, but if you look at China, by putting a large 100% tariff over and above the tariffs they already paid, they came to the table, they talked, we made a wonderful deal for everybody. Our farmers, as you know, with the soybeans at levels that nobody's ever seen before, we were able to make phenomenal deals. If we didn't have the tariffs, we wouldn't have been able to do this.
U.S. President Donald Trump there speaking about that relationship and, of course, the soybean story. I just want to show you what the soybean futures have been doing so far. I've got to say, this is a weird Friday conversation, but I promise it's relevant because you are seeing a decline of almost 4% in just 2 days. Let's get a little bit more insight this morning. Joining us now is Tracy Allen, agricultural commodities strategist over at J.P. Morgan. Tracy, a pleasure to have you on the program. Thank you so much for joining us. We know soybeans has been on top of mind for the Trump administration, certainly for Scott Bessent, who claims he's a soybean farmer himself as well. And this was such a key pillar of the first trade agreement under Donald Trump's first term. Just walk us through the state of play here. Should we be expecting more soybean purchases from China into the United States?
Thanks, Critic. Really good to be here. I think, once again, agricultural commodities are at the forefront of the headlines around these trade discussions and being used as fodder more often than not, rather than actual, physical, tangible trade flows. And we're certainly not seeing that emanate just yet. One of the challenges with agricultural purchases is that they're very seasonal in nature. Price seasonality will really dictate where the leading buyers like China, who are immensely price, competitive and sensitive, will be purchasing their products from across soybeans, across the raft of the other agricultural products that they are consuming and importing. And so with respect to the state of play, we've now seen tariff levels, at least with respect to China's retaliatory tariffs on US products, move back to levels of earlier this year and back to the phase one kind of levels. And so, look, when the US products are competitive in the world market, which they're not at the moment, we do expect to see China re-enter the market for US origination of those products. But, right now it's very, very tricky to see how private buyers in China will, purchase the substantial tranches that have been committed by the US administration, just because we're in a phase where, of course, for soybeans at least, the Brazilian origin is the most competitive. China has bought, however, some cargoes of US wheat out of the Pacific Northwest, a little bit of sorghum as well. And so these markets are a bit more competitive on the world stage at the moment. So look, watch and see, but investors have definitely been driven back to the agri-commodity complex.
Well, Tracy, talk to us about the other sources of some of those purchases. We know this has been a sticking point between the United States and Brazil, the United States and some of the other countries that are actually partnering with China to get their purchases. Just walk us through the pain points in that relationship. Are all of American soybean purchases now happening out of Brazil?
It's not necessarily the way I'd characterize things, Critty. I mean, these are global commoditized markets. And so what we do see, particularly in the case of China, is that they do have diversification amongst their import origins. And let's not forget that China has, to your point, on this looking at the supply chain, really built an entrenched supply chain there, a reliable supply chain with Brazil, of course, particularly since Trade War 1.0. And there has been increasing export market share allocated to Brazil. And sometimes that's also been just because Brazilian origin products have been more competitive. And that is leading to a situation where the US really is supplying the rest of the world, which is still a considerable market share. But it's just been very difficult to offset the loss of, say, China's purchases, which last year were around 22 to 24 million tons. Going into the next marketing year, of course, we've heard from the administration that, particularly Secretary Bessent, that we're, looking for about, 24 million, 25 million at minimum tons of US soybeans to be moving into the Chinese market, Guy.
Tracy, is that a US farmer's going to plant different things? What
I think
do
that's
they do
a really
next year
important point.
in terms of? That's what, if I was a farmer looking at this and I'd be looking at what is going to be happening next year, I'd be rethinking maybe what I'm going to put in the fields.
And absolutely, and we'll see that reflected. We've seen that reflected in agri prices. That's why we've seen the BCom index start to recover this year very substantially over the last month, led by higher grain prices. Of course, there was a mass exodus of investors from the complex late last year and through much of 2025 to date. We have seen the likes of the corn market, the wheat market rally, because to your point, this increased flow of soybeans is driving US acreage shifts back towards soybeans, and somewhat of a normalization of that situation on the ground in the US.
What's happening with input costs? I'm looking at the relationship maybe between what is happening with oil prices and commodities, obviously fertilizer, feedstock, gas there. But farmers, they make money not on what they sell, not on only what they sell, but also their input costs into the farms. What's happening on that front at the moment? And is that price side getting better? The margin game is incredible.
I would like to say it is getting better. It's not necessarily the case. Fertilizer prices still are not yet below 5-year average levels. That is the main, of course, input cost on the ground. And then let's also consider all the labour costs before we even think about having the capital to renew your machinery and invest in that space. So this is one of the main challenges and why I do hold a more constructive view moving into 2026, particularly if China returns to US agricultural purchases, because farmer margins are so low. It's going to weigh, I think it already has done, weigh on US yield potential and therefore moving into 2026 as well. Not a lot of relief for the US farmer or farmers in aggregate for that matter.
Okay, so Tracy, what does that tell me about inflation? What does that tell me about food prices? What does that tell me about what I'm going to be looking at next year at the grocery store?
You know, we have, I think, the FAO food price index coming out reasonably imminently this morning, and we have seen that tick up through the course of this year. A lot of that has been led by meat products and particularly beef. Important to note with respect to that inflationary cycle, here in the UK, in the US, throughout the world, beef prices are at historical highs and the herds are in rebuilding mode. So we don't see a lot of relief for the consumer on that part. I do think that there is scope for some of the other sectors. Veg oil prices have shifted lower in the short term. So perhaps some softer food-based inflationary pressures to end this year, but remaining at elevated levels going through much of next year. Just as, again, this margin problem is really serious. Farmers need to be rewarded to invest in everything from their livestock to their crops. And this is something that I think is going to keep food prices at least sticky and high, feeding into that inflationary story.
That's something we all need to pay attention to. Tracy, great stuff. Thank you very much indeed for joining us. Tracy Allen, agricultural commodity strategist, joining us from JP Morgan. Up next, we're going to be joined by Leslie Mapondera, Apollo's co-head of European Credit. We're going to talk about the clean energy and infrastructure investment that they are making. All of this obviously critical and related to what we're seeing in AI. That conversation is next. This is Bloomberg.
Such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies. which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety, and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome back to the opening trade. About 44 minutes, we'll call it, into today's session on this Friday. I've got to say, there isn't much action when you look at the index picture, unfortunately. The kind of Debbie Downer of the group is the FTSE 100, down about 0.3%. Some of that weakness feels like it's a healthcare story. Some of that may be bleeding over from Novo Nordisk as well. But nevertheless, you are seeing a little bit of red and green on the screen. It's been a volatile week, and I think that's being reflected in the Friday energy of this European stock market, which gives us a lovely opportunity to talk about the private credit space. Europe's investment landscape offering few direct AI plays, yet still establishing leaders when it comes to energy and infrastructure sectors critical for AI's foundation. We've also had some deal news on that front as well come out this week. We've got the perfect guest to talk about it. Leslie Mapandera, co-head of European Credit over at Apollo, joins us around the table. Thank you for your time this morning. We really appreciate it. We are kind of drinking out of a fire hose when it comes to the news this week, especially when it comes to the deal flow. So I want to start there. Apollo partnering with Ørsted this week. Just walk us through the dynamics of this. Is this part of Apollo's larger infrastructure strategy, and why Ørsted?
So we are extremely proud to be partnered with Ørsted on what we think is an extraordinarily exciting project. We're partnered on Hornsea 3, partnered with the world's largest developer of offshore wind on the world's largest offshore wind project. Us providing strategic capital to Ørsted, using our long-term flexible balance sheets, using a very innovative structure in order to finance the transaction. It puts us right where we want to be, at the heart of financing the European industrial renaissance, in a project that is strategically important for the UK. The power, it's 3 gigawatts, the equivalent power for sort of 3 million homes in the UK. So it really is something that is strategic for us, strategic for Ørsted, and is right at the heart of the strategy that we are trying to pursue. As you know, this year we have done transactions with RWE, with BP, with EDF, all around this space of the energy transition and energy security. And this is really what we'd like to spend our time doing.
Well, Apollo's strategy has been really a standout strategy. When you can look at it relatively to your peers, I would argue that your likes of KKR and some of the other heavyweights are doing this well in terms of scooping up kind of these energy infrastructure, sovereign financing deals, that where the governments can't step in, some of the private players do. What's the hurdle to that? Where do you feel like you need maybe a little bit more support from the government players, a little bit more regional bias? Just walk us through your thinking as you move forward on that strategy.
Yeah. So for us, I think the real opportunity is to find partners, generally large corporates, generally investment grade, with whom we can partner in really high quality assets. And it's really about the quality of the underlying assets that we're investing in. If you think about what we've done with Hornsea, as I said, it really is an outstanding project in terms of its contribution. If you think about what we did with EDF, we're really facilitating the financing of Hinkley Point, another 3 gigawatt energy project, nuclear in the UK, strategically, nationally important. If you think about what we've done with RWE, we're financing the German grid. grid integrity and grid expansion key to what happens with AI, key to what happens, broadly speaking, with the energy transition. So I think it's less for us about finding necessarily areas where we are looking for government support, but really working with large corporates to help meet their objectives using the balance sheets that we have very aligned with the corporate objectives.
A few years ago, we'd have said we'd have bigged up the sustainability of this transaction. It's a sustainable deal. It's part of the green revolution that we're talking about. Now it feels like it's just, we need every electron we can get. Is that the trade now? We're almost agnostic. We just need every electron that we can possibly find in Europe to be able to deliver the AI trade, to be able to deliver kind of the industrial policy that's being pushed through. Has the narrative changed?
So I think the narrative today is somewhat more realistic, i.e. we need to have an energy mix. It's not just renewables, but we do also need to have baseload power, and so gas has a role. So there are a range of generation of resources that we need in order to be able to meet the energy demand. Now, if you believe the story of where AI is going, there is going to be an increase in energy demand, and that's something that needs to be met.
How big do you think that's going to be? Like, is that the underpinnings now of the electricity market? We've got the traditional kind of energy market. We all like to keep the lights on and boil a kettle, but we now need to drive the AI trade as well. Should we expect higher energy prices as a result of that? Can we build enough capacity to keep them where they need to be?
So I think the core here is we certainly need to have the infrastructure that's required in order to meet the base demand as the economy grows. And yes, there is some likelihood that there'll be additional pressure to build additional infrastructure as the AI infrastructure comes online and data centers come online. And so, yes, there probably is going to be a demand for additional power. But I think that the core idea here is to ensure that you have the right mix beyond simply saying it's renewables or indeed it's traditional. You need to have the mix. And that's reflected in what we've been investing in as much as we did an investment in gas infrastructure in the Southern Gas Corridor early in the year, and we're doing a renewables deal now. We've done a little bit of nuclear, and we've done some grid integrity in between.
Ourselves out.
Leslie, let's broaden the picture, if we can, just a little bit, because all baked into the energy trade and the AI trade is a little big question about just how much of this kind of big boom is being financed by private credit. In the last couple of weeks, we've had a lot of worries about that. The likes of Jamie Dimon ringing the alarms past after some collapses that we saw over in the States. The word cockroaches was used a couple of times. Walk us through how you're thinking about this market. Is private credit growing fast enough to alleviate some of the ones that aren't such good eggs?
There are always going to be good investments and bad investments. The key is the approach that you take. On our part, it's all about the quality of our fundamental underwriting. And so we spend a lot of time thinking through ensuring that we have a deep understanding of the industries that we're investing in, having real experts spend time in those sectors, consistently investing in that area, and then ensuring that we are delivering aligned capital to those opportunities. And so one of the things that I think really differentiates us is we're investing on the part of all of our limited partners, as well as on behalf of our own balance sheets. And so the quality of underwriting is really what determines the quality of those outcomes.
We've seen a couple of banks report that have actually looked at those, the collapse of Tricolor and First Brands, and talked about them as impairment charges. And it's starting to feel like we're getting a little bit reticent, at least when it comes to the banks and their exposure to the private credit markets, as opposed to kind of a more private market focused player like Apollo, for example, where they're starting to look at some of these things like, maybe we don't want to get involved in this. Maybe we don't want to work on some of these hybrid deals that we're working with. Are you seeing a sentiment shift between some of the partnerships, not just in the private capital space, but the ones that are the deals where you are partnering with some of the bigger banks that have to be thinking about more than just private markets?
I think we have found incredible support from the banks in a lot of what we've done. Indeed, on the Hornsey 3 transaction, we have 4 banks that came into the transaction day one to help us underwrite that transaction. And so there's a real partnership between us. Now, the core to risk management, both for banks and for private credit investors, and for anyone investing in public markets too, is that fundamental underwrite. That really is the core. That's the key. And so I don't perceive any shift away from on the part of banks in terms of partnering with us. I see them continuing to be strong partners. But it's just getting right the fundamental underwrite, given that there are always idiosyncratic events that occur in markets. This has been the case for many decades, and some of the things that we've seen, that you mentioned, are a great example of some of those idiosyncratic events that happen.
So no systemic risk then?
Look, certainly we don't see that. We don't see that.
Yeah.
What we see is people who've gotten things wrong on individual investments. This will happen again in terms of other things going wrong in individual investments. The way you guard against that is ensuring that, number one, you do your fundamental underwrite, but then secondly, it's about asset and liability mismatch. One of the benefits that we have is long-dated capital, that we're investing in long-dated assets to ensure that we have aligned asset and liability matching.
Great to see you, Leslie. Thanks for stopping by to see us. Really appreciate it. Come back anytime.
Thank you.
Leslie Mapondera, the Apollo co-head of European Credit. I just want to take you to a story that's kind of been evolving over the last few hours. Bloomberg has learned that the Netherlands is preparing to suspend a ministerial order that gave it control over, remember, this Chinese-owned chip maker, Nexperia. They're now trying to look, it now looks like basically we're trying to sort of de-escalate. The move had threatened, of course, to disrupt the global automotive production story, which we've been focused on as well. Joining us now is Sarah Jacob, out of the Netherlands, to give us a take on this. So what is the latest? We've got a new government in the Netherlands, so we need to think about that. And we also need to think about maybe how they're going to de-escalate. So what are the Dutch government now saying about how that's going to work?
Good morning. Yes, Nexperia is a Dutch chip maker. It's owned by Chinese firm Wingtech Technology, and it makes so-called legacy chips. They are not cutting-edge chips, but they're used widely in the auto industry. What we saw in late September was that the Dutch government invoked a Cold War-era law, a 1952 law, that allowed them to block or reverse decisions at Nexperia, and they intervened because they said they saw acute signals of serious governance shortcomings at the firm, which they said posed a threat to critical technology staying on Dutch and European soil. And this sort of triggered a dispute between Beijing and the Netherlands, and we saw China retaliate by slapping an export ban of Nexperia's products from China. So this has sort of escalated in the past month, and what late last night we heard from the Dutch government that they expect supplies from China to resume in coming days. This was based on constructive talks between the Netherlands and China. What we are hearing now is that the Dutch government is prepared to drop its control on Nexperia once it sees these supplies resuming.
All right, Bloomberg's Sarah Jacob walking us through some of those dynamics out of Amsterdam. We thank you so much this morning. Let's talk about some of the other things that should be in your agenda. The COP30 leaders meeting happening in the background, of course. We also get plenty of speak from both the Fed and the ECB. Nagel, Villeroy, Elderson, Myron later today as well over in the States. We have UMich consumer sentiment data off the back of the Challengers data over earlier this week. For me, it's Viktor Orban. He's going to be in Washington. He's going to try to get an exception to some of the Russian sanctions. Yep. I'm curious to see how that relationship unfolds.
Things to watch today. Mark Cudmore tells me I need to watch crypto over this weekend, which is going to be an exciting week. I've got other things that I think we should be doing in terms of what's going on.
Do tell.
There's rugby. There's amazing rugby taking place this weekend.
We just had a former rugby player on the program.
I know. Yeah. From Zimbabwe. You've got the Lord Mayor's Show coming up this weekend. You've got Liverpool versus Manchester City. I think the NFL's in Berlin. I know you're going to be excited about that. It is Remembrance Sunday as well. All of that is going to be coming up. Actually, the thing that's not on there, I think, is the fact that you've got Scotland taking on New Zealand, the Kiwis, the All Blacks. I'm a bit concerned about the Scottish front row, if I'm being honest, particularly the props. But this is like code to you. And France are taking on South Africa as well. So there's some amazing sport. Coming up this week.
You read my mind. That's exactly what I was thinking.
These are the things you need to worry about.
The Brazilian
crypto, and the Scottish front row.
You forgot the Brazilian Grand Prix. I feel like a lot of people are going to be tuning into that over the weekend as well. Lots to do. Guy and I have big plans. You should, however, tune in for an interview with tennis legend Serena Williams, who spoke to Bloomberg from the American Business Forum in Miami about life after tennis and building her venture capital firm. That conversation coming up in just over an hour. It does it for the opening trade. The Pulse is up next. This is Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The end of the dizzying week with concerns that the AI rally has gone too far. Markets also dealing with limited economic data during the longest U.S. government shutdown in history. Bloomberg understands the Netherlands is ready to ease tensions with China and drop its control of the chip maker Xperia. In return, it wants Beijing to resume exporting critical chips. Plus, a $1 trillion pay deal for Elon Musk. Tesla shareholders approve the biggest compensation package in history, depending on its performance. So there is quite a lot going on. Of course, we look at sterling. We look at everything in the markets. When you look at S&P futures, they're getting some 0.2%. It's very clear that stocks, for the moment, we could have a correction, but for the moment, they're climbing as I guess there's a bit of dip buyers stage. Dip buyers seem to be back for a second time in a pretty volatile week. Again, maybe seizing on fears of these lofty valuations, but also cooling employment in a stock market that many traders still see as supported by solid fundamentals. European markets map. Let's get straight to it. Again, the problem in general is that a lot of the markets in the U.S. and therefore, the read across to Europe could also be true, are flying partly blind amid this limited economic data during the longest U.S. government shutdown in history, which means there's little clarity on the path for interest rates in the U.S. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, another packed show today, the week ending with the same question. Has the AI bubble, or has AI become a bubble? We get the thoughts of the Bank of England Governor Andrew Bailey a little bit later in the program. On the trade front, a Bloomberg scoop with the Dutch ready to drop control of the chip maker Nexperia if China resumes exports of critical chips. Plus, corporate history is made with Elon Musk on track to become the first ever trillionaire. Now, with me this morning to discuss all of this, Klaus Bader, Global Chief Economist at SocGen Corporate and Investment Bank, Bloomberg cross-asset reporter Justina Lee, and Bloomberg's Global Autos editor, our card czar, Craig Trudell. So thank you all for joining us. Justina, maybe set the scene for us. I mean, there is a little bit of buying in the markets today after what was a pretty difficult and volatile week.
Yeah, exactly. And, you know, what we're seeing kind of in these couple of days is like a classic risk-off rally where we're kind of risk-off kind of market trade, where we're seeing kind of stocks plunge and at the same time bonds rallying. And all of that is on the back of these kind of jobs data coming from kind of the Challenger, which is a private firm. And I think that really highlights the data vacuum that we're at, right? Because a lot of these jobs data that are coming from these alternative sources, I mean, they come with a lot of asterisks, but the picture they both seem to be pointing at is pretty clear, which is that we're seeing more job cuts across the U.S. And at the same time, people are kind of concerned that the Fed might not be here to step up with more rate cuts, kind of with what we've heard from, you know, Chair Powell lately, and also some other Fed officials that are still raising alarms about the inflation rate in the U.S.
Yeah, Klaus, I mean, it's interesting because, again, the market has these, like, moments of correction, but and again, we don't have market data for the U.S., unclear what it means for the Fed, but the economy still feels okay. The fundamentals haven't really shifted.
No, they haven't. But, of course, there's been a big cloud of uncertainty over the U.S. economy. And I think that's really having an impact on employment. It's a kind of no hire. It's not no fire, but it's also no hire kind of economy. And, of course, it makes companies rather reluctant to invest. Markets had gotten incredibly aggressive about pricing rate cuts. Excessively so, as we've argued. And they got definitely a bit of a jolt after the last FOMC meeting with Chair Powell saying that a rate cut in December is not a foregone conclusion. Far from it. And markets, at one stage, were discounting literally 110% probability of 50 basis point cut to the end of the year, i.e. they were discounting that one of those cuts could be a little bit larger. Yeah, there's just a huge variations of opinions on the FOMC.
So, Klaus, so first of all, when you look at, you know, the data that you're trying to look at to decipher actually what is going on in the U.S., I mean, do you have enough to go by in terms of just the private stuff?
No, absolutely not. There's a whole variety of indicators. We had the ISM data earlier in the week, and at the moment, of course, people are particularly looking at the employment component. They are below 50. Now, do I believe that necessarily means that employment is shrinking? No. But it's certainly not strong, and there's been a sizable correction. You should really look at the services more in manufacturing, just because of the relevant weight. You know, ADP, we know that its correlation with payrolls is very hit and miss. So no, we don't have enough data, neither on economic activity, on the labor market, or for that matter, on prices. Now, there still is the issue, to what extent and how quickly are tariffs feeding through? I think they still continue to do so.
Yeah, and then we have the Supreme Court about tariffs. We'll get back to that in a second. Elon Musk never really far away from the news. I mean, yesterday was a pretty incredible day, Craig. Tesla shareholders approving a $1 trillion package for Musk.
Yes, and in order for him to realize that headline figure, he's going to have to do a lot. He's going to have to bring Tesla from a $1.5 trillion company to $8.5 trillion sometime over the next decade. He will have to bring adjusted EBITDA for this company, which will be something on the order of $13 billion this year, to $400 billion. You know, whether he will ever actually realize all of the stock that this lines up for him remains to be seen. But if we take him at his word last night, he was really on one in terms of the future of this company, talking about his robots being able to perform surgery, actually maybe even sort of following people around so that they don't commit crime. New use cases beyond just electric cars and some more details for his humanoid robots. A lot of things maybe to be taken with great big grains of salt.
Yeah, I mean, we'll definitely take it with big grains of salt. But at the same time, as we talk about the AI bubble, and whether there's going to be a correction, does this point to the fact that shareholders maybe are optimistic that there's something there, that he can turn it around, but also grow it significantly in terms of revenue?
I think it speaks to the ability that he has to command narratives around AI, right? Because after all, this robot that he says is going to, be the new best surgeon, better than any human. He doesn't even have it in production yet. So this, I think, is very consistent with this broader theme of a lot of hype and anticipation about what AI will be able to do. The sort of here and now reality is another question.
Justina, one of the other big stories, and again, it talks to AI, and it's this chip control at the moment where we're seeing the U.S. and China getting along a little bit better. It seems certainly to lay the groundwork for some kind of agreement. And then the Netherlands this morning saying it's prepared to suspend its powers over an Xperia if China allows exports of its critical chips again. I mean, is that really a breakthrough moment for Europe?
Yeah, I think for sure, and it will be kind of definitely kind of news of relief for a lot of automakers all across the world. So what we're hearing kind of from our sources in the Netherlands is that the government is prepared to suspend what is called like a ministerial order that's given it kind of control to key corporate decisions at Xperia, kind of on the condition that China does allow kind of more exports from kind of Xperia's like critical chips over the coming days. And another good news is that the Dutch government has said that they do expect the resumption of these chip supply kind of over the coming days. And in that case, then maybe this order can be lifted over the next week. And I think that would be good news for a lot of car companies because they've been talking about sort of the supply issues when it comes to these power control trips that have been critical to them.
And Klaus, I mean, to that very good point, it does seem that tensions are easing full stop between the U.S. and China. We don't know for how long, but how much does that help the global economy?
I think it's very important. We spoke earlier about the uncertainties that come not least out of the U.S. tariff policy, then of course the reaction of China. China has definitely flexed its muscle here, and not only towards the United States but towards Europe. And the Xperia case was really very worrying. Volkswagen had actually announced that they were very soon needed to reduce production. So I think it is good news, but at the same time, China has asserted its iron grip on global supply chains, particularly in the critical materials. They're not that rare, but nowadays referred to as critical materials.
It's rare to mine them properly.
Exactly, and refine them too. And they're not going to let go of this. So, some people argue that China won the trade war, and I think they have a point.
So, but do you think that now they're on a better footing, or actually are we going to see loggerheads between these two superpowers so that investors and therefore the economy is still going to be in a constant wait-and-see situation?
I think more the latter. It's difficult to imagine that suddenly, at least during this administration, suddenly the attitudes towards China are going to dramatically change. China and the U.S. are in many ways in competition. Now, of course, the U.S. is a much wealthier economy, no doubt about it, but they are in a strong competition, and the Europeans are kind of stuck in the middle.
Craig, I mean, we've spoken in the past a lot about what Elon Musk wants to do in China, what his ambitions were in China. I mean, in general, he's been pretty quiet on China, but also on the U.S. government. We're still in a massive shutdown. He tweets less.
Yeah, he's very much caught in the middle of these two because while the car business has been flagging for Tesla, they did, I should give them credit, they did have a record third quarter, but even with that record third quarter, year to date, their sales are down. On the other side of the ledger for them, their energy business has been quite strong. The challenge for that side of the business is the fact that they are reliant on cells from China for their battery storage devices, and the demand for those, especially with this AI boom and sort of the demand for energy for data centers, there I think is a very credible argument to be made that they could be selling a whole heck of a lot more of those if it weren't for the fact that tariffs on battery cells from China are so substantial. So whether or not Musk can sort of get back into Trump's good graces and maybe broker some compromise there, I'm sure it's something that he would like to do ideally, but I think, yeah, we shall see.
We shall see. Just, we had a couple of market events. I mean, I don't know whether gold up and down is a market event. It feels like it because, again, it's maybe a de-dollarization of U.S. assets or something like that. We also had the Bank of England. What are you looking out for over the next, 2 to 3 trading days?
I think the key question here is what's going to happen to what is now the longest U.S. government shutdown in history. Now, we haven't really heard much lately about any deal coming up. But, with the string of Democratic victories that we've seen in the election this week, is that going to put any pressure on the Republicans to maybe start to broker a deal? These days we always look at prediction markets, and it seems like, a lot of people are still betting that there is chance of a deal maybe by the end of next week. And I think that really will be critical here, because we've even heard from Fed officials that, they're struggling to gauge the picture of inflation kind of without any official data. And of course, we talked earlier about how we're all relying on these private sources on the employment picture here. And I think everyone's kind of waiting for those key payroll figures.
Klaus, what do you look at? I mean, away from the lack of data, is there something else? We had the ECB last week. We had Bank of England this week. I mean, again, some central banks have an easier job than others because of structural things in their countries.
Yeah, but for a lot of central banks, the situation is pretty difficult. And that's true for those that want to raise rates, like the BOJ. Our expectation had been before the election that they would probably raise rates in October. That looks more likely in December, but the risk are they go later. The ECB, fortunately, is done for the time being, and there might be another, one last cut to avoid next year when inflation could go very low, of inflation expectations becoming unanchored to the downside. The Bank of England's in a difficult situation. Another one is the RBA. The easing trend of the Reserve Bank of Australia also now looks to be blocked for quite some time because inflation pressures have picked up quite substantially. I think it's remarkable how diverse the inflation picture is across even advanced economies. We don't even have to talk about advanced economies and emerging economies. Historically, emerging economies have been the ones with the inflation problem. Not at this current juncture. So there is a lot of diversity in central banks. I did say, and funny enough, Powell said the same thing. In dense fog, you don't want to drive very fast.
No, you don't want to drive very fast. But the concern is also there's a huge debt problems in a lot of the G7 countries. So you see it playing out in France with a lot of political uncertainty. Frankly, the Bank of England has to deal with a budget, which once again is uncertainty, and that's a money problem. So how do you see that, being tied up in 6-7 months?
Well, I think it puts additional pressure on central banks to stay absolutely credible on the inflation front, because there is nothing more damaging to government longer-term financing rates than a central bank that is seen to be playing fast and loose with its inflation mandate. I think that's, for central banks, an absolutely key factor, apart, of course, from managing the economy as best as they can.
Okay, well, thank you all for a terrific way to start the show. Craig Trudell there in charge of our autos coverage, Justina Lee, as well as Klaus Bader, Global Chief Economist at SocGen CIB. Coming up, more of our interview with the Bank of England Governor Andrew Bailey. That's next, and this is Bloomberg.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Well, the conversations that matter and the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, the Bank of England held interest rates at 4% in a tight vote that laid the groundwork for a December cut. Attention now turns to the UK Chancellor Rachel Reeves, whose budget later this month must avoid fueling inflation in order not to derail the Bank of England's path towards a cut. Well, the governor spoke to Bloomberg following the decision.
Now, in August, I would say I was concerned more on the upside risk. But I think the news that we've had subsequent to that has left me in a more balanced position. So that was very much my view. But as I've said a number of times, we do need to see more evidence, because so far we've had one inflation number that's come in, under what we thought, which is obviously good. We need to see some more.
So what would sway you actually for December? And when you say that it was balanced, does it mean that one extra data point would have made you want to cut?
By December, we'll actually have two, because we have 2 months' worth of data between now and our December decision. So we'll have two sets of inflation numbers, two sets of labour market numbers, two sets of most other numbers as well. So that will be important. Now, I think the conditions at the moment suggest that policy remains restrictive. We've passed peak restriction, I think, but that's not surprising. We've been cutting rates, and no surprise there. That's what we intended. But I think it remains restrictive for the moment.
Governor, you've also said that decisions become closer calls as we near the end of the easing cycle. Does that mean that we could have bigger pauses in between cuts than we currently have?
Well, I think that really depends, of course, on how conditions evolve. I think the point we're making there is obviously the nearer you get to wherever this sort of neutral rate is, you're going to be slowing you've got to land the thing actually in that sense. I think that's the point we're really making. So, as we come down the sort of the path, you would expect some, you've got to land it. Hope.
So longer pauses.
Well, at some point, you'd like to think, obviously, we're in a sort of neutral condition, as it were. I mean, that will always depend upon the shocks that we're seeing, of course, around us as to how those evolve. But you'd like to think we'll get to that point. I'd like to think we'll get to that point.
Governor, I know the BOE doesn't assume anything about the budget, and of course you take fiscal policy as read when it's set out in the budget. But as governor, what would you like to see most in terms of broad fiscal impulse from the Chancellor?
Oh, well, I'm going to wait for the Chancellor to announce it on the 26th of this month.
How would you describe your working relationship with the Chancellor?
Oh, very good. Very good. We talk quite often. It's a good relationship.
Right, just a quick final question. Nigel Farage told us, speaking about you, that this is a quote, he's had a good run, we might find someone new. What do you say to that?
Well, I made a commitment to serve out my whole term. That's what I intend to do, and there's no desire to change. It was a very cordial meeting we had. You may have seen the letter that I wrote following the letter that Richard Tice wrote to me. I wrote quite a long letter back explaining particularly these two issues, QT and interest on reserves. There are some differences of view, but we had a very cordial meeting. I intend to serve out my full term as governor.
Well, that was Bank of England Governor Andrew Bailey. Now, President Donald Trump said he would look to diversify critical mineral purchases during a meeting with 5 Central Asian countries yesterday. As the U.S. seeks to address China's dominance in rare earths, the EU is privately warning that there's little it can do in the near term to compel Beijing to ease export controls on the material. Well, joining us now is Catherine Ogundia, thematic investing analyst at Barclays. Catherine, thank you so much for joining us. I mean, rare earths are like the end-all and be-all of what we need, but it's not that they're that rare. It's rare to mine them and refine them properly.
Precisely, and that's a big misconception. There's this assumption that because of the word rare, we just don't have enough. The real challenge and the real bottlenecks are both in the mining from a regional perspective and then on the processing, which is where the EU and the US is really looking to sort of step up its efforts.
So what does it mean in terms of exploration, but also in terms of recycling? Can you actually recycle this?
Very good question. So when it comes to exploration, you have rare earths and critical raw materials really displayed globally. China's got about 60% of sort of rare earth deposits. When it comes to the processing, their sort of appetite sort of reaches like 90%. When it comes to recycling, it's an interesting opportunity, but not all rare earth and critical raw materials can be recycled equally. From our research, it appears that magnetic rare earths have got the highest recycling capabilities, which is also positive because these are the materials that are going to be really important in uses such as EV batteries, thinking about defense applications as well. So promising, but it's going to take a long time to get sufficient recycling capacity.
I mean, is it as easy as recycling copper, or is it much more difficult because there are small components and actually it's quite difficult to get to?
Precisely. I would say it's probably closest to recycling, say, an EV battery. So you're using existing technology, which is encouraging. When we conducted our research, we weren't going to focus on recycling technologies that are on the near frontier. But using existing technologies, you can recycle particular rare earths, again, particularly sort of the magnetic ones. But as you mentioned, it's not just about being able to recycle them. You need to be able to collect them. When you get your rare earth, normally found in electronic components, where collection rates are incredibly low, you need to be able to get sufficient quantity to be able to recycle them. And that's the big bottleneck where we haven't seen policymakers really address yet.
So is the first step trying to find a reliable supply chain? So is everyone calling, some of the countries that have them and refine them and trying to make deals?
It's interesting. I would say policymakers seem to be focusing on the end of the value chain. So a lot of the support has been focusing on companies who've got recycling capabilities, recycling infrastructure. That's where a lot of the financial support has been given. I would argue that the front end, where you need to get the supply chains, the spent waste, collection schemes, maybe requirements to have mandatory recycled content in devices, that has really been left. So I think there's a bit of a gap. It's been a bit of a chicken and egg situation in Europe and US looking at policy and investment so far.
Catherine, I mean, it's very, we can't underestimate how much the green transition and also this burst of AI will do in terms of demand. So where are we in supply? I mean, if we were, not to buy anymore or recycle anymore, like how long would we have left?
That's a really good question. I wouldn't say it in that particular way. I would say that recycling, when it comes to rare earths, isn't something that's going to mix the needle right now. Okay. Only 1% of rare earths are globally recycled, so it's really not making a material difference to supply chains at the moment.
When do we need to have more by?
I would say if you look at sort of IEA data sets, by 2040, you're expecting recycling capacity to double. So that's quite some time when you're thinking about sort of capacity. So I think in the short term, it's really thinking about, are there alternative materials? Are you able to sort of broker broader deals? Are you able to look at sort of exploration and processing? Recycling is a long-term solution, but will need consistent policy, investment, and time to really manifest into something material.
So is the EU, for example, trying to go not against the US, but are they competing with the US, or can they both do their own thing?
I think there's space for both, because if you think about where rare earths are going to be, I think the smart way of thinking about it is once your electronics enter your market, you've got critical raw materials right there. So thinking about data center rollout, thinking about data center upgrades, there's a huge amount of rare earths in, say, wind turbines, all within your particular region. So if you can focusing on your domestic supply chain and your domestic capacity, actually there should be a sensible amount of resources to start processing and recycling.
How much money do we need for this? Or how much money does the EU, and does it have it?
Well, that's the thing. The EU has focused particularly when it comes to critical raw materials in its broader act. They've sort of highlighted about 60 projects that they want to fund, giving about 500 million to each project. And to be honest, this is ranging from exploration, recycling, and processing. It's hard to create a sort of a single figure for this, but the number is incredibly high, and the time is going to take a long.
Is this private money, or is it public money, or is it a bit of both?
It's been a bit of both. I think you've seen, for example, in the US, quite a novel approach being taken. So companies like MP Materials receiving funding from the Trump administration, but also more recently, we've seen private critical raw materials companies also being given private funding as well.
What a terrific briefing. Thank you so much for joining us. Catherine Ogundia, they're a thematic investing analyst at Barclays. Now, coming up, we discuss the outlook for the UK and global real estate with Jonathan Goldstein, Chief Executive and co-founder of Kane. A very quick look also at the markets. Again, there's quite a lot going on without much data. That means that it could be risky for certain investors. So today, stocks are climbing. Again, dip diers seem to be back for a second time in a pretty volatile week, seizing on fears of lofty valuations and cooling employment in a stock market that many traders will see as supported by solid fundamentals. A reminder, markets, of course, flying partly blind amid this limited economic data during the longest U.S. government shutdown. What that means is that there's quite little clarity on the path for interest rates. European stocks down 0.2% overall, just a tiny green spot. I mean, it's flat, so we'll take it as green. The CAC 47,965 points. This is Bloomberg.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
We're coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can't be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The end of a dizzying week with concerns that the AI rally has gone too far. Markets also dealing with limited economic data during the longest U.S. government shutdown in history. Bloomberg understands the Netherlands is ready to ease tensions with China and drop its control of chip maker Xperia. In return, it wants Beijing to resume exporting critical chips. Plus, a $1 trillion pay deal for Elon Musk. Tesla shareholders approved the biggest compensation package in history, depending on his performance. So with AI investment continuing to dominate markets, the Bank of England governor has told us there's a need to watch valuations very carefully. Now, this was one of our subjects that in our conversation with Andrew Bailey. Take a listen.
What we've certainly seen over now sort of about 15 years or a bit more is a fall, particularly in productivity growth. By the way, the UK, of course, is not unusual in this respect. I mean, a lot of other economies are in the same place. And I think in the longer run, that does come down to the whole question about innovation in the economy, investment in the economy, and it does come down to this question about whether we're going to see, you know, something pretty substantial over time come from particularly AI and the sort of the whole tech world that's around it.
Do you worry about AI being in a bubble, and also do you worry about private credit of like a market event showing up?
Well, so I think let's take AI first. It is perfectly possible that we could both see AI be the next, if you like, dial mover in terms of productivity in the economy. You know, in this world of what I call general purpose technology, things that, in a sense, cause innovation right across the economy, just like the internet did, about steam engines did originally. And it is perfectly possible that we could get that very positive result, and it's also possible that we could get a bubble, because the market is having to value the future stream of earnings from this innovation, whatever it might be. It's perfectly possible that there will be a stream of earnings, quite a positive stream of earnings, but the market will overvalue it. I don't know, but it's something we have to watch for. So these things are not, in any sense, incompatible in that respect. So we have to watch the valuation question, obviously, very carefully. Private assets, I think there's nothing per se wrong about private assets. I think that's an important thing to say, but it is a more opaque world. So again, we do have to understand that world, and we are doing a lot of work at the bank, and will be doing a lot of work at the bank to do that. We have to understand that there are, while there has been there's been an increase in the non-bank world, if you like, relative to the bank world. These two systems are heavily interconnected. So the banking world is still heavily interconnected. In many ways, it's the provider of liquidity, of course, to the system.
Well, that was the Bank of England Governor Andrew Bailey, who I spoke to yesterday. Now, with the UK government budget less than 3 weeks away, let's discuss the outlook for the economy and what it means for the real estate sector. With us now, Jonathan Goldstein, a chief executive and co-founder of Kane, which has nearly $14 billion in assets under management across the globe. Jonathan, as always, thank you so much for joining us. Look, you're also a labor donor, so what would you expect in that budget come November 26th?
Well, look, I think there's been a long build-up to this budget. And I think that the three things that I think the country needs to see are certainty, confidence, and competitiveness. So I think we need to get over this period. There's clearly in the economy, in the industry, across many industries, been a hiatus. People are waiting to see what's happening, waiting to hear. There's a huge amount of balloons being floated around in the press about so many different taxes, so many different spendings and cuts and investments. So I think this build-up has really been a long one. So I think what the country really needs is certainty. We need to get back to absolutely knowing the direction of travel. We need to understand what drives the economy. We need to make sure that those aspects are enforced. And we need to retain a level of confidence. This is a great country with huge amount of assets, and we really need to be playing to them.
So first of all, how much was the abolition of the non-dom regime damaging to entrepreneurship, to wealthy investors leaving the country?
Well, you've seen around the world a flight of millionaires to the UAE, to Italy, to the US, at the expense of London. And if you look at the top end of the London residential market, you'll find it's very sluggish, very, 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 very slow. And the reality is that we live in a very mobile world. Our ability to move around the world today is unparalleled. And as a result, we need to understand our relative place in that competitiveness area is hugely important. And we can't sort of think that we're an island that people are just going to come to whatever, because people can up and go. And we're seeing too many stories of founders of companies upping and going and leaving this country. And that has a significant impact on productivity, and that eats into confidence in the country.
So I know you want certainty, you want to basically the budget to happen now so that people can adapt and get on with their business. But what do you want to see in the upcoming autumn statement?
Well, ultimately, I think we all understand that the Chancellor needs to raise revenue. We need to feel, unlike last year, that this is a one-off, that there is a line drawn under that process. And if that has to be, as is clearly being floated, a small rise in income tax and a break in what was said in the manifesto, I think the government has to be bold and the government has to go for it. I don't think that anybody in this country really believes that people have to be hidebound statements. We're not in business that we made 2 or 3 years ago. I think it's obviously politically uncomfortable, but it's an important decision to make. And the second thing I would say is that we need to play to innovation. We need to make this country a place that people want to do business in and come and live in. If you look at the founder of NVIDIA, he moved from Taiwan to the US. He's created a company which is valued at almost $5 trillion. You want to come to the UK or anywhere in Europe, you have to fill in forms. You have to wait months and months and months. We are creating an environment that people don't want to come to. And I think we need to get away from that. We need to understand that the benefits of immigration are strong for this country and that we are in a global fight for talent. And we need to win that. We need to win our fair share of that. And at the moment, I don't think we are.
Jonathan, is it about the taxes? Is it about the money? Or is it about people not feeling welcome?
I think it's about the environment myself. I think, yes, taxes are an element of that. But I don't think everybody is so obsessed with the odd p in the pound to worry about that. I think we need to create an environment that, both from a business and a social perspective, this country becomes a welcoming country again. And I think that is a route that the Prime Minister really believes and goes in at his very core. And I think we need to make sure that we as a country are seen as a welcoming country. Many of us for generations are the beneficiaries of this wonderful country, and we need to make sure that that is a continuing narrative. And I'm concerned that we're seeing too much of this negativity, too much of this downing on Britain, which is, I think, creating a message around the world that we're no longer a welcoming environment.
Jonathan, I mean, Kane, your company is also an investor in logistics properties. Now, a lot of them will maybe move into data centers. Do you worry about the AI bubble and what that means for lending and what that means for some of the properties?
Well, I'm not going to really comment. I'm not the world's greatest expert on AI valuations. Obviously, they've been very strong. Fortunes have been made in the last year or two. Untold fortunes by people who are well positioned. But we are seeing in every element of our worlds the impact of AI on our businesses. What we believe at Kane is that if you are able to fuse that technology with human connectivity, because at the heart of all businesses remain people and the relationships that people create. And if you can create real estate that play to the technology and play to those personal relationships, then I think you can create great environments. Look, if you look around the world today, Amazon, not far from here, occupy many hundreds of thousands of feet, including in our properties in Shoreditch. JP Morgan have just opened up a massive new headquarters in Wall Street. These companies are bringing together the benefits of AI with human interaction, with those great things called relationships that we can still believe in, because at the heart of it, businesses are made by people.
Where do you want to be more invested in? Is it in the U.S.? I know you also have a big office development, in Miami that is benefiting from maybe people leaving New York. Like, where do you see the hot spots?
But we've been strong believers in South Florida since before the pandemic. We started to invest in 2017. We have the largest office block in the 830 Brickell, which is 100% leased. It's achieving extraordinary rents beyond $200 a foot when we initially budgeted $70 a foot. So, we're big believers in Miami. And if you look at Miami, why are people going there? And take that back to what we talked about with Britain: certainty of environment, safety on the streets, a sense of community. That's really what we need to be focused on in the UK. And I think that's, it's important that we re-emphasize those issues, because this is a great place to be. London is still a strong place to be. As Samuel Johnson said, when you tire of life, you tire of London. So we really need to reinforce those messages and get that confidence out from the top.
That is so true. Will people, you think, tire of New York because of the new mayor? And so are you doubling down on Miami as the destination?
We just acquired a hotel called the Dominic, just down the edge of Soho in Tribeca in New York. And it's a 400-key hotel, so we're believers in New York. Look, I think the election of the new mayor is a challenge on many fronts, both geopolitically as well as locally. And I think he is espousing a narrative which he won't be able to live up to. We've seen that in our own country. And I think New York will outlive Mayor Mamdani by some distance. And I just think there will be shocks on that road for New York, which will have an impact and will lead to a migration to other cities. But I'm sure that New York will win out in the end.
Jonathan, I know I'm not wearing Chelsea blue, but you know I'm a fan, and you're a director at Chelsea. And the main question, actually, what happens with Stamford Bridge? Can you give us an indication of the thinking right now?
Well, the thinking remains that there's a huge amount of work being done internally. And I've always said, and you've asked the question before, that the first people that will know the outcome to that question will be the fans. It's clear that the club's been on a great trajectory, leading, to being now the World Club Champions, which is a great achievement for the manager, for the squad, for the directors of football. Done a wonderful job in bringing all that together over the summer. And the club continues to work in ensuring that Chelsea is a winning environment both across the men and women's team. And when we're ready, I'll come back and tell you.
But is moving to Earl's Court still an option, or has that ship passed?
I don't think we rule out any option at this point in time. Everything remains on the table, but clearly the most important thing is to create a legacy and a future for Chelsea for the next 100 years.
Jonathan, thank you so much for joining us, as always. Jonathan Goldstein there, the CEO and co-founder of Kane. Now, the UK's 2,500 private schools are under pressure after being hit by the imposition of 20% VAT on their fees. Bolstered by government backing, many are choosing to expand abroad in a bid to raise cash. Well, Bloomberg's Tiwa Adebayo joins us with the story. Tiwa, I know you've been working on it for quite a couple of weeks. Why are these schools so eager to open branches overseas?
Well, really, they're looking for alternative revenue streams. A lot of these schools have really recognizable centuries-old brands, and they want to see if they can capitalize on this. And opening a school abroad right now seems to be the perfect opportunity to do so. It's a sector that's booming. We've seen the number of British schools abroad triple since 2017. It's up from 51 to 151. And in terms of the profits that these schools are making, that's also exploded, reaching £29 million over the last academic year. It's worth also remembering that British private schools with charitable status, as most of them do have in the UK, they don't pay corporation tax on overseas earnings. So they're also keeping a good proportion of these earnings. So it does become quite an attractive opportunity. And when you compare that to the landscape for private schools in the UK, where we're seeing cost pressures associated with the new VAT tax, which came in January of this year, schools say that pupils are also leaving at an accelerated rate, and there's high inflation in this country. You do begin to wonder if perhaps overseas schools might be more fertile ground for British private schools at the moment.
Tiwa, what are the risks for these schools of going into business with foreign actors?
Well, the people I spoke to for this story say the main risk is being associated with these foreign business partners. As we've mentioned, these are really important and historic brands, and perhaps for some schools, they risk potentially tainting their legacies by these associations. In the story that's up on the terminal about this morning, we cover a number of examples, including rugby schools' recent opening this September in Lagos, Nigeria. Now, that is being financed by a firm called the Chaggery Group, whose founder has had quite a number of controversies. For example, he had to pay $1.8 million to resolve allegations that he was involved in some breaking of U.S. election laws, and that's according to the U.S. Department for Justice. We also cover the opening of Harrow School in New York that's set to take place soon. That's being backed by an Indian firm, Amity Education. They have been criticized heavily by U.S. politicians about their ability really to educate people in the U.S., given their lack of track record in the country. So I think these schools risk not only their reputations through these associations, but they also are risking the trust of customers both abroad and in the UK, who pay quite significant sums of money to have access to that pedigree, to that history. But perhaps what they aren't expecting is that sort of proximity to controversy.
Yeah, I'm sure they are. Tiwa, thank you so much for some great reporting. Tiwa Adebayo, if you'd like to read more on that story, it's also available on the Bloomberg terminal. Coming up, the Dutch government is prepared to drop control of Chinese-owned chip maker Nexperia if chip supplies resume. We'll have more on that with Atlantic Council's Director of Economic Foresight and Analysis, Charles Litchfield. That's next, and this is Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
Well, shares in British Airways parent IAG are sinking after a miss in the latest earnings, reflecting weakness in Europe and on its all-important transatlantic route. Well, for more on all this, let's get to Bendik Kamel, our global aviation managing editor. So, Benny, thank you so much for joining us. What can you tell us on IAG?
So IAG really, with a very weak set of numbers, or rather a weak reaction. I think people are spooked by what they said about the transatlantic market. This is a crucial market for British Airways, which is the prime airline, also Iberia, within the IAG group. And they said that there was some softness in that particular market, and it counts for about 1/3 of their global capacity, and that's obviously very important for them to maintain that market, to stay strong in that market. And it's something we've seen over the last couple of months. We've had other airlines say that, yes, in particular from Europe to the US, there is some weakness. Fewer people, particularly in the leisure side of things, are traveling to the US. They might be spooked by sort of harsher immigration laws. They might generally be put off by the politics in the US. And we've seen that come down. Also on the corporate side, there is some weakness there, and that's really starting to hurt that business.
Benny, we're also looking at hundreds of canceled flights in the U.S. after government agencies ordered airlines there to make a 10% cut in capacity as the shutdown drags on.
Yeah, so this is going to start today. We are going to see a gradual increase in these cuts. So it's not all going to happen at the same time. They will start at 4% and then sort of slowly work their way up to a 10% reduction. Just to give you a little bit of perspective, though, this means it'll be about 700 flights or so cancelled out of 25,000 movements. So airlines will find ways to sort of mitigate that. They will probably cancel some of their less popular routes. They will certainly protect their most prominent ones and their most profitable ones, particularly on international routes or key transcontinental routes. So they will find ways to sort of wiggle through this. But for passengers, it might mean longer waits. And as we head into the crucial Thanksgiving period, these situations will become a lot more pronounced, and that will raise a lot more pressure on the government to bring the shutdown to an end.
Benny, thank you so much. Bendik Kamel there, Bloomberg's global aviation managing editor. Now to the sidelines of COP30, where world leaders warn conditions could become unlivable for billions of people if immediate action is not taken. Well, Bloomberg's Sarah Wells is in Belém, Brazil. Sarah, we're a long way from when nearly 200 nations adopted the landmark Paris Agreement. What are we hearing now, 10 years on from world leaders?
So we have about 20 or 30 heads of state here in Belém to speak over yesterday and today. There's about 150 countries represented, but a relatively small proportion of those have sent their biggest person. But we have had a lot of commitments to multilateralism, as you'd expect, to the importance of addressing climate change with more urgency. We did hear from some of the Latin American leaders making some quite pointed remarks about Donald Trump. Colombia's Petro said that he's against humanity. And Brazil's President Lula, while he did not name Trump, he did talk about extremist forces spreading fake news and the problems that causes We heard from Francis Macron on the importance of prioritizing science. And there was an interesting speech by Barbados Prime Minister Mia Mottley. She talked around trying to gain support for a new global protocol to reduce methane emissions. So it'll be interesting to see if that gets any traction over the next couple of weeks at COP30 and beyond. I would also
Sarah,
say that leaders met to...
Sorry, Sarah, I cut you off.
That's okay. I was just going to add that leaders met to formally launch Brazil's Rainforest Fund. This is the TFFF, the Tropical Forest Forever Facility. And Norway pledged $3 billion in loans to that fund. They did put some conditions on that. They said that they would only put in 20% of the financing. But Brazil is trying to grow that fund to $25 billion over time, which they will then leverage to build a $125 billion rainforest preservation pool. So Norway was a big step in the right direction.
Sarah, thank you. Sarah Wells there at COP30 in Brazil. Now, the Netherlands prepared to suspend a ministerial order that gave it control over chipmaker Nexperia in a move that would de-escalate a fight with China. Well, joining us now is Charles Litchfield, Director of Economic Foresight and Analysis at the Atlantic Council. Also left D.C. because of the shutdown. I'm kidding. But actually, first of all, I mean, the shutdown, you have the shutdown, which no one's really talking about, the longest in history, but then you have encouraging news from China. So do these two news cancel each other out?
I think that's a very interesting way of seeing it, and it is sort of how the administration has played it in the past few weeks. They had a big, successful trip to the Asia-Pacific, did a lot of deals, although some of them are only temporary truces, and this has given them some respite from the crisis at home, where, and this is surprising from a historical perspective, the party that is causing the shutdown, the Democrats, has not lost any popularity, and we're now weeks in. People have missed more than one paycheck at this point, and the Democrats are not losing out in the polls. Why? Because the reasons they're sticking out are popular, including in red states. The Medicare, Medicaid financing that's been cut in the Big Beautiful Bill, people want that back. And the tax credits to the Affordable Care Act, people support those too. So you even see some Republicans saying that their party should make concessions. But you're right that the administration has managed to avoid talking about this because they've had a successful trip to Asia.
Charles, first of all, on the shutdown, how does this end? Is there an end in sight?
I think there might be an end pretty soon. Your colleague was rightly mentioning Thanksgiving coming soon and the problems that we're already starting to see on flights, not just the FAA, so air traffic control, but also security at airports. People haven't been paid several times now, and so they'll start working less. It's already pretty heroic that they're working at all. And I did manage to make it here from the US. I hope to make it back on Sunday. But yes, I think that is a deadline that's pretty serious, pretty important. And the Democrats are also feeling they're edging towards getting some concessions out of the government. So hopefully it will be soon.
On U.S. and China, it is actually, we seem to be in a better place. I wonder how much it can just turn by 180 and we go back to the fighting that we saw 3 months ago.
I mean, things can turn with one tweet now in D.C., so that is the sort of line we're on all the time, and there's a tension, there's never a dull moment. But you're right that the meeting between Xi and Trump was successful. First of all, it did take place, and it was almost called off. And the deal was basically a truce. The U.S. moved back to tariffs that the Chinese manufacturers can live with. They're still pretty high, much higher than what Europe and the UK have to deal with, but manageable. And the US managed to get a suspension of the export controls on critical minerals that we all need. This is a crucial point. The US, because of the tariffs, has leverage over the Chinese, and so the Chinese were willing to negotiate. And in some sort of magnanimous act, they lifted this export control for everyone, because it was meant to apply to everyone. Now, as we see with the Dutch case, Europe does also have some leverage, but it isn't prepared to use it as aggressively as the US.
Where do you see, I know you wrote a very interesting piece in that where it starts like you can't sugarcoat this, and this is about the relationship between the U.S. and Europe.
Yeah, I mean, the situation is not good. This is a very tense relationship. I think we've managed to bring Trump we Europeans have managed to bring Trump closer to us on Ukraine. He isn't going to make the US government send more money to Ukraine or more weapons for free. But I think he has become much more impatient with President Putin than he was beforehand with President Zelensky. So this is progress from a European perspective. And on trade, I mean, when I came here to see you last year, Francine, I was talking about Europe preparing preparing for a slight increase in tariffs that the US would apply on EU goods. We've gone from an average of 2.5% to a 15% flat rate, and this is seen as success. But last year, I mean, I was predicting an increase in tariffs, but this was the maximal scenario, the really catastrophic scenario in a way, and now people see this as a sort of stable scenario that Europe can deal with.
But does it mean that we're going to get second-round effects, or is it that actually with trade is a little bit like water, it always finds where it needs to go?
No, I think the European firms are already feeling the pinch, and as are US firms. And so I think we are going to continue to see slightly higher inflation in the US than we otherwise might have. And I think for investment in the US, it's also created quite a lot of uncertainty. So the end logic of the Trump model is that to manufacture in the US, manufacturing in the US avoids the tariff, and therefore European firms should invest. But we haven't seen that uptick yet because there are all sorts of uncertainties around inputs. You have to pay tariffs on them as well.
Charles, thank you so much. Charles Litchfield, there, Director of Economic Foresight and Analysis at the Atlantic Council. Up next, Bloomberg Brief, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Based on the data that you've seen, do you think it's a good idea now for the Federal Reserve to lower interest rates?
The Fed doesn't want to lower rates and appear to be kowtowing, if you will, to President Trump's language. On the other hand, I think there's actually room for them to lower rates. If you look at the Fed's beige book, which the Fed reacted to last year when they started lowering rates, I think there's room for them to take action now. And if I were the Fed, I'd start thinking about going ahead and lowering rates. Real rates are very high right now relative to history, and of course we have a pretty significant term premium built into the term structure of interest rates right now.
So let's talk about the Fed's goal, which is 2%. Is that too low a rate to really get to at this point? And does it have to be at 2% or in sight of 2% before the Fed should lower?
They have a credibility issue right now. The Fed has to get to 2% because that was the target that they set. Although they've already started to project that they're willing now to target a range of inflation, which I think is the approach they should have taken all along. But they're going to get to 2%, and I think the trajectory is still in favor of the Fed's 2% target. And what we're seeing on a shorter-term basis is that's where rates are actually going to in terms of the inflation level, and I think the trajectory is their friend.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's 10 a.m. in London, 5 a.m. in New York City. Good morning. I'm Kriti Gupta with your Bloomberg Brief. Bonnie Quinn is on assignment. Let's get started with what you need to know. A terrible week for tech. Valuation worries knocking global equities as shares of mega-cap stocks sell off despite pockets of positive earnings reports. And the Tesla trillionaire. Shareholders approve a $1 trillion compensation package to Elon Musk, marking the largest payout ever awarded to a CEO. And airlines across the United States begin canceling flights as the government shutdown drags on. We are live on the ground. In the meantime, let's get a quick check on these markets. As, of course, we go into the weekend, everything's fine. Futures are positive, virtually unchanged on the S&P. E-minis there, 67.50 is where we are on those contracts. Same story for the NASDAQ. The Russell, higher by 0.1%. But right off the bat, this really tells you what kind of market we're in. Kind of a sleepy one on this Friday. Let's see if the bond market is any different, because I actually think that maybe we're getting a little bit more action here. Looking across the curve, I'm looking at a 10-year that's higher by about 2 basis points. A similar story on the long end of the curve and, frankly, on the short end as well. So maybe we'll see a little bit more action as the day progresses. In the meantime, let's go from the macro to the micro, get some of our stocks to watch with Chloe Melly. Chloe.
Good morning, Kriti. Let's start with Tesla, which is up this morning after Elon Musk said he expects China to fully approve self-driving software by next March. So this follows a lot of lobbying in the last few years. And Tesla is really banking on this to revive sales in a market where it's been losing quite a lot of ground. Moving on to Expedia, which is also up this morning. The online travel agency reported quite strong results thanks to resilient travel demand. So alongside results from Airbnb, this really goes to show and signals that the U.S. travel market is in pretty good shape, and that reassured investors. And finally, over here in the UK, the property listing portal Rightmove is down massively this morning after saying it expects a flat revenue growth because of AI investments. So shares fell the most on record, and now it puts pressure on management to convince investors that now is the right time to be making those massive investment decisions.
All right, Chloe Melly there with some of our early movers in the pre-market, of course, in the European hours. Thank you so much. Later this hour, we're going to take a closer look at the labor market with Citi's Veronica Clark. She'll be joining the program shortly. But first, let's talk about this $1 trillion pay package for Elon Musk.
Sixth and finally, on the 2025 CEO Performance Award to our founder and CEO, Elon Musk, with over 75% voting in favor. Approved.
Joining us now for the latest, Bloomberg's Global Autos editor, Craig Trudell. Craig, I don't know what you do with the $1 trillion, but I am curious, as we talk about this kind of pay package, how did we get here? How viable is it that he ultimately gets the $1 trillion?
I guess what you do is you dance with a humanoid robot, because that's what we saw Musk did after that moment last night. That at least is step one. I guess some of the things that he threw out there yesterday were really sort of over the top, even for him, talking about sending Tesla vehicles to the moon and Mars. The robot that is still very much a prototype that does sort of simple tasks like dancing on the stage or handing out candy at the stock exchange last week. Eventually, that's going to be a really good surgeon. He says he's going to have to make good on at least some of these really out there ambitions to realize this pay package, because Tesla has to go from roughly a $1.5 trillion company to $8.5 trillion worth of market cap. And, he has to grow their earnings by many multiples as well. So, whether or not he actually, receives all of the stock that is made available to him, pending all of these performance metrics, a lot of these sort of further out targets are going to be really tough to hit.
Well, as you speak, we're showing a graphic of Elon Musk basically tweeting, or formerly tweeting, truthing, I think is what's called now, depending on your social platform, saying that there's a lot of rabbits to pull out of the hat. In the meantime, let's talk about the rabbits he has successfully pulled out of the hat in previous iterations, and that, of course, is Tesla's exposure to China. It looks like China's set to fully approve the full self-driving vehicle early next year. Is that going to come to fruition, Craig?
Yeah, I guess that was an interesting tidbit from last night's presentation, because there was a full-on push on his part, actually going back last year, for him to go to China and sort of cancel on Modi in India at the last minute, to meet with the premier in China and get a regulatory approval for what Tesla calls full self-driving. They, interestingly, have not been able to actually market it as that in China, because the system has to be monitored at all time. It is not actually capable of driving the car itself. And, it will be sort of, I guess we'll see whether or not the ministry actually, is willing to give him the approval that he says they've communicated to the company could come, in the sort of early part of next year. what we've seen is that the regulators in China have been, pretty conservative and slow to approve this sort of technology, and also that there's been greater scrutiny on crashes involving these systems. And so, while that may be the sort of rough plan or the tentative timeline that's been given, it remains to be seen whether that has sort of staying power and will be something for us to watch in the sort of, end of first quarter, early second quarter of next year.
All right, Craig Trudell, our Global Autos editor, we thank you so much walking us through the dynamics of, again, a $1 trillion unprecedented pay package. Over in Washington, President Trump, in the meantime, pushing for a rare earth steel.
One of the key items on our agenda is critical minerals. In recent weeks, my administration has strengthened American economic security by forging agreements with allies and friends across the world to broaden our critical mineral supply chain.
The President of the United States there. I just want to get to some headlines that kind of echo the exact sentiment he said in that piece of sound. China looks like it's going to be suspending export control on some rare earths, some super hard materials, as well as some of the export curbs till November 10th of 2026. Those headlines, of course, crossing the Bloomberg terminal. They're also saying that the suspension is part of the trade truce agreement. Bloomberg's Brendan Murray is here on set to walk us through some of this. We kind of knew this was coming based on the readout of the two sides.
Yeah, this is the implementation of the pledges that the two leaders, President Xi and Trump, made in Asia recently. And so this is what the U.S. wants to see. It wants to see not just the promises that they've made, but the actual actions taken. Now, we'll have to wait and see in the data if whether those critical minerals continue to flow. But in the meantime, President Trump has met with the Central Asian leaders, and the U.S. is trying to diversify its supply chains more broadly. He did that throughout his trip to Asia last week with Japan, Malaysia, and some other countries. So this is really the race that the U.S. is on to catch up to China's dominance in rare earths.
And we actually saw some of the data come out from China today, where they did actually see some of the export volumes maybe drop. But there are other parts of the world that are perhaps picking up where China is leaving off.
Yeah, exactly. China. These were the October trade numbers, and so this was at the very most of the tariffs that the U.S. have applied, and a lot of exports to the U.S. went elsewhere. I think the drop was about 25%. By the same token, we saw Taiwan's exports really surge to levels we haven't seen in a long time, and that's based on semiconductors. And semiconductors, of course, are exempt from the U.S. tariffs. So those continue to flow into industries like artificial intelligence, where the boom continues nonstop.
Talk to us a little bit very, very quickly. We're also expecting Viktor Orban to be at the White House today. Does that affect any of these trade flows at all?
It's part of the transactional diplomacy. Orban's going to come and promise to buy U.S. LNG and some nuclear fuels, and so it's part of the delicate balance that the Trump administration is trying to strike with countries that also have alliances with China and Russia.
Yeah, it's really been fascinating. That's a bromance that's been in the works for some time. Does it fall apart today? Bloomberg's Brendan Murray walking us through plenty of those trade details. We thank you so much. Let's go back to the corporate space. Eli Lilly and Novo Nordisk have secured deals with the Trump administration to slash prices for their blockbuster weight loss drugs, all in exchange for tariff relief.
Eli Lilly and Novo Nordisk have agreed to provide all of their other medications to Medicaid at most favored nations prices. Most favored nations, meaning that you will pay the lowest price anywhere in the world. That's what you're going to pay. Whereas before they paid low prices and we paid, thousands of percentile ahead.
Let's get more on this from out of our Copenhagen bureau. Our bureau chief, Sarah Soilen, joins us this morning. Sarah, just walk us through what we learned here. I mean, is this enough to maybe get some of the pressure off the likes of Novo Nordisk and some of the other pharmaceutical companies here in Europe?
Well, it's definitely enough to take off some of that political pressure that's been one of the things that we've been focusing on for Novo Nordisk. As we reported in recent days, there's a lot of stuff going on for the company. They're being squeezed by competition in the U.S. They're also trying to take over Metsera. So this is really nice to know that there's at least one thing now that we know is settled. An agreement was largely expected, and the outcome is pretty much as anticipated. Novo Nordisk has already come out and said that they estimate that there'll be a low single-digit negative impact on group revenue for the next year. But analysis that I've talked to, they point out that this will be mitigated by the potential in the market now. So now they will get wider Medicare access, so they have a potential to reach a lot more customers. So it might be at a lower price, but then you're expanding the market. So on the short term, we're seeing it remove some of the regulatory risks. We know they won't keep getting hit by tariff levels in the coming years if things continue as they are now. So now they just have to sort of, if you will, roll up the sleeve and get to operate under the new conditions. But the political noise, if you will, has just been one of the issues for Novo lately. So we're still waiting to really see everything from the transformation plan pan out.
Talk to us a little bit as well about the Metsera deal. You had mentioned it, of course, and this is something where Novo, although decreasing their prices in the States, is increasing their bid for this company. Can you just explain to us and to our global audience why a company that only has 100 employees?
I think that's a question a lot of people are asking themselves at the moment. So as I see it, there's an arms race going on in the obesity market right now. Pfizer doesn't really have an obesity asset. They really, really want to buy something to get into this very lucrative market. Novo Nordisk, as we know, they have a really popular product, but they're losing out to Eli Lilly at the moment. We're not sure if the pipeline is really strong enough to stand up against some of the other competitors. So this is a way of buying a new product to the pipeline. And they're saying this is really complementary. It will reach out to more of the patients and obviously be something that really fits with the company. So we have these two companies, big global pharma companies that just want this asset. And I guess only time will tell if this is the right price or if they will end up overpaying.
All right. Bloomberg's Sarah Soilen, we thank you so much, our bureau chief out of Copenhagen, walking us through those very juicy, starting to get juicy story between Pfizer, Novo Nordisk, and of course, Metsera. We thank you so much. Let's go to the other top stories trending on the Bloomberg terminal this morning and kick it off with shares of British Airways parent IAG sliding after saying its all-important North Atlantic route experienced some weakness in the third quarter. Of course, weighing on earnings that missed estimates, the North Atlantic accounts for about a third of the company's total capacity. European airlines have been cautioning for months that passenger demand in the United States is more restrained. And Goldman Sachs promoted a record number of staff within its Asia-Pacific Private Wealth Management Unit to Managing Director. The biggest number came from the Global Banking and Markets Division. Globally, Goldman promoted the smallest proportion of women to Managing Directors since CEO David Solomon, of course, at the helm of the company, took the job in 2018. And China's exports contracted in October, falling 1.1% from a year earlier. Global demand failed to offset the slump in shipments to the United States. And shipments to all other nations except the U.S. rose 3.1%. It was not enough to compensate for the more than 25% decline to America, something we were just talking to our correspondent Brendan Murray about. Coming up on the program, we go from tennis to business. We hear from Serena Williams on her life after a legendary career and the learning curve that came with launching a venture firm. A conversation coming up next. This is Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Earnings season is here.
Earnings season begins once again.
So much going on. Bloomberg is first to break the numbers.
From Snowflake, from Pure Storage, from Urban Outfitters, and yeah, from NVIDIA.
Coming up, we'll talk about some of the other earnings that are coming out.
With the smartest insights.
Third quarter numbers are going to be really important. The commentary is going to be important. It's all going to be about margins because margins lead to earnings. And if earnings come down, we have a problem.
You have to come back again soon. This is really excellent.
Continuing coverage on Bloomberg.
This is Bloomberg Brief. I'm Kriti Gupta in London. Welcome back. Nearly a decade after launching Serena Ventures, Serena Williams channeling her competitive spirit into investing. She spoke with Bloomberg's Danny Berger at the American Business Forum in Miami about planting the seeds of her business career far before she left tennis.
I don't like the word retired, but when I evolved from tennis, I had already been investing for, I don't know, like 8 years at the time. I'd already had my firm. I'd already built a great team of people that were way smarter than me around the table. And it wasn't something that I would just have a hard fall from. I felt like I wanted to have a softer landing, which I don't know if I did or if I didn't. I wanted to have a softer landing, but I also didn't want to start something new when I just finished something. And that's something, again, my dad always told me, like, you can't go into something brand new when you finish. You need to already have it started. You need to already have a plan. You know, if you don't have that plan, then it's going to be difficult to start something new. And so I was really grateful for that, because if I were to have started investing now, after I retired, I mean, oh my gosh, the learning curve and doing everything, it would have taken years and years, and a lot of that experience was already done while I was playing. So,
well, you know, it's such a good point that it is the model now that as an athlete, you're almost expected to be so much more than that. But even so, there have been a lot of public figures who've decided to go into investing, especially because you were early on in doing that. Did you face any sort of stereotypes of people rolling their eyes saying, what is an athlete doing in business?
I did, not too many, but there are obviously a lot of people rolling their eyes and saying, like, what are you doing in investing? But again, that now was over 15 years ago. So I definitely was earlier on, not, you know, I was much earlier on the curve when it came to investing. And it was something that was really innate, that I just kind of flowed to, and that was something that really just attracted me. And it was actually early stage investing that really attracted me for whatever reason at the time. Of course, I didn't know it was called early stage. I didn't know what anything was. I didn't know what a seed was. I didn't know any of that stuff. It was this really great learning experience. I loved what Jamie Dimon said earlier, how life is really just about learning. You're learning every single day, and that's kind of a theory that I love. And that's one thing I love about VC. Every time I step into the office, I feel like I'm in college and I'm learning something new about some other product and what it does and what it doesn't do, and how we don't have it yet.
Serena Williams there speaking with Bloomberg's Danny Berger at the American Business Forum. Really fascinating conversation. I encourage everyone to go watch it on Bloomberg's platforms. In the meantime, a quick check on these markets. Of course, we are getting closer and closer to the U.S. cash open, 9:30 a.m. Eastern. In the meantime, futures are not giving us much. Shares are only down about 0.1%. We are seeing some strength in the dollar, though. You're seeing that affect the euro. You're seeing that affect the pound as well. And the 10-year that is higher is probably where the dollar is getting its cue from. Coming up on the program, travelers brace for disruption as the U.S. government shutdown threatens holiday flights. We're on that and the other top stories making headlines across your front pages next. This is Bloomberg.
The belief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are gonna kill everybody. So we gotta figure this out. And we're not gonna do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Welcome back to the Bloomberg Brief. I'm Kriti Gupta here in London. Time now for your front page news. First up, it's the Washington Post. Travelers bracing for turmoil as flight cuts kick in at major U.S. airports. Airlines have canceled hundreds of flights to comply with the shutdown-related FAA directive to reduce traffic at 40 airports, which include New York, Atlanta, Chicago, and Dallas. Next up, it's the New York Times. A federal judge has ordered the Trump administration to fully fund food stamps for roughly 42 million low-income Americans. The Justice Department almost immediately told the court that it would appeal the ruling that Vice President J.D. Vance attacked the court for what was described as a, quote, absurd ruling. Moving on to the Wall Street Journal, Blackstone offloading a flopped $1.8 billion investment in senior housing, which has resulted in more than $600 million in losses. Now, Blackstone began substantially unwinding the senior housing bet in 2022 and has already sold about 70 of about 90 senior facilities as a whole. We'll continue to monitor those stories for you on Bloomberg, across Bloomberg programming on both sides of the Atlantic. In the meantime, a quick check on these markets here, because when you look at the futures picture, it's not giving you much. It's only down by about 0.1%. Euro-dollar unchanged at 115. That was not the story earlier today, where you did see some dollar strength actually push the euro down. That has been a key trend here. 114 seems to be the line in the sand that the currency move can't actually breach. On the other hand, maybe it's getting its cue from this Treasury move that you're seeing here. A U.S. 10-year higher by about 2 basis points. Maybe that's what's driving the strength in the dollar, although you have seen that correlation start to come out for just a little bit. In the meantime, I want to give you a quick check on what's happening on this side of the Atlantic here, because perhaps maybe getting a little bit more action. Before I jinx, I desperately want to check. We definitely are. The stock 600 down about 0.5%. A good chunk of that move is coming from the healthcare space. The Novo Nordisk story, AstraZeneca, the drug pricing conversation over in the States, very much having a tradable effect right here in Europe. Brent crude is another one, higher by about 1.5% this morning. But keep an eye on this. NYMEX crude, I should say, trading at about $60 a barrel. Brent crude is at about 64, 65. So you are seeing that spread between Brent and WTI start to widen just a little bit. It's interesting. You're seeing a 2%, almost 2% move. I'm rounding up here in the oil space, despite not much action in the equity market. Maybe that's something that's going to come together a little bit later. And lastly, we are looking at the pound, 131 on cable, down about 0.3%. When I was talking about the dollar strength, it is showing up in currencies around the world, and certainly right here in Europe as well. And that's something that's going to be really driven by some of the data that we get later today, which brings us nicely to what we're pushing ahead to. The UMich Sentiment Survey is something we're going to be discussing. Citi's Veronica Clark is going to be the economist joining us on the show. Should we be worried ultimately about some of these concerns that we are seeing in the data? Should we be concerned about the ripple effects that we're seeing in the market? Is the wealth effect very much something that's going to show up in the next couple of weeks? That's the conversation we're going to have with Veronica Clark, Citi's U.S. economists. Stick with us. This is Bloomberg.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico this way or that way. It will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
It's 10:30 a.m. in London, 5:30 a.m. in New York City. Good morning. I'm Kriti Gupta with your Bloomberg Brief. Bonnie Quinn is on assignment. Let's get to what you need to know this morning. It's been a terrible week for tech. Valuation worries knocking global equities as shares of mega-cap tech stocks sell off, despite pockets of positive earnings reports just here and there. Plus, of course, the Tesla trillionaire shareholders approving a $1 trillion compensation package to Elon Musk, marking the largest payout ever awarded to a CEO. And airlines across the United States begin canceling flights as the government shutdown drags on. We are live on the ground. A quick check on these markets here because you are seeing futures not go anywhere in a hurry. S&P futures virtually flat right now, 67.43 on those E-mini contracts. NASDAQ 100 futures, a similar story. Not moving up, not moving down. Maybe that shakes out as we get closer and closer to the opening bell. In the meantime, the Treasuries market is kind of where you see maybe a little bit more action. All 2 basis point move across the curve in the 30-year and the 10-year. 410 on that 10-year ahead of maybe a little bit of UMesh data later later today, I should say, for some more stocks to watch. Let's go to Chloe Melly. Chloe.
Good morning, Kriti. Tesla is up slightly this morning after shareholders approved a $1 trillion pay package to Musk. And Musk also said that he expects China to fully approve a self-driving software by early next year. So this is something that Tesla has been really banking on to revive sales in a Chinese market, where it has been losing quite a lot of ground to domestic rivals. Moving on to the online travel agency Expedia, which is also up this morning, up quite impressively at 16% after reporting really strong results thanks to resilience resilient travel demand. So alongside results from Airbnb, this really confirmed that the US travel market is in pretty good shape, and that reassured investors this morning. And finally, the video game publisher Take-Two is down this morning in pre-market trading after delaying once again the release of Grand Theft Auto, the much anticipated title. This actually overshadowed what has otherwise been quite strong results for that company.
All right, Chloe Melly walking us through some of those early movers. We thank you so much. In the meantime, let's go right back to the macro. Investors are waiting the latest UMich sentiment data for mixed private jobs data from earlier this week. I'm not really sure what to make of it, but I know someone who does. Veronica Clark, U.S. economist over at Citi, joins the program this morning. Veronica, a couple of days ago when we got that Challenger data, it was enough to move the markets, even though we don't really see Challenger data move the markets very much. How much stock should we be putting into a data set like that?
Yeah, it is a bit frustrating when we're not getting the official government data. We're kind of grasping for straws and trying to take signals from any of these other third-party data sets. I mean, I think that Challenger job number, it just kind of confirms what we were seeing in some of these headlines a couple weeks ago, that there are some bigger layoffs at some bigger companies, at least attention grabbing. I think for now I would be really cautious to take those announced layoff plans and translate them to what that means for the hard data. We are fortunately still getting the weekly initial and continuing jobless claims numbers. We're getting that from the states. And we didn't see a substantial move higher in initial claims in that data that we got yesterday. So those layoffs, if they are bigger, they're not quite showing up in the hard data yet.
Veronica, that data showed actual job losses as opposed to just not hiring. And I think that's a really key distinction that this market may be not really recognizing right now. It feels like the market is treating the U.S. economy the same as if it were slowing down, as the same as if it were, say, a recession. Veronica, where are we on kind of the economic cycle? Are we in a slowdown? Is a recession right around the corner, or are we seeing a reacceleration?
Yeah, I think most, at least our expectation and most other expectations are that we're in this slowdown. We're not in that recessionary scenario yet. But I would say this has been a very low hiring but low firing labor market for a while, and we've seen pockets of weakness in the hard data, pockets of stability. But what hasn't changed is we have not seen a pickup in hiring, and I think I would want to see actual demand for workers start to pick up and recover before I wouldn't be worried that layoffs are that next step.
Well, Veronica, that brings to me about a big question here, because it felt like a lot of the maybe hiring pauses and freezes we were getting was really a function of some of the kind of back and forth tariff policy, trade policy, regulation, et cetera. Now that there is a trade truce in place, at least for another 12 months, we got Chinese confirmation of that earlier today. Do you think that some of those hiring freezes are going to unfreeze?
I'm not really expecting that. The uncertainty that we had over the summer, it could be one aspect of the weaker jobs data that we had over the summer. But this has really been happening for 2 years. This predates all the tariff and policy uncertainty from this year. Of course, we had the weaker jobs data last summer. That's why when the Fed started cutting in 2024, they started big with a 50 basis point cut. So this has been happening not necessarily consistently, but happening before this year.
Well, it takes us nicely to the data set we're going to get later today, and that, of course, is the UMich consumer sentiment data. Veronica, is that data set going to be a positive one, given that the market's been selling off in a really big way?
Yeah. It's, consumers are, of course, sensitive to what they're hearing about, what's happening in markets. They're very sensitive also, especially in that University of Michigan survey, to what they're experiencing in terms of prices. So if we see some stickiness in inflation, some price increases, people tend to feel worse about that. I think the most important elements are, maybe how people are feeling about the labor market, because we don't have the best signals right now. We don't have the hard data, unfortunately, but how people are feeling, perceiving job availability could maybe be telling us something too. We certainly see in the Conference Board data, not this UMich one, but some of the labor market indicators in that one do look like people are feeling worse about the labor market.
Talk to us then about what other data sets we should look at. It doesn't seem like a government shutdown is going to be ending anytime soon. In fact, maybe prolonged even further. But just walk us through the actual ramifications of some of that, first from the data front and then from the economic front.
Yeah, the longer that the shutdown lasts, the bigger the drag becomes. And there is this idea that, yeah, you will be back paying a lot of these workers, a lot of this activity could be made up, but the longer it lasts, some of that drag, I think, becomes more permanent. There are just, you don't go out to eat at a restaurant, you're not going to necessarily backfill that kind of activity, certainly all the travel issues. So yeah, once we get the data, where we fortunately do have things like those state initial and continuing jobless claims numbers, they kind of tell us that, yeah, things are not getting dramatically weaker in the labor market, but they're not getting better either. So I think once we see eventually the official data, it'll be the same story of, job growth is essentially averaging close to flat. That's a pretty soft labor market. And the trend, of course, is what's more concerning, has just been getting weaker.
All right, Veronica Clark of Citi walking us through some of the data that we can expect, some of the data we should take away from the job story, and then, of course, the impact on the government shutdown. We thank you so much for joining us this morning. Let's get to some of the other top stories that are trending on the Bloomberg terminal. Kicking it off with commodity trader Gunvor Group, which has withdrawn its offer for the international assets of sanctioned Russian oil producer Lukoil. The move comes after the U.S. Treasury Department called it, quote, the Kremlin's puppet, and said that the oil and gas trader would never get a license. And Goldman is promoting the smallest share of women to managing director since David Solomon became CEO. Women make up 27% of the new class, down from 31% in 2023. It also promoted a record number of staff within its Asia-Pacific private wealth unit to managing director. And over in the Middle East, Israel launched some of its heaviest airstrikes on Lebanon since its ceasefire with Hezbollah about a year ago. They targeted Hezbollah weapons sites and infrastructure in southern Lebanon. The attacks have stoked fears that the two sides will revert to a war. Lebanon's president called the strikes a, quote, full-fledged crime. Coming up on the program, we go right back to the corporate space. A $1 trillion pay deal for Elon Musk. Tesla shareholders approving the biggest compensation package in history. What does it mean for the company, though? We'll get the details next. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Sixth and finally, on the 2025 CEO Performance Award to our founder and CEO, Elon Musk, with over 75% voting in favor. Approved.
A historic first. Tesla shareholders approving a $1 trillion compensation package for Elon Musk. The pay agreement clearing a path for the CEO, the world's richest person, to become the first ever trillionaire. Now, I don't know what you do with $1 trillion if you get it, but maybe our next guest does. Bloomberg's global business editor Jamie Nimmo joins the program this morning. Jamie, I won't ask you how to spend $1 trillion. I'm sure you've got plenty of ideas, but I am curious what this means for this company. There's some pretty lofty targets he has to hit to actually get the $1 trillion.
Yeah, I was thinking about that question. What would I do with $1 trillion? I'm not sure anyone knows. I'm not sure even Elon Musk knows. It might have something to do with Mars, I guess. Yeah, there's some pretty lofty targets here. Along the way, they've got to hit, market cap, targets along the way, as well as operational targets, including vehicle numbers and so on. Pretty stretching. Some of them aren't as stretching as you might imagine. The vehicle targets, slightly more attainable, the early targets. This happens in segments. So if he hits each step, he'll get a certain amount. So that makes it a little bit easier. I mean, we're talking about the shift to EVs globally. It might be happening a bit more slowly at the moment, but ultimately it will happen, and that some of those targets will be slightly easier to hit, I'd imagine.
Well, talk to us a little bit about, as they are looking for these lofty targets, Tesla's approach to China here. Musk also said there might be some approvals coming their way.
Yeah, we're not exactly sure what those are at the moment, but China's a key market for all automakers globally, especially Tesla. A key EV market there. Something like more than 50% of new car sales are electric, which is way ahead of major markets like the US and other markets in Europe. So the key market for Tesla to crack. And that market particularly will be probably the key to unlocking that growth and hitting those targets to hit that $1 trillion mark.
Is that something that Elon Musk is going to spearhead? I mean, we know that was one of the big advantages that Tesla used to have, how they were operating in the Chinese market. Is that still a win for Tesla, or under this administration, is it kind of an Achilles heel?
I mean, it's proving difficult for everyone at the moment. I mean, we've seen the European automakers really sort of pull back from China, finding it really tricky there. You've got BYD and others, the local players, pushing hard, and there's a real price war going on. So that market is really tricky at the moment. Now, how it plays out over the next few years, who knows? And, as luxury spending kind of recovers, people start to spend a bit more on Tesla vehicles and others like it. Might start to increase in demand. That might help them there, but it's clearly a key market that it will be spending a lot of time and trying to work out how to crack.
All right, Bloomberg's Jamie Nimmo walking us through, again, a historic first, a $1 trillion pay package for Elon Musk. We thank you so much. Let's head over to Washington, where President Trump met with 5 Central Asian countries to seek rare earth deals.
One of the key items on our agenda is critical minerals. In recent weeks, my administration has strengthened American economic security by forging agreements with allies and friends across the world to broaden our critical mineral supply chain.
Joining us now from our Washington bureau's Bloomberg's John Harney. John, good morning. Just walk us through what we learned here. We know the president has been on a deal hunt for these rare earths. Is it enough? Has he gotten enough supply?
No. To be very brief about it, I mean, this is an ongoing problem, and it has echoes, curiously enough, with the Great Game, the confrontation between the British and Russian empires of the 19th century that centered on Central Asia. China has agreed to lift its restrictions on rare earth shipments, but, I think the various companies, government agencies, other governments can't fully trust that. So they must look elsewhere. And President Trump has made forays to these countries in Central Asia, which were part of the Soviet orbit and under Russian influence in Tsarist times, really, and still have close ties to Russia. But they're eager for new contacts with the West, with the United States, given the sanctions that have been imposed on Russia because of the Ukraine war. And China, of course, is also very interested in this part of the world.
Certainly something we're going to be keeping a close eye on. Let's go from the deal-making on the geopolitical front to the deal-making in the corporate sphere. The president also announced yesterday deals with 2 pharma giants. Take a listen.
Eli Lilly and Novo Nordisk have agreed to provide all of their other medications to Medicaid at most favored nations prices. Most favored nations, meaning that you will pay the lowest price anywhere in the world. That's what you're going to pay. Whereas before they paid low prices and we paid, you know, thousands of percentile ahead.
I mean, John, this is a really interesting dynamic. You're now seeing something that Joe Biden had actively pushed for in his administration kind of being executed here by Donald Trump, and not even on regular drugs, on weight loss drugs. Just walk us through your take on this.
Well, there's several elements to this. President Trump campaigned against drug prices, against the pharmaceutical establishment, and he installed Robert Kennedy, a longtime critic of the medical drug industrial complex, if you will, as in his cabinet, in his administration. Now, he seems to be making accommodations with these companies, or they're doing it with him, and it's all playing out with the whole tariff and with tariffs and other issues. Now, this, of course, does happen. This unfolded the week that Republicans received some bad news at the polls in the elections, and those elections show that voters are very concerned about prices, and that includes drug prices.
John, very quickly, let's go on to what's going on with the government shutdown. Hitting new roadblocks here. What are we seeing?
Well, back to the elections on Tuesday. It seemed earlier this week, and even late last week, that there was some sort of agreement in the works where certain so-called moderate Democratic senators would agree to, with Republicans, to reopen the government with some somewhat vague promises of action on health care subsidies that led to this clash, this standoff. But that now seems to be fading. That hope that seems to be fading. Speaker Mike Johnson said yesterday that he was, and Democratic senators said they were less optimistic. And at the same time, President Trump said openly that this has hurt Republicans, despite Mike Johnson and other congressional leaders saying, or blaming the Democrats since this began. We're now on, I think, day 39 of this.
That sounds about right. Bloomberg's John Harney in Washington giving us a roundup of some of the top stories, of course, there. We thank you so much. I want to continue on that theme of the government shutdown, because one of the consequences is major disruption when it comes to air travel. About 700 Friday flights already canceled by the 4 largest airlines stateside. Joining us now from Newark Airport is our very own Nora Melinda. Nora, just walk us through what you're hearing, what you're seeing on the ground.
Well, Critty, we've been here for about an hour at EWR Airport, and we've been talking to different people. We've really been seeing droves of individuals coming here, but in talking to some representatives at United, which of course we know to be one of the major hubs here in Newark Airport, they're really saying that this is not uncommon, the amount of people that are here today. But of course, what still remains on the mind of a lot of travelers right now in this moment is flight disruptions. This is something that, of course, we've been grappling with the ongoing government shutdown. We've got TSA workers, air traffic controllers not being paid here since October 1st. So this is really in focus right now, with a lot of travelers really just anticipating major delays here.
I mean, not helpful at all going into Thanksgiving or ultimately Christmas if this goes on. Nora, just connect what's going on the ground to a business audience for us.
Absolutely. I mean, if you think about the fact that this has cost the U.S. economy $15 billion each week that we've seen this government shutdown prolonging. And of course, as you're mentioning here, we're headed right into the holiday season, which of course we know is a busy time for travelers. We even had Vice President J.D. Vance talking to a lot of airline executives discussing the fact that if this continues to prolong, it of course could bleed into the holiday season. And that's not good for, of course, the economy, travel, Americans more broadly here. So this still is a fear that a lot of people are grappling with, as we're really trying to see a resolution here and some sort of solution here for this government shutdown.
All right, Bloomberg's Nora Melinda at the Newark International Airport giving us a lay of the land as we start to see more of these cancellations pile up. Thank you so much for your reporting bright and early for us in New Jersey. Coming up on the program, we're going to get you set up for your trading day with more earnings and, of course, the UMER sentiment data on deck. Stick with us. This is Bloomberg.
Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
We're coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Jumana Versace in Vienna, and this is Bloomberg.
Welcome back to Bloomberg Brief. I'm Kriti Gupta in London. Let's take a look at what's going up ahead today. We've got plenty of earnings. They are not over, despite it being a Friday. Constellation Energy, KKR, and Wendy's reporting before the opening bell. That's right back to the data front. The UMER sentiment survey coming up at about 10 a.m. Eastern time. Is that going to give you the same trends, the same panic that you saw when it comes to perhaps the Challenger data we got earlier this week? And of course, Monster Beverage reporting after the market close, as promised. So just because it's Friday does not mean the earnings are over. In the meantime, let's take a look at some of the micro movers that are already seeing plenty of action this morning. I want to start with Expedia raising their full year outlook, citing some resilient travel demand, a different story from what we heard from IAG on this side of the Atlantic. Nevertheless, shares higher by almost 17%. Also some good news from a firm. Improved 2026 guidance, beating their estimates. Our interview with CEO Max Levchin coming up on Bloomberg Technology at about 11 a.m. Eastern time. And lastly, one stock that's not doing so good in the pre-market, Open Door Technologies, the online home buying platform, posting wider than expected sales losses and really getting punished for it. Those shares down about almost 23%, trading about $5.09 a share. Let's zoom out for a little bit and talk about the macro story, because S&P futures, you're seeing plenty of volatility on a micro basis. You're not seeing it on a macro one. S&P futures virtually unchanged, 67.45 on the S&P E-minis. Same story for the Bloomberg dollar. You did start to see some Bloomberg dollar strength earlier in the session. Some of that might be getting their cue from a 10-year yield that's higher by 2 basis points. When you look at what's happening on this side of the Atlantic, I still think it's pretty interesting, because a stock 600 picture is very different from what you're seeing over in the States. Down by 0.5%. A lot of those losses coming in the healthcare space. One eye firmly on Novo Nordisk and their fight with Pfizer over Metsera. That seems to be bleeding into the broader healthcare space, despite that drug deal between the getting prices lower in Washington yesterday. NYMEX crude at $60 and cable down about 0.2%, 131 on that transatlantic currency pair. Lots going on in the macro space, lots of earnings, lots of geopolitics to watch. It feels like a quiet Friday, but then you look at some of these earnings numbers and it doesn't quite feel like it's all over. That does it for Bloomberg Brief. Surveillance is ahead with lots of fantastic conversations. Stick with us. This is Bloomberg.
Such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety, and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
We have
have nice earnings growth, but it's being pushed by Mag 7.
Until this bull market is over, probably these growth stocks lead the way.
There's this euphoria that's taken over the equity market.
And we still do feel confident at the stage we're in coming out of earnings season.
The story is still positive.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Friday, the shutdown begins to bite. Another day of DC dysfunction hitting airport capacity across the country as the data blackout leads to another payrolls Friday without the payrolls. One man could be set for a major payday. Tesla shareholders signing off on the biggest compensation package ever.
Elon Musk winning approval for that $1 trillion potential payout over the next 10 years should he meet 12 specific metrics that include expanding his company really dramatically. He said he wanted a big enough ownership stake in Tesla to be comfortable that the robot army he was developing didn't fall into the wrong hands, but not so large that he couldn't be fired if he went, quote, crazy. So a real discussion here around the ambition behind this company.
That stock is up by 0.75% at the pre-market. That's one payroll. Let's get to the others. We're not going to be talking about this much. Median estimates negative 23K. Typically, the number would drop at 8:30 Eastern Time. Not going to get it. The shutdown, though, begins to bite. Taking out capacity across this country, across 40 or so airports over the coming weeks and months. This is where the pressure starts to build.
About 700 flights will be canceled today across some of the biggest airlines, across 40 of the U.S. biggest airports. And basically what's going to happen is it's a 4% reduction of flight capacity mandated by the FAA because they don't have the capacity to make sure this is going to be safe. And then it increases by 1% until we get to a 10% reduction next week. This is why it bites, because the previous longest shutdown, 2018, 2019, is when we saw a lot of chaos at the airports, that finally there was blinking and the government was reopened.
We already know the consequences for the Federal Reserve. One official was speaking yesterday. Didn't look like he wanted to cut interest rates anytime soon. Austin Goolsbee of Chicago. When things get foggy, slow down. That's not a man that's willing to vote for a rate cut without the data.
Yeah, and Cleveland Fed President Hammack also came out and talked about how inflation is more important for her right now than the labor market, and talking about how rates are barely restrictive. How much is this responsible for the momentum unwind that we have seen over the past couple of weeks? Is there a sense that the Fed is not going to deliver on the rate cutting cycle that a lot of people were expecting, that were fueling some of the risk appetite that we had seen in markets?
We're overweighting data we'd otherwise ignore. When was the last time you saw headlines on challenger job cuts? I mean, can we just take a step back here and think about this? Challenger job cuts are typically a footnote in any trading session, and they were the headline yesterday. And that's because we don't have the data this morning.
There also was another metric looking at potential planned layoffs that also got a lot of attention. There's so much noise around these data. Just to talk about the challenger job cuts, those are planned layoffs that sometimes don't materialize. The fact that they have not cohered with other metrics, including ADP payrolls report, the fact that they don't include job creation was ignored, spurned, as people were looking for an excuse that this was a labor market that was cracking. And frankly, it was supported by some of the earnings that we saw from, frankly, fast casual retailers, like the idea of fast food companies, signaling there was some weakness. People are cobbling together narratives with whatever they have.
We're down to this. That's what drives the bond market now in America. Equity futures this morning down by another 0.1%, heading towards a weekly loss on the S&P 500. Coming up this hour, we'll catch up with Jeff Yu of BNY as stocks look to rebound. Dan Ives of Wedbush Securities as Tesla backs Elon Musk's $1 trillion pay package, and Priya Misra of JP Morgan on why the economy is still on course for a soft landing. We begin this hour with stocks little changed as markets look to close out a volatile week on Wall Street. Jeff Yu of BNY writing the following: the labor market is continuing to slowly deteriorate. We think a December rate cut is still likely. Jeff joins us now for more. Jeff, welcome to the program, sir. No payrolls at 8:30 Eastern Time, but just play along. What would you expect we'd see at 8:30 Eastern Time, and how relevant would it be to this stock market?
I think the market's just going to continue the assumptions from recent trends. It sort of is a no fire, no hire economy, but if you're a policymaker with an employment mandate, I think you're going to focus on the no hire side a bit more, and it's a sign that the economy overall needs some support. So I think that's why our base case is for further easing. The issue with the market right now is, given where positioning is, given where valuations are, they probably need a bit more than easing just on a one-off basis to ensure that financial conditions remain loose enough to sustain current levels of holdings.
Jeff, if this was an old school game show and behind door number 1 was ISM Services and behind door number 2 was Challenger Job Cuts, any day of the week, I am taking door number 1 and ISM Services. Why are we overweighting the data we got in the last 24 hours?
I don't think it's a case of overweighting per se. It's just the bar is so low for reacting to any form of labor market data right now. Put it this way, markets don't really need an excuse to adjust their holdings right now, and it's not just in the US. You're seeing it in APAC right now, especially with some of the markets more associated with a strong US economy. Look at Korea, for example. That's a market we're very focused on right now, performed quite poorly throughout the week. So the bar is low for that kind of a reaction. So I think it's where a bit more vigilance is needed, not just for investors, but for policymakers as well.
Jeff, you went there, and it is the question for me this morning, which is what is driving this momentum unwind? Is it the idea that the Fed isn't going to cut as much as people expected? Is it just simply that people are looking for any excuse whatsoever because they're realizing they got ahead of their skis in valuations?
I think it's more skewed towards the latter right now, or the fear that they are too much, focusing on valuations at this point across the board. So the trick is, right now, or rather the balance is to ensure that it doesn't become a self-fulfilling narrative, because if that unwind begins to snowball, then you can run into a situation where you have a sharp deterioration in sentiment, such that when the shutdown ends, and it will end, and when we get data, things may not have been as bad, but then the market's going to run ahead of itself in the opposite direction. So getting that balance right is really imperative right now.
You can tell whatever story you want depending on which anecdotes you look at. And this has been true for the entirety of the year. And I'm just wondering whether you see enough evidence that a Fed rate cut could cause that broadening out in equity markets, frankly, across markets, that a lot of people have been hoping for. If there isn't this weakness that you think will be revealed after we do get some data.
I think the hope is, as you state, when we do get data, there is a consistency in place. The Fed is easing, and it's on track in accordance with how the economy is functioning right now, going back to the point of no higher, no fire economy, and also the AI narrative, where that concentration risk can be sustained. I don't think the two can be separated as much. But on a global basis right now, we look at international holdings of US assets. That's a bit more, I think, flight of feet, right? They can actually move out quite quickly, and they are actually a bit more overweight compared to domestic investors right now. So I think from the Fed's point of view, they need to also appreciate how important the US market is to global conditions. There is no decoupling, especially in terms of financial markets. Everyone's taking the lead from the Fed and from US markets right now.
Jeff, do you still think they can go in December, though, if we do not get government data, especially on CPI? Jonathan mentioned Austin Goolsbee. He's talking about how he would feel very uneasy without getting any inflation prints before deciding on what to do at that meeting.
So we appreciate that, and I think if you look at what the BOE's done this week, it's thinking along those lines as well. Focusing on the CPI side, on the inflation side, but the Fed has a labour market mandate, and for any central banker, it's do no harm. So if there is a perception that by not moving, that could actually cause further deterioration or no improvement in the labour market, I still think on balance, there's enough of a vote within the Fed to ease, and they will, alas, have to rely on those anecdotes for the time being as well.
Well, Governor Myron was on with us recently, and it wasn't so much the anecdotal second-tier, third-tier labor market data that he was concerned about. He really said there's no substitute when it comes to inflation. What are you looking at to track what is going on with inflation in the United States?
So I think, from the US, on the one side, you have the private sector surveys, to match things. But going back to the earnings reports, what are those consumer-facing, those household-facing companies, saying about their own margins, and what they're saying about household demand? And is household demand, are consumers not spending in response to prices? I think that element is important as well. Sometimes we don't appreciate the macro inputs, in corporate earnings reports enough. So I think that as the earnings season gradually comes to an end, we'll be looking at what the individual companies are saying about the household and their response function, their reaction function to prices. I think that side of it is important as well, and the Fed will be looking at that quite closely.
Jeff, are we seeing pushback in some areas of the economy? Lisa at the top of the programme mentioned fast casual restaurants. Certainly I can name a few where they're struggling to pass on higher costs to consumers. Are you seeing more than that?
So, right now we're not really seeing a reaction to that. I think people are cognizant of it, but if I speak to clients, are they really focusing on that at this point? Don't really see it. And there's this old adage, the US stock markets, what the large caps, what the earnings are reporting may not reflect what the US economy is. So this K-shaped economy, I think that is a fear. So, whereby the larger corporates in particular, they're reporting the reaction function of US households with purchasing power, with consumption power. And if you look at, what the the lower end of the economy is saying right now, that could be a different story. So I think we need, in terms of where the gap is for the labor market for the reaction to inflation, is perhaps what the lower deciles of the US economy. So that perhaps, again, is where the Fed really needs to go a bit deeper and react accordingly. And I think they're going to err on the cautious side. Yes, maybe headline inflations are high. The higher income deciles are spending, but for the rest, they are struggling right now, and they need support in the form of lower rates.
Hey, Jeff, thank you, buddy. Appreciate it. Jeff Yu there of BNY out of London today, looking for another rate cut. Lisa, in December.
I love that we're hinging our view of the economy based on how much protein is in your sweet green salad or how much the scoop of Chipotle chicken is in your burrito. I know that that sounds flippant, but how much are these specific issues where people had been going and paying higher prices for products and felt like they were getting cheated on various levels with respect to the amount of different products? And so you start to look at the rhetoric, and that gets that much more muddy. Are we really hinging the entire economic outlook to how much protein goes in your salad? Because ultimately that might be what we're doing.
Look, that salad company's got a problem. You know, I've heard a lot of people say the same thing about that salad company.
It's actually, that was part of the issue.
Yeah, that's not about the consumer.
But
that's about going public.
But how do you know which one is which, right? How do you decipher the not enough protein from the, oh no, we have a problem, Houston?
Well, on this one, I can draw a firm distinction for you. Okay?
I think a lot of people can.
Based on the feedback I've had here in New York,
okay.
That salad company's got some problems. Let's give you an update on stories elsewhere this morning. With your Bloomberg Brief, here's Yahara Anand with more. Hey, Yahara.
Hi, John. Senate Republicans are planning to vote later today to end the government shutdown. Majority Leader John Thune said his party aims to lay out a new funding date and additional spending bills to the House proposal. Democrats are expected to block the vote, but both parties are preparing to stay in Washington through the weekend to try and force an agreement. But as the shutdown drags on, airlines across the U.S. have started canceling hundreds of flights. The 4 largest carriers have canceled about 700 flights scheduled for Friday after the U.S. Transportation Department ordered airlines to cut 10% of flight capacity across 40 major airports. The reductions apply to flights between 6 a.m. to 10 p.m. local time at each airport. And China's exports unexpectedly fell in October for the first time since February. This as global demand failed to offset the slump in U.S. shipments. With the U.S. reducing tariffs on Chinese goods, trade between the two countries could pick up through year-end. That's your Bloomberg Brief. John.
Yahara, thank you. Bit of news in the political world here in New York, so let's get to it. Here's the post on X just moments ago. Kathy Hochul is the worst governor in America. Under her failed leadership, New York is the most unaffordable state in the nation, with the highest taxes, highest energy, utilities, rent, and grocery bills. When New Yorkers were looking for leadership from our governor, she bent. Elise Stefanik this morning.
Entering the race to be governor, I'm not surprised. They have been talking about how their internal polls are showing that they could show a robust showing against Governor Hochul. Also, what did she say to us recently in a Bloomberg News interview? If you have a Mayor Mamdani, New Yorkers are going to look for a check. And they're going to look for that check in Albany. They look for the check when it comes to a governor.
That's what I was going to point to, this idea of how much is this a direct response to Mayor Mamdani and say, oh yeah, you want to raise taxes? Guess who holds the purse strings? And this is really setting up that clash.
More on that story later on today. Live from New York City this morning. Good morning to all. Futures down by about 0.2% on the S&P. Up next, the shutdown begins to bite.
The American people are unfortunately about to start suffering some very real consequences because of the shutdown. After 30 days of this thing, 40 days of this thing, you're going to start seeing very real travel delays.
That conversation up next with Brian Gardner of Stifel, live from New York City this morning. Good morning.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Equity markets are down on the week. They are down on the session. We're negative by 1/3 on the S&P 500. On the Nasdaq 100 this morning, down by 0.5. Under surveillance this morning, the shutdown begins to bite.
The American people are unfortunately about to start suffering some very real consequences because of the shutdown. After 30 days of this thing, 40 days of this thing, you're going to start seeing very real travel delays. That's because the Democrat government shut down. You're going to start seeing SNAP benefits run out. That's because the Democrat government shut down. They should stop this charade and open up the government.
So here's the latest this morning. The Senate planning to vote on a new government funding compromise as the fallout from the shutdown increases. Bloomberg's Jack Fitzpatrick joins us now for more. Jack, good morning to you. Are we seeing those consequences already this morning?
We have seen the consequences stack up, that's for sure. At this point, I think we're past the shutdown in which nothing matters and nothing happens on Capitol Hill. And in the last couple of days, we've seen the normal shutdown in which case members of Congress realize this is very bad and they ought to start trying to find an off-ramp begin. And that's been the last 48 hours or so. The FAA news, the cancellation of some flights is a pressure point. The SNAP nutrition benefits being cut is a very significant pressure point. There was a court ruling yesterday directing the Trump administration to fully fund SNAP. They are appealing that. There's a lot of uncertainty there. There's uncertainty with military paychecks, and of course, a lot of federal workers not in the military have not gotten paid. So that doesn't really cover, though, the core question of the shutdown, which is the Affordable Care Act subsidies that are set to expire at the end of the year. Democrats continue to say that if there's not an offer on the table to solve that problem in some way, they're not budging. And so it does look like today's vote, the 15th vote in the Senate to end the shutdown, will fail. But it does seem that there's a bit more motivation on Capitol Hill the last couple of days. And while we're not at the finish line, members of Congress are, I think, sincerely running the race to try to find some sort of solution.
Well, Jack, motivation for who? Which members of Congress? Who are you tracking?
There's clearly motivation for Republicans. Democrats have kind of dug in after the Tuesday election results. They feel like that's a bit of a mandate for them. Republicans have been looking for sweeteners unrelated to the health subsidies. They've said, look, we can attach some full funding bills, including the funding bill that covers SNAP nutrition, instead of just doing a continuing resolution to have agencies running on autopilot. They've said on federal workers, the people who were laid off can certainly be recalled back to their jobs. People will get back pay. There's a more conciliatory tone from Republicans following the Tuesday election results. And I would say there's been some fatigue on the Democratic side from moderates who have said the pace of negotiations have picked up. Both sides are looking for an out. I do think that after the Tuesday election results, which look much better for Democrats, the pressure has risen a bit disproportionately on Republican senators.
Jack, thank you, sir. Appreciate it. The latest down in D.C. from Jack Fitzpatrick. To extend the conversation, Brad Gardner of Stifel writes the following. Some Democrats will likely see Tuesday's election as a validation of their shutdown strategy. The chances of the shutdown lasting into next week and beyond have increased. Brian, welcome to the program. Are you suggesting that those wins are more relevant than the potential chaos across the country's airports?
In the minds of some Democrats, yes. I mean, not all Democrats. I don't think, Jonathan, that you can paint with too broad a brush. I think there are some more aggressive Democrats, some more firebrand type Democrats who see Tuesday's results as a validation of their strategy, and they think they have the wind at their back, and they are going to double down and push for more. Then you do have some moderates who want a solution. And look, I think you can argue that Tuesday's election results gave us a split view of the Democratic Party nationally. The firebrands won in New York, but the more moderates won in Virginia and New Jersey. So there is a bit of a split among Democrats about what their strategy is going forward.
And in Virginia, the exit poll said that the shutdown was weighing on the workers, those individuals that went out to vote. Obviously, they house so many of these federal workers. Can you see Virginia senators signing up for clean resolution?
It's a great question, Anne-Marie. I mean, because Virginia is, among one of the two states that's ground zero, along with Maryland, in terms of government workers. But the two Democratic senators have pretty much held strong. I haven't detected that they're breaking from the rest of the group yet and joining the more moderates who are pushing for a reopening. I may be missing something on that. But those are two people that I would look to very closely to see if there's going to be a break among Democrats, if there's going to be real progress in these talks. You would think that Senators Kaine and Warner would be front and center.
Would it just be enough as an off-ramp for the Democrats to get a vote? Senate Majority Leader Thune put a vote on the floor for the enhanced expiring health care subsidies, or do they actually need a plan to extend them?
That's the big question. I think it shows the split among the Democratic Party. I think for some centrists, they would be okay with it. But the firebrands, for now, are pressuring them not to give in on that. And so far, I think the louder voices in the party, the more aggressive voices in the party, are winning out. In terms of party unity and keeping everybody on the same page. At some point, though, if we get into the weekend or next week and we have those airline delays and the cuts in social safety net programs really start to get to the bone, maybe then you'll see a change in tactics and strategy among the Democrats. But I got to say, I mean, it's been impressive to watch them stay unified. Whether you agree with their policy or not, their sense of unity has been pretty impressive throughout this.
What's your sense about the reduction in flights that we are seeing right now and the mandate coming from the FAA? Do you think that this is actually a safety issue, or do you think this is trying to raise the pressure to get some sort of conclusion sooner?
Oh, I wouldn't be that cynical, Lisa. No, I mean, look, and I'm somebody who, my flight wasn't canceled last night, but I ran into a bunch of delays. So, I mean, I think travelers are really going to start to feel it. But no, there's politics going on here. Let's go back to Casablanca. Shocked that there's gambling going on. I'm shocked that there's politics going on here. I'm sure there is a level of safety at work here, but there's a level of politics as well.
So you're not that cynical, but it could be true. Brian, I am curious. But I am curious. There was this move yesterday that I thought was pretty telling when Republican senators pushed back against President Trump. And after that breakfast, they signaled that they were not going to nuke the filibuster, akin to what he was looking for. How big of a deal is that?
In longer term, it's a big deal because it has ramifications for both parties going forward. In the short term, I think it's starting to signal that, and we have to read this in the context of Tuesday's results, that some Republicans are going to start to look in terms of self-preservation, and they're not going to be as locked up with the White House as they have been. And they probably are going to feel a little bit more looking longer term to what's in their best interest, not just what their relationship is like with the White House at any given moment.
Brian, have you got a hard out? Is there one on the calendar?
No, I mean, Jonathan, I could give you, Monday or Tuesday, but, I was so wrong at the beginning of the shutdown when I really thought it was going to be a shorter stalemate than it has proven to be. And I think, not just me, but talking to people up on the Hill, I think they've given up on trying to handicap this as well. I thought it, after Tuesday, I thought it would go into the weekend. I think maybe we get into early next week and there's an out, but who knows at this point? I think a lot of us have underestimated how long this would go on.
Brian, thank you. Brian Garden there of Stifel. It would be unthinkable, surely, to think that this would stretch into Thanksgiving week.
that would be, honestly, catastrophic. And I'm talking not about necessarily personal lives at stake. I'm talking about people coming with pitchforks to Washington, D.C. saying, I can't go have turkey with my grandmother who hasn't seen me in about, 12 months. You're telling me that? Absolutely not.
There's too many issues right now, snowballing, SNAP, FAA, a host of issues that at some point either side needs to blink. And to Jack's point, no one is blinking just yet, but we have seen acceleration of conversations in a bipartisan way on potentially what off-ramps could be on the Senate side to reopen the government.
Starting to see just a little bit of movement here. Who knows when this ends? Equity futures on the S&P 500 dropping again. We're down by 1/3 of 1%. Coming into Friday poised for the biggest weekly loss since early October, adding to those losses so far this morning. Coming up on the program, some good news for Elon Musk. Dan Ives of Wedbush joins us as Tesla shareholders are putting full faith in the CEO. Elsewhere, Danny's got your morning movers. Expedia soaring on strong travel demand. That stock is higher by 16%. Makes sense of it for me, Bramo.
No, I can't.
Where is the U.S. consumer?
No idea. I was looking at Expedia. I'm thinking to myself, someone's looking for discounts and they're traveling. Forget it. I'm gone.
Still spending on travel. That
Maybe.
Conversation just around the corner, kinda. From New York City, you're watching Bloomberg TV.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
You know, Wall Street is a tough gig, and I'm always happy when someone's got a new seat, so shout out to Chris Harvey. This came from Isabel Lee and Alex Semenova just yesterday. The former head of equity strategy at Wells Fargo, Chris Harvey, joining CIBC as the firm's head of equity and portfolio strategy. Chris, I think, had one of the calls of the year at the start of the year, looking for 7K on the S&P 500, just north of that, stuck with it through the drawdown of April, and look how close we are to that number this morning.
So he can come on in his new seat and he can explain to us what's going to happen next year, because, you know, it's always good when you get it right, but then what have you done for me lately? Let's get your 2026 expectation so that we can measure up what we're going to look into.
Congratulations to Chris and the whole of the team over there. Equity futures this morning, if you're interested in the price action, negative by 0.4%, adding to this week's losses. We're down across the board here on the Nasdaq, negative by 0.5. In the bond market, yields on a 2-year and a 10-year pretty stable through the week, on the week. But the amount of tension and the chop we've seen over the last few sessions has been unreal. On the one side, decent data. On the other side, bad data. On the one side, Fed doves. On the other side, Fed hawks. There's a lot of tension in that tug of war at the moment.
And one of the problems is there is no data point that really takes on the same preeminence as, say, non-farm payrolls, which is the gold standard, albeit flawed, and a lot of people can go into that. It's sort of, do we really put ADP versus Challenger? Are we really talking about Chipotle versus Delta? Are we really trying to make these corollaries that aren't perfect and that don't necessarily have weight one more than another, or they have traditionally, just people are ignoring them because they're looking for any narrative to possibly support what they're feeling, their vibes really seem to be pointing in.
It's cherry picking season for economists across the country. In the bond market at the moment, 2s at 355, 10s at 4.09%. As we count you down to the opening bell, let's get you some single names, some morning movers. Let's cross over to Danny for more. Hey, Danny.
Hey, John. Just worth checking on Tesla this morning. It was up as much as 1%. But now it has started to fall as the future session moves on and generally stocks fall. We're down now at this moment a 0.1% after yesterday Elon Musk getting his $1 trillion pay package approved. The company said that 75% of shareholders voted for it. Elon Musk himself saying it's not a new chapter, it is a new book at Tesla. Elsewhere, we had some travel-related earnings, all of them looking very robust. Expedia being one of them. Look at the move on the share. 15.7% higher. They raised their outlook, saying not only was the current quarter good, but the momentum in October and going into the holidays looks strong too, and they're not seeing any impact whatsoever from the government shutdown. Along with Expedia, another name for travel we also heard from was Airbnb, similar for them. Really robust quarter. They exceeded expectations when delivering what their outlook was. One of the big things that analysts also pointed to, and Airbnb itself did, was the new program that they started in the summer, which is reserve now, pay later, so kind of a buy now, pay later type of flavor product for them. And apparently that also really fueled bookings, especially in North America, so those shares up more than 4% in the pre-market, John.
Danny, thank you. Travel stocks looking good. Good move there for Airbnb. On our radar this morning, one of our top stories, Tesla shareholders approving the $1 trillion pay package for the CEO, Elon Musk, the record-breaking deal putting Musk on the path to becoming the world's first trillionaire, but first requires him to deliver on some very ambitious targets. Elsewhere, airlines are scrambling, already cancelling hundreds of flights over shutdown-related shortages. The FAA requiring airlines to cut daily domestic operations by 4%, forcing travelers to scramble as the political standoff continues. And finally, the White House reportedly set to block NVIDIA from selling its latest scaled-down AI chips to China. People familiar with the matter telling the information NVIDIA is still working on a scaled-down version of the Blackwell chip in hopes of gaining approval.
This comes after what we heard from Jensen Huang yesterday in the Financial Times, where he came out and said that because of some of the government support in China, they were going to take the lead when it came to artificial intelligence and different new technologies. A real question here about whether this is blowback from the White House, whether they have to come out and explain that they're with the policy. It's hard to know exactly what's going on here, what the parameters are, and what NVIDIA really is expecting, say, a year out in terms of what they can sell to China.
I find it really interesting that all of a sudden Jensen Huang is talking about the fact that China's going to win the AI race. In April, he told me that China was behind. Now they're ahead. When what? The administration is not backing what his policy proposal would be, which is to send the Blackwells or the watered-down Blackwells. The Treasury Secretary said, this is the crown jewel of the United States. And the administration is saying, we're not sending the crown jewel, we're not sending the lab-grown version of that crown jewel either to China right now. And you have seen a change of tone from Jensen almost immediately.
Following that interview in the FT and that piece from the Financial Times in the last 24 hours, I think there was a follow-up statement from NVIDIA kind of backing away from some of the comments because they could see how this was being interpreted. And it's not a good look for the NVIDIA boss.
It really raises a question, who's in charge? and who's actually advising President Trump, and how much is the White House coming out with this, partly also sort of a smackdown, saying, hey, listen, we're in charge here, because it is a bad look, and you do wonder if he's going to continue to back away.
That's the latest on NVIDIA this morning. Let's turn back to Tesla. Shareholders overwhelmingly approving a $1 trillion pay package for the CEO, Elon Musk.
I'd like to thank the Tesla board for their immense support. We have a fantastic board, fantastic group of shareholders. What we're about to embark upon is not merely a new chapter of the future of Tesla, but a whole new book.
Musk now tasked with delivering on major targets for Tesla to achieve the full payout. Dan Ives of Wedbush saying, now it's about driving the most important chapter in Tesla's history with an autonomous future ahead of us. Dan joins us now for more. Dan, good morning.
Great to be here.
Big step back, okay? Just for anyone who might be confused, there's no check written out right now for $1 trillion.
Sure.
There's a major bar to clear. Just walk us through the targets that the board has now set for the CEO, Elon Musk.
Also take a step back, 2018, I mean, those targets, everyone's like, there's no way Tesla would hit them, and they exceeded them. So, look, I think it just comes back to when it looks at robotics and you look at autonomous, I mean, this is the most important chapter, I think, in the history for Tesla. So you need Musk as a leader, as ultimately the key ingredient to get there. Look, you start to get to 3, 4, 5 trillion as a market cap, and also based on a lot of those sort of, targets to hit, I believe it's all on the table. I mean, these are not targets that are just ridiculous, obviously extremely optimistic, but I think Tesla is going to be able to get there as they execute.
So let's talk about those targets. $1.5 trillion current market cap, going up to $8.5 trillion over the next 10 years. That's one of the requirements. And that comes with a transformation of what this company actually is. Can you describe what the ambition is and how feasible it is to get there in the current iteration of Tesla?
Sure. So look, I think more and more, I mean, this is an AI, it's an AI story going forward. And I think the reality is, like, when it comes to autonomous and robotaxi, cyber cabs, I think they're going to own 80% of the global market when it comes to autonomous. And I think that is sort of the future where, to put some numbers, let's say you're talking about 1.5 million, 2 million vehicles per year. Okay, you start to look at what they could ultimately do, 5, 6, 7 million when it comes to robots, when it comes to autonomous. I mean, that's, look, from a physical AI perspective, the two most important companies in the world, it's NVIDIA and it's Tesla. And that's why this was important, because Musk is ultimately really going to be the key driver to get there. And I think investors recognize that 75% was a huge vote of confidence. And I think basically saying, like, you're our leader, lead us there.
The commentary from the leader was interesting when he said that he wanted a big enough ownership stake in Tesla to be comfortable that the robot army he was developing didn't fall into the right hands, but not so large that he couldn't be fired if he, quote, went crazy. Why couldn't other companies involved in AI and some of the technological transformation that could lead to robot armies make the same argument? Say, we need to be in control because we don't want it to fall into the wrong hands.
No, it's a great point. But look, there's only one Elon Musk. And I think there's a recognition, especially when it comes to XAI, where I think they're going to have, call it 15, 20% ownership. But eventually, I think XAI will be a part of Tesla. So Musk needs to have that 25% voting rights because it's his view. He needs to have control given the AI future. And look, we've seen things at OpenAI and others in terms of issues that they've had. But I think for Musk and for Tesla, this is an important chapter relative to where they think they're going next.
Dan, can we talk about what's going on right now? He sold only 750 vehicles for October in Europe, in Germany. That's less than half of what he sold last year. This is a very mature market compared to the U.S. How bleak is it out there right now for the EV demand?
Look, Europe is obvious. I mean, that continues to be just really a mini disaster for them relative to, from a demand perspective. Look, if you look globally, I mean, you had a very strong 3Q. I actually think there's stabilization that's happened across the board going into next year, 2 million vehicles. But the reality is, going forward, this is an AI story. I mean, you're focused on autonomous. You're focused on how many cities you're going to get into 30, 35 in the next, call it 6 to 9 months. When you actually have full-scale volume production of Optimus, that's the story here for Tesla. But it all starts with Musk. You need to make sure he's CEO for the next 5, 6, 7 years to get him there.
Is there concern that he's going to go flirt again with politics?
Look, and obviously, the back and forth that we've seen in politics, I think it just comes down to, like, he's learned, I think, a hard lesson in his Beltway stint. And I think the reality is that he's wartime CEO right now. And I think that is a recognition, whether it's Jensen at NVIDIA, whether it's Zuck at Meta, you know, obviously Carp Palantir. It's an arms race that's happening, and that's why for Tesla, this is such an important part of the AI future.
Meta has the product right now, though. There is some key man risk, obviously, but they have the product.
Sure.
NVIDIA, key man risk, sure, but they have the product. What you're describing is a different situation. You're talking about key man risk, and we've yet to develop the product, which the whole valuation, almost 90% of it, ultimately hinges on. Yeah. Now, I know that you're super optimistic on the robotaxi business, but we're not there yet, are we?
But I think we're going to be sitting here 9, 12 months from now, and you're there. In other words, I think from a volume production perspective, this is something where cyber cabs, you're actually going to have volume production. I think regulatory, you're going to have much more on the federal side rather than the state, and that's going to be cleared from I think a regulatory perspective. Look, and that's now the goal. You talk about $1 trillion. Now it's like the goal is like for Musk, step by step, brick by brick to get there. And I think he does. And I think this continues to be the most undervalued AI story in the market relative to, I think, how it's going to be viewed.
That's the $1 trillion man. Should we talk about the $1 billion man over at Wedbush? Congratulations.
Thank you.
ETF, I hear, has taken in $1 billion.
Yeah, so, you know, took in over $1 billion and obviously, you know, less than 5 months. And obviously, we've talked about in the show, I mean, our whole view on the ETF is just a true way to play AI in terms of the IVES ETF, the 30 names. And I think that's one where investors have, you know, around the world showed confidence. So it's a huge success.
I've got you up 30% since inception earlier this summer. That's not bad.
Well, now that you actually mention it, look, I mean, look,
outperforming the NASDAQ.
Yeah, I mean, look, it's obviously huge outperformance of the NASDAQ.
What kind of money is it attracting right now? Where's the cash coming from?
Look, I think 75, 80% retail, probably, you know, a little more institutional that we're starting to see. But obviously being in Asia the last month, I mean, you know, every country you see investors that own the IVES ETF. Because look, the reality is it's a way to play AI in true the 30 names that we view in terms of chips, software, cybersecurity, and across the board.
Just quickly, what's the relationship between the stocks in your coverage as a sell-side analyst and the stocks that go into the ETF?
Yeah, I mean, there's a good amount of names that we cover that are in there, but there's a lot of names that we don't cover that are in there. And that, look, it speaks to my view is that this is going to continue to be an evolution in terms of the AI revolution. But those that say bubble, the haters, look, we are in. No, I'm saying, no. There's the haters.
Scanning around the whole room, to be honest with you.
No, but the reality is that we are in the second, third inning.
We're in the fourth.
Of this game, not in the fourth. And it continues to be 10:30 in the AI party that started at 9 p.m. and that goes to 4 a.m. The bears will watch it through the windows.
It's good to see you, Dan. Congratulations. Thank you. Dan Ives of Wedbush. Let's get you an update on news worldwide with your Bloomberg brief. Let's cross over to Yahara for more. Hey, Yahara.
Hi, John. Elise Stefanik is entering the race for governor of New York. In a post on X, she called New York Governor Kathy Hochul the worst governor in the country and pledged to make the states affordable and safe. The Republican congresswoman was weighing a governor run for months, according to sources. The New York gubernatorial election is set for November 2026. Meanwhile, a federal judge ordered the Trump administration to release full funding for November SNAP benefits today. Nearly 42 million Americans have no access to the benefits during the government shutdown. The White House had agreed to pay for partial benefits using emergency cash, but said it would take weeks, if not months. And OpenAI CEO Sam Altman pledging the company does not have or want government guarantees for its data centers. This after a top executive at the ChatGPT maker suggested the government may help finance the technology. OpenAI has committed to spend $1.4 trillion on data centers and chips. That's your Bloomberg brief. John?
Yahara, thank you. More from Yahara in the next hour. Up next on the program, steering towards a soft landing.
The soft landing can happen, but if they do start increasing the pace of layoffs, you have a direct impact on consumer spending.
That's up next with Priya Misra of JP Morgan Asset Management, live from New York City this morning. Good morning. You're watching Bloomberg TV.
this is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top to the bottom, make the sushi shape more beautiful. 3. Then, I'm not, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1 to 6.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Down on the week on the S&P 500, potentially the biggest weekly loss going back to early October. On the Nasdaq 100, we're down by 2.8%. Close out at those levels, the worst week since the start of April. Remember that? Brutal. Nasdaq 100 this morning down another third of 1%. The Russell, small caps down by 0.3. Under surveillance this morning, steering towards a soft landing.
The soft landing can happen where we have great productivity, great net, wages stay the same, earnings stay strong. But if they do start increasing the pace of layoffs, you have a direct impact on consumer spending. If we're in this sustained environment where 10-year yields are roughly in a 4% range, this is a good opportunity to add income.
So here's the latest this morning. Investors struggling to reach consensus on the state of the economy with alternative data sending mixed signals. Priya Misra of JP Morgan writing, we remained in a soft landing, but I don't see any signs of the economy re-accelerating and risks are skewed to the downside on the labour market. Priya joins us now for more. Priya, good morning.
Morning.
No payrolls data at 8:30 Eastern time, so we're talking about challenger job cuts. Now, typically we'd ignore challenger job cuts. How much is that data actually worth?
So, I mean, a lot of this, ADP, you have to look at the totality of data. I do miss payrolls. Let's spend a second saying it was good data. I just never thanked it before, and now 2 months in a row we haven't had it. And not just the headline we asked. Well, we have a lot of data. Like somebody asked me the other day, you probably have nothing to do. I said, I have more work because I'm now looking at the totalities. You have to look at ADP, the details, Challenger. We always looked at it, but you had like the king of all data with payrolls, and we don't have that. But we're looking at earnings releases. We're still in that soft landing, and I think that's why the Fed's been cutting, and now the Fed's saying, well, we need more data. So, a data-dependent Fed, data-dependent market is now looking at more creative ways of data, but I think there's a fairly consistent picture of there are these structural positives, right? You talk about the soft landing. Companies are solid and they're adapting to all these macro shocks, tariffs, immigration. They're managing, and that's why earnings have been rock solid. We haven't even seen the, leverage go up. So it's not as if they're borrowing to make ends meet. The margins are staying strong. Consumer spending is strong, but we have that K-shaped consumer, K-shaped corporate sector, and that's the consistent theme. But the labor market is slowing, and we're still in that low hire, low fire. But how long can that last? As the labor supply grows, people graduate from college, they need jobs. So I don't know if it can last forever. For now, we're in a soft landing. I think owning credit, fixed income's doing what it's supposed to do. So I think, that's how we're sort of positioned.
You mentioned the Federal Reserve. The consensus view of the Fed, at least a month ago, the bias of the Fed, people believed this bias existed anyway, is that they wouldn't deviate from the dot plot. even if they didn't get the economic data. You mentioned the Fed and maybe that view changing. Is that just Austin Goolsbee at the Chicago Fed, or is that the core of the committee now?
I think there is no core. I think there's a huge division at the Fed. And it's not just in terms of risks around the labor market, risks around inflation. It's also on the neutral rate. I mean, I was concerned about this debate that we're having at the Fed maybe 6 months from now. It's happening a little earlier. But if you look at the neutral rate, there are people saying it's 2.75 and 4. We're right at 4. So I think what Chair Powell said was we need data to tell us which way to lean. I think both sides at the Fed, the division, both are equally vocal. There are those that are highlighting that the labor market's slowing, and then there are those that are saying, well, inflation's still above target, and we don't know what's neutral. Financial conditions are easy, and so you can almost argue, will Fed cuts make a difference? They do make a difference, particularly if that neutral rate is at 3. So I think that reaction function, I think the Chair Powell said there is no clear reaction function. I think there was a slight shift. The data, lack of data, you can tell that the Fed might be in my camp, like starved of data and missing it. So if we don't get data, I think they might even pause. But I do think economic outlook matters as much as the reaction function. We got a sense of a more hawkish reaction function. But if the economic data continues challenges part of it, if the layoffs start, this is not a job market where layoffs will get absorbed quickly. And I think that's where the Fed then, maybe they don't cut in December, then they cut more aggressively next year if the economy continues to slow.
I put into ChatGPT, write a poem about non-farm payrolls, and I think it broke ChatGPT because it still hasn't come up with the poem. So hopefully we can get that for you. I am curious, though, do you think that if the Fed does not cut rates in December because of a lack of data, that it will prompt you to want to go into longer-term bonds? That on the margins, it will hamper growth more significantly and tamp down any inflation risk?
I do think if they don't cut and they suggest that this is it, then you can have concerns around maybe long-end bonds. We're supposed to price in a weaker economic outlook. You'll get some froth out of the market. People who've only bought an asset because they think the Fed's going to cut rates, then they start to move away. But I do think if they don't cut, they're still going to keep that put alive, meaning they're going to say, look, if the economy slows down, we're data dependent, we can cut aggressively. This Fed has not been shy under Chair Powell. They've hiked at 75 increments, they cut 50 last year, but they are a data-dependent Fed.
How much of an unwind do you expect in, say, some of the riskier assets, whether it's riskier credit or certainly what we've seen with the meme stocks? I know you're not focused on that, but I wonder how much that's in direct response to the idea that the Fed might not be cutting as aggressively and might be closer to done than people had expected.
I mean, there is a lot of liquidity in the system, and the Fed stopping QT was part of that as well. Now, they're not increasing the size of the balance sheet, but I wonder, do people look at the size of the balance sheet growing, which I think is going to happen. Either it's December or next year, because of reserves. I think reserves are close to neutral. We talk about neutral Fed funds, we should talk about neutral reserves as well. We're there. So I wonder if, okay, the Fed's not, cutting, but the Fed's growing the balance sheet, so you might get the liquidity staying high, and it can sort of propel more of that. But I think in general, we talked about, remember cockroaches just not that long ago? I mean, there are excesses in, I would say, every market. And our job is to find them and make sure we minimize the cockroaches, and that requires a lot of credit work, where you have to understand the company. And I think it's people who may be not doing that might be then at risk of some of that froth coming out, because, we don't know what neutral is. I mean, I think it's closer to 3, but what if it is closer to 4 because financial conditions, liquidity is high. And so you may not get a big decline in interest rates. And that's when you want to make sure you own the companies that don't need lower rates to make their payments.
Priya, you talk about this in your notes. How are you thinking about the risk of what's going on at the Supreme Court in terms of IEEPA?
There was a lot of discussion. I think the bond market got really nervous. And, these are large numbers. If the Supreme Court does rule these tariffs illegal, we're talking 90, 100 billion of tariff numbers. That's a large number. But look at the Treasury has the cash. Cash balance has been growing. So I don't see a case where they have to suddenly come out and issue a lot. I think interest rates rose, saying the deficit's a problem. The deficit is a long-term problem. I mean, we're at 7% deficit to GDP. That's going to go to 7.2. I think the bond market slightly overreacted. The president, it's the signature policy of the president. He said it's the most beautiful word in the dictionary for him. So if it is struck illegal here, they've got section 122, 232, 301. I mean, I'm no constitutional lawyer, but I think they're going to find ways it's going to be harder and maybe not as blanket, and Congress needs to be involved. But I think you're still going to get those tariffs. I don't see the tariff number really going down. So I think if the market overreacts, I think that's an opportunity on any Supreme Court headline.
Priya, it's good to see you. Thanks for dropping by. Priya Misra of JP Morgan Asset Management on this bond market. 10s this morning, just short of 4.1%, higher on the session by a single basis point. Up next, we'll catch up with Michelle Weaver of Morgan Stanley, Tom Fitzgerald of TD Cowen, Liz Everett-Chrisberg of the Bank of America Institute, and Claudia Saar of New Century Advisors. The second hour of Bloomberg Surveillance is up next.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
A cidade estava sitiada.
Nisso eu começo, eu não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering, and someone is driving a Range Rover with their money. Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
What we see is an economy which is likely to slow down.
There's going to be some pressure at the very, lower tier of the consumer.
Indicators are not showing a labor market where the bottom is falling out.
Cross currents of information and data are making it a tough job.
We're in the muddled middle, and that's the issue.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures adding to this week's losses. Down on the week, down on the session. We're down another 1/10% on the S&P 500. On the Nasdaq, we're down by 0.3. In the bond market, it has been super volatile through the week. Yields up a lot, then down a lot. On the week, just about unchanged. 10s at 4.1%, 2s at 356. This morning's headline, there won't be one at 8:30 Eastern Time. No payrolls once again.
Yeah, and I was actually looking up an ode to non-farm payrolls because I do think it is important. So month by month, the cycle turns through booms and fears and payrolls going on. Anyway, I don't need to read the whole thing. ChatGPT did a great job. But I am just curious how much this is causing the volatility that we're seeing in other data points that aren't necessarily taking on any cloud relative to one another and whipsawing people's perception of what this economy is really doing.
Waking up to notes. People describing the bond market action of yesterday and referring to challenger job cuts. Not to say that challenger job cuts doesn't point to what's happening right now. I've got no idea if it really does or not. Just to say that typically people wouldn't even reference that data point a month, 2 months ago. And here we are weighting that, almost overweighting that and comparing it to ISM services earlier this week.
Yeah, and what we're seeing right now is people taking the challenger job cuts, putting that into an AI narrative where AI is coming for your jobs, and then pairing that with some of the fast food restaurants that are coming out with some bleak expectations and creating a narrative to give them the willies at night. And this is sort of a question of how much does this highlight the bias in market to find a problem after valuations got very high, and how much does that say about where we are in the market cycle more than anything about the U.S. economy?
Sentiment might be shifting somewhat. That's a notable point. Shifting because we don't have the economic data, and at the moment we won't get it at 8:30 Eastern Time either. Why? The government's still shut down. The pressure's going to build on the administration and on the Democrats that are holding out as well as these airports start to face some major cuts to capacity, and we're seeing that play out this morning.
You don't know what you got till it's gone. That's when it comes with government data, and that's also when it comes to potentially what consumers may feel in terms of what is going on. It's a snowball effect, what's going on with SNAP, more than 40 million Americans, what's going on at airports, they're cutting capacity, mandated cuts, 4%, and then you add on an extra 1% every single day. So by this time next week, we could be looking at a 10% reduction of capacity. All of this going into Thanksgiving holiday season. This is a pressure point that basically ended the previous longest shutdown of 2018, 2019. Potentially, it's going to end at this time.
Brian Gardner of Stifel in the last hour, not willing to put a hard out on any of this. Said it can continue into next week, maybe beyond. And we started having a conversation about, no, really, seriously, Thanksgiving week? This could stretch into Thanksgiving week?
Potentially, although I will say they are taking another vote today. They're 15th, likely not going to pass. But there has been more action in terms of bipartisan communication, what an off-ramp could be. I think the big issue is whether or not is a vote on extension of enhanced affordable health care credits is enough, or do they actually need to see a plan? And then that means the White House is going to have to get involved.
Ramo, not a chance.
Don't mess with people's stuffing. Absolutely
just imagine
not.
that.
No way. Pitchforks. People will come. Lighted torches. It will be White House.
Well, you could drive.
No. Absolutely not.
The California?
Oh, I don't know.
Yeah.
Yeah, take an extra day off, make it a road trip. The president was saying yesterday how energy prices are down.
People are throwing their breakfast at the TV screen.
100%. It's gonna. No one is on your side right now.
No. I totally agree. It's going to be a problem. I think this is what ends up making sure that the government reopens. It has to be Thanksgiving, and it has to be air traffic controllers.
Watch this space. Coming up on the program, Michelle Weaver of Morgan Stanley with big tech valuations under scrutiny. Tom Fitzgerald of TD Cowen joins us as the government shutdown disrupts air travel, and Claudia Sam of New Century Advisors with the Fed's mandate on an economic tightrope. We begin this hour with stocks turning negative. Michelle Weaver of Morgan Stanley writing the S&P is currently trading at 23 times earnings, and valuations peaked during the tech bubble at 24 times. However, we're in a different environment, a very different one today versus then. Michelle joins us now for more. Michelle, good morning.
Good morning. Thank you for having me.
What makes this moment so different compared to those moments?
Absolutely. So on the surface, totally understandable how people are drawing comparisons. We're trading at 23 times and change. Tech bubble valuations peaked around 24 times. And then we had the build out of telecom. Now we have the build out of AI. On the surface, you see those comparisons. But when we dig under the surface on valuation, we have a very different index today than we had then. So for example, if we adjust PE multiples by margins, we're actually seeing valuations in line with where they've been over the past 20 years. We also have a much higher quality index than we had back then. So if we look at free cash flow yields, for the median large cap stock, those are about triple today what they were back in the dot-com bubble. So some very different characteristics under the surface despite that broader narrative.
You and the team are still super bullish. And I know that you, alongside Mike Wilson, have talked a lot about AI enablers and then AI adopters.
Yes.
Can we talk about the latter? How close are we to really expressing that as a bigger trade in this market?
Absolutely. So we're still in fairly early innings on the AI adoption story. Our tech team runs a great CIO survey, and they found that by the end of this year, around 60% of companies expect to have at least one AI product live by the end of the year. And then that number rises to about 80% by the end of next year. But a question I get from investors frequently is, okay, where are the benefits? Are companies actually seeing tangible benefits from AI adoption? And so in order to analyze this, we did a big transcript scrape of over 13,000 transcripts where we read those with LLM, so it was AI enabled in itself. And we found that the percent of companies mentioning quantifiable benefits from AI adoption has risen. So it's been around 15% in the S&P 500 as of this quarter compared to 11% last quarter. And then when we just look at stocks tagged as AI adopters by our analysts, that's around a quarter of those stocks are mentioning quantifiable benefits. So it is starting to materialize.
That might lead to a higher profitability in a number of different companies, but it raises questions about how many people are necessary. Are we just going to all be hiring Elon Musk's robot army in 10 years? I'm just wondering, at what point is this part of the story and part of the reason why the Challenger job cuts announcements were so relevant to people, because they did cite AI and the fact that they were, that was one of the reasons why companies were pulling back.
So I think it's really hard to disentangle what's the AI narrative versus what's the cyclical narrative. But when we think about AI adoption, we're not thinking about it as this thing that's going to come and cause a huge wave of disruption within the labor market. I think it's really important to think about what jobs are more subjected to AI automation versus augmentation. So yes, some jobs may be able to be accomplished by AI, but for a broader portion of jobs, it's really more of an augmentation story. So how can we make you more efficient? How can we free up your time from some more basic tasks to do more high-value things? So, I mean, I don't want to do as much data entry. I don't want to do as much, cleaning up of text. I would like to be able to use AI to do more of that. And I think you're also going to see a shift under the surface of the types of jobs that go to different roles. So, for example, before the spreadsheet was another big gain in technology. Prior to the spreadsheet, the share of total jobs that were bookkeepers was much higher. The spreadsheet came and disrupted that. But then after that, you had a much higher share of people like me, financial analysts, leveraging that technology. So you may see some share shifts happen again.
How far are we in the adoption in terms of how much you can have quantifiable results that you can invest in and see profitability from?
So similar to that analysis I had referenced before, but we've found for companies that our analysts have tagged as AI adopters, around 25% of those companies are mentioning some sort of quantifiable gain, whether that's an increase in revenue, an increase in productivity, an increase in hours saved for workers. We're seeing them attribute some sort of measurable benefit to AI. And I think what makes it really hard for some people to wrap their minds around is the benefits can look so different company to company, and the means of adoption can look so different. You mentioned, of course, the robot army that might be coming. Sure, so maybe you're subjected to embodied AI and robotics and to be able to adopt that, but there's a lot on the digital side, on the agentic side. There's a lot in terms of customer service, in terms of making your salespeople more efficient. So there's a huge variety of ways to adopt AI.
As you look at the earnings results and the general commentary, the president last night said he doesn't want to hear about affordability. That's not an issue. Affordability is down under his administration. Do you think that's true, what you're hearing from companies?
So I think we're still very much subjected to that K economy where the higher end consumer is still out there and spending, and then consumers on the lower end are really struggling. I think for people, when you experience inflation, sure, the rate of change on inflation might be down relative to where it was over the past couple of years, but for people experiencing that, price levels are still very much elevated to what they were spending on a few years back. And so, for example, restaurants are a pretty good illustrator here, where you have, in some of the limited service, more fast casual restaurants, really weak numbers, really weak visitation numbers because of that dynamic.
Can we finish on how you want to play this adoption theme? This week, we've heard from two bank CEOs, Brian Moynihan, Jamie Dimon, and I think they're both talking about exactly the same thing. How do we generate more revenue with lower costs? And each additional dollar of revenue is going to mean we become less and less labor intensive. Is that the theme to follow here? Just track the financials.
I think this will first manifest itself on the services side. That's one way where the digital technology is really here right now. The agentic abilities are coming, they're here. And so that's where you're going to see some of those gains pop up first. On the more embodied AI, the robotic side of the story, that's going to be more of a 10-year down the pipe where we start to see broader adoption of that. So I think within the services side that are more exposed to that digital AI factor, that'll be where you see it first.
So Lisa needs to wait a decade before she starts worrying about the armies, right?
Yes.
Okay, good to know. Michelle, thank you. Michelle Weaver of Morgan Stanley.
You think I'm going to wait that long? I'm going to worry right now.
I know you're already worried.
Of course I'm worried. I mean, we're already thinking about somebody who wants to keep control over his robot army.
The breakdown of society if the government doesn't have a monopoly on power and violence. What happens?
Totally. And what happens if somebody is worth more than entire nation states? He'd be worth more than the entire GDP of Switzerland.
Sovereigns start to fracture.
Exactly. This is a real question.
Start to sell the bond market.
The thing is, you're just as worried about this. Let me just be honest. The reason why you could extrapolate out, you're just as concerned about all this.
I'm just calmer in the morning about it. It's later in the afternoon, I start freaking out.
Good. That's the reason why. Just before bed.
Yeah. How do I deprogram these robots? Let's get you an update on stories elsewhere this morning. With your Bloomberg brief, let's cross over to Yahara for more. Hey, Yahara.
Hi, John. Tesla shareholders approved a $1 trillion compensation package for CEO Elon Musk, the largest payout ever awarded to a corporate leader. The move clears the path for Musk to become the first ever trillionaire and expand his stake in Tesla. The agreement requires Musk to deliver on targets to significantly expand Tesla's market value and revive its car business. Meanwhile, Hungarian leader Viktor Orban is set to meet with President Trump at the White House today. Orban is expected to offer a pledge to purchase U.S. liquefied natural gas and nuclear fuel in the hopes of getting some reprieve from Russian oil sanctions. Those sanctions are threatening to damage Orban's re-election bid. Hungary is a major importer of Russian energy. And Grand Theft Auto 6 has been delayed again. The game was originally set for a fall release, but Rockstar Games announced earlier this year that the game would not be ready until May of next year. In a post on X, Rockstar Games said the game will now be released in November of 2026. The game has been in development for more than a decade. That's Bloomberg Brief. John.
Yahara, thank you. Appreciate the update. Up next on the program, cleared for cancellations.
The American people are unfortunately about to start suffering some very real consequences because of the shutdown. After 30 days of this thing, 40 days of this thing, you're going to start seeing very real travel delays.
That conversation up next with Tom Fitzgerald of TD Cowen, live from New York City this morning. Good morning.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Stocks are negative. We're down by close to 0.2% on the S&P 500. Likewise on the Nasdaq 100. The Nasdaq heading for its worst week since April. We're down this morning again by 0.25%. Under surveillance this morning, cleared for cancellations.
The American people are unfortunately about to start suffering some very real consequences because of the shutdown. After 30 days of this thing, 40 days of this thing, you're going to start seeing very real travel delays. That's because the Democrat government shut down. You're going to start seeing SNAP benefits run out. That's because the Democrat government shut down. They should stop this charade and open up the government.
So here's the latest this morning. Airlines across the country cancelling flights due to the ongoing government shutdown. Joining us now from Newark Liberty Airport, Nora Melinda. Nora, welcome to the program. How are things playing out this morning?
Well, we are seeing droves of people coming in on this Friday morning, but this is not uncommon. At least that's according to the people on the ground that we've been speaking with this morning so far. But there are about more than 40 cancellations here at EWR Airport. But it is important to note as we look more nationally, this is the 72nd worst day in terms of flight cancellations since January 2024. So the size and scope isn't necessarily catastrophic. A lot of analysts saying that it could be potentially benign. But of course, what still remains on the mind of travelers, those in the economy, a lot of leaders right now, is when we're going to see an end to this government shutdown.
And how much longer it goes on for. And if, Lisa, this goes on until Thanksgiving week.
Yeah, that's sort of the end date for a lot of people who say that would cause a lot of disruption, considering it's one of the busiest holiday seasons of the entire travel season. I just think it might be a little bit not acceptable if you think about some of the people.
Anne-Marie's ready to give people a lift to California.
I think that she's got
if they want to ride.
She's got her van ready.
I'm just saying there are other ways. But yes, I've always said that this was going to be the breaking point for this government shutdown. And just publishing now, Greg Valliere agrees. The airline crisis pushed Congress closer to passing a stopgap funding measure, kicking the can down the road.
Nora, I just want to come back to you briefly, just for a quick follow-up question. Nora, when you speak to people on the ground, are they aware of the government shutdown? Just how unpopular is this thing at the moment with the general public?
So in those I've spoken to thus far, they are aware of the government shutdown. I actually talked to some of the employees here at EWR, and they are saying that a lot of TSA agents here, they've experienced this before. This is not the first government shutdown that they've seen. So a lot of them seem quote-unquote unfazed for the time being, but they are, of course, concerned as to whether or not this continues to prolong, being that this is the longest U.S. shutdown that we have seen thus far.
Nora Melinda, on the ground at Newark Airport. Nora, thank you. Appreciate it. I just wonder how many people are aware of this, outside, of course, the people who rely on benefits to nutrition and those kind of things, outside, of course, the people who work at the airports, for the broader general public, for everybody else. Are they even aware what's going on in Washington, D.C. at the moment?
Yeah, and I think it's a good point to mention that a lot of people are feeling this in a very real way, where it's not just not being able to go to their families for Thanksgiving, although that is real for a lot of people as well. There is a feeling that you do have a greater awareness of the government shutdown, because let me tell you that anyone who has a flight anytime in the near future is getting a message
40 airports.
Yeah, saying your flight could be delayed. We will maybe book you on something else. We'll try. But you're already seeing it play out in a very real sense.
Reach out to Anne-Marie on X if you want a ride.
I was just saying, I don't actually think it's a good idea.
VW Bug.
You can take a train.
You drive the Greyhound.
You're trying to push them off.
I can see you driving a Greyhound. All aboard.
That would be actually kind of fun.
Yeah, right, okay.
I'll drop you guys off, on Thanksgiving, wherever you're going.
I'll give that a miss. Tom Fitzgerald of TD Cowen writing the following. This is a fluid situation, but we believe the impact is more manageable than headlines imply, and continue to believe it has created an attractive buying opportunity. Tom joins us now for more. Tom, let's just go through this, what it means for the airlines and who gets hurt most.
Thanks, Jonathan. I think broadly right now it's more akin to like a snowstorm or a stretch of bad weather than a catastrophic breakdown. The swing factor will depend on how long this lasts. I would say that all the major airlines are going to feel this. The legacies, by virtue of how diverse their networks are, they're able to make a lot of adjustments. I think some of the point-to-point leisure carriers will maybe feel this a little bit harder than the legacies, but it really, if it ends in the next couple of days versus if it goes till up right after the end of Thanksgiving, that will swing how bad the impact is on four-quarter earnings.
Well, Tom, this time next year, the mandated reduction will be at 10%. What does that look like? 10% cut in capacity?
It varies. I think one thing to keep in mind is because this is the low time of the season, off peak. There's a lot of open seats that they can reaccommodate passengers onto, and international flights won't be impacted, nor will hub-to-hub flights. So I think we'll see a lot of the regional non-hub kind of the shorter haul domestic stuff get canceled. So I think if you're traveling internationally, you should feel okay. And I don't think I think the 10% number, what the actual cut will be much smaller than that.
Well, even yesterday, though, without this mandated cut, we saw flight disruption. So potentially it's going to become a little bit more unbearable for some of these carriers. Who do you think is best positioned?
I think Delta and United are probably in the pole position right here. They have exposure to the strongest revenue streams right now. They should have a benefit from a set of easy comps as we go into next year. And they're also, they're benefiting from a lot of the profitability laggards, removing supply from the system, which should have some nice pricing tailwinds into next year.
Tom, there is a sense, though, right now that people don't want to book a flight if they don't have to. That if someone's going, say, from New York to Washington, D.C., they're going to take the train. Or if they're going from New York to Boston, maybe they'll drive. And I'm just wondering how much you're expecting to see that show up. I mean, it's not going to be completely negligible, especially if there is a lot of domestic travel that has a very good chance of getting canceled.
Absolutely, and that's a great question. I think the thing to think about is October was pretty strong. It certainly could crimp the first half of November, potentially the peak season. But I think the stocks have already traded down pretty significantly since early to mid-October when they reported earnings. So I think it's fair to assume a decent amount of this is already priced in, and the stocks I'd want to be positioned for a relief rally when the government shutdown does end.
More broadly, we're talking a lot about conflicting data coming out of whether it's fast casual retailers, restaurants, or whether we're talking about the challenger job cuts yesterday. At the same time, it seems like the indicators for travel are looking bright. We're talking about Airbnb, we're talking about Expedia. I'm just wondering from the airline perspective, is there any sense that you have that there has been a slowdown from some pretty bullish commentary that we heard, say, a month or two ago from the likes of Delta and United?
I think on the corporate front, leaving aside the noise from the shutdown, I think the signals on corporate, premium, international, those all tend to sound, be very positive. A lot of green shoots when we do our channel checks. And then the domestic leisure, it depends on, I would say, the income cohort. And the further down you go, the more price sensitive the consumer, it's still a little more mixed, I would say, hit or miss. That's where that's still the caboose of the different revenue segments.
We also are hearing from the likes of British Airways overnight talking about how transatlantic travel is really down, in particular from London to the United States. I'm just wondering how much you're tracking that, how much that's been a liability for airlines that have been leveraged to particular corridors in the wake of a number of, whether it's PR issues, whether it's just currency differentials.
Yeah, I think it's a bigger challenge for the non-U.S. airlines. With U.S. outbound international, especially Europe, has been really strong, and we've seen a lot of demand shift out into the fourth quarter, whether it's baby boomers traveling in October because they have the flexibility, or more Americans spending their holidays over in Europe. A lot of the weakness has been on European point of sale, where there's been a sizable chunk of consumers who have avoided traveling into the U.S. In 2025. Similar dynamic on the U.S.-Canadian transporter market as well.
Tom, can we just finish on income groups? You talked about upper income groups, and when you go down, the airlines more exposed to the lower income groups aren't doing as well. Tom, is there new information there? Has it always been that way?
I mean, the traveling public is always skewed a little bit more affluent. I think the other challenge right now is the leisure and ultra-low-cost carriers have gotten much bigger than they were, say, maybe 10, 15 years ago, at the same time that the legacies have gotten much more adept at catering to, being all things to all people. And, they've really honed their revenue segmentation skills. So it's partly... It's kind of a tale of two cities. There's the demand aspect where that consumer is a little more distressed. And then on the supply side, there's probably still a redundant capacity being put in the market by the pure leisure carriers.
Tom, this was great. It's good to catch up with you, sir. Thank you. Tom Fitzgerald there of TD Cowen. Thank you. It's not going to bring people much comfort exposed to the government shutdown. But as far as the stocks are concerned for the airline business going forward from here, Tom basically calling this a weather event and something they'll get through. in the next few months?
Yeah, a 10% reduction is similar to a really bad storm in a lot of places at once. And that's what a lot of the airline CEOs have been talking about over the past couple of days. A real question here, though, of what this means more broadly for other people who are more exposed. And it's sort of the highlight, the pain point that we can point to. You just wonder, though, all the other ramifications are costing massively for the economy and for individuals.
And the reason why we point to this is because historically, this was the straw that broke the camel's back. In 2018, 2019, the president blinked when you saw all this chaos in Florida, in New York, when it comes to the airlines. The fact that Tom thinks it's manageable says to me maybe this is going to be a lot longer, because this president has a very high pain threshold. And by the sounds of it, so do some of these Democrats that feel like they have, you know, wings wind in their wings coming off of the recent elections and ahead of the midterms, that they need to make a statement.
This is a traditional pressure point. It's just taken a lot longer to get there, more than 30 days. We were talking about at the beginning of this particular government shutdown that we'd get there in a few weeks. It's taken a lot longer, and maybe it takes a lot longer from here to address. Coming up on the programme, Liz Everett-Chrisberg of Bank of America Institute with a fresh read on the labour market, plus Danny's back with your morning movers. Wendy's shares jumping after topping 3Q earnings expectations. Their stock is up by 6.5%.
Coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
As we count you down to the opening bell, about 2 hours away, equity futures on the S&P 500 still negative by 0.25%, following what looks like another week of losses on the S&P and on the Nasdaq. For the S&P 500, the biggest weekly loss so far since early October. But Lisa, you've got to go back to April for the Nasdaq 100 to perform this badly on a weekly basis. And the earnings, let's face it, the earnings from big tech that support this market haven't been that bad.
This is a concern about valuations and fear that there is froth being built into the market, because you are absolutely right. Whether it's Qualcomm, whether it's Meta and what we saw from them, or whether it's AMD, the earnings have been good. They have beat expectations, and then people try to find, well, they didn't beat the highest expectation on the street for a reason to sell, and ultimately tells more about valuation than it does maybe about these companies.
Palantir, the poster child for the pushback from earlier the week as well. Pushback to otherwise pretty decent earnings. That's the equity story. In the bond market, if you switch on the board, 2s, 10s, 30s. This yield curve has been really interesting this week because things have been really choppy. Some days yields up across the board, some days yields down across the board by quite a margin as well, off the back of good data, bad data, hawkish Fed, dovish Fed, challenger job cuts, ISM services was hot, challenger job cuts were absolutely terrible. It's difficult to draw conclusions with confidence about where we are in this cycle.
There are a lot of mixed signals right now, and we don't get the gold standard of non-farm payrolls to kind of provide some sort of gut check. We also don't have a sense that the Fed has some sort of consensus or core that is moving it in one direction or a reaction function. Interestingly, though, while we are getting whipsawed from day to day, we still do see relative stability in terms of the absolute level or around the same levels, and I wonder what it will take to really break out of that. When will we have some conviction about a longer-term call? Because right now we're sort of bantering around the middle, and that seems to be kind of what's keeping things stable.
So we're left going into the weekend with you, Mitch, at 10 a.m. Eastern Time, which is one of my favorites. You, Mitch, consumer sentiment coming up a little bit later, which has just become a political poll.
Did they call you?
It's online now.
I thought did they send you an email?
I wish they would.
Yeah? Would you say?
My inflation expectations.
25%?
25% over the next 5 to 10 years.
That's the reason why they're not calling.
That's what I'd put it at. 5 to 10 year inflation expectations, 3.8% is the survey. It's not my number.
Yeah, well, it's people.
What are we measuring here?
Honestly, consumers out there carefully calibrating inflation and their expectations the next 5 to 10 years, watching every data point.
Watch that data point a little bit later this morning at 10 a.m. Eastern Time. As we count down to the cash open, let's get you some single names. Your morning movers with Danny Berger. Hey, Danny.
Hey, John. Here is another read on the consumer. It's been the theme for this earnings season. Fast casual has not been doing well, but fast food has. Here's a look at Wendy's this morning, reporting just moments ago. Their loss was not as bad as expected. That's good news for Wendy's, because they've been trying to engineer a turnaround story, so maybe the consumer is going more to the fast foods, to the Wendy's of the world. Those shares up 7.5%. Elsewhere, Open Door Technologies reporting a plunge in these shares, down 23%. They reported earnings that missed expectations, as of course the home buying software. What did not save the company also is the new CEO getting on the earnings call and saying, we are repositioning as an AI company, an AI-fueled company that helps people look for homes. Again, just mentioning AI, that doesn't cut it for investors at this moment, so shares really taking a beating this morning. Finally, we're also looking at Take-Two Entertainment. Shares are down 6%. They, yet again, have delayed the release of the latest Grand Theft Auto. It was slated to come out in fall of this year. They originally delayed it till May of next year, and now they say they need to delay it even further, this time for November of 2026. Of course, the big concern around there is just it means costs pile up as they try to finish this game, John.
Danny, thank you. Stock is down by 6%. More from Danny in the next hour. On our radar this morning, Tesla shareholders approving CEO Elon Musk's massive $1 trillion pay package. To get the full payout, Musk needs to deliver on financial and operational targets, including expanding Tesla's market value to $8.5 trillion US. Elsewhere, China's exports slumping unexpectedly last month, dropping more than 1% from a year earlier. Beijing's global shipments to all nations except the US actually increased, but not enough to offset the more than 25% decline in shipments to the US. And finally, the Senate planning a vote today to end the government shutdown. Republicans are hoping an amendment continued resolution that includes a promise to vote on extending healthcare subsidies will entice some moderate Democrats.
So basically, is this just a show vote, though? That's what some Democrats are concerned about. But there are some Republicans that are having these bipartisan discussions with Democrats, also saying that they would like to see an extension. This is what Punchbowl has to write. At least 10 Republicans have approached Democrats to express interest in an extension of the tax credits. If that is the case, this could be the contours of an off-ramp to reopen the government.
I just wonder who's taking the brunt of it. Do Democrats still have the upper hand, or are people getting fed up at this point, more globally, with both parties, given the fact that there are some real people who are not getting paid, who are trying to get second jobs, who are not getting SNAP benefits? We talk about the flights, but we do that a little bit tongue-in-cheek because it's the most representative for people in terms of disruption. There are very real ramifications that are happening across the economy.
Dysfunction in Washington hasn't been popular for a long time. It's not popular now. They need to fix it. Problem is, who's got the higher pain threshold? That's what it always comes down to in Washington. Who's got the higher pain threshold to sit this out and wait for the other side to blink?
I think this year history has taught us the President of the United States, Donald Trump, has the highest pain threshold, and I think April was a really good show of that. He waited really into the last possible moment when the bond market was pushing back. I think he had a call with Jamie Dimon when he finally came out and had a bit of a reversal on his tariff policy.
The government shutdown continues. Let's turn to that labour market. Wall Street missing a second straight government payrolls report, putting the emphasis on private data. Liz Everett-Chrisberg of the Bank of America Institute writing, our internal data suggests the cooling but not collapsing labour market. There was no sign of a further deceleration in October. Liz joins us in the studio for more. Liz, good morning.
Good morning. Happy Friday.
Happy Friday to you too. This is some good news. Are we seeing some stabilization?
I think that's exactly what I would say. We're seeing some stabilization. If we go back to what we were seeing through the summer, we were seeing a cooling labor market, and we were seeing that in Bank of America data across kind of the board, both in what we estimate for payrolls and what we're seeing in wages, what we see with unemployment. But the data that came out in October really saw that kind of stabilize. We didn't see a further deceleration. And I think that that's kind of important as we try and understand kind of where the consumer is as well.
Well, where is the consumer? Let's just lean on your internal data. So this is what we hear from individual companies. Expedia, hot consumer. Everything's fantastic. Chipotle, everything's absolutely dreadful. What do you see in the internal data?
Well, the key to understanding the consumer is understanding the labor market, right? So what is going on with wage growth? That's really what's going to be driving the consumer. And what we saw in October was for all income cohorts, we saw they're continuing to see their wages grow, but that growth is decelerating for all of the income groups. So that's kind of the broad picture. But if you drill down into looking at the story by income group, by higher, middle, and lower, it's a very divergent story. So let's start with higher income. Higher income didn't accelerate, was up 3.7%. That was just off of where we were at 4% last month, but that's still pretty close to the high over the last 4 or 5 years. Lower income households, on the other hand, increased by just 1%, which was a deceleration and 0.1% better than the 0.9% we saw in August, which was the low over the last, call it, 10 years. So if you look at the difference between higher and lower income, that gap at 2.7 percentage points, that's the widest gap, tied for the widest gap, since we've had this series starting in 2016. So talk about a K-shaped recovery, talk about a difference between who can afford it and who can't. You're really seeing that.
And that's really what stood out to me in the report, and it just makes me wonder, the K-shape's getting wider. It's getting more dramatic, and I wonder how much that really is picked up by the overall data, or whether we're just hearing in the anecdotes of McDonald's where you're seeing, double-digit declines in lower-income consumers. This is where it's from. How much can we actually address that with policy, as people have been talking about, or is it just get a kind of a wash in the overall numbers?
Well, I think one of the other things that we've seen in our data, and we've seen for quite some time, is you are seeing the trade down by the higher income, going from premium stores to value. But the lower income consumer has predominantly been at those value offerings already, right? So they don't have the ability to trade down. And I think that's an important component.
I guess I wonder how much historical data we have to look forward and say that this is unsustainable and that there is a tell in the lower income households of what's to come in the overall economy. Is that valid, or can this just continue indefinitely?
I think one of the things that we've seen, and we've seen this in the government data and we see this in our own data, that consumer spending is really driven by the higher income consumer. They are disproportionately spending more because they have more. They've also been bolstered by wealth effects, right? If you think about the markets have increased more than we've seen in the wage gains, right? So that's continuing to support them, but most lower income households don't have that exposure, right? So that's something we look at. Housing is benefiting the higher income consumer as well, and I think those are important things to consider.
When you looked at Chipotle and Shake Shack, they were talking about actually how also it was a younger generation. What kind of generational shifts are you seeing in terms of the consumer?
It's a great question. One of the things that we also were able to look at, looking at our consumer deposit data, is how many households are receiving unemployment income, right? And about 2/3 of states, 2/3 to 3/4, they deliver unemployment benefits electronically, so we can see that coming in. And what we've seen over the past couple of months is increases from a low base of about 10% in unemployment benefits, households getting them. But if you break it down by generation, it's the youngest generation that's seeing the biggest jumps. And overall, younger consumers, their unemployment rate, based on our data, is higher than the overall unemployment rate for the first time, again, in the history of our data.
History of your data. So basically, they're not doing nearly as well as, say, their parents or the generation above them.
No, they're not. But what's interesting is if you also look at the generational data by spend, and you look at Gen X, right, which are people who have children who have just graduated from college and whatnot, they're also getting squeezed because many of them are still supporting, it's the sandwich generation. And so it's something else to consider.
Liz, can we talk about leading indicators? What typically moves first as you start to recover and things do reaccelerate? What would you look for first?
Well, let's look at it the other way.
Sure.
Right? Let's think about it the other way. What are the things that we look for declining? One, I would expect to see a shift in spending from debit cards to credit cards, so people to increase that. And we haven't seen that in our data yet. We would expect to see credit card utilizations increase. And really, in general, we haven't seen that happen as well. This is from last month, but I would also say one of the things I think is really interesting is you've seen the headlines that overall credit card debt outstanding is higher on a nominal basis, which is true. But if you look at those consumers that are carrying a balance, right, the proportion of the amount they have left outstanding and their income, that ratio has actually gone down, because even though I'm talking about wage growth decelerating this month, the fact of the matter is over the past few years, wage growth has been growing across the board. So because wages and labor is higher, even though that absolute nominal amount is higher, you're still doing okay.
Liz, this was a clinic, and we appreciate it. Thanks for being here.
Of course, always great to be
Thank
here.
you. Liz Everett-Crisbeck there of the Bank of America Institute. Some stabilization. That's some good news. I'll take that.
Yeah, there's good news in the overall data. There's bad news in the underlying details, in the sense that when people talk about the K-shape, it's hard to see how it's going to connect. It seems like it's getting wider, given that you're seeing fewer wage gains.
It's becoming an eye.
Yeah, exactly.
It's getting,
very much
getting
so.
that spread.
And that, I think, is going to be a perpetual feature, because how does that get picked up if the data doesn't reflect it in that kind of way in aggregate?
It certainly speaks to the politics in this city over the last week.
Exactly. When Liz is talking about the fact that you have an increase of unemployment with these Gen Zers, there is basically this concern, and we're seeing in the outcome that they are frustrated with the system and they do not feel like they can be better than their parents. What I love, though, is the Gen Xers, the fact that they are still supporting their children. They're the ones that are really being squeezed when it comes to these generational divides.
If you are just tuning in, welcome to the program. For the broader price action, we're down by about 1/3 of 1% on the S&P so far this Friday morning. With an update on news worldwide with your Bloomberg brief, let's cross over to Yahira for more. Hey, Yahira.
Hi, John. Wendy's shares are rising 6.8% after the fast food giant reported third quarter sales that declined less than expected. The company also maintained its outlook for the full year after slashing it twice in the previous 2 quarters. This could mark a turnaround for the burger chain after a tough year that's seen shares fall over 40%. Meanwhile, First Brands is desperately seeking access to $600 million in remaining bankruptcy financing. Lawyers warning that without the rest of the $1.1 billion loan, it's game over and the company will have to immediately liquidate. Holdout creditors, including Onset Financial, are fighting the deal, claiming the firm stripped them of collateral. The high-stakes hearing continues today. And Comcast is reportedly taking the next steps in a potential offer for parts of Warner Brothers Discovery. According to Reuters, Comcast is hiring Goldman Sachs and Morgan Stanley to evaluate offers for Warner Brothers Discovery's studio and streaming businesses, and has gained access to its financial data. That's your Bloomberg brief. John?
Yahira, thank you. More from Yahira in the next hour. Up next on the program, the Federal Reserve's balancing act.
After last week's meeting, I see monetary policy as barely restrictive, if at all, and it's not obvious to me that monetary policy should do more at this time.
Up next, Claudia Sam of New Century Advisors, live from New York City. You're watching Bloomberg TV.
climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need. Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Live from New York City this morning. Good morning to you all. Equity softer by 0.4% on the S&P, down by 0.6 on the Nasdaq. In the bond market, 2-year, 10-year, 30-year bond yields just about unchanged, 10s at 4.09%. And the surveillance this morning, the Federal Reserve's balancing act.
I remain concerned about high inflation and believe policy should be leaning against it. After last week's meeting, I see monetary policy as barely restrictive, if at all, and it's not obvious to me that monetary policy should do more at this time. But the future is inherently uncertain, and I'm watching developments closely.
So here's the latest this morning. Divisions of the Federal Reserve growing as officials voice competing views on the economy. Claudia Sam of New Century Advisors writing the K-shaped economy is a sign that monetary policy is restrictive. That's not a reason to cut rates. Inflation is still elevated, but monetary policy is restrictive. Claudia joins us now for more. Claudia, welcome to the program. So a difference of opinion, of course, and there's a range of opinions on the committee at the moment, but a difference in opinion between you and, say, Beth Hammack of the Cleveland Federal Reserve, who says we're barely restrictive, if restrictive at all. What do you think she's looking at compared to what you're looking at?
Right. Well, I think there's different ways of kind of defining the issue, but I think it's important to underscore that while the Fed has these broad-based goals, price stability, maximum employment for the economy as a whole, the reality is that monetary policy, the tool they have, raising interest rates to contain inflation, that affects certain groups of households and firms differently, right? It's the financially constrained households and firms that are the ones that can't escape the higher interest rates and have to pull back on demand. So we're talking a lot about the K-shaped economy, and part of that lower arm of the K moving down, that's monetary policy working. Right? That's what restrictive monetary policy looks like. That's not the goal of it, but that is a sign. Now, it is true that there can be cross currents that offset some of that restriction, say higher stock market wealth. But the reality is the Fed is pushing down on the economy, and you can see that in the K.
Is that observation, Claudia, a sufficiently strong enough argument to say we should be cutting interest rates at the Federal Reserve?
No, I don't take it as the fact that monetary policy is working. It may not have done the job. Right. So it really gets down to a question of, does the Fed need to do more to get inflation back down to 2%? And that's a lot of this discussion about, well, it's been elevated, it's been moving up, it's all about tariffs, that's going to work its way through. And then you see other members of the FOMC being more skeptical of that argument. Right. And I think that's where the debate is. There is still restriction. It's just this question of, is it enough? And I think the Fed still has room to ease some, to pull some restriction out and still be putting kind of thumb on the scale in terms of getting inflation down. But that's going to be a robust debate, right? Like people can differ because it doesn't just kind of jump out of the data. You really have to dig under the hood to see, what's going on.
Claudia, do you think that at its core, this is a debate about what the Fed's mandate should be going forward, given the confusing and conflicting data that we're getting around the labor market as well as inflation?
So the current Federal Reserve is unified around what its goals are. I mean, they just went through another strategy review. This is a Fed that is committed to a 2% inflation target. They may be willing, and they may differ in their willingness of how long to kind of, have the runway to get back to 2%. They're definitely different in terms of the risk they see to the labor market and to inflation, but they are unified in what the goals are. So I think that's a place. Now that could change next year, right? The Fed is on track to be a different Fed come next year. We don't know how different it's going to be, but I think as of right now, they're unified in the goals. They're just very, have different opinions about how to get there. And I think given how complicated the economic environment is, dual mandate and conflict, it makes sense that they disagree.
Unified in goals when it comes to both the labor market and inflation at the same time, it's hard to understand whether it's the headline numbers around the labor market picture, as John's pointed out, or whether it's the actual unemployment level, the rate, because ultimately we've heard conflicting things from Fed Chair Jay Powell on this point. I'm just wondering, from your perspective, do you get the sense that this is a Fed that is tortured over massive changes to the labor market that make the data kind of unclear?
So right now, it's going to be really difficult. The Fed they have a lot of data, right? We always have a lot of data on the economy, and this is a data-driven Fed still. What we're missing right now are the data that settle debates, right? It really is a problem for them to be missing the government data, the labor market statistics, when that is so front and center in terms of their deliberations. And they're just not going to have a lot of information before the December meeting that would kind of settle the debate. So I expect this to kind of, go down to the wire. And we should understand that even when the government reopens, it is going to take months for the disruptions and distortions in the government data to get all, worked out. So it's unfortunate that, at a moment where there's legitimately reason to be, have different opinions, we don't have the information that would typically kind of get them to rally together and say, okay, this is the next step.
Claudia, can you just build on that a little bit? So we've got about 5 weeks now until the Federal Reserve meeting on December 10th. Starts, of course, on the 9th. 2 days to discuss all of this. Let's say the government shutdown ended this week. How long would it take to actually get some high-quality information on the labor market?
It's going to take time. I think we should understand we missed an entire month of data collection. So historically, this is a very long shutdown that's very disruptive for the process. They don't just pick up, they try to fill in those gaps. And then we should remember the Bureau of Labor Statistics is down 20% of its staff as of the beginning of this year. They are missing a third of their leadership, right? So this is a really complicated moment, and they don't have the staff to really step in and do this quickly. So they will get the job done to the best of their ability. This White House has chosen to reduce the ability of our statistical agencies to do their job. But like the idea that the Fed is going to have a lot more information by December 10th from the government, good luck.
Yeah, this is a problem.
That's just not reasonable.
And the Fed right now looks gridlocked, deadlocked. And Claudia, I just wonder, I'd love your opinion on this. Do you think we can break that deadlock by December 10th, one way or the other?
Well, they're going to have a vote, right? The Fed is going to, they never have all the information they'd want. They have to come together and make a decision. There will be a decision, but we need to understand it's going to be a less well-informed decision. They may make the right one, they may make the wrong one, but they're not going to have the information that they typically would have. And it's really unfortunate because the government shut down, the economic statistics shut down, the economy did not shut down, right? And we don't have a good comprehensive sense of what's been happening since August.
Claudia Sam of New Century Advisors. Claudia, thank you. This was wonderful. Always good to catch up and get your thoughts on things. Difficult decision. What's the harder decision right now? To cut rates or just to stand pat, to do nothing?
It depends on what your ultimate metric is going to be. Is it the idea of the political blowback? Because we know which one that would be. It would be harder to not cut. At the same time, is it potential market blowback? And what really has been this sort of froth that has come out of the market in anticipation of a different outcome in December than people originally expected?
And Claudia makes a good point. Once the government reopens, all right, we're going to get that first payrolls report that's ready to go. But besides that, now all of this needs to be backdated. Where was inflation in October? Then where's it going to be in November? Do people even remember in terms of where they were in terms of employment in these months? So not only is there going to be this potential of when do we get the data, but once we get it, how clear is that data actually?
I really miss the cadence of this, don't you? First Friday of the month, no jobs data.
I was really enjoying AI's poem about it. I think that it really kind of got the feeling of the fervor, the excitement. What's your payroll's guest? All estimates finally in.
And you guys are saying this even though around this table we've always talked about the fact that is the data of good quality. And now you don't know what you're missing until it's gone.
There's a drumbeat to financial markets. There's a rhythm, a cadence to it. And just that drumbeat is payrolls every first Friday of the month.
Now it's you, Mitch.
Then you get the Federal Reserve, and now it's like you, Mitch, and the beat is just off.
No, it's an abstract. You know? It's sort of an abstract, like ADP. All of a sudden, Challenger.
Off. Like a child
You're
smashing
like
a tambourine or something.
Hungry
like,
hippos. Hungry hippos.
Yeah, not good. From New York, you're watching Bloomberg TV.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
We
have nice earnings growth, but it's being pushed by Mag 7.
Until this bull market is over, probably these growth stocks lead the way.
There's this euphoria that's taken over the equity market.
We still do feel confident at the stage we're in coming out of earnings season.
The story is still positive.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now, and your price action looks like this. Your scores shaping up as follows. We're down by 0.5% on the S&P 500. On the NASDAQ 100, we're down by 0.6%, adding to the week's losses. In the bond market, 2s, 10s, and 30s. What a choppy week for fixed income. 4-year bond yields just about unchanged. 10-year bond yields, rather, at 4%. 2-year bond yields down about a basis point at 354.51. Typically, I'd be saying 29 minutes away from the payrolls report. Of course, that's not happening. We're about 2 hours away from UMich consumer sentiment going into the weekend. That is all we've got going into the weekend.
Makes me a little sad, I have to be honest. It really is sad because we would have an ultimate check on all of the conflicting data that we had this week. We would have had non-farm payrolls. We would have been looking at the public and non-public payrolls numbers. We would have been looking at wage gains. There's so much information that we could have talked about, but instead, we're going to sit here and talk about whether you prefer Wendy's or whether you prefer McDonald's, because that's the data.
Job cuts.
Challenger job cuts, because that's the data that we do have, aside from your own personal favorite, the University of Michigan Sentiment
Love you,
Survey.
Mitch. Can't wait for you, Mitch, of course. Are we really missing payrolls? Take a step back. I got a message moments ago saying we've had payrolls revised down by more than 1 million over the last 12 months or something like that, right? That's hardly high-quality data. That's the view of a lot of people right now. And I've mentioned this a few times. If I'd given you the payrolls data at the start of the year, you would have been hopelessly bearish and missed the equity market rally anyway. So let's take a step back and say, okay, let's pretend we get it at 8:30 Eastern time. And I'm going to tell you that number is 25,000. How relevant is that to today's stock market, to today's S&P 500?
Don't ask these questions. I mean, honestly, like, it's nice to have the data to just kind of mull over and to frankly provide a gut check for these other things. You can make the argument that it hasn't actually provided a compass for anything. At the same time, it is a tell, and people have models and they plug them in, and the people that I'm talking about who actually matter are the Fed members, and it is going to affect their willingness to either cut rates or not in December. So there is a relevance to this. And honestly, I agree with you about the cadence of the week. I mean, it gives you something to kind of build toward, get, digest, talk about, you know.
Your point on the Federal Reserve, I think, is super valid. There was a bias in this market that this Fed would not deviate from the dot plot, even with the government shutdown, even with the lack of data. Just in the last 24 hours, Austin Goolsbee, the Chicago Fed president, I think others too, taking the view that when things are foggy, slow down, do nothing. And that if we don't have sufficient data by the December meeting, there won't be a willingness to reduce interest rates. That's a change on this committee.
And they're looking a lot of some of these individuals like Goolsbee looking at CPI, the fact that they're not going to have that inflation data. You can look at other measures when it comes to the jobs market. And Governor Myron said this as well. He said going into next year, he would also be uneasy if he didn't have those inflation prints. So the fact of the matter is the Fed is going to be flying blind potentially in December. And even if they're not, and we do come and emerge out of this data desert because the government shutdown is over, we're at 38 days today, how good is the data going to be? The quality collection is obviously going to be an issue.
Stocks are down this morning. We're negative by 0.4%. Call it 0.5 on the S&P 500. Coming up this hour, we'll catch up with Nadia Lovell of UBS Global Wealth Management, with stocks edging lower. Stephanie Roth of Wolfe Research, as she sees positive signs ahead for U.S. growth. And Jeff Rosenberg of BlackRock as we break down the health of the U.S. labor market. We begin this hour with stocks falling, adding to weekly losses. Nadia Lovell of UBS Global Wealth Management writing, while elevated valuations continue to raise concerns and could lead to increased volatility, we believe that underlying fundamentals remain strong and consider market pullbacks as buying opportunities. Nadia joins us now for more. Nadia, good morning.
Good morning.
What happened to the year-end melt-up? Where did it go? What went wrong?
It's only been a week, Jonathan. We think that it's still there, right? Of course, investors are again confronted with this wall of worry. Just we have the government shutdown, we have concerns around AI spending, we have hawkish, rhetoric from the Fed, but that could cause some volatility in the near term, as we noted. But we do think that that wall of worry will be climbed because the fundamentals are there. When you look at the earnings season, above expectations, even our elevated expectations for 10% EPS growth for the quarter, when it's all said and done, we could get something in the mid-teens. So we think that that will continue to support the market once we get through this choppiness, and that's why we think that there's not going to be any sort of significant pullback, because we do think that, particularly on the institutional side, we'll step in and buy.
I'm with you. It tells you something about the market when you get a 3% move on tech stocks and the bears start popping champagne. They've had a tough year, particularly off the lows of April. Let's talk about the move into year-end and the subtle signs we're getting from the price action in response to earnings. Lisa was going through a range of equities that we've seen report earnings, decent earnings, and this market's pushed back. That's new. We haven't been seeing that over previous quarters. They've been rewarded for decent earnings. What's changed?
I think what's changed is that, the valuations, people are focused on the valuations. Also, you're seeing some weakness in tech, and that's causing some nervousness. And it's fair for, tech investors to start to say, where's the monetization of this? But realistically, it will take some time to get there. But I think you're starting to see evidence of that. If you look at the earnings season, particularly around cloud growth, right? That's where you're seeing the monetization. You've seen AWS printed 20% year-over-year growth, an acceleration of 200 basis points from the last quarter. You've seen a similar acceleration from Google, 34%. And then Microsoft also, 40% in terms of their Azure revenue growth. Ultimately, it's a supply constraint that's holding back even those high growth. So we do think that investors will come back, and reassess some of these fundamentals and realize that they actually have been quite strong, Jonathan.
You can dismiss the pullback that we've seen over the past week as just saying, okay, it's just been 1 week. That said, you have seen a shift where momentum and that whole trade has been unwinding. We've seen that in meme stocks. We've seen that with Bitcoin. We've seen that even on the peripheries of gold. We've seen that with a number of some non-profitable tech names that also got bid up. What do you think is behind that?
Look, reality is, did the market run too fast, too quickly in the last month? You can make that argument, yes. And so taking some off the table, it's a natural sort of course in terms of, a pullback. We haven't even gotten to 5%. And I think once you get to that 5 or 6 or even 7%, which we don't think you're going to get to, then you're going to see money start to come back into the market. So I think it's just sort of a reallocation and looking for those opportunities where particularly some on the lagger side, even in healthcare, I think that money will start to flow into that. And so it's taken a little bit off the table on some of the winners. And then I think into year-end, you start to see some of the laggers get a bid.
On the index level, it hasn't been that big of a drawdown. When you take a look at an index of meme stocks, it was down 5% yesterday. It's down 17% from the peak. At what point do you think that some of these losses will affect retail appetite and retail psychology, given what a big role they've played, maybe not in the overall total market cap, but certainly when it comes to trading volumes?
Yes, you're absolutely right. The retail investors have been a big buyer of this market. But again, I think it goes back to, reallocating some of those resources to other parts of the market. The meme stock, at the end of the day, it's going to be the earnings that is going to drive this market. And so I think that you're going to see those quality names start to get a bid again. Taking out some of the fraud of the market is a healthy part of the process, Lisa, in our view. We don't want this market to run up too quickly, as we were discussing earlier. Is giving those people who have been waiting on the sideline an opportunity, and there is a lot of cash still on the sideline, particularly those institutional investors that has missed some of this rally, that we think that will make up to kind of close that underperformance gap into year-end that will come back into this market. But again, focusing on those more quality areas and not sort of the mean non-profitable areas of the market.
Nadia, the government shutdown continues to drag on. Any of this what's going on in the market being driven at this moment a little bit by policy uncertainty in Washington?
I think so, particularly around what it could do to consumer sentiment and what it could do to spending going forward. Reality is people aren't getting paid. And if that weighs onto sentiment, particularly into the holiday season, you could see some pullback, particularly in some of the consumer names. So that is starting to drag on the market on the margin. But I think, as we've been discussing this morning, that as we approach the holiday season, particularly Thanksgiving, you're likely to see the government start to take this a little bit more seriously in terms of what it's doing to the American consumer and reopen the government. I mean, I hear from my mom, who runs our church pantry, that the reality is you're seeing long lines there. So people are suffering, right? And I think that they are calling their representative to sort of reopen this government.
Do you think the government reopens before Thanksgiving?
I do. We do think that it's not a guaranteed look, and nothing is ever guaranteed, but it does feel that way, that momentum is building to reopen this government in the next couple of weeks.
Nadia, still constructive. Always good to see you. Thanks for dropping by. With or without payrolls, the wonderful Nadia Lovell of UBS Global Wealth Management. Who needs payrolls? By the pullbacks.
Well, certainly if the data from the companies themselves is coming out strong, why not, right? I think that there is a question, though, about the psychology, and I thought that the final point, and I thought that your question was really good, Anne-Marie, about the psychology of the consumer in response to the government shutdown. There are some real risk factors right now that could also be at play here with some of the pullback. And yes, we're going to talk about it, even though it might melt up into the end of the year. I do think it's important to notice.
Bloomberg Intelligence said the previous record shutdown lasted 23 trading days, 2018, 2019, during which the market gained how much? 8%. The market actually gained 8%, and that was the previous longest shutdown. So potentially, if they wrap this up pretty quickly, it won't be that brutal.
This is a market that's been driven by a lot of earnings, some fantastic earnings at some major tech players, which make up the bulk of the S&P 500, and a lot of optimism and confidence in one major theme, AI. And that is very, very different to the payrolls report. In fact, completely the opposite.
Well, this is the problem, right? At what point do you have an economy completely driven by AI hopes and dreams that can keep going that way without consumers seeing the benefit from jobs, from getting paid, and from actually consuming basic things? So these are sort of the difficult moments that we have to try to square.
You'd have to believe there's a limit to that decoupling. You've got to believe that. Let's give you an update on stories elsewhere this morning. If you're just joining us, here is your Bloomberg brief with Yahara Anand. Hey, Yahara.
Hi, John. Tesla shareholders approved CEO Elon Musk's $1 trillion pay package, the largest payout ever awarded to a corporate leader. More than 75% of votes cast were in favor, clearing the path for Musk to become the first ever trillionaire. The agreement requires Musk to deliver on targets to significantly expand Tesla's market value, revive car sales, and ramp up robo-taxis. Meanwhile, airlines across the U.S. have started canceling hundreds of flights due to the government shutdown. The four largest carriers have canceled about 700 flights scheduled for Friday after the U.S. Transportation Department ordered airlines to cut 10% of flight capacity across 40 major airports. The reductions apply to flights between 6 a.m. to 10 p.m. local time at those airports. And Ford is considering scrapping its electric F-150 pickup truck. The Wall Street Journal reporting no final decision has been made, but executives are in active discussions. A Ford spokesman declined to comment on future product plans, but did say the F-150 Lightning gained record sales in the third quarter and is the top-selling electric pickup truck in the U.S. That's your Bloomberg brief. John?
Yahara, thank you. Appreciate the update. Up next on the program, the Monocalls Plus. The road ahead for Tesla, with shareholders approving Elon Musk's $1 trillion compensation package. That conversation up next, live from New York City this morning. Good morning.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today. and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
On the surface, totally understandable how people are drawing comparisons. We're trading at 23 times and change. Tech bubble valuations peaked around 24 times. And then we had the build out of telecom. Now we have the build out of AI. When we dig under the surface on valuation, we have a very difference in line with where they've been over the past 20 years. If we look at free cash flow yields, for the median large cap stock, those are about triple today what they were back in the dot-com bubble.
This ain't .com. That was Michelle Weaver. That's the message coming from Michelle and the team over at Morgan Stanley. Equity futures on the S&P 500 declining once again, though. We're down by 1/3 on the S&P. On the NASDAQ 100, down by 0.5. What a week for the NASDAQ. Lisa, we're poised for a drop of something close to 3%. It's not the start of April. Those losses were severe, but it's the biggest weekly loss since the start of April.
And it gives you a sense of how much some of these names have run up in the meantime. The fact that we are talking about a weekly decline, that is the first weekly decline in a month, and it is not that significant, highlights just how much we are used to, money print to go burr and everything go up. But I do think right now there is a tell from earnings that came out well and that people still sold these stocks. How do we value to the moon? And that, I think, is what people are striking.
I like it when you sprinkle in some sound effects.
She can't help herself.
Money printing over.
Well, you got to roll the R. You got to roll the top.
Roll the R. I didn't know that.
I think so.
Good to know.
Isn't that
All right.
the point?
For next time, Lisa can practice.
Thanks.
All right. There we go. That's something else, right? That sounds like a cat.
Exactly.
All right. To the bond market. What are we doing? No payrolls. Everyone's dazed and confused and going crazy, apparently. 2s, 10s, and 30s. Yields look like this, 4.1% on a 10-year. Interesting debate at the front end of the curve, 355. Look, we're unmoved on the week, unchanged. But if you picture this as a tug of war, with a ton of tension in that rope, with strong arguments on both sides to cut interest rates and then to do nothing, and maybe a little whisper of maybe hikes in 2026 from the fringes of Wall Street, look, that's where the debate is right now. It's vicious.
And right now, the data is not actually giving any insight into which side of the debate people are going to come on. What it comes down to, I keep thinking of the conversation we had about how lower income consumers are seeing their pay increase at the lowest pace relative to high income consumers, tied on record from Bank of America going back to 2015. And it raises a question, is monetary policy trying to close a gap that is not something that monetary policy can do? And how much is that skewing some of the data that's coming out that people are looking at as anecdotes versus the overall numbers that still look okay? And I think that really has become a really big debate.
I understand the temptation of a monetary policy official wanting to involve themselves in the wealth inequality debate. I understand the temptation, but there are massive risks surrounding them getting involved. In fact, there is a really strong, powerful argument that over the last decade, 2 decades, they've exacerbated the wealth inequality in this country and around the world with aggressive monetary policy that has supported people who hold assets, wealthy people, and hurt people who don't.
And that's exactly the point that Liz Everett, Chris Berg was talking about from the Bank of America Institute, talking about how if you have assets, you feel good because stocks are going up, money print to do a thing. But I'm looking right now at a question of at what point does a Fed rate cut exacerbate some of the froth that people are talking about versus helping people with the labor market? Unclear exactly what the answer to that is.
The bond yield just about unchanged, 2s at 30s, 10-year bond yields at 4.1%, 2s at about 355. That's the price action. Let's get you some morning calls. First up, William Blair downgrading, guess who? Sweet green to market perform, saying investor skepticism will reign supreme. It's what happens when you don't give people their chicken, Bramo.
They're
and
saying
they pay $15, $16 for a salad.
Yeah, or how about a salmon?
And wait online for 20 minutes.
Well, they talked about maybe increasing the protein offerings by 25% in terms of the portion sizes to try to bring people back. So how much is this a sweet green issue? How much is this really some sort of convenience store issue? And it seems like there's a protein issue.
You could see this happening in real time, by the way. This company goes public and the pushback, people could just see everything changing. and they stopped going in the same way.
And that's the reason why they're coming back and having to offer protein. Again, though, the fact that we're talking about how much salmon or chicken you're getting on your salad from Sweetgreen highlights how little else we have to really chew over, no pun intended, to try to gauge the appetite of consumers.
Well, if you're paying $20 for a salad, which I don't know, I don't go to Sweetgreen, but I think it's about $20 for a salad, you will actually monitor how much protein they're putting in said salad.
Sweetgreen, down at the pre-market this morning. Let's get you with another call from Piper Sandler, upgrading Expedia to neutral, citing accelerating bookings and better operating leverage. Just a completely different story for the US consumer. Expedia up by close to 13%. And finally, Bernstein raising its price target on Warner Brothers Discovery to $23.50, arguing it's a, quote, must-have asset. The stock is up by 0.5%. Let's turn to Tesla. Shareholders going all in on Elon Musk, with analysts feeling quite confident.
For Musk and for Tesla, this is an important chapter. These are not targets that are just ridiculous. Obviously, extremely optimistic. Musk is ultimately really going to be the key driver to get there. And I think investors recognize that. That 75% was a huge vote of confidence. And I think basically saying, like, you're our leader, lead us there.
Wall Street now waiting to see if Musk can deliver on major targets still ahead of us. Bloomberg's Ed Ludlow joins us now for more. Ed, that was a big win for Tesla and Elon Musk.
It was. I mean, the 75% vote in favor is an interesting figure. You do take into account that Elon Musk, his brother Kimball Musk, who sits on the board, and the other board members were able to vote their shares. And that's, I think, about 16%. So do the math on that. But it doesn't reconcile for many investors, if you look at the reaction for those that voted no on the institutional side, the idea of key man risk, because we're still in the same position we were in last week, where the board is saying that only Elon Musk has the skill set to achieve the things that they've set for him. Elon Musk says that he wants more voting power, and the tranches all the way over the next 10 years can take him to 25% stake. But those that are most concerned about that say, well, that doesn't address our dilution or the key man risk element. Even though part of the package, of course, has Elon Musk focused on a succession plan by tranches 11 and 12. But there's a lot of outstanding questions. The main thing, John, which you will have seen, is that Musk did what he always does, which is to keep investors looking to the horizon.
So, Ed, I think Lisa asked the most important question of Cathie Wood yesterday. Lisa asked Cathie, what would you do if this didn't pass? Would you sell the stock? And the answer, I think the question was direct and the answer was quite muddled. And it wasn't clear what she would do if this hadn't passed. It has passed. So I'll ask a different question. Just reverse engineer it. The people who voted no, are they going to sell the stock now it's passed?
Yeah, we spoke to CalPERS yesterday, America's largest public pension plan, and they basically said, well, our answer is that we're long-term shareholders, and in the event of a no vote, which is academic now, there would be some short-term pain in the stock, but because we are long-term shareholders, we'd look past that, which I think kind of answers the question. You know, Dan Ives in the clip that you played made a very key point, which is that the operational and financial milestones are mandatory. They're very real. And whether you say, okay, 20 million vehicles delivered or build 1 million taxis or 1 million robots, the financial goals to achieve $400 billion in adjusted earnings or to take the company to $8.5 trillion of market cap would represent outperformance against historical norms, which is where a lot of the no voters put their faith, at least, that in the event that their grievances with the package's composition weren't heard and it was a yes vote, which we got.
Ed, how much is this going to be a template for other big tech companies?
Gosh, how does one answer that question? I mean, what I went and did is looked at the 2018 package, which was structured in tranches in a similar way, but the scale completely different, right? That was $58 billion of dollar value award. We're talking about $1 trillion of award. But again, you know, that's been the headline for the many weeks that we've been voting power. And so if you look at comparisons of compensation or voting control, I go to Jensen Huang and NVIDIA. He is paid handsomely to run NVIDIA, but I believe he only holds 3% of the company. And so many, when they said that they voted no because they had compared and contrasted against comparable companies, which is what CalPERS' argument was. I believe when you guys spoke to the New York State Comptroller, he made a similar point. there isn't a comparison because the existing voting power that Musk has, along with the board, was already elevated. So to take to 25%, I don't think there would be any sort of comparison, be it at the S&P 500 level or in similar companies. Are there any similar companies? You know, John and I have debated, is this a car company or a tech company?
And I've got about 30 seconds. If this was a politician, we'd talk about a major mandate and we'd be going through the politician's first moves. What's Elon Musk's first move with this major mandate, I guess, from Tesla shareholders?
Well, the first thing that jumped out of the post-result commentary was that Tesla will turn to 50% annualized growth, which would mean that it's a company that starts doing nearer to 3 million vehicles a year than 2. That was important because, again, the board has set him the goal of 20 million vehicles. They just only had their first ever 500,000 vehicle quarter. You can do the math on it. They're going to have to hit that average every quarter for the next decade. And so ramping up and evidence that they'll do that seemed important at the time.
Ed Ludlow, with the latest, I wonder if this means less politics, much less politics, in the future of Elon Musk.
I definitely think so. But what's interesting is, remember, Elon Musk was one of those individuals that helped, especially financially, back Trump. What's going to happen in the midterms in 2028 when the Republicans may need his help?
Up next on the program, we'll catch up with Stephanie Roth of Wolf Research, with the shutdown leading to another payrolls Friday without the payrolls. Plus, Danny has your morning movers. KKR getting a boost from strong third quarter results. That stock up 4%.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
The opening bows about 60 minutes away. Equity futures near session lows, down by 0.4% on the S&P 500, negative by 0.6, almost 0.7 on the Nasdaq. As we count you down to the cash open, let's get you some morning movers, some single names. Let's cross over to Danny for more. Hey, Danny.
Hey, John. Some read on travel companies. Make of this what you will in, as you've put it, this cherry-picking season, but they've been really strong. Expedia upgrading their outlook, shares up 12.5% or a little bit more than that at the moment. Basically saying that the holiday travel looked very strong, that they had good momentum into October and beyond. And they said that they're not seeing any effects of a government shutdown weighing on travel too. Very similar story for Airbnb, also very strong earnings, an outlook that was better than expected. And at the same time, momentum that will carry them through to the holiday season for them. One of the things that really helped them was in August, they introduced a reserve now, pay later type program for them. So that seemed to really help juice up some of their bookings. So shares up 4.3%. Elsewhere, we got numbers from one of the other big buyout giants, and it was KKR. The bright spot for them was the fact that they had the best fundraising quarter since 2021. This is a time that is supposed to be difficult for private capital players to be fundraising because of all the vintages from 2021 they have to work through that they're still holding on to. But they raised $43 billion. Half of that, more than half, came from credit. So those shares up 4%, John.
Danny, thank you. Thanks for the update. That stock's had a terrible year. I say that stock has had a terrible year deliberately because the company based on the earnings, same thing with Apollo earlier this week. Numbers have been pretty decent. Stock at times has been a quite difficult story.
It's been a commentary on people's fears about private credit and what they could be missing. And that really has been the play for a lot of people, even though the earnings aren't showing it. And that is a sort of interesting contradiction. How scary is private credit if the actual earnings are proving to be quite positive?
The numbers from KKR and Apollo through the week, pretty decent, better than good in some cases. Let's turn to the economy. The shutdown-driven data blackout leading to another payrolls Friday without the payrolls. Bloomberg's Mike McKee doesn't know what to do with himself. Good morning, Mike.
I know it's a little bit like Christmas without Santa Claus, I'd say. You know, data without a jobs day without data is kind of hard to parse. But Bloomberg users never give up. They have continued to put out forecasts, and here's what we would have had, according to the Bloomberg consensus, if we actually got a jobs report. The expectation was for negative 23,000. Now, the reason for that is because a lot of federal workers went off payrolls who were laid off by DOGE in the month of October. So that might have even been a low guesstimate. Private jobs, 40,000. You can see the difference there. The private was okay, and that kind of matches up with what we saw from ADP. The unemployment rate expected to tick up a little bit. We even have a whisper number, 22,000. We just don't have anything that they're whispering about specifically. So we're turning to the alternative data, as we always do. State jobless claims, we got the raw data last night. New Mexico, the only state that didn't contribute, so it was a little easier to figure this out when we applied the modifications that one does. 228,000, that's a gain of about 10,000. It is up, but it isn't a lot. Doesn't tell you necessarily we're seeing a change in the way the labor market is behaving. Revelio Labs sees 9,000 jobs lost. ADP, as we mentioned, 42,000 plus, but they only do private jobs. And both ISM Manufacturing and Services this week said the labor markets in those areas are contracting. So it's a really mixed picture. We've had one Fed official this morning saying that we should be very careful going forward and don't know what they're going to do about the 10th. That's Philip Jefferson. He's the vice chair. John Williams is saying that our star is lower than other people think, so he might be a vote for a cut. But that's where we are at the moment with no data. We're just kind of looking at our empty stockings over the fireplace.
We want some presents, Mike McKee. Some
we want
gifts,
some presents.
Of course we do. Mike, of the Fed officials that have spoken this week, have they given strong indications over what's leading their decision-making right now, what data points they are putting more weight on versus others?
Well, most of them have looked to the labor market and the idea that the labor market could be weakening for what's driving them, although Philip Jefferson did reference the inflation numbers, as did Beth Hammack yesterday, the Cleveland Fed president, who's been very hawkish, saying that they shouldn't cut anymore because inflation is still rising. And then you have John Williams kind of looking at growth and the idea that if growth is strong enough, we can still cut rates and not worry about what's happening with the labor market or inflation at this point.
Mike McKee, appreciate the update. Michael McKee there. Thank you, sir. Stephanie Roth of Wolf Research writing this. Data this week has been disappointing. The labor market has decelerated, but it's not clear it's getting worse. Stephanie joins us now for more. Steph, good morning.
Good morning.
Any signs of stabilization?
Yeah, I mean, we saw ADP looks better than where it's been. Of course, we're all now focusing on Tier 3 data because that's all we have to focus on. The Challenger numbers have spooked a lot of people, but I have to say that is based on headlines. And we knew that UPS, for example, that was a big driver of the warehousing number. That has happened throughout the course of this year, largely through attrition. We knew the Amazon number had come out. That was part of that, the October data. So our sense is that the labor market has decelerated. That's what we're picking up here, but it doesn't appear to be actually necessarily getting worse. And then the picture for the economy on a go-forward basis is actually pretty decent. We have likely tariff uncertainty is fading to some extent. We know that we kind of have a floor in terms of tariffs. We have financial conditions have eased. We have fiscal stimulus is going to have a supporting impact on the low-end consumer. So even though we're in a place where the economy is kind of sluggish, the factors are looking pretty decent for 2026.
You said something about the Challenger job announcements or layoff planned cuts, and I think that it's really important, the idea that a bulk of this could come from UPS and Amazon, both of which were reported and has to do with warehousing on the UPS side and artificial intelligence on the Amazon side. How much are we conflating a single name story with a broader market trend where AI has already taken people's jobs?
Yeah, I mean, I think that's the case to some extent. And the Amazon numbers aren't that large relative to the size of its workforce. So even though we've seen some of these layoff announcements that are tied to AI, some of this ends up coming out through attrition like the UPS. And it's not entirely clear that AI has really been taking that many jobs so far. Looking forward, it might be. But if you look at a correlation between AI usage by industry and the slowdown in payrolls growth, you don't see much of a correlation outside of tech, professional services, and then a little bit of finance. So it's not necessarily the explanatory story yet.
In the absence of non-farm payrolls data, a lot of people are thinking big, asking large questions, filling time with other things. I'm just wondering how much people are trying to understand the AI growth story and how much it's propping up and frankly masking the weakness that we're seeing in other pockets, particularly from, and we keep talking about fast casual restaurants just simply because that's the data that we have. But you know, it sort of speaks to a really lopsided economy heavily weighted to the AI story.
So, I mean, I think that the K-shaped economy story is right, but it's not necessarily the bottom part of that K is getting that much worse. We're just hearing a lot of company announcements related to that, and we don't have any other data to the other side, which tends to capture the broader picture of the consumer. And then the AI story is driving a decent portion of growth this year. Our estimates are that it's nearly a quarter of the growth, if not maybe a tiny bit less than that. But it's certainly not half of the growth, and it is part of the economy. There are a lot of people who are employed and investing in CapEx, and that is a support for growth that is durable.
Stephanie, I want to pick up here on your point that the market has kind of, and investors have kind of moved past the tariff story. What if IEEPA, though, does get struck down by the Supreme Court?
Then they'll recreate it. So what we're really talking about here is about $100 billion windfall to companies, potentially, depending on how this all plays out in terms of tariff refunds they might be eligible to get. Otherwise, on a forward-looking basis, the administration is likely to recreate the tariff structure very similar to how it stands today, which is why the bond market doesn't necessarily have to react so significantly.
But it'll take a lot longer to recreate that structure using 232s, 301s. When would the hit be on consumers if they have to recreate that structure?
I don't know if it will end up being that big of a hit on consumers in the sense that companies have raised their prices. They're not going to lower their prices as a result. We're not going to see much volatility depending on how the tariff structure works. So companies have slowly moved their pricing mechanism higher. They know, especially if it ends up getting struck down, they know that it will largely be recreated. The administration will certainly communicate that, in which case the pricing effects will continue to kind of be the case, and then companies will maybe more slowly pass through the price increases. Our estimates suggest that about a little above 60% of the tariffs that are implemented and expected have been absorbed by parts of the supply chain. So it's the exporter, the retailer, and the consumer. So we've already gone through a lot of it. There is certainly more to come, which is why we should see upward pressure on prices for the next 6 months.
Was October Chair Powell's last rate cut?
No, I think he'll probably do one more.
Yeah, just the one?
I think he'll do one more, and then we'll probably get an additional 1 to 2 beyond that.
You see a difference between the leadership once he's gone? We're going to have a more dovish Fed after May? Or do you think it's going to be just as conflicted, just as gridlocked?
Just as gridlocked. I think we'll see, of course, the chair may be dovish themselves, but that doesn't mean the committee is going to go alongside that. We've seen a committee that is certainly divided. That's been quite clear over the past couple of months. So our expectation is they're not going to really change policy that much as a result. And yes, they probably will want to cut a couple more times beyond that just to get to something that they think is closer to neutral. And the economy will probably be in a decent place throughout much of next year.
Cleveland Fed President Beth Hammack making a name for herself. Think she gets a vote next year?
Yeah, talking about inflation being a primary concern and talking about how they're not all that restrictive, if at all. And that, I think, was the primary point that a lot of people are picking up on. What does that mean about the terminal rate? And exactly to Stephanie's point, maybe they can't cut that much more.
Lisa's worried about armies of humanoid robots, if you're interested. That's where the conversation has gone this morning. Without payrolls, this is where the mind wanders.
In fairness, we're talking about someone who could make $1 trillion based on humanoid robot armies that he doesn't want anyone else to control, unless he gets too crazy, but he wants people to be able to fire him should he get too crazy.
Privately owned.
Yeah, I mean...
What happens when the sovereign loses a monopoly on violence?
100%.
You know?
You keep bringing it up because it's compelling to you, because it's something realistic.
A loss of state legitimacy and all of that.
You know, already...
Right there with you, Bramwell.
Honestly, you put this together with NVIDIA having international policy control and this question of the influence there. You start talking about humanoid robots that could potentially fight our wars. I mean, this is increasingly a question out there. I don't think we need to go here, so I'm just going to
Kids on a college campus somewhere going to their political theory class, getting ready to have this conversation with their professors.
Talking about my son? Yes.
Is that what's happening at home? Is that what he's thinking about?
Maybe.
Okay. All right, Stephanie, good to see you.
It's good to be here.
Thanks for dropping by. Thank you. Stephanie Roth of Wolf Research with the latest. No payrolls, of course, this morning, but plenty of debate on this labour market. Let's get you an update on stories worldwide with your Bloomberg brief. Here's Yahira. Hey, Yahira.
Hi, John. Elise Stefanik is entering the race for governor of New York. In a post on X, she called New York Governor Kathy Hochul the worst governor in the country and pledged to make the state affordable and safe. The Republican congresswoman was weighing a governor run for months, according to sources. The New York gubernatorial election is set for November 2026. Meanwhile, First Brands Group is desperately seeking access to $600 million in remaining bankruptcy financing. Lawyers warning that without the rest of the $1.1 billion loan, it's game over, and the company will immediately liquidate. Holdout creditors, including Onset Financial, are fighting the deal, claiming the firm stripped them of collateral. The high-stakes hearing continues today. And Potmar shares closing lower in Asia, trading after a clip went viral of an employee saying a product seemed expensive during a live stream. This triggered a social media backlash against the Labubu maker's prices. The controversy coincides with a broader cooling of Labubu resale prices. A Pop-Mart spokesperson said they are investigating the viral video. That's your Bloomberg brief. John.
Yahira, thank you. Appreciate it. Thanks for this morning. Up next on the program, we'll set you up for the day ahead. Plus, we'll catch up with Jeff Rosenberg of BlackRock, breaking down the health of the labour market. From New York City this morning, good morning. You're watching Bloomberg TV.
have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
We're coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can't be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
You have to look at the totality of data. I do miss payrolls. Let's spend a second saying it was good data. I just never thanked it before, and now 2 months in a row we haven't had it. There are these structural positives, right? You talk about the soft landing. Companies are solid, and they're adapting to all these macro shocks, tariffs, immigration. They're managing, and that's why earnings have been rock solid. For now, we're in a soft landing. I think owning credit, fixed income's doing what it's supposed to do.
Earnings have been rock solid. That was Priya Misra of JP Morgan Asset Management, but there has been some pushback in this equity market to that earnings story. Palantir, the poster child for that. Lisa went through a range of other companies as well, have reported earnings this week, and the stock market has pushed back, even though those earnings have been okay. For the broader market, on the S&P 500, we're down by 1/3%. On the Nasdaq, we're down by 0.5 on the session, down today and down on the week. On the Nasdaq 100, we are poised for the biggest weekly loss going back to early April. That's the stock story. In the bond market, 2-year, 10-year, 30-year, shaping up as follows so far this morning. Yields up by just a basis point on 10s to 4.0986%. As we count you down to the opening bell, here's the trading diary. A look into the weekend and into next week. Today, the Senate expected to hold another vote on the stopgap funding bill at 10 a.m. Eastern Time. UMich Consumer Sentiment, 3 p.m. Eastern. Fed Governor Myron speaks. Look out for that going into the weekend. On Monday, earnings from Paramount Skydance. Tuesday, the G7 foreign ministers meeting kicks off over in Canada. On Wednesday, another round of Fed speak. We're pretty light on data through next week.
Yeah, and that seems to be a feature of the past couple of weeks. And one thing that I do wonder is how much we do get the data, we can actually look back and have any clarity about the moment that we're in, because right now it is a muddle.
Let's stay on the labour market. Investors still leaning on private data for signals as the shutdown continues. Jeff Rosenberg of BlackRock saying more recent wage gains have been led by the highest wage earners. It is those wage earners' declines this month that point to a softening in labour markets. Jeff joins us now for more. Jeff, that note's important. Are you seeing a deterioration?
Yeah, you know, it's so interesting to listen to Priya. We used to work together, her pining for the halcyon days when we had the payroll report. So, you know, taking a much closer look at the alternative data sources, the private data sources, the alternative data that I'm mentioning there, we've had a lot of success scraping the wage inflation data or the wage posting data and extracting from it wage inflation measures. And one of the most important stories that I think everyone is aware of, when you came out of COVID, it was the bottom end that led the wage gains. And that shifted And we've been in a period where, you guys have talked about it, the K-shaped recovery. We've talked about it a lot in this program. But that shifted where the bottom end was really weak, and it was the high end that was holding up. And the latest innovation in the data, we saw a little bit of strength in the high end. Over the last 2 months, that's come out of the data, and that's come back down. And it's kind of brought the aggregate wage data back in line with where we were in the pre-COVID period. So it's not that bad, but you had this period of really aggregate wages that were above. Now you're coming back in line, and the change is a softening, and that softening is interestingly coming more from the high end than the bottom end.
Jeff, you're a PM. Is that sufficient reason to dial down risk?
So one of the things, as a PM in our process is, having a lot of inputs to the process. And so we're talking about one of what might be 100 different inputs. So we're going to weight that appropriately and not react to just one, but it is an important data point. And what does it point to? It points to a lot of what we're seeing in the market pricing, that most of what we're getting out of the alternative and the private data sources are kind of validating what we had as the last reading, which is the slowdown in the labor market. So it confirms a lot of what the other data sources say, and when it all lines up, it kind of points you into the one direction, which is 70% odds of the Fed continuing its cutting cycle here. When we talk in December.
Jeff, how much is a risk asset market really depending on that rate cut? I mean, it sort of seems like we're talking about two different worlds, whether it's the AI trade and risk assets that aren't necessarily hedged to the underlying economy or jobs market. And then we're talking about labor market data that is affecting what the Fed does. Is there a sense that this risk market needs at least another rate cut this year from the Federal Reserve to keep on going?
I think it depends on how risky you're talking about in terms of the risk market. Fixed income, the investment grade side, it's going to be much more dependent on that rate picture because there's just less credit spread. And so total returns are going to be much more about the rate side. I think when you start getting into the riskier parts of the market, like high yield, there's more credit spread, it's more credit sensitive. So that rate cut, whether they cut or they don't cut in December and all the things we gnash our teeth about, that's going to be less of an impact for that part of the portfolio. And the equity market outlook is going to be, much more important for the riskier parts of fixed income like high yield.
Jeff, since nothing really happened to cause this momentum unwind, and we actually got earnings from big tech that showed positive returns, are you buying right now? I mean, is this something that you're seeing as something that's just a momentary blip that gives you an opportunity to trade around?
If you look at what we were coming into, kind of end of September, first week of October, there's aggregate measures and there's a lot of focus on the aggregate. Some headlines about Shiller cyclically adjusted cap. But you look under the surface and you saw some very extreme moves in terms of valuation. We talked about this as the market moving from optimism, from the post-Liberation Day concerns, that was kind of June, July, to when the Fed got involved, when they started to signal a bigger preference for labor markets to drive their decision-making, that really shifted the market from optimism to euphoria. So valuations got very extended. They got particularly extended in the cross-section and the differential characteristics. A lot of high-risk pricing in the equity market, a lot of anti-beta, which means people were really not looking for defense. They were really on the offense, and they got a little overextended. And I think that's what you're seeing here in the pullback. Absent a big change to the macro outlook, that can be a buying opportunity. We're not buying today. We're going to see how long this revaluation plays out. But, without a big change in the macro outlook, this is really kind of a pullback from what was some very extended euphoric type valuations in the equity market.
Jeff, just a final question from me. Is there a sweet spot in the market right now for you? Somewhere you see an asymmetry of risk, somewhere you want to be, somewhere you're comfortable?
Yeah, I mean, if we talk about kind of the risk side and the risky side, on the risk-free side, the sweet spot, I think, is still kind of in that middle part of the curve, 5s to 7s. the Fed here is asymmetric, to talk about, your question. They're going to be very responsive. Right now, they're talking about normalization, and so that's giving a little bit of support to that part of the curve. But if normalization gets shocked, you were talking in the earlier part of the segment, the dependency on consumption to the wealth effect, right? This is the inverted market. The stock market cares more about the sorry, I just got that wrong. The economy cares more about the stock market than the stock market cares about the economy. Because what's driving the economy is consumption and wealth effect. So if you got to pull back there, the Fed's going to be very responsive, and that part is not normalization. That's more of a Fed cutting cycle. And that part of the curve initially, I think, will benefit. On the risky side, it's a carry story. It's asymmetric to the downside, but as you're talking about, earnings are strong, corporate balance sheets are strong, the economy and measurements, we've kind of eased off of this concerns that we had earlier in this year. And so that's a carry trade. You understand that that's income against downside, but the downside seems pretty limited, so you can take that carry.
Hey, Jeff, good to see you, as always. Maybe next time we do this, we've got some data. I don't know. Maybe. Jeff Rosenberg of BlackRock. We can only hope. We can only hope.
His comment there about how if the stock market sells off, it will have this transmission mechanism to consumption. So the Fed's going to come in and do something about it is a reason why there is a Fed put always when the market goes down.
Andrew Hollenhorst, though, going into the weekend is talking about their base case as the government reopens next week, but a further delay could push data releases into December. What does the Federal Reserve do with that?
And he's still looking for rate cuts, by the way, for what it's worth. Coming up on Monday, Laurie Calvasina of RBC, Sarah Hunt of Alpine Saxon Words, Greg Battle of BNP, Lindsay Piegza of Stifel. From New York City this morning, good morning. Have a wonderful weekend. This was Bloomberg Surveillance.
Day 6 at the WTA Finals in Riyadh. World number 1 Aryna Sabalenka took out Coco Gauff to reach her 4th straight semi-final at the season finale. The victory sets up a meeting with Amanda Anisimova for a spot in the championship match. Jessica Pegula punched her ticket into the Final Four with a straight sets win over Jasmine Paolini. The American will face Elena Rybakina in the semis.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a little ball. Put wasabi in the middle. Then my process 1 to 6. 1, this is putting the between the rice air. Then make the 4 fingers curl, make sushi shape. then touch this. 2, then turn. Now these 2 fingers, tap the bottom, make the sushi shape more beautiful. 3, then, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1, 2, 6.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
All right, looking a little down for a Friday, but it is Friday. 30 minutes till the start of the cash trade. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
The world's richest person could become the first trillionaire ever after Tesla shareholders approved the biggest pay package in the history of the universe.
And AI enthusiasm increasingly meets skepticism. A volatile week ends with sparse eco data and a mixed earnings picture.
Plus, not so friendly skies. Airlines across the U.S. have started canceling flights as the government shutdown drags on.
Well, I'm happy I made it back to New York, so that's good news. I am here, but some of the travel stocks, Matt, have done really, really well over the past 12 hours after they reported earnings. 2 of them I have for you on a board over here. Expedia and Airbnb reported after the bell yesterday, both delivering a positive outlook, basically saying travel trends are continuing. There's momentum into the holiday quarter, and Expedia saying no impact that they've seen from the government shutdown.
I am happy you made it back
Thank you,
as
Matt.
well, but not as happy as Elon Musk. He was dancing with robots. His $1 trillion pay package was overwhelmingly approved by shareholders in the company, paving the way for him to boost his stake in Tesla to at least 25% over the next decade, if he makes it worth $8.5 trillion. So he has to add like an NVIDIA and a half to get there.
And he has to build his robot army in order to get there, too. Well, Dan Ives of Wedbush spoke earlier about the pay package on surveillance.
From a physical AI perspective, the 2 most important companies in the world, it's NVIDIA and it's Tesla. And that's why this was important, because Musk is ultimately really going to be the key driver to get there. And I think investors recognize that 75% was a huge vote of confidence. And I think basically saying, like, you're our leader, lead us there.
For more, we're joined by Bloomberg Tech co-host Ed Ludlow. So, Ed, Elon got what he wanted and danced with the robots.
He did, and to Dan Ives' point, more than 75% of the vote was in favor of the compensation package, so it was overwhelming. But one must also take into account that Elon Musk, who is already the single biggest shareholder, was able to vote on his shares, as were the other board members. And I think at the time, that's about 16%. So take that into account. But for many weeks, we've been focused on the $1 trillion of compensation. For Musk, this was about voting power and control. And if you look at the institutional investors in particular that had voted no, for them, the dilution factor and the key man risk element was what they took issue with within the package. And Matt quite rightly points out that these are mandatory and very real operational and financial milestones that he has to achieve to get that, not just compensation, but the voting power as well. And as you see him dancing on stage, what happened next? He then went to do what Musk always does. He gave us some information about what Tesla plans to do near term to keep investors looking to the horizon.
I mean, to me, it makes sense that every owner of the company should be able to vote his or her decision on this. And if the owners of the company overwhelmingly agree to pay the CEO that much, they should be able to, especially since they'll all be very rich if he achieves these goals, right? I mean, he needs to add, what, $7 trillion in value to get the full package?
Exactly so, but it doesn't reconcile the key man risk element. So I think, would there be outsized performance and return to shareholders if Musk realizes all 12 tranches? yes, of course, like the jump to $8.5 trillion. But the skepticism and concern among some of the investor base was like, if Elon Musk and the board already have 16% of the company anyway and that kind of voting power, and Musk takes his own individual stake to 25%, what then happens if something goes wrong? Right. And Musk chases after the compensation. He does go after the money. There's an element of worry there. But yeah, the mandatory milestones are worth recounting, be they the classic core business of delivering vehicles, Optimus robots, or the robo-taxi targets that have been set.
Right, and also only a small fraction of the owners of the company have that skepticism and concern, right? Like clearly, most of the people who own this company want this to happen. So I guess good luck and Godspeed. Ed, I'm sure you're going to cover this a lot on your program as well. Bloomberg Tech's Ed Ludlow, his show kicks off at 11 a.m., so it'll be an extra special Friday edition on today's Bloomberg Tech. The impact of the longest government shutdown in U.S. history hits travel. The FAA is cutting flight capacity by 10% to alleviate pressure on air traffic controllers. About 700 flights have already been canceled for today by the 4 largest U.S. airlines. Joining us now from Newark Airport is Bloomberg's Nora Melinda. And Nora, I mean, what kind of problems can you already see there? Or are things running smoothly because we've known this was going to happen for days?
Well, Matt, as you mentioned, we have known that this was going to happen for days here. We've been here for a couple hours at EWR Airport, and we are still seeing droves of people coming in. But as we're reporting on the ground, it seems that this is not uncommon. I mean, it's a Friday morning, and we are still seeing a lot of activity, a lot of travelers coming through here. But as you mentioned, a lot of delays here in focus. About 3% of all U.S. flights are canceled here in the United States. And this, of course, according to data that we got from an aviation analytics company, Cirium. So this, of course, is not as big of a number as you would expect. So, of course, we do have those government shutdown concerns and the implications here for travel. But if you put this in the grand scheme of things, 3% of all cancellations in the United States is a little bit lower than the 4 or 5% that we would see when you think about the likes of like a winter storm.
And Nora, what we've seen so far from some of the travel companies today, Expedia being one of them, saying we've seen no discernible impact from a government shutdown. Does that change for corporate America, for these travel bookers, for the airlines, if this drags on and more flights are canceled?
Well, we've been getting a lot of questions here about the impact on the bottom lines here for a lot of these airlines. And of course, the data is still really preliminary here, so we don't know the expected impact here in terms of the bottom line for these airlines. But we are seeing some notes and data coming in from TD Cowen. They're saying that this should be manageable for the airlines here, and they actually see this as an opportunity to potentially buy airline stocks. Danny.
All right, Nora, thank you very much. Bloomberg's Nora Melinda there at Newark Airport, keeping an eye on what so far looks calm there, but I guess could very well divulge into chaos.
Did you come into Newark yesterday?
No, I didn't. I specifically did not book Newark because I was scared to.
Smart.
Yeah, I had a flight last weekend coming into Newark that was canceled. Wasn't going to make that mistake again.
Yeah.
Now, so airline stocks are taking a hit, but as we were saying, the travel stocks are doing well today, specifically Airbnb and Expedia. They had strong quarters. Airbnb got a boost from its Book Now, Pay Later program. Expedia raised its full-year outlook as well. Joining us for more is Bloomberg Intelligence Global Head of Tech Research, Mandeep Singh. Mandeep, it's a choose-your-own-adventure economy. These travel stocks seem to be saying people are using us, booking us, and everything is good.
Yes, and look, when it comes to Airbnb specifically, the concern was, they are in a saturated market and they have to do something about expanding their marketplace. So, the fact that Brian Chesky said they're going to be launching one new business every year, and he seems to be quite optimistic about applying AI to change the marketplace, to really drive new ways of bookings. I think that's what kind of showed up in the stock reaction. But look, the numbers, kind of consensus expectations were low, so I don't think high single digit is anything to be really excited about.
Airbnb, Expedia, these are companies that Danny and I wouldn't expect you to cover. I mean, I know you're running the tech coverage for Bloomberg Intelligence, but we think of you as the AI guy, as the chips guy, Mandeep. Are these companies using AI? Are they able to boost productivity with AI? Are they able to improve the customer experience with AI?
Actually, you're right. So a lot of emphasis on the call yesterday was on how AI will change the travel booking experience, and really when it comes to search. In fact, they were asked why have they not partnered with OpenAI, because Booking and Expedia, the two other big OTAs, have partnered with OpenAI in terms of instant booking through the chatbot. And they said they are open to the idea of doing it, but clearly they don't want to get commoditized and be that data layer. So AI will have an impact in terms of search for travel and how you book your travel. It's just too early to kind of exactly imagine how those changes are going to flow through.
All right, Mandeep, thanks very much. Mandeep Singh there, who, as I said, runs our tech coverage for Bloomberg Intelligence. You can find his work if you type, I guess now you can just type ABNB, equity, BICO, go. Check on futures ahead of the open. After a down day yesterday, we're off again today. S&P futures down about 0.4%. The NASDAQ off a little bit more as the big tech companies that tend to move the market are a much heavier weight on that index.
Yeah, the NASDAQ on track for its worst week since the April Liberation Day sell-off. Some of the single stocks that we were watching this morning. Six Flags cut its outlook for a second time this year and took a $1.5 billion charge on its third quarter results after overestimating the performance of its parks. So no one going to Six Flags.
Even though everyone goes to Disney, that's so weird.
Very different offering.
I guess. Take-Two dropping after the video game publisher delayed the release of its much-anticipated Grand Theft Auto 6. Again, they continue to delay this, and this game is like 20 years old. I can't believe people still care.
It's going to be so expensive. They're going to now launch it in November of next year. DraftKings should also mention they're slumping after cutting its revenue forecast for the year. And DraftKings CEO Jason Robbins will be joining Bloomberg Tech. That is at 11:30 a.m. New York time.
Coming up, Wendy's posts better than expected earnings, signals the fast food chain is overcoming its slump as a lot of the fast casual guys are having problems. We'll give you the details next. This is Bloomberg Open Interest.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Getting out of high interest, look at what's making headlines around the world. Elise Stefanik has announced she is running against Kathy Hochul for the position of governor of New York. The 41-year-old representative for New York's 21st congressional district has become one of President Trump's most prominent allies in Congress. She rose to national fame for grilling the presidents of Ivy League universities about campus unrest and anti-Semitism. And Nomura ditches its efforts to restart a prop trading desk in London after less than 2 years. Sources say the bank ultimately decided to fold the fledgling prop desk into other parts of the markets business. A Nomura spokesperson says the primary focus remains growing our diversified client franchise. And KKR reported its best fundraising quarter in more than 4 years, driven by record demand for its credit products. The buyout firm gathered $43 billion during the quarter, including $27 billion for credit alone. Alternative asset managers have been grappling with a difficult fundraising climate since the Fed began raising interest rates in 2022, though that seems, Danny, to have changed a little bit lately.
Yeah, that's changed. And I should also say that defies the whole doom and gloom about credit. They're fundraising clearly very well in that division.
I mean, credit's awesome. $6 trillion in bond issuance this year already.
A record. It's been wild. By the way, let's check on some earnings movers because Wendy's, that is up almost 10%, 9.4%. So their sales declined less than expected. They've been struggling. So is this the rebound for the fast food chain? Joining us now is Bloomberg consumer reporter Red Brown. Red, the flavor it feels like from earnings is that fast casual is suffering, but fast food is doing well. Is that a fair read?
No, I definitely think that's the best way to summarize the results we've gotten over the last week. It definitely seems like people are avoiding those like $15, $20 salad or food bowls when they can. It does seem like that has a trickle-down benefit to a lot of the fast food companies who have made really strong strides to readjust their value proposition, right? We've seen Burger King, we've seen McDonald's make these moves to expand their value offerings to make sure that they say, like, look, if you are struggling right now and you want to have a nice meal, McDonald's or Burger King is a place you can do it. But at the same time, places like Sweetgreen, Cava are not able to make that same move, and that's why they're struggling.
Wendy's stock, though, has done horribly over the past 5 years. And I'm from the great state of Ohio, so I'm a Dave Thomas champion, of course. But it's down here, look, 46%. And meanwhile, McDonald's is up that amount. Why is Wendy's doing so badly compared to the Big Mac maker?
So there's a little bit of like a difference in strategy with these two. Like I think you're right. Like Wendy's does try to position itself as like the most premium of the fast food. So like they're almost kind of in this quasi gray area. It is really good, right? I mean they can back it up.
But you don't regret it as much after as you do other fast food.
I guess it depends on what time of the day it is. Right. But they are like this like gray area, I guess, a little bit between these two like sectors we were just talking about. So they have been kind of just trying to stick to their price a little bit more, saying we are a premium product, and they can't move the prices down too much, just considering where cost inflation is. And at the same time, McDonald's has the scale to take on some of these higher price points. Because they're able to negotiate better contracts with their beef providers, things like that. So
here's the comparison, by the way. Joe just pulled it up, the 5 years. So McDonald's there in yellow, Wendy's in white. It's rough.
Yeah, and I mean, Wendy's is making efforts to kind of halt the slide. They are doing things. They're like slowing down their new builds, things like that, so they can reinvest into the restaurants and hopefully spark a little bit more foot traffic.
There's no way you don't feel regret after eating a fast food chili situation.
No, the chili is delicious. I'm telling you. You crumble up crackers and put it in there. Have it with a small Frosty. A small Frosty because I'm watching my weight.
Like a bowl of regret, but that's okay.
Red, thank you very much. You've done an excellent job covering these restaurants. The fast casual crash and the fast food success. Red Brown covers earnings for us over at Bloomberg News. Coming up, it's been a week of sparse economic data and a mixed bag of earnings results. BlackRock's Rick Reeder joins us next because usually he comes to us on a Fed day, and this would be, a jobs day, and this would be a jobs day. So we're still happy to have him, and we'll talk about Bink as well. This is Open Interest.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Data and earnings are painting a mixed picture of the economy. ISM services, ADP employment, they come in solid. Challenger job cuts, those jump to one of the worst Octobers on record, ruining these markets, or the rally yesterday. Let's try to get a sense of direction. Bringing us that now is Rick Reeder, Chief Investment Officer of Global Fixed Income at BlackRock. And Rick, we always have you on a jobs day, and today is decidedly a jobs day that should have been. Are you just flying blind? I mean, this data, it depends what you look at. You can say the economy is great or things are falling apart.
It's funny. Thanks for having me on, by the way. It's a funny thing. I found that the industry's obsession with these individual days, and by the way, the payroll report's a great economic indicator. The CPI report, there is so much information that comes through the system. By the way, my favorite, I read tons, maybe too many, corporate earnings reports, and I look at what's happening with hiring, inventory management, receivables, et cetera. So there's still, would I rather have the data? For sure. By the way, I think the markets become hamstrung, and I think part of why the markets are acting in this sort of paranoid, what do people know, what's the information out there, manner today. I think I feel pretty good about knowing the structural direction of travel. I think the economy's in good shape. There are parts of it, it's not operating on all its cylinders, which we'll talk about. CapEx is great, high income is doing well, low income in the consumer side, not so much. But I feel pretty good about understanding. And listen, I think we have a softening of the labor market that is quite significant. And you see that, as you mentioned, the Challenger jobs report, you see that playing out. You certainly see that when I look at all the corporate earnings in terms of that. We have a softening labor market, and if we had the number today, I think it would have been reflective thereof.
Yeah, I mean, on flying blind, I couldn't agree with you more, and no one cares what I think, but Bob Michael of JP Morgan has made this point. Rich Clarida, former vice chair of the Fed, confirmed they have like 500 economists. They have 12 regional banks. They're talking to participants, to companies, to institutions every single day, so they have a pretty good handle on the economy even without it. I wonder about what you guys have at BlackRock. I mean, you have $10 trillion of assets under management, right? What kind of signals are you looking at? What kind of proprietary information are you getting that helps you in your job, Rick?
You know, Matt, it's a great question. By the way, this morning we went through credit card data. So you know, it's all available information. So we had a gentleman named Randy Berkowitz who drives every day. We look at what's happening in terms of, you know, you go through the internet, you splice some of the credit card data that comes out. You get an amazing amount of high-frequency data. So we'll use that. We use a series of data assimilation tools. By the way, text mining to understand what companies are saying. So anyway, we're trying, and by the way, we don't have it figured out yet, but, you know, we're trying to be pretty cutting edge around the amount of tools we use and how AI is helping us. You know, by the way, also in things like how do you think about scenario analysis? How do you think about, you know, the first derivative rate of change on inflation and growth? So, listen, I think part of the why is most exciting times for investing ever is the amount of tools you can utilize that allow you to get more verse around what the direction of travel in is pretty intense today. So, you know, we're still working and trying to figure out more tools we could use, but it's so much different, Matt, than quite frankly 5 years ago, 10 years ago.
Rick, I would be very interested to know if any of that data, any of the tools that you've been using and looked at have changed some of your allocations or how you're thinking about Bink right now.
So it's a great question. Thanks for asking. I mean, so Bink, you know, there was something that is, I think, pretty intense around. So Bink, you know, has had a good run. We feel good about where it's going, and more people coming into it. The thing that it's allowed us to think through is today you've obviously got the way the Fed's going to interpret the data, which is not always what I agree with, but the Fed's going to interpret the data as you've got inflation that's a little sticky high and then the employment that's moderating. So we think you're in this, and by the way, not just the Fed, the ECB, the Bank of England, the RBA, they're in this point of let's sit back and watch the data. So the way we move our positions around is we've reduced a little bit of our interest rate sensitivity. We pulled some of our interest rate sensitivity out of the front end of the yield curve and say, gosh, let's just get carry. We can reduce a little bit of our duration. We've reduced a little bit of our investment grade, more than a little bit of our investment grade credit, because quite frankly, today where spreads are, it doesn't do a lot for us. And if rates are pretty stable, agency mortgages become much more interesting, and low coupon agency mortgages become much more interesting in the portfolio. So we've been doing that. By the way, we look at the data, including last night. You're seeing with the mortgage rate coming down a bit of faster prepayment. So we've reduced some high coupon mortgages. I know a lot of technical there, but some stuff moving around.
We should point out for viewers who don't know, Bink is the iShares Flexible Income ETF that Rick runs at BlackRock. Rick is going to stay with us through the opening bell into the equities trade next. This is Bloomberg.
Such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller, and we're looking at a down day. After a down day, it's been a pretty volatile week. I think we've had 2 sessions this week where stocks have moved, in fact, to the downside more than 1%. So maybe you're getting a little bit of concern about valuations. You can see S&P futures down 1/3%, NASDAQ futures down 0.5%. That has been the talking point this week, although retail investors typically like to buy the dip. No matter what. You're getting, well, Pencil ringing the opening bell at the New York Stock Exchange. I have no idea what it is, but she is holding a Faber-Castell #2, as you can see right there. Down at the NASDAQ, there's a SPAC ringing the opening bell. If you're worried about froth in the markets, let me tell you, SPACs are back. And meme stocks.
We're
and
so back, Matt.
Doing deals without bankers. Who needs lawyers?
Who needs them?
Yeah.
You don't need them.
Just
Make
get
that
it done.
deal. As long as you say something AI, you're off to the races and your debt will do fantastically in the market. I am, of course, exaggerating.
Facetious.
There's been some, I'm being facetious. There's been some real questioning, especially in recent days, about that trade. But where we are not seeing questions asked, we are buying now are these travel stocks. Expedia and Airbnb doing really well today. They both delivered a positive outlook. They signaled that travel trends are strong, that it's going to continue into the holiday quarter. And so far, Matt, they see no discernible impact from the government shutdown.
It's pretty impressive, especially on a day like today when we start to see those flights getting cut. Elon Musk's $1 trillion pay package was overwhelmingly approved by Tesla shareholders. That paves the way for him to boost his stake in the company to at least 25% over the next decade. He does, however, in order to do that, have to boost the value of the company to $8.5 trillion, which means adding another $7 trillion. And just as a reminder, there is no company worth $7 trillion. It would be a pretty amazing feat, I think. Having said that, inflation still seems to be way above the Fed's target. So maybe $1 trillion won't be worth that much in 10 years.
Maybe it won't, but I think most analysts would agree that NVIDIA is probably going to get there before. At least they're actual analysts who believe that NVIDIA will get there in the near term.
There are price targets that put NVIDIA at $8 billion in 12 months, 8.5 in fact. Let's bring back BlackRock Chief Investment Officer of Global Fixed Income, Rick Reeder. And Rick, can I ask you about that? I mean, is this market too frothy? Are valuations, are we getting too far ahead of ourselves here? Because I was looking at the other day, the Warren Buffett valuation stocks, market capital versus GDP. It's at the highest level at least since 2000. And the same is true of the Shiller case CAPE ratio, you can see this great chart here that shows you we're pretty highly valued on these two measures. Are you worried about the AI froth?
So, there's something, by the way, this is a time of year you tend to get momentum gets chased out of the markets, particularly today where you have ambiguity around some trends that are taking place. So, by the way, I don't think it's an AI bubble, and I don't think there's too much froth. And depending on where you go, if you look at some of the big hyperscalers that trade at 20 to 25, 26 times earnings, and they throw off ROE, return on equity of 30, 35, 40%, and you look at their free cash flow. I've never seen in my career free cash flow generation. We can talk about top-line revenue growth. When you can have that much free cash flow generation, it allows you to do your CapEx, which is extraordinary today, build R&D, which is your future cash flow, and then you can buy back your stock. So what's happening, you have an unbelievable dynamic, and by the way, we're now about to open the buyback window, that you have this dynamic that you throw off immense amounts of free cash flow, and so there's multiples are not scary. There are parts, I see it in the private market, and I see it in some places where you're seeing businesses that have no cash flow for a number of years. How much would you finance those? So I do see froth in some areas, but in the traditional big market cap stuff, and I would say related to that, in semis, in healthcare technology, where you're seeing rapid change, but real cash flow alongside of it, it is the exact dichotomy of what you saw in 2002.
Why then do you have these large cap giants tapping the bond market to the degree they are, and not just the broadly syndicate market, but also raising capital off balance sheet too? If they were so confident and have such robust cash flows, is that not a concerning turn of events that they're instead building up on debt piles?
So first of all, when you look at any measure, debt to EBITDA, you look at their debt to book cap, debt to market cap, these companies are under-geared or under-levered. Their cap structure is so low in terms of leverage certainly relative to their market cap, but relative to their book cap. If you were running a big, mature company, you think about what does your normal cap structure look like, and if you're going to fund near-term CapEx over the next couple of years, if you can do it out the yields curve, which is where you see a lot of that financing take place, to say, gosh, I am throwing off a lot of cash flow, but if I can lock in these rates, and if I'm as a shareholder of any of these companies, I say, why in the world would you fund everything with equity? Or why wouldn't we put a little bit of debt, get a little bit of gearing, get your ROE higher? So I just think it's a natural evolution of, gosh, this is how you run a big company, and this is what a normal cap structure looks like.
I mean, we were just talking about global bond sales hitting $6 trillion, an all-time record. That's pretty incredible, and the return on fixed income has been great this year as well. Finally, how could we be in a world with tight financial conditions when this is happening? It just doesn't make any sense to me why the Fed would want to be cutting into this.
So you've got what I would argue, there's an immense amount of cash that came from certainly years ago with fiscal monetary stimulus. So, I don't think financial conditions are great for older savers in the economy. The interest rate tool today is incredibly powerful on parts of the economy that are really struggling. Low income, small business, the housing market. By the way, the government debt, since 89% of what the government funds is in 0 to 2 year part of the yield curve, so it has a huge influence on what taxpayers are paying for debt today. So my view today, what the interest rate tool does, the idea it affects inflation. I've been saying this for months. It's very hard for the Fed to bring down sticky inflation, healthcare, education, insurance. Not terribly robust. But you do actually, if you bring the rate down, you will bring down the mortgage rate, which you're seeing play out.
Well, but not for poor Americans, Rick. Diane Swonk has said, bringing down these rates is not going to affect subprime rates, and 25% of the country is below 690 with a credit score. Also, I don't see how a lower rate adds jobs in an environment where companies are cutting headcount to try and offset higher tariffs to their margins.
So, man, I've said this for months now. I will say one thing: the Fed doesn't create jobs directly, but you think about what happens. Small business does. 44% of the hiring in the U.S. is small business. The rate's too high for small business. Second, you think about what happens in the housing market. We put 3.1 people to work for every home built in this country. If you get the mortgage rate, by the way, you don't have to get it down that much, but if you got it down 25, 50 basis points, you increase labor mobility. Your point is right. Companies, we are in a productivity revolution. Companies are going to cut jobs. But if you increase labor mobility because people can sell their house, move to another state where they get a job, if we actually put people to work in building houses, you bring down shelter inflation. The Fed can't create jobs, but you can ameliorate some of the stress that's happening because of productivity. And people talk about productivity as like AI. It is happening everywhere. We talk about freight, how we do logistics, how we do inventory management, how we do customer procurement. Productivity is exploding. We don't need as much labor collectively in the country. You know, bringing that rate down in the places that can actually help will actually at the margin help a labor dynamic that I think today you'll see not just what you're seeing in the last 4 months, but what you're going to see for the next couple of years.
And Rick, these conversations, and especially your viewpoint, is made all the more important. We have to ask because last week, the beginning of last week, Secretary Scott Bessent confirmed his list for Fed picks, your name among them. How have those conversations gone?
No, I can't, you know, I can't really comment. I wake up in the morning and I try and figure out the spline of the yield curve and what your comments about fast food versus Fed, like should we be buying this stock or that stock? That's what I got to focus on that. And so anyway, that's what I'm doing today.
Even
by the way, it's the most exciting time to do it.
Rick, even if you're not confirmed as Fed chair, everybody has a view about what they would do differently at the Fed. What are some of the changes that you would make?
You know, listen, all I'll point to is what I've said for many months now, is I think there's some things that you can do to create velocity in the system. You know, nobody borrows off the overnight funds rate anymore. Velocity happens where financing happens out the yield curve. Things you could do to keep that stability of the back end of the yield curve, to keep the mortgage rate in a place where we get real velocity, existing home sales moving. So anyway, I think there's some things that can be done that are interesting. And listen, Matt, I've said it publicly for many months now. I think if we're running break even, you can buy in the market today, 5-year inflation break evens at 2.35%. I think the funds rate should be at 3%. And I just think you could move it there, and then you don't have to go much further. I just think the price, you know, in markets, if something's priced wrong, you get it there. I just think we can get it there, and then look at, and then take another view on where are we today, and do you have to move higher or lower? But anyway, I think we could move rate a bit lower.
Well, Rick,
quicker.
you know, it does have this feeling that whoever is next and whoever's next leading the Fed, that there will be this difference in tone. When we have this scenario where Chair Powell's term is up and we have our next chair in waiting, whoever that might be, how should that person handle that kind of lame duck gray period?
From an investor point of view?
Or just communication to the markets. How should that look when Chair Powell's term is over and we're waiting for the newly confirmed Fed chair?
Listen, I think it's tricky. I mean, I have incredible sympathy for, and quite frankly, you know, the sanctity of what that institution is. I think what they will continue to do, and I think what they do today, is they make judgment based on, here's the data that we have to interpret, what is the right thing for the population at large in terms of managing that policy. And I really believe in this, and I certainly believe in this Fed chair and this Fed committee, that I think they're going to make the decision based on, let's evaluate the data, interpret the data, and make a decision based on that. And I don't think there's any reason to believe that happens any other way than that.
Well, Rick, you certainly do that for us, and we are very appreciative of it. To get all of your thoughts from what's going on with Bink to the labor market and beyond, Rick Reeder, thank you so much for joining us. Coming up on the show, the AI rally on pause. We'll discuss with Bloomberg Tech's Caroline Hyde. That's coming up next on Bloomberg Open Interest.
At what point do you say, we made a mistake and we're getting out? How long do you give it before you say, this isn't working?
That's one of the most critical differentiators between great investors and just mediocre investors. Because on one hand, you have to have confidence and conviction and all the work you've done, the decision you've made, that if you have a little stumble here and there, if you immediately are selling out, you're never really going to fully realize the depth of potential long-term success. And yet, on the other hand, if you're stubborn and you refuse to admit I'm wrong, if you continue to think the market's wrong and I'm always right, then you'll get caught in some very, very difficult positions over time. So that ability to have a fresh perspective, take in the new information, even when things aren't going the way that you'd expect or to hope, and to really understand from this price point today, is this still going to be one of the most compelling investments or not?
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
A check on your equity market this morning. Here we are about 15 minutes into your trading day. Shaping up to be a rough day yet again. The NASDAQ should be notable that it's down 1%. We're headed for the worst week for the NASDAQ since the beginning of April. Some top calls for you, the analyst action that we're focusing in on. First up, Piper Sandler upgrades Expedia to neutral. They point to accelerated bookings and better operating leverage. Those shares after their earnings up 16%. Then Goldman Sachs downgrades Sweetgreen to a sell. They cite mounting pressure in a challenging operating environment. They also reported earnings that looked rough, shares down 8.5%. Finally, Morgan Stanley, they raised their price target on SanDisk to $263. They see data center strength continuing to drive upside. Those shares up 7%. Matt, one of the few tech stocks that is having a good day.
Yeah, SanDisk rising, Sweetgreen falling. It's not going to affect my lunch decision, nonetheless.
Good to hear.
Let's stick with tech. The stock market's AI rally is under pressure as traders question where OpenAI will get the funding it needs to finance its lofty ambitions. Bloomberg Tech co-host Carolyn Hyde joins us now, and this has been a constant talking point. Even as, you know, these AI stocks have rallied so hard, if they want to spend $1 trillion by 2030, they're going to have to generate a lot more revenue to make it there.
At the moment, if they're going to make $20 billion in revenue, is that still enough to vindicate a $1.4 trillion build-out that they so far committed to?
No.
And no is many people's question. Look, Sam Altman has responded to what happened at a Wall Street Journal event on Wednesday with his CFO, Sarah Fryer. Sarah Fryer went on stage and basically talked about a grouping, a community, an ecosystem of banks, of private equity, but also potentially of government coming together to really help them finance here. And I think her exact words are looking for an ecosystem and the ways that governments can come to bear, the backstop, the guarantee that allows the financing to happen, that can really drop the cost of financing. Now, she's then since gone on to say, the word backstop was muddying. I didn't really mean an actual guarantee. David Sachs came on to X and said the AI czar, saying, we are not bailing out big AI players here. There's lots of frontier models. Then Sam Altman put out an incredibly long piece on X, really detailing where they think government can play a role. It's if they got into chip manufacturing. Otherwise, they don't want government help. But all of this goes on to really try and understand the vindication for where they're financing all of these data center build-outs. And thus far, it's been buying doing more and more interesting off-balance sheet deals, getting involved with AMD, maybe then AMD giving their chips, but everyone's trying to question really whether the revenue is going to scale at the amount that he thinks it will. He's saying by 2030, we'll all be cool. We'll make hundreds of billions of dollars of revenue. But clearly the market is still questioning it.
There's been some really great work from the Bloomberg team, though, about just what a behemoth it is, the manufacturing capacity that's being put behind AI. There are estimates of how much it's contributing to American GDP, and those are outsized too. Caroline, I feel like if there is a downturn, it wouldn't be crazy to say that the government steps in with support, just given how much of a keystone it's become for this economy.
And I think that alarm bell's been ringing. If you think this has been a long week, but like Michael Berry at one point this week was re-identifying. That was this week. But he was putting out that incredible chart that Bloomberg had put together of basically all of the deals and where all the money's flowing in the same few players. Are we becoming so big?
Oh yeah, we've got a
fail?
great version of that chart actually. Joe, if you can pull that up, that would be great.
And I think that just goes to your point that if everyone's intertwined, if the entire economic growth story is backed by the AI overall focus. I mean, what if we got another DeepSeek moment? What if we suddenly realized we didn't need the amount of compute that we're all trying to put into
or the amount of electricity to get that compute?
How are we getting the power?
That's the big concern. All right, Caroline, really looking forward to your program, Bloomberg Tech, at 11 o'clock. We're going to get that chart up for you, I promise, because Joe is very fast at doing... There it is. See? This is a beloved chart over the past couple weeks. We could update it with Dell and maybe a couple other...
Yeah, you can make it look crazier.
All right. I am very excited because... On the Fed Decides last week, Diane Swank came on, and every time she talks, I learn something. I understand things better. And so I see her getting mic'd up right now. She's in the studio with us, so we're going to talk to Diane Swank in just a bit. Plus, feeling the pain of Bitcoin's downturn, how ETF traders are trying to overcome the cryptocurrency's drop. That's next. This is Open Interest.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Vernon in Florence, Italy, and this is Bloomberg.
This is Bloomberg Open Interest. Quick check on what's going on in stocks right now with the chiclets. Bring them up. The S&P 500 down 0.7%, and the NASDAQ down more than 1%. We've had a couple of days of big drops already this week, so the air seems to be slowly coming out. Right now, you can see the VIX is now up at 21. So if you're used to seeing a VIX at 15, if you've grown up that way, it could change. In terms of the stocks, NVIDIA is a big one pulling us down, off 2.5%, and Tesla down 4.6%, even though a vast majority of Tesla shareholders voted on Elon Musk's, positively on Elon Musk's $1 trillion pay package. The travel companies have been doing well. Airbnb, not as well as Expedia, up 17%. We were talking to Mandeep Singh about that. The most delicious fast food restaurant of all, Wendy's, up 3.33%, although it's done horribly. The stock has underperformed McDonald's and Burger King and pretty much every other fast food restaurant you can think of. iShares Bitcoin Trust down, getting taken out a little as the underlying asset falls, down only 1/3 of 1%. But Bitcoin has, I think, erased, Danny, pretty much all of its gains for the year.
It is currently down for its worst week since March when it comes to the entirety of the year. I can give you that too, Matt. It is still up 7.3%. So not completely, but it's surely eaten into a lot of that. And
Thank you for fact checking.
Of course, always, that's what I'm here for, powered by the terminal. And you pointed out there what the ETF is doing. The ETF has helped Bitcoin reach a new record, but as we've been talking about, it's now fallen 20% from its peak. So how are those ETF buyers feeling? Joining us now is ETF analyst James Seyffart of Bloomberg Intelligence. James, great to see you as always. How have ETF buyers of this piled in, helping the rally in Bitcoin? How much are they behind some of the drop we've seen in the cryptocurrency?
Yeah, I mean, they've seen, so to be very clear, as a group, the US spot ETFs have taken in at a peak 62 billion in inflows, right? They've seen about 3 billion in flows come out over the last, we'll call it month, or really 2 weeks. But ironically, yesterday, we actually saw a huge dip buy. We saw $240 million come into these things. So in the grand scheme of things, yes, there's some money coming out. And with like this price volatility, you'd expect some people to run a bit. But I think for the most part, people buying these things understand what they're getting into. Like, people think of Bitcoin and crypto and they think crazy, volatile, and that's what you're going to get here. That's how these things operate.
First of all, it's only November 7th, so respect. Respect to you, James Seyffart. In terms of, spot ETF flows, are they still sticky? Are they becoming really momentum products? What do you think?
No, they're definitely sticky. I mean, for the most part, what we think is happening. So obviously, you think of the ETF world, there is plenty of those, spicy 2x leveraged single stock products. There's these crypto products that are leveraged, those 100% yielding products. There are a lot of people that are going after that space, but for the most part, most of the money is like longer term oriented to their investing process, right? And what we think is happening likely with these ETFs is it's mostly people putting, 1%, 5% allocation in their portfolio, and they understand what they're getting into, right? Bitcoin, for the most part, including these ETFs, tend to go in this, 2-step forwards, 1-step back motion. We had a great big, you talked about it already, but we had a bigger drawback in March and April of this year. It was over 30%. If we go to like that same sort of pullback, we'd be in the $89,000-ish range for Bitcoin. So is this the beginning of is this part of one of those, 2-step back, 1-step back moments? Or is it one of those, giant leaps back where Bitcoin and crypto fall back 50, 70%? I don't know the answer to that. But for the most part, I think people that are allocating 1%, 5% allocation, they know what they're getting themselves into. And that's why we see this money not really leaving. There has been outflows, but in the grand scheme of things, 99% plus of investors have stayed put.
All right, James, thanks very much for the breakdown there. James Seyffart of Bloomberg Intelligence covers ETFs for us today on crypto. Winter may be coming. Coming up in the next hour, Diane Swank of KPMG following fresh consumer sentiment data, plus the CEOs of Activate and Fubo TV, and part of Danny's interview with tennis legend Serena Williams.
cidade estava sitiada.
Nisso, ao começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being a billion-dollar business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation. Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. Flight delays and cancellations are piling up. There are more than 1,900 so far on the first day of administration-ordered cuts at the airport. The 38-day-old shutdown has left air traffic controllers without pay. Many have been calling out. Transportation Secretary Sean Duffy tells CBS News.
I have a #1 job of keeping people safe. I've looked at data. I want to be preemptive, and I want to make sure people are safe in the system.
WBZ's James Rojas has been talking to passengers at the airport in Boston.
Benjamin wasn't feeling very confident after learning flights were going to be cut nationwide and here at Logan the day he's flying out.
I have to be at my sister's daughter, Sweet 16, so I feel bad for whoever, their flight get canceled or delayed.
Jody feels like with things out of her control, she's going with the flow.
I'm just going to let whatever happens, happens.
It's been a week since SNAP recipients received food benefits from the government. A judge has ordered the administration to restore them in their entirety. Correspondent Weijia Jiang at the White House.
The DOJ almost immediately appealed the ruling, so now what's still unclear is whether in the meantime, as that court process plays out, whether the administration will provide the full benefits that the judge ordered.
New legal complaints are blaming a chatbot for encouraging people to harm themselves.
7 lawsuits, including 4 wrongful death lawsuits, have been filed against OpenAI, claiming the company's hugely popular ChatGPT led to mental health breakdowns. The cases filed in California state courts allege that ChatGPT, which is used by 800 million people, is a flawed product. The lawsuits blame ChatGPT for suicides and harmful delusions. Jim Crisula, CBS News.
There's a big recall at Honda over what could turn into a serious issue. WWJ's Jeff Gilbert has details from Detroit.
The problem could allow the wheels to detach. There are no reports of that happening in real life. The problem was found during an inspection.
It's been guiding farmers and just plain folks for more than 200 years.
Let's consult the 2026 Farmer's Almanac Extended Winter Weather Forecast.
The almanac is shutting down operations. CBS's Peter King.
As recently as 2017, the company reported more than 2 million copies sold.
The Farmer's Almanac's publisher says it's ending its long run because of financial challenges of producing and distributing the book in a chaotic media environment.
The Dow is down 147 points in early trading. NASDAQ off 261. This is CBS News. They've captured the last monkey that escaped after a highway crash in Mississippi.
As recently as 2017, the company reported more than 2 million copies.
And here's CBS's Jim Krasula, Steve Kathan, that is.
After more than a week, the monkey was spotted near a home not far from the crash site. The October 28th crash on Interstate 59 sent monkeys out of their wooden crates. 5 rhesus monkeys were killed by authorities during a search. 2 others were shot and killed by civilians who claimed self-defense. The last monkey was found when a woman's dog began barking at it. Workers from a company that had been transporting them came to tranquilize the monkey. Steve Kathan, CBS News.
Republican Congresswoman Elise Stefanik, staunch ally of the president, threw her hat into the ring for the New York governor this morning. She'll challenge incumbent Kathy Hochul, who posted to social media herself. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, good Friday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube as well. So head over to YouTube and search Bloomberg Podcast, and that's where you'll find us. It is Friday. Stocks are selling off here today. We're going to check in with Joanne Shu, University of Michigan surveys. We had the UMich survey came out, some weaker than expected numbers, so some concerns there. We'll break that down. Nora Melinda, Bloomberg Television Markets correspondent, will join us here. Talk about U.S. Airlines cutting flights here. She is at Newark Airport, so we'll get a sense of how crazy it is there. Shelby McFadden, senior analyst at Motley Fool Asset Management. We'll check in with her and get her thoughts on these markets. Steve Mann's going to join us. All right, the shareholders of Elon Musk at Tesla, they said, okay, here's a $1 trillion pay package over 10 years. You got some big hurdles, but if you hit them, you're going to be even wealthier than you are now, maybe the world's first trillionaire. So a lot of good stuff coming up in the next couple hours. Scarlett Fu and Paul Sweeney with you here for the Bloomberg Intelligence program. Right now, let's go to Lisa Mateo and get a Bloomberg Business Flash.
Yeah, and we've got red on the screen. NASDAQ 100 on track for its worst week since the April tariff-fueled meltdown. And the S&P 500 sets to stop a streak of 3 weeks of gains. Let's get right to it. So the NASDAQ down nearly 1.5%, 341 points. The S&P 500 down 0.8%, 58 points. And the Dow falling 0.4%, 207 points. Over to the yield space. Little change. The 2-year at 3.55%. The yield on the 10-year 4.09%. The Bloomberg Dollar Spot Index, that's weakening by about 0.1%. I have to point out, Bitcoin, it's down 0.7% at just above 100,000. In company news, you said it, Paul, Tesla shareholders, they approve Elon Musk's potential $1 trillion compensation package, and that's paving the way for Musk to boost his stake in the company to at least 25% over the next decade. Tesla shares down more than 3.5%. NVIDIA CEO Jensen Huang, well, he says says the company has no plans to ship its Blackwell AI chips to China. He says, well, it's up to China if they would like NVIDIA products to go back to serve the Chinese market. NVIDIA shares, they are down 3%. And Eli Lilly, Novo Nordisk, they agreed to slash prices on Zepbound and Wegovy. Under the deal with President Trump, the cost of the shots under Medicare, they'll be $245 a month. And your next Target run filled with smiles. Yeah, store employees are being urged to smile, make eye contact, greet shoppers when they come within 10 feet of them. They're hoping it's going to boost sales. I don't know. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is your Bloomberg Business Flash. Scarlett and Paul.
Lisa Mateo, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live with you here in our Bloomberg Interactive Broker studio in New York City. Streaming live on YouTube as well. Bloomberg Podcast is a search, and that's where you'll find us here. Market Drivers today is brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. Stocks are trading off, as Lisa was just reporting. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu, and we're joined by Bloomberg's Alexandra Semenova. Alex, what are you looking at?
It is always great to join you guys. I have to point out what mixed signals traders are getting from the U.S. economy. Yesterday, of course, we got that Challenger report showing big job cuts. But then when you look at some of the earnings today, we're getting pretty positive signals when it comes to how the consumer is holding up. I'm taking a look at Expedia right now. Shares are up about 16% after the online travel agency's results pointed to resilient travel demand. People are still buying up tickets, vacations, showing that they're spending money, a really good signal for the economy. They said that revenue for the year is now expected to increase 6.5% at the midpoint. That's up from 3 to 5% previously, and also above analyst estimates. Their CEO said it was a combination of performance we had in the third quarter and momentum we're seeing into October. Their stock was also up about 18% this year through yesterday's close.
Pretty incredible. I mean, I feel like after the pandemic, everyone was like, I'm just going to travel, and that's going to be a priority, and I'm going to make money.
It hasn't stopped.
Yeah. I'm going to make sure that I put aside money for that.
Yep, absolutely.
Let's talk about Airbnb.
Yeah, also kind of echoing those Expedia results. The stock is also slightly higher this morning. They issued a better than expected outlook for the holiday quarter. Recently also launching their Reserve Now Pay Later feature, helping fuel demand in the U.S. I guess that's a good thing for now because the company's results are doing well, but also raises questions about credit and consumers taking on debt with these buy now, pay later features. But so far, so good for Airbnb. They reported a rosy forecast provided by online demand, and also obviously that echoes the results from Expedia, Booking, all showing resilient consumers. But we do have questions, of course, with the government shutdown about flight capacity if that continues, especially into the holidays.
I'm going to get a salad today because it's Friday and I do a salad, but I'm not going to Sweet Green.
Yeah.
It's too hard to order there. Talk to us about Sweet Green.
Apparently, Paul, a lot of people are on the same page as you.
All right.
They're not going to Sweet Green.
I'm going to LA Gourmet. You know,
I've never heard of it. I have to try it out.
Dude, it's a deli. Kids
old
don't
school.
go there. Yeah, kids don't go there. It's old school.
I guess people are just not liking the very expensive salads that Sweet Green is offering. And they've also been grappling, of course, we mentioned before, with shrinkflation, where you're getting a lot less in your salad for a lot more money. And accordingly, their results are showing that the stock is down about 9%. They cut its revenue guidance for the full year and missed the average analyst estimates. William Blair also downgraded the stock, so that's kind of weighing on it. They cut its full year outlook for the third quarter as results worsened, citing stubbornly weak demand. Same-store sales also fell. It's also scaling back its ambitions for more store openings, never a good sign. And broadly, fast casual restaurants have been struggling. Companies like Chipotle and Cava also, as diners are kind of looking for cheaper options.
I did learn when I was at the store for the first time, which was maybe 5 years ago, the term, first time I ever heard it, protein. What protein would you like? What? Excuse me? And then what meat? Some young Bloomberg employee behind me said, Paul, they're asking, do you want chicken or shrimp or whatever?
It's its own category.
Yeah, I didn't know that. So
right,
there
because you
go.
can also pick tofu, you can pick shrimp,
exactly.
you can pick salmon.
So I learned something there.
Protein.
So, there you go.
Then you add on like $10 to that when you add
there you go.
protein.
That's how they get you. That's an upsell. All right, Alex, thank you so much. We appreciate it. Alex Semenova giving us the latest on movers in the stock markets. And for more conversations like this, subscribe to our Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere else you listen. UMich, not just great football, but great economist. University of Michigan, they're out with some numbers today. Weaker than expected here. I look at just the headline number, Scarlett, UMich sentiment. Consensus was 53. Last period was 53.6. Today came in at 50.3, so that's a miss. Joanne Shu joins us here. She's the director of the surveys of the consumers for the University of Michigan. Joanne, some disappointing numbers to me. What are you reading into it?
Essentially, consumers are starting to fold in the federal government shutdown into their views of the economy. In October, this really didn't seem to be on their mind that much. They didn't seem that concerned. But now that the shutdown has dragged on for over a month, consumers are worried that there are going to be knock-on effects on the rest of the economy.
So Paul had mentioned the overall sentiment that falls to 50.3. I believe that's a 3-year low. And then you have this other index called current conditions that has fallen to a record low. What is the difference between overall sentiment and current conditions, and why is one at a 3-year low? Why is one at a record low?
So overall headline consumer sentiment has 2 subcomponents. One is current conditions and one is future expectations. So the current conditions part of sentiment has really come down quite a bit this month, primarily because, again, people are really quite concerned about the effects of the shutdown. They're concerned about high prices and the impact on their pocketbooks. And on that note, they believe that buying conditions for big ticket items are just really poor right now because of those high prices. At the same time, they're not necessarily expecting things to be any worse in the long run. So really what we're capturing is a deterioration in views about the current situation and the year ahead.
Gotcha. So it's like a snapshot of the moment in time. This is the first read for the month of November, so you will get an update as well. How much of an adjustment is there usually between the first read and the second read?
It depends on what's happening in the economy. If the shutdown is finished and the federal government reopens, I would expect a tick up in consumer views of the economy. But if this shutdown continues to drag on, and if there are major impacts on consumers down the pike, it's unlikely that sentiment is going to recover in the near term.
So, Joanne, the headline number, University of Michigan sentiment number 50.3, where would you like to see that number? Where would that number be if this were a healthy economy, a normalized, healthy economy? Where would that number be?
We've been seeing about four consecutive months now of small declines, and that's landed us here in this very low, historically low from a historical context. What we want to see is at least a few consecutive months of improvement, and we haven't seen any improvement in sentiment since the beginning of the summer when people started to calm down after the height of tariff rhetoric. So consumers, we want to see a sustained improvement, and we just haven't seen that.
How are you thinking about the inflation expectations? For 1 year out, the expectation from consumers is that prices will rise more, a tick up to 4.7%. But for the 5 to 10 years out, they're actually feeling a little bit better.
Yeah, so consumers are seeing a decent amount of uncertainty with respect to inflation. They continue to be pretty worried about the possible impact of tariffs. They don't think we're out of the woods yet, but they are not nearly as worried or panicked as they were earlier this summer. So both in the short and the long run, consumer expectations for inflation have come down compared to April and May, but they're still considerably higher than they were a year ago.
Joanne, thank you so much for joining us. Appreciate it. As always, Joanne Shu, Surveys of Consumers Director at the University of Michigan. I don't know, Scarlett, if I were a politician and a member of Congress down in D.C., I'd look at these numbers and I'd say, all right, this stuff's starting to impact people.
Time to get back to work?
Time to get back to work. Maybe some of the elections this week and maybe another sign that people want change here. They want some improvement here. So I don't know, if I were both sides of the aisle, I've been saying we got to get back together and get this government open here.
For so long, everyone in Washington, or I guess the prevailing sentiment in the markets, is that it's not a big deal to shut down. This has happened before, and then when we end it, things go back to normal. So we're not going to look at it as really leaving lasting damage on the economy. But you're starting to see that as it goes on, and as things that should be normal, like going to the airport and getting on an airplane, become abnormal and become problematic. sentiment is going to go down, and it's very fragile right now. You could, if people all head for the exits, you see what happens with markets.
Yep, absolutely. So I don't know. I think most people, nobody really thought it would go this long.
Right.
This shutdown. So it's definitely, we're in uncharted territory. But boy, the number is starting to show up here in some of the numbers here.
It's definitely showed up in some of the earnings, especially for companies that cater to lower income consumers.
Yep, absolutely. So we'll keep an eye on that. We're going to check in with Nora Melinda, markets correspondent for Bloomberg Television. She's at Newark Airport here reporting on kind of what's happening there as they start to reduce capacity in the air system. So we'll do that in just a moment. S&P 500 off 30 points. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. Well, we've got stocks sliding. Earnings season winding down. The NASDAQ down nearly 1%, 224 points. The Dow off about 0.1%, 92 points. And the S&P 500 falling 0.5% or 36 points. In the yield space, right now, little change. The 2-year 3.55% and the yield on the 10-year 4.09%. Over to commodities. COMEX gold up about 0.1%, $3,998 an ounce. Brent crude up about 0.5%, $63 a barrel. WTI crude about $59 a barrel. And the Bloomberg Dollar Spot Index weakening by about 0.1%. Take a look at some travel stocks. We'll start with Expedia. Their shares up 16%. Results pointed to resilient demand. Airbnb, their shares were higher. Now they're taking a turn. They're down about 2%, and that's despite a better than expected outlook for the quarter. And as you know, hundreds of flights canceled today by the 4 biggest U.S. airlines. The government ordered those reduced operations. So we'll take a peek at some airline stocks. United Airlines, actually, they're up about 0.5%. American Airlines up nearly 2%. Delta still seeing a dip lower, down about 0.3%. And finally, British Airways parent IAG, well, they said its North Atlantic route, it experienced some weakness in the third quarter, weighing on earnings that missed. The stock fell the most since April. It's sinking now down about more than 9% in London. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Scarlett and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube as well. Search Bloomberg Podcast, and that's where you'll find us here. I was going to go out to Cali in the next week or two and see my youngest. He's in college out there, but I'm like, I'm not going to deal with that now. Who knows what the flights are going to be like.
Have you booked flights already?
No. I said, I'll just see you when you come home for Thanksgiving. But it was definitely part of the situation. I'm like, who wants to get my flight canceled or deal with all that silliness? I'll tell you who is dealing with it right on the ground is Nora Melinda, Bloomberg Television Markets correspondent. She's at Newark Airport, EWR, for those in the know here. Nora, what are you hearing from the folks there? What are you seeing at Newark Airport? Because this is kind of day one when we're getting some cancellations, reduction in capacity across the country. What are you seeing there at Newark?
Well, Paul, hopefully you can get to California sometime soon, but here at Newark Liberty Airport, we are hearing of some cancellations, more than 40 flights canceled today. Of course, today being the first day that we are seeing this disruption, but this was largely expected. About a 4% disruption, 5% tomorrow, and then this should ramp up to 10% as we head into next week. But of course, on top of mind right now is a lot of the workers who are going without pay during this time period. We've been chatting with some people here on the ground, and it seems as though a lot of the TSA agents here at Newark Liberty are still reporting for work, not calling out sick, but of course we do know the FAA did mention that we do have about 20 to 40% of air traffic controllers at some of the major airports here in the U.S. that are calling out from work.
Give us a sense of what it looks like for the security line to get through TSA, because those are the folks, as you mentioned, who aren't getting paid but are still going into essentially their office. How long is the line? Do they still have the preferred, the premium lines available to travelers?
Pre-check.
Pre-check as well?
TSA pre-check, right? Well, we are still seeing a pretty big influx of people coming in. It has slowed down a bit as we're now hitting around 10:30 here in the morning. But if we look at Terminal A, which is where we are right now at Newark Liberty Airport, we are still seeing a lot of people coming in. But as we're talking to people here, they're saying not uncommon. It's a Friday morning. We're headed into the weekend and just a few weeks, of course, ahead of the holiday season. So we really have been seeing a lot of people coming through security here.
I wonder if, Clear. I'm also a Clear person.
Yeah, you've got all the options.
Yeah, but I don't know. We'll see how it goes. Usually it's not too bad. I mean, Newark does it, particularly Terminal A does a pretty good job. So, Nora, is the expectation that any cancellations, disruptions, that kind of thing, is it just kind of going to snowball as the days go on and when we approach Thanksgiving?
That still remains unclear, but of course that is the concern for a lot of travelers. If this government shutdown does not get resolved, we don't see some sort of resolution soon, a lot of people are nervous. J.D. Vance, Vice President J.D. Vance, even saying that if this were to snowball into Thanksgiving, that we will see a large impact not only on the U.S. economy, but also the consumer here. So that is a concern as we are heading into the key holiday season as to whether or not we're going to see some sort of normalcy here as it pertains to boarding flights.
What is the anticipation, Nora, of how much harder things will get later on in the day? Because, thinking of if you are going to travel during this period, you want to get to the airport early and get on an early flight so that you're not getting caught up in the downdraft of flight delay after flight delay. By the time that you get to the evening, you won't make your flight. Are people kind of bracing for, something rougher later on today?
And that's a great question. Honestly, anecdotally, as we were here earlier in the morning, right before 5 a.m., we did see a high volume of people here. If I were to paint the picture for you, long lines. But as we're kind of getting later into the day, you are seeing a little bit of less people as we're getting later into the morning. So you are hearing a lot of people saying, I need to be here early. Of course, the advice still being get to the airport early. Make sure you're checking in and keeping tabs on your app if you're headed to the airport, just so that you're aware of any disruptions. And a lot of consumers, a lot of travelers really trying to avoid that and getting in front of it here.
All right, Nora, if you can get some time, Nora, head to the Ironbound section of Newark. Great Portuguese and Brazilian restaurants. Check out Forno for, that's my fave over there. Norma Linda, Bloomberg Television Markets correspondent. She's at Newark Airport here.
I got to wonder, Paul, what this means for private jets and the smaller airports that serve them, because as far as we know, these are the big regional airports and, you know, the commercial airliners that are cutting flights. But if you fly private, you know, you might be in good shape.
Teterboro is impacted, though. It's one of the airports. Yeah, and that's Teterboro is the main private airport for the greater New York City area.
Do they serve any commercial airliners?
No.
Do they serve cargo flights?
No.
Okay, so private jets are affected.
Yeah. So, but
how do you determine which
people,
PJs go?
The smart people have their private jets at Morristown, New Jersey Airport. I'll leave it at that.
Is that one affected?
No, it is not, and I'll leave it at that.
Okay.
Let's get back to these markets here. We got a little bit of a sell-off here. Shelby McFadden joins us. She's a senior analyst at the Motley Fool Asset Management. Shelby, thanks so much for joining us here. We've got a little bit of a pause in this market over the past couple of weeks here. Despite the fact that we've had really good earnings coming out of corporate America. What's your call on the market?
I think what we're starting to see right now is a little bit more sensitivity to valuation and separating that a bit from fundamentals. So, you know, that sort of reaction, sometimes negative reaction that we've seen after having what seems like positive earnings can be one of a few things. It can either just be that guidance or the outlook wasn't as positive as people think, or that investors have decided the gains have been sufficient, that they want to take a little bit off of the table. So I think we're seeing a bit of a combination of that, where it's wanting to take some gains off of the table because there's not a complete understanding of what the fundamentals are for a lot of the AI opportunities in this market, and just saying, I still believe in this. I still believe that there is a secular opportunity here, but let me take a few chips off the table, take some gains, and then we'll continue to let it run from there.
Okay, that makes a lot of sense. I mean, people were anticipating some kind of pullback, and perhaps this is the beginning of that. I can't help but think also we're, you know, through the bulk of earnings season, and we've gotten some pretty good results. And the next group to really report are the consumer companies. And we already know that consumer companies, especially those that don't just cater to the high-end consumer, are going to be struggling, and we're going to see that in the results. So how much do you think of that is an influence on the worsening sentiment?
I think it's probably a good amount. And even though we sort of look at the state of the shutdown as, yes, we'd have some pullback now, but we would expect things to sort of even out after there's a reopening. Unfortunately, that's not necessarily going to convince all the animal spirits in the market. And so sometimes we'll still end up with that one side of things saying, well, it's negative now, and so I'm going to act now. I would expect that some of the sort of mid-cap consumer, or even sort of like right before it becomes luxury, just a little bit of that premium might struggle a little bit more. I would expect to see across the board a bit of rationalizing when it comes to supply chain and adapting to the new global trade environment. And I do definitely expect everyone to just comment on their trends in traffic and in ticket with retail. So we're going to see if things like providing value from the Walmarts of the world are sufficient enough to maintain valuations in the market, or if it is the beginning of a bigger correction where everyone says, you know what, we've appreciated fundamentals for a long time, but we're looking at the macro and we're nervous. It's something we're going to find out soon.
Shelby, one aspect or one, I guess, attribute of this marketplace has been the AI story. It's really been a story for maybe the last 2 or 3 years as one of the major drivers of the stock market here. And the discussion, I think, over the last, month or two has gotten more pointed as to whether there is an AI bubble. How do you guys think about that?
We think about it in two parts. So when asking myself, is this a bubble? The first thing I'm asking is, do I know the complete fundamentals, and have we blown beyond that? And in having some discussions with the sort of first and second derivatives of the whole sort of AI market, one of the things we're realizing is we don't even have the full capacity of the utilities, water, electricity, to know exactly what we can do and how far this can go. So if I think of that just as one component of the fundamentals, knowing there's much more, I say, well, not quite sure exactly what the ends of this are. So I'm not sure on that regard. But the second part is time. And how far forward and how soon do we expect all of this to pay off? The current valuations are suggesting that everyone expects this all to pay off in about 3 years. And that's where I disagree. You lose me at thinking that the runway is that short. So if we consider those two things, if we say, do we know all the fundamentals? No, but is it right on time? Not really. It's a little bit too soon. I would say, yeah, probably. We're looking at a bit of a bubble. How big? Unsure. But with things being pulled so far forward and not knowing the complete bounds, we might be looking at something here.
Thank you for being so candid on that. I mean, there's a lot of unanswerable questions there, and so many people just kind of plow ahead and say, no, this is going to work out. This is going to work out. Technology is a good thing for us, blah, 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 blah. Yeah. But there are so many things that we don't know just yet. In terms of things that we don't know, we also don't really know what's going on in the labor economy. And the data points from private providers like Challenger suggest that things are worsening. Is that something that I think people are kind of seeing things as the glass half empty now as opposed to the glass half full because of that lack of information?
I would agree that it's tempting to look that way, right? And the labor economy has been sort of the tipping point with regard to even Fed sentiment. We saw it earlier this year, right, when we had that large labor revision and the market absolutely sort of had a freak out, for lack of a better word. And so when we see that people continue to spend, we think consumers are fine. But then we remember that a consumer is not this separate entity that exists apart from a body. A consumer has to be a laborer, or at least a part of a laborer's household. And so I think we're taking that data a lot more seriously, and then also understanding that even if it's short-lived, we're going to see a reduction in what those laborers can buy, what part they can contribute to the consumption equation, the consumption part of the equation. So I think the labor economy is definitely being taken into account, especially because once again, we're seeing it hit white collar. And one thing we've seen since probably about 2022 is that K-shaped recovery in consumption. The top 10 to 15% has been doing a lot of the consumption. They're also facing a lot of the layoffs now. So the labor economy is a crucial thing to consider in our calculations.
All right, good stuff. Really, really appreciate it. Shelby, always a pleasure speaking with you. Shelby McFadden is a senior analyst at Motley Fool Asset Management. So smart and really very candid about what's knowable and what's unknowable.
Yeah, a lot of this, I think for a lot of investors, is just kind of a little bit of faith there that this AI, some of these big predictions we see about AI.
And that faith has been rewarded for very long, right? For the last couple of years. So we don't know if the tide has turned here, but it feels like there's a little bit of skepticism, a little bit of questioning as to where we go next. We are looking at an S&P 500 in the red, down 0.7%. The NASDAQ off by 1.3%.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM Insured Municipal Bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. Well, we still got stocks slumping. This is over uncertainty. The path of interest rates, limited economic data during the longest government shutdown in history. You have the Fed's Philip Jefferson saying policymakers should move more cautiously, given that interest rates have been lowered closer to a neutral rate. NASDAQ down more than 1%, 313 points. S&P 500 falling 0.7%, 51 points. In the Dow, that's down about 0.2%, 123 points. In the yield space, little change. We have the 2-year at 3.55%, the yield on the 10-year 4.09%. Over to currencies, the Bloomberg Dollar Spot Index, that's weakening by about 0.1%. The Japanese yen at 153.08 against the dollar. Shares of Salad Sweet Green, they're taking a hit. They're down about 8%, just nearly 8%. Second consecutive forecast cut. The company's scaling back those ambitions for new store openings. They say consumers are just opting for cheaper meal options, maybe at places like Wendy's. Their shares up 4%. They posted better than expected results in the third quarter. And then gamers, some bad news for you. Take-Two delayed the release of Grand Theft Auto 6 again, pushing back the video game by 6 months to November 2026. That's when you have to wait for its shares are down about 8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is your Bloomberg Business Flash. Scarlett and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Well, last night, Tesla shareholders approved Elon Musk's $1 trillion pay package, and we had some comments from Tesla General Counsel Brandon Ehrhart. Let's take a listen.
Sixth and finally, on the 2025 CEO Performance Award to our founder and CEO, Elon Musk, with over 75% voting in favor. Approved.
All right, that's a good day for Elon Musk. That was Tesla General Counsel Brandon Ehrhart. To see what this means for the company, for the stock, let's check in with Stephen Mann. He's Global Autos and Industrials Research Analyst for Bloomberg Intelligence. So, Steve, a good day for Elon Musk. What does it mean for the company here to get this pay package through?
Yeah, he did seem pretty upbeat last night at the shareholder meeting. He was talking a lot about what the future looks like. It almost feels like I'm watching like a Star Trek episode when he talked about robots. I think it's a big relief for the company as well as the shareholders. Looks like a lot of shareholders, given that about 75% voted for the pay package. I think now the company and he can actually start focusing on delivering those metrics, which is $8.5 trillion market cap in 10 years, $400 billion EBITDA. During that time. So there's a lot of things he needs to do.
So those are the very specific financial metrics that he needs to achieve if he wants to get paid what shareholders have approved. But in terms of actually getting there, Musk made some big promises. Humanoid robots will be doing a lot of beyond human precision surgery, for instance, and robots will play a big role in setting up bases on the moon and in Mars. And which of the predictions did he make sound reasonable at this point?
Robotics is an evolution. I think there is still a lot of technical challenges to make the humanoid work just as well as a human. So we're at BI, we think humanoid robots are actually a little bit ways off. But what was really interesting and kind of caught my attention was that he wanted to build, he's currently designing his own chips for autonomy, but he also wants to build his own fab for autonomy. And that's really a direct competition to companies like NVIDIA and some of the fab companies like TSMC. Now, his chips are a little bit different. It's a special purpose chip where NVIDIA's AI chips are made to accommodate many AI applications. His is specifically for autonomy like robots and cars.
All right, the math I do is, in order for Mr. Musk to achieve his full $1 trillion in comp, the market cap would have to get to like $8.5 trillion.
Mm-hmm.
It's at $1.5 trillion now, so that's incremental $7 trillion in market cap he thinks he can create. And if he wants to take $1 billion of it, that's fine with me. I'll take the rest. And I think that's kind of what shareholders were saying with 70% of them, 75% of them are
$1 trillion, you mean?
Yeah, for $1 trillion. So, I mean, if he's going to make incremental $7 trillion for shareholders, he can have $1 trillion as far as he sees it.
But look, remember, he's not taking the cash. A lot of it is just his stock, right? At the end of the day, he just wants a greater control over the company, 25% control of the company. But he has to deliver.
Yep, has to deliver. So how do we think about this, even the car business now, Steve? It's almost an afterthought for this entire story. How are investors thinking about kind of what is the core business today?
Look, I think, yeah, you're right. A lot of people think cars is an afterthought, but I actually have a different view. What he's really trying to achieve is physical AI. Quite different than what Google is doing or ChatGPT is doing. He's actually, creating AI through cars, mobile devices, cars, and robots. So, for him to proliferate autonomy, physical AI, he still needs to produce cars, right? I don't think he's going to license the full self-driving to any other automakers anytime soon. So for him to proliferate autonomy, he does have to produce cars. Look, and then that's why he's also very focused on, improving the design of the Optimus robot so he can actually, build more and sell more to the market.
Yeah.
So cars is important still.
That's the understatement here. Cars is still important.
I'm almost like spin out the car business and just have
that neither will happen,
and just have the rest of it is kind of this is
the
Elon Inc. This is Elon Inc. If you want to buy into all the stuff about Elon, then here's your way.
I'm so glad you bring that up because there was also Proposal 7 that was voted on at the shareholders meeting, Steve, where it was a non-binding request for the board to authorize an investment in XAI, which is essentially Elon Musk's side gig, right? The company that holds X as well as the Grok chatbot. That gives the board the option to invest Tesla's money into XAI. What does that tell us about where Tesla's headed as a company?
It's an interesting proposal, and look, they are gonna still probably take some time to think about that, but it's all interrelated, right? A lot of the stuff that he talked about last night about autonomy, Optimus robot from Tesla, and how those robots can be used in Mars, they're all connected. All AI is connected. So, does it make sense for Tesla to invest in XAI? Yeah, I think there's a lot of technology that can actually be shared between the different AI platforms. And currently, if Tesla vehicles do come with Grok, which is part of XAI. So if vehicles are autonomous, Grok would and other assistant would be very useful in a vehicle for the passenger.
We have a listener question coming in. Ryan from New York City asks, what's the likelihood Tesla can compete on the global level versus Chinese robot companies? Maybe it's the leader in the US, but where does it stand versus those in Asia?
We actually published a report on humanoid robots, but specifically on auto manufacturing. What we've learned is the Chinese are very, very far ahead. They have a number of startups working on humanoid robotics, trying to improve dexterity, trying to improve the technology stack. It'll be interesting to see, and I think some people have written up the Chinese, but the fact that they have a lot of investment and a lot of startups looking at this, they'll be a formidable competitor.
Yeah, absolutely. Steve Mann, really appreciate your joining us and pontificating here on what's next for Tesla over the next 10 years. Steve is our global autos and industrials research analyst for Bloomberg Intelligence, joining us from Princeton, New Jersey. All right, we're looking at a market that is in the red right now. Indexes look like they're clawing back some of their losses, but they've headed in the other direction again. And we see the Nasdaq at session lows, off by 1.6%. This is Bloomberg Intelligence.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Head over to youtube.com and search Bloomberg Podcast, and that's where you'll find us. The business of sports, we follow it closely here at Bloomberg. Randall Williams, he follows it really closely. He's a U.S. sports business reporter for Bloomberg News. It's his job. He joins us here in our Bloomberg Interactive Broker Studio. Randall, I know you've been doing a lot of reporting on the NBA and the WNBA, but we've got, I mean, the NBA is in a great spot, experiencing some tremendous growth, which you've been chronicling, but they've got some issues with their players and collective bargaining agreement. Where are we with that whole process?
So they agreed to an extension last Friday. The deadline was October 31st. The new deadline is now November 30th. Within that time period of reporting the story, I learned that the players are essentially asking for between 30 to 40% of league and team revenue. Now, the exact split of that is probably going to look a lot different. It could be more, it could be less. But they have to figure out a new collective bargaining agreement. And I think the sign that they agree to an extension is good. However, it's just another deadline. And what happens when November 30th gets here?
Right, and the relationship between players and the commissioner have really soured. I know that the fundamental issue is money, but some comments that the commissioner has made and that players have made have really sullied the waters here. Fans are also opposed to the commissioner too. I mean, they boo her regularly.
The boo that she received when she was presenting the Aces with the WNBA Finals trophy was one of the louder ones that I've heard from a commissioner in recent years. And that's with all due, respect to all the other commissioners. Whenever they get on stage at these NBA, NFL, NHL draft nights, they're always booed. It's sort of tradition. This boo was a little different, and you saw people in the background of the camera flipping the finger. And that's telling. So she's not in good public standing right now.
But the team owners, they appreciate her. They like her. She's done a lot of good in terms of making the WNBA more financially robust.
Absolutely. I think that no one is all bad and no one is all good. And I think that Kathy Engelbert has done a tremendous job building the business of the WNBA to be where it's at right now with this $2 billion media deal that's set to kick in next year. Now, it's been speculated that she may depart after the CBA negotiations. Engelbert herself came out ahead of the WNBA Finals and said, that's not true. I'm going to stay around. I'm not a quitter. So it remains to be seen what the future of the WNBA looks like, both with her at the helm, and B, what does it look like for player salaries and things moving forward.
Does the average WNBA team, is it profitable?
Not at this time. That's what's been floated around for many, many years, is that the league and different parties surrounding the WNBA have said, we don't make money. This is the reason why we can't pay players. But now with all of this money going in, I get a press release every couple of months that says the WNBA's viewership is growing, the WNBA's attendance is growing, the WNBA's business is growing. And so the players are seeing all of these things the same way that I am, and they're like, well, if everything is growing, why can't I get some money?
Right, I want a piece of that. Well, speaking of getting a piece of something, another story that you covered this week is about a college basketball player, Juju Watkins. She's a star on the USC women's basketball team, buying a minority stake in a pro team, the NWSL's Boston Legacy. We have not seen this before, have we?
It is, to my knowledge, the first time I've ever seen a college athlete buy a piece of a professional sports team. And it's tremendous. I think Juju's an incredible player. She has a long list of partners that include Nike, Unrivaled, State Farm, AT&T, and so many more. I'd be here all day naming them. But it goes to show that the college sports business is booming, and when you are successful both on the court, then you can make a lot of money off of it as well.
And that's amazing. I'm just great player. I've seen her play. I like watching her play. But the support she has, from, as you mentioned, the commercial endorsement.
Absolutely.
Is that's the primary source of her wealth that allows her to then make this investment, or is there? I'm sure there's some nil money involved.
I think that's the case. That a lot of this NIL money is probably paying for this. I don't know that for 100%, but that's what I would theorize with, just because of the fact that in the rev sharing system that college sports are now embracing, a good portion of that money at USC is likely going to football players and men's basketball players. Now, I'm sure she's getting something, but enough to buy a stake in an NWSL team, I believe that it's probably coming from NIL deals.
What does it mean that a female college player is the first one to do this, not a male college player.
It's incredible. It's incredible. I mean, if you look at the last couple of years, if there was someone that I would have thought would have done this, I would have bet probably on Arch Manning. I would have bet on Shedeur Sanders. I would have bet on Bronny, just because they are the legacy families of this. The fact that Juju was able to do this is a testament to her branding, her team, and her business.
Yeah, she's 20 years old.
I know. Way to make us all feel.
That is nuts.
It's just amazing. Good for them. I mean, is there a sense that this whole nil portal thing, is it going to be changing? Is this something? Because it feels like the Wild West out there.
Well, the Wild West is changing every single day. That's the problem. There's no, it's not tame enough for the regulators of college sports. Now, what does it mean for NIL? I think once the floodgates have opened, there is not going to be any restricting this. You're going to be having brands who just want to pay athletes, who want to do different things. You're going to be having donors. You're going to be having billionaires who say, you know what? I would like to fund X team and put $15 million just because it's pocket change to me. And then that money will be distributed to the athletes, and maybe the athletes go on and they go to and play pro, and maybe they don't. And if they don't, then they will have made a large chunk of change in college.
It is just amazing times in college athletics. I'm not sure it's good.
Yeah.
I'm not sure it's bad.
And maybe that's part of it. That's why it's such a gold rush. Everyone's
Absolutely.
getting in while they can, because the rules are going to change at any point.
There's no better time to be a college athlete than it is today.
Yeah, I think you're right. So, all right, Randall, thank you so much for joining us. We learn so much every time we chat with you. Randall Williams, U.S. sports business reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Broker studio. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in just moments. We've got to sell off in the marketplace. S&P's off 1%. The NASDAQ off 1.7%. Gets your attention. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Friday morning. This is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu. We are broadcasting live from our Bloomberg Interactive Broker Studio in Midtown Manhattan. We've got a lot coming up for you on the second hour of Bloomberg Intelligence. We're going to kick things off and head over to Newark Airport, where Nora Melinda, Bloomberg Television's market correspondent, is on the ground to check out how things are faring there at the airport as U.S. airlines cut flights because of the ongoing government shutdown. Terry Spath is the founder and CIO at Zuma Wealth, and she will join us to talk about the sell-off that we're seeing in markets and whether this turn in sentiment is something temporary or perhaps a little bit more lasting. Martin Braun is Bloomberg's municipal finance reporter, going to talk to us a bit about what the new mayoral-elect of New York City, Zohran Mamdani's, his promises for free buses, free childcare, and what that means with the fiscal reality, and particularly when it comes to the city's borrowing. And then Nathan Naidu will be joining us to talk about Grand Theft Auto 6, which is postponed once again to November 2026. What does that mean for the company? Take-Two. And then Michael Halen, Bloomberg Intelligence restaurant analyst, joining us to talk about Wendy's and how restaurateurs are struggling in this current environment, but fast food restaurants are doing just fine, at least for now. All right. First, though, we're going to head over to our Bloomberg Business Flash and Charlie Pellet for more. Charlie.
Hi, thank you very much, Scarlett Fu. Indeed, Wendy's shares right now up 2.1%. Sweet Green lower by 8.5%. I'll have more on that in just a moment. Equities right now trading at the worst level of the day. Friday, we've got the Dow, the S&P, NASDAQ all declining. S&P 500 index right now down by 1%. We've got the Dow down by 0.5%, while NASDAQ lower by 1.6%. Bottom line here, a Friday swoon. Stocks falling amid a slide in big tech and concerns about weakening in key areas of the economy. S&P 500 on pace to halt a streak of 3 weeks of gains. Also, the NASDAQ 100 index on track for its worst week since April. So the Dow, the S&P, NASDAQ, all in the red right now. We've got the 10-year yielding 4.07%. The 2-year 3.53%. Spot gold is up $15 the ounce, still below 4,000. Right now we have got gold at $39.92 the ounce, up by about 0.4%. And West Texas Intermediate crude oil up 0.3%, $59.59 a barrel. And Bitcoin 100,720 on Bitcoin, lower now by 0.4%. Jobs Friday, that ain't happening, but we do have economic data. Today we heard that U.S. consumer sentiment fell to a more than 3-year low as the government shutdown weighed on the economic outlook, and high prices soured views about personal finances. Now, this data came from the University of Michigan. Joanne Shu is director of surveys there, and she was a guest last hour right here on Bloomberg Intelligence.
So the current conditions, part of sentiment has really come down quite a bit this month, primarily because, again, people are really quite concerned about the effects of the shutdown. They're concerned about high prices and the impact on their pocketbooks. And on that note, they believe that buying conditions for big ticket items are just really poor right now because of those high prices.
Joanne Shu of the University of Michigan. We've got Sweetgreen shares plunging after cutting its full-year outlook after third quarter results unexpectedly worsened, with the salad chain citing stubbornly weak demand. Sweetgreen SG on the ticker down by 8.4%. Wendy's, meanwhile, reporting sales beat estimates by declining less than expected in the third quarter. Wendy's right now up by 1.9%, keeping it all in context. McDonald's up by 0.8%. Recapping stocks lower, worst level of the morning. S&P right now down by 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Let's take a look at some of the stocks on the move. Today, I'm Paul Sweeney alongside Scarlett Fu. We're joined by Bloomberg's Red Brown. Red, what are you looking at today?
Yeah, first one on my screen here is Sweetgreen. The ticker is SG. This stock has been kind of pummeled today. It was down as much as 17%, down around 8 at the moment. That's 16% drops, actually. Its worst intraday since August of this year. Was coincided with its last earnings report. So earnings becoming a little bit of a trouble point for this company. Really struggling, as we've seen kind of throughout this earnings season, this fast casual segment, really struggling with the kind of slowdown within that like middle income consumer, as well as younger consumers. So Sweetgreen definitely dealing with a lot of those problems due to the fact that their meals are kind of too pricey for these people at the moment.
Regularly $20 salads. I mean, after you add on, your protein.
Sure.
The protein, that brings it right up. Okay, Red, number 2 stock you're watching.
Sticking with the restaurants, this time it's Wendy's. The stock was up almost 15% today. The Baconator is clearly resonating with people at the moment. Their stocks, it's up 2% right now, and this is off the back of actually them showing sales fell less than expected, and also kind of continuing with this trend we've seen the last couple of weeks in these restaurant earnings of fast food doing quite well. Seems like foot traffic is, maybe falling in some of these restaurants, but if we look at McDonald's, if we look at the Burger King parent company, Restaurant Brands International, if we look at Yum, they own Taco Bell, all these companies have been outperforming expectations, and Wendy's is kind of the last iteration of that theme that we see today with the stock up around 2%, like I said.
Expedia.
Yeah, Expedia doing incredible today. The stock's really ripping, up around 18%. That's the best since April of this year. This one kind of surprised me. I think it's interesting to hear some of the commentary from Expedia. Like, travel demand is still strong. Like, it's just one of these areas that people just kind of refuse to stop spending on. I thought it was interesting, too. They called out that their buy now, travel later type product was driving a lot of these results as well. I mean, Scarlett, you made a face, so
Buy now, travel later just sounds like a bad idea to me.
I think so too, but
a good idea for the company that's offering it, but for consumers?
Oh, definitely. I mean, I think it just, like, to me, what it signals is that, like, people like we've heard this like on cruise earnings a lot. Like people just really like do not want to cut back on their travel, and they're looking for more like affordable ways to do it, right? So like if I can maybe split my trip up that I want to take now into 4 payments or whatever it is, whatever the sort of plan is, that allows me to still kind of like scratch that itch. I do wonder what it looks like, I guess, in a few months' time as the economy does kind of continue to like sputter out. Like, is this necessarily a good idea? I don't know if I'll have a job in 12 months, right? Like, so, you know.
I feel like we secretly want to be European with, 20 vacation days a year.
Sure.
Paul's like, yes, sign me up.
Take the whole summer
It's
off.
no secret for me. I love it. Yeah.
All right, Red, thanks so much. Appreciate that. Red Brown covers all the markets for us. We appreciate that. For more conversations like this, subscribe to our Stock Movers Reports. Listen in 4 or 5 minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Let's get back to EWR. The cool kids know what that is. That's Newark International Liberty Airport. Nora Melinda's there. She's Bloomberg Markets correspondent for Bloomberg Television. Nora, how are folks kind of dealing with a little bit of a disruption in travel, which looks to potentially get even more disruptive in the days ahead?
Well, I will tell you, Paul, since we last spoke, over the past hour, we've definitely seen an uptick in volume and people coming through security. But if we were actually to look at the time period it takes to get through security here at Newark Liberty Airport here, we are seeing about a 5-minute delay to get through. So nothing too crazy here. And of course, if we were to look at the size and scope more broadly, as we're looking at the cancellations here in the nation, this is a 72nd worst day for cancellations in the United States since January 2024. So in terms of size and scope, this isn't something too terrible, especially as you think about it against some of those days where we did see cancellations for a lot of major weather disruptions here. So it is important to kind of keep this in mind as we are going through this period of the government shutdown.
And what about the folks who work at the airport, those who work in TSA and are showing up every day despite not getting paid, those who work for the airlines? What are they saying in terms of the preparations they've made for the influx of people and the cuts in flights?
So for a lot of the workers here that we've been talking to on the ground, it doesn't seem as though this influx in volume of travelers this morning has been any different per se from what they've seen on a typical Friday morning. But we have heard a lot of anecdotal commentary about a lot of travelers really thinking about the travel disruptions, thinking about the government shutdown. I spoke to one traveler that actually was supposed to be going from EWR to Barbados. Flight got canceled, got rebooked to JFK, which was an hour earlier, and they weren't able to make that flight. And of course, this being attributed to the government shutdown, though we do know that the government shutdown and all the cuts that we're seeing right now is not affecting international flights. But you are generally hearing the consumer, the traveler, thinking a lot about the government shutdown and blaming it for the majority of all sort of travel disruptions that we're seeing right now in this time period.
Nora, do we know how Newark has been doing over the last couple, 3-4 weeks during this shutdown as it relates to air traffic controllers and maybe staffing levels in general in the towers?
Well, air traffic controllers are definitely in focus during this time period. As you all were calling out, air traffic controllers, TSA agents, they haven't been paid since October 1st. If you look at what the FAA has said, they said that about 20 to 40% of air traffic controllers at some of the major airports in the U.S. have been calling out and not coming to work. Of course, we do know that the expectation is that hopefully all of these individuals will get paid at the end of the government shutdown, but you are starting to see a sense of fatigue here as this drags on as the longest U.S. government shutdown that we've seen in history, Paul.
All right, good stuff. Nora, thank you so much for your reporting. Nora Melinda, Bloomberg Markets correspondent, reporting live from Newark Airport. And so far, it looks okay. It looks fairly orderly, Paul. But I suspect that it will get much more intense over the next couple of days as they ramp up the number of flight cuts.
Yeah, and then as we get closer to the Thanksgiving holiday, which is notoriously an extraordinarily busy travel
exactly.
time.
Although I'm sure people are rethinking those plans right now.
I think I'm now going to be able to win my argument with Michael McKee. Next time he goes to D.C., try the Acela train. No, you don't fly to D.C. Nobody does that.
He's a devotee of flying.
I know,
this is true.
I know. He wants the miles.
Well, we'll see. We'll see if that changes his mind. All right, let's talk a little bit about the markets here because I'm looking at the indexes and they have now plumbed new lows. The NASDAQ Composite Index is off by 1.9%. And if you look at the performances so far this week, Paul, the NASDAQ is down 4.6% this week. The S&P 500 losing 2.8%. Let's bring in Terry Spath. She's the founder and CIO of Zuma Wealth to give us her perspective on what's going on here. Terry, your take here is that earnings are in great shape. The economy is in good shape. What does the sell-off today and this week show us about that the fragility of that sentiment?
Yeah, great question. I always enjoy talking markets with you, Scarlett and Paul. Thanks for having me on. It's been a push and pull week for investors, more of a push, really, big push today. But our investment thesis for U.S. stocks continues to focus on earnings, and so far, the results have been very encouraging. The U.S. consumer remains quite resilient. Earnings have exceeded expectations. We've got, S&P earnings growth so far for this third quarter up 8%. That's better than expectations. That's a good number by any measure. And we think that that can continue throughout the year and into 2026. So these pullbacks that we're seeing, they hurt. A week like this week hurts. I don't want to minimize that, but these pullbacks are still fairly shallow. If we look, just kind of zoom out a little bit, yes, we're down, north of 4%. You mentioned for the NASDAQ this week, that's a big drop. Stocks tend to take the elevator down, right? And the stairs up, they go a lot faster down than they go up. But if we look at a 1 month number, we're still in positive territory for the S&P 500, for the NASDAQ. And I think that's because earnings keep going up. The trajectory is still up. So we're still constructive, even though this is an uncomfortable week and we're certainly losing money. And we recognize that other people are losing money. But we still think, this is just a shallow drop that we think should recover before year end.
And Terry, some folks also voice a concern about the concentration in AI, and maybe there's an AI bubble in the broader market space. How do you think about that?
Yeah, it's hard to kind of tease that out because it is such a big part of the market and the benchmarks. Again, we think that earnings are in good shape. When it comes to AI, without getting specific about certain companies, you always want the picks and shovels. You want the ones that are, building the data centers, and the companies that are providing the labor for those data centers is probably the safer way to go, because it is very hard when you see nosebleed levels for certain companies to kind of, hold your nose and own those. So we do want to be a little bit cautious on the valuations for some of the biggest PE numbers, or I don't even know what they're trading on. But we do think, again, that the stock market, so, the earnings overall are okay, not just for AI companies. The economy is in good shape. GDP is strong. And even though we're having a shortage of data right now because of the government shutdown, we think that the economy is in good shape. And really, if we go and, think about the Fed, which used to be the only thing that we talked about, I do think that the Fed has our back. They're coming in December with a meeting. There's a good chance that they cut rates if they think that things are slowing down. So even if I'm wrong about how to look at the stock market, how I'm looking at the economy, I do think that the Fed is ultimately going to have the back of investors. And so we continue to, look to that as an encouraging sign in a week that's been very discouraging.
Yeah, it's a risk-off week, and a classic risk-off week at that. Certainly today I'm looking at, gold moving higher, treasuries moving higher, and that's pushing yields lower. We're also seeing, interestingly, consumer staples, which had been the laggard so far this year, turn positive for the year as perhaps investors look to buy some of the more steady companies out there. What would be a defensive play right now, Terry?
Well, all of those things that you named are clear signs of where the money is running to, the safest bets, right? The things with the highest dividends, the most steady earnings, despite anything. The consumer staples. We always used to say people still have to buy diapers for their babies, regardless. So that's always going to be the safe play and sort of the snore when things are going really well. So overall, where are we parking the money that's not in the risk-on part of the portfolios? We're actually, when we look at fixed income, we used to be really heavy on the treasuries, short treasuries, because they're paying such nice yields and so safe. Where we're parking a lot of that money right now is in high-yield corporate bonds that are delivering really nice yields, and they're pretty safe. It's a similar theme that we have to the stock market, which is, these little bit riskier companies are still delivering solid cash flow. They're still going to pay their debt off. And so we think that you can put your money there versus just sort of running into the traditional, like, let's buy some consumer staples and that should, protect us at this stage. We do think that the high yield corporate bond market is something that makes a lot of sense for where you can get an even better return and still we're comfortable with the risk that's coming in there.
All right, Terry, thank you so much. We appreciate that. Terry Spath, founder and CIO of Zuma Wealth. Zooming in from Malibu, California. Nice digs there. Looking at the market, we've got the sell-off continuing here. The S&P is off 75 points. That's 1.1%. A little bit tougher sledding as well. And then the NASDAQ off 435 points. That's 1.9%. The Tom Keene VIX blowing out. We're now north of 22 on the VIX. Market getting a little tense here.
A little tense, and part of it is because most of the earnings season is over, and now everyone can refocus on the fact that there's no data.
Right. There's no data.
And the data that is coming out from private sources show that the job market is perhaps, starting to wobble a lot more.
Yeah, it's kind of the no hire, no fire type thing, but then we have seen some notable layoffs.
Right.
And so maybe
no hire, some fire.
Yeah, exactly. So we're going to have more reporting on all of that coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
21 on Wall Street. We do check markets all day long here at Bloomberg. We are off session lows, a slight bounce off the bottom. Emphasis on slight. The Dow, the S&P, NASDAQ, all in the red. This Bloomberg Business Flash is brought to you by Oracle. Attention, growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. We are on track for a loss this week of 2.75% on the S&P 500 index. Stocks lower across the board. Stocks are falling amid a slide in big tech and those ongoing concerns about a weakening in key areas of the U.S. economy. S&P right now at 66.54, down 65, drop there of 1%. The Dow down 268, a decline there of just about 0.6%. The NASDAQ Composite Index now down 394 points for NASDAQ, a drop right now of 1.7%. The Bloomberg Mag 7 Index is extending its slide, down now by 2.1%. The 10-year, 4.07%, with the 2-year currently yielding 3.53%. Gold at $4,001 the ounce, up $24 now, up 0.6%. West Texas Intermediate crude up 0.5, 59.74 a barrel, still holding below $60. And Bitcoin up 0.1%, 101,210 now on Bitcoin. Target has a new directive for store employees, and that is if a shopper comes within 10 feet of you, then you got to make sure you smile, make eye contact, and greet or wave. And if somebody comes closer than 4 feet, you got to ask whether they need help or how their day's going. That's according to new guidance confirmed by Bloomberg News. Target shares are up by 0.9%. Employees smiling. Recapping S&P down 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, today's Focus on Munis is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM. Insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. That's how you do that read. Let's talk munis. It's Friday. This is how we roll here. And there's nothing any of our guests can teach me about the municipal bond market. I am the guru there. Martin Braun joins us here, municipal finance reporter, Bloomberg News, joins us here in our Bloomberg Interactive Brokers studio. Hey, Martin, has there been any response from the municipal bond market as it relates to our new mayor elected in New York City? Have the bonds done anything? Are they telling us anything? Angst or maybe no?
They are not telling us anything.
Okay.
The spreads have not widened. The muni market is relatively slow when it comes to reactions, so it will take some time to see if there's one. Usually the market reacts when there's increased issuance on technical factors, so no, hasn't been anything.
That's interesting that we haven't seen any reaction yet, given some of the promises that the new mayoral-elect has made, particularly making buses free. And we know that there's the MTA, which runs the city's transportation system, the transit system, has a $17 billion fare box bonds that's kind of watching how this actually happens. Just walk us through how that might work.
Well, first we have to realize that campaign promises and following through on them are two very different things. I think in terms of the buses, the state could appropriate funding for the buses or dedicate some tax to it, but you have to go through the legislative process, and it's going to. The MTA, the head of the MTA, is opposed to it, so. It's not going to be an easy process for him.
In general, just in the municipal bond market here today, how's performance been so far this year? Because I know it started the year a little rough, but I think it's a little bit better recently.
Yeah, October was the best month in 30 years.
Okay,
like
there you
this.
go.
We've had the year started pretty poorly because there was tons of issuance. It's going to be a record year for issuance. And then we had the tariff tantrums. So munis were lagging treasuries. But In October, issuance was down a little bit, and there was some tailwind from, Fed, and so they really had a great October. And the last couple of months have been really good. I think the index is up 4% this year. It's still, underperforming other fixed income asset classes, but better than expected earlier.
Triple tax free. Boom.
Yeah, well, that gets a lot of people's attention. Yeah. Martin, what does it mean that the federal government is on this big efficiency drive and wants to, spend less money overall, including probably allocating money to states? What does that mean for bond issuance for states, and what does it mean for the appeal of the bonds that they do sell?
Well, it could mean they issue more bonds, because if the federal government is reducing their appropriations, then they would have to make up, funding in some way. So there's already the forecasts are for even greater issuance next year, just because of infrastructure needs, and the cost of building is going up. You can't, pick up your phone and not see a story about, AI data centers being built, and so you think of how many construction companies are they must be building completely all over the country. So costs are going to go up, so issuance probably volume will go up too.
Talk to us about the taxable municipal market. How has that been performing this year? No,
actually, I would. I'm gonna have to pass on that one.
Okay, no worries. We'll talk about the munis here. Anything? So the expectations are another big issuance year next year.
Yeah, I mean, there's just so many needs for infrastructure, and you have less federal funding, as you mentioned. So you can see a forecast for greater issuance coming up, and the question is, will the market be able to absorb it? Since the the tax reform in 2017 with the Trump tax cuts, some significant demand, sources of demand like banks and insurance companies have reduced their allocations to munis because they don't get the tax exemption. Doesn't matter as much to them because their tax rate went down. So the question will be, will retail be able to pick it up? And well, if taxes go up in New York, certainly tax-exempt munis will become more valuable.
Exactly. All right, Martin, thank you so much. Appreciate that. Martin Braun, municipal finance reporter, Bloomberg News. Join us live here in our Bloomberg Interactive Broker Studio. Are you a gamer by any chance?
God, no, but my children are, and that irritates me to no end.
Does it? So are they like, do they
on
care
their phone? On their phone, usually.
Okay, so this Grand Theft Auto thing, for people, I guess it's a piece of news, right?
Yeah, no, it's a big deal because this is something they've been working on for a long time, and this is the sixth part of the franchise, the sixth iteration of it, and it's supposed to take place in Miami, but a fictional version of Miami, and it's supposed to be like the hot game when it eventually comes out. That's the issue. We don't know whether they're going to meet their deadline, and they've delayed it twice.
All right, let's talk to somebody who knows this stuff for a living, I guess. That's the best we can do here. Nathan Naidu, technology research analyst for Bloomberg Intelligence. He joins us here. Grand Theft Auto postponed again. Take-Two, the stock is down almost 9% on this news here. Nathan, what do you make of it?
Yeah, so that's a good point there on the GTA or Grand Theft Auto 6 iteration being a big factor actually in today's sell-off. And I think, GTA 6, let's call it in short, has been, the prospects of it rather has been priced into Take-Two shares. And last I checked, Take-Two is trading at about 60% premium to the only other big US publishers, Electronic Arts. And that's 60% premium and even higher compared to an average of about 10 peers. And so, valuations and expectations were high up until that point. So obviously, valuations were going to be a bit sensitive to any sort of downside risk. And as we have seen today is the delay of GTA 6. But I don't think this second delay officially is necessarily going to do any more impact than the first delay, because the first delay actually skipped the holiday season. This time round, it pulls the launch timing closer to the holiday season, and actually a season that usually see a lot more activity on the player side.
Okay, yeah, to your point, the original release date was back in fall 2025, then it was delayed until May 2026, and now it's been delayed by another 6 months to November 2026. Nathan, I'm going to ask the dumb question. If they delayed it twice, they might delay it again. Why are they delaying this game? What's proving to be difficult or problematic about this?
Yeah, so according to the words by the company themselves, they want to give the developers rather a bit more time to polish the game. Game like the GTA, GTA, to take a step back, Grand Theft Auto is easily the top 5 selling games franchise of all time globally. So this game has quite a bit of a cult following. It has sold more than 450 million units, right? And so I think it doesn't make a big difference whether it's delayed, in this round of delay, because this game, regardless of when it is launched, is gonna bring back those core loyal fan base, and we're talking about 15 to 20 millions of people playing GTA 5, the current version, every month. So that proves my point, and also launching in November, which is the high sales season for any sort of video games or any sort of products rather, is actually a better timing, and it might work in GTA 6 favor in the end, I think.
All right, Nathan, in your world of online gaming, can you size out how big this business is? Because I think a lot of people don't have a good idea of just how big the gaming business is.
I feel like it's bigger than Hollywood,
yes,
right?
So
bigger than the movie business.
Exactly. How big is it, and kind of what's the growth parameters for this industry?
Yeah, so the overall video game market is inching towards like 180 billion US dollars in sales last year, and that is actually bigger than films and other easily other entertainment forms. And GTA, if we assume that. If we assume that the GTA 6 sells about 35 to 45 million units, that's about 2 to 3 billion US dollars in upfront revenue to the company, and that's just one game.
Men aged 18 to 49.
Oh my God, it's just
the advertiser's dream.
Is I guess, yeah.
Yeah.
I mean, does Pong count?
No, Pong doesn't count. Sorry, right. No one's monetizing off Pong anymore. Nathan, do you know what Pong is?
Yeah, you mean like age cohort?
No. Okay, no. We're showing our age now.
All right, so Nathan, for Take-Two, what's the? Is that just really a play on Grand Theft Auto? Is it that dependent on that game?
Yeah, so Take-Two actually has a few other big franchises under its belt, like Red Dead Redemption, for example, and Take-Two is also big in sports game, whether that's football. And so GTA is certainly the biggest game, but it's not the only pieces of the puzzle in terms of how it is driving Take-Two top line as well as bottom line. But it is certainly going to be the biggest game launch next year, and that's coming from Take-Two. And given the game is actually in-house, meaning it generates a lot more to bottom line than games that are based on third-party intellectual property where a royalty payment is involved. So, we can expect a significant boost to Take-Two's profits as well next year. And actually, the company is expecting to, generate positive free cash flow again, because they're currently running on negative.
Okay, I have a question here, because usually when we talk about Take-Two, I look at how the other video game publishers are performing, and right away I thought, oh, check EA. EA is barely moving, but that's also because EA is going to be bought out by private equity. Is Take-Two a candidate for a buyout?
So Take-Two is certainly a good candidate, and it is actually it would be the only surviving U.S. game publisher of scale if the EA deal actually completes and goes through. And EA is expecting that deal to close in the April to June period next year. And EA is a good candidate because it has a robust sport franchises, and obviously Grand Theft Auto is a game that has survived more than 2 decades, and it continued to attract millions of players, actually, about 15.5 million of players every month. So, with attention increasingly being scarce, games that continue to perform well actually are games that were published 6 years or earlier. So there's actually not a lot of room for brand new games to grow in this market. In fact, Newzoo actually mentioned that for brand new titles, only 8% of the gameplay hours are up for grab. So, that just says like, well-established franchises with a cult following certainly has its value. And we actually saw Tencent's investment in Ubisoft, a French game company, and Tencent obviously needs no introduction, is a tech giant in China and certainly a giant in gaming. Yeah, they invested about, a few billion euros to take a quarter of a subsidiary of Ubisoft that actually owns, a quarter of Ubisoft 3 most valuable franchises. If you like ninjas, assassins, we're talking about Assassin's Creed here. We're talking about Tom Clancy and a few shooter games. So there's definitely a general direction of companies with resources eyeing companies with great IP if those two do not currently exist together. And we certainly see that EA deals coming through kind of plays into the Saudi ambitions for esports. And Saudi Prince, which is, the chair of the Sovereign Wealth Fund there, is actually an avid gamer himself, and which I suspect is one of the factors behind why EA is a good fit for the deal, because EA has the most popular soccer game out there. Well, I say soccer because I'm in Europe right now. I need to differentiate from football.
Scarlett, the one good thing about the games is that they're interactive. And so I always tell my 26-year-old son to check in on his little brother.
Oh, yeah,
who's
that's
in
good.
college.
Yeah.
They're very close growing up. And they're never going to call each other. They're never going to text each other.
But they might play on a game together.
But they play games a couple times a week. And he says, oh, yeah, I talk to him a couple times a week because we game.
Okay,
so
that's
it's like,
good.
all right, that's
good enough.
Yeah, it's checking in.
All right, Nathan, really appreciate your joining us. Nathan Naidu is Bloomberg Intelligence's technology research analyst on the delay of Grand Theft Auto 6 once again to November 2026. But he says it's okay. That just means it'll be ready for the holiday shopping season. All right, let's get a market check right now and check in with our Charlie Pellet for Bloomberg Business Flash.
Much, and here's what's going on. We're very close to session lows. Dow, S&P, NASDAQ, all in the red. S&P right now down 73. That is a drop of just about 1.1%. So the S&P at 6647. We've got the Dow down 308 points, 46,604 on the Dow, down by roughly 0.7%. And NASDAQ down 428 points for the NASDAQ Composite Index, a drop there of 1.9%. Your 10-year, 4.06%, with the 2-year, 3.53%. Gold, spot gold up $48 the ounce, 4,025, spiking higher now by 1.2%. West Texas Intermediate crude up 0.3%, 59.64 a barrel, and Bitcoin a little change, 64 a barrel, and Bitcoin a little changed on the day, 101,086 on Bitcoin. Bottom line here, stocks are selling off amid a slide in big tech and concerns about weakening in key areas of the economy. Terry Spath is founder and chief investment officer at Zuma Wealth. Moments ago here on Bloomberg Intelligence, she said, you got to keep this selling in perspective.
Stocks tend to take the elevator down, right, and the stairs up. They go a lot faster down than they go up. But if we look at a 1-month number, we're still in positive territory for the S&P 500, for the NASDAQ. And I think that's because earnings keep going up. The trajectory is still up.
Terry Spath of Zuma Wealth interviewed right here on Bloomberg Intelligence. Now, what about travel stocks as an economic indicator? Mixed bag right now. Airbnb down 2.1%, but Expedia surging 17.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, good stuff. Thank you so much, Charlie Pellet. This is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu. And as we look ahead to the weekend, and a lot of people are going to be watching football games, basketball games, there's an interesting story here. Ira Boudway, one of our business and sports reporters, pointing out that the Minnesota Timberwolves, the NBA team, have begun selling seat upgrades during games as a way to keep the team's ticket marketplace active until the final whistle. It used to be that you would just sneak down to the first couple of rows when the ushers weren't looking, but now they want to sell you that upgrade.
That's pretty cool. I haven't heard about that before.
Yeah, this is a new thing. And, of course, it's for the first 20 rows. But again, I go back to that idea of you would just move your seat.
I don't go to that many live games for a variety of reasons. But when I do go, I buy good tickets. I go to the U.S. Open once a year. I buy really good tickets. And they're expensive, but I figure it's one day a year. I go to maybe 1 or 2 Knicks games. I'm not going nosebleed. I'm going decent seats because I don't go to that many games.
You're not Gen Z.
I'm definitely not Gen Z.
Gen Z would go the other way. They'll buy seats to get into the arena, and then they'll figure out the rest.
I got you. Okay.
Yeah. But, you know,
So
these teams
cool.
are on to them,
Again,
right?
trying to get more dynamic. And I tell you, I learned a lot about the ticketing strategy by covering Live Nation, because you really, you know, you want to sell as many premium tickets. The front of the house, they say, as opposed to the rear of the house. And you want to sell them, but you want to sell them at a price where they will clear, where you'll sell out the place, you know.
Absolutely.
And you obviously you want to try to keep the bots out of it as well.
Well, that's the other thing. I mean, people would buy tickets and you can transfer them to the people you're going with, your friends, but it's become very difficult to do that. Sometimes they don't let you do it until maybe an hour before the event starts.
All right, very good. Coming up right now in just a moment, we're going to check in with DraftKings CEO Jason Roberts. He's speaking with B-Tech anchors Caroline Hyde and Ed Ludlow. They reported some numbers today a little bit weaker than expected, but they also did announce a deal with the Walt Disney Company.
I'm so glad you mentioned that because they're the new partner for ESPN in the sports betting space.
Absolutely. DraftKings CEO Jason Robbins. Let's listen in.
For the full year. The company also out, though, with news that Disney signed a new multi-year deal to make the sports betting company the official betting site and odds provider for the ESPN Sports Network. Let's bring in DraftKings CEO Jason Robbins. It's an interesting partnership, and I think that's where we should start. How much does this move the needle for you? You know, we've talked in the past on this program, Jason, with you about the integration of the live sports event and the broadcast with the betting activity. Your big picture goal with this deal?
Well, first of all, ESPN is a iconic brand. It's by far the biggest name in sports in the United States, and they have an incredible portfolio, an unmatched portfolio of sports content, influencers, talent. So it's really, for us, just the greatest partner you can have when you're in the space we're in. And Jimmy Pitaro, who runs it, really understands and I think values the sports betting space and understands that the customer overlap is high, and it's important that they engage their customers by being partnered with somebody like DraftKings. So really excited to embark on it. We've been partners with them many times in the past, so it's familiar territory. We know all the people there, and we're looking forward to working together. And you add that to our deals with NBC Universal and Amazon and others, we have an unmatched, I think, presence across the sports landscape over the next several years.
Prediction markets. Wednesday night, we were with Robin Hood at their in-person earnings call. That was wacky. Don't know if you consider that. But the month of October, massive volumes for them. You're being super thoughtful about predictions. I understand that, and you have a clear strategy. My question has always been how much a growth in a nascent predictions market cannibalizes other offerings that you have.
I think very little. If you look at the UK, for example, exchange-based betting is about 5% of the total pie. So, that's probably about right. And I think a lot of it is largely incremental because there are market makers and others that are not present on traditional sports books that generate a lot of the volume. So I think it's very much an incremental opportunity for us, and that's why we're so excited about it. We acquired Railbird, and we're also looking to, enter the market sometime in the next couple months.
What's interesting, Jason, is investors, analysts out there called out on the actual earnings script, talking about how marketing expenses, higher sales expenses, did eat into the results, and they call them also some ugly outcomes when it comes to the sports games. For that, you can't control. But what about the expenses you're going to have on the predictions markets?
Well, we do plan to make some investment there. We mentioned this on the call that we're going to be more, I think, conservative in terms of the paybacks we're looking for, just given how nascent a space it is and the fact that, it's unclear kind of how this will all play out. But we are going to make some investment there. First, of course, in getting a product developed and making sure that that's, the best in class. You can't win. And we've always said this product is the most important thing. You can't win if you don't have a great product. And then, assuming that the numbers check out, we'll spend marketing accordingly. We're going to be very data-driven like we always are and everything. We'll test into it. But we did want to make sure as we guided that we were thoughtful about giving the team some space to be able to accelerate spend if the numbers look good.
And therefore, the guide did pull back rather than uplift going forward, Jason. But you say it's conservative. You talk about an incremental opportunity from predictions. And I'm really interested as to how you make sure this doesn't cannibalize what you already have out there. You've talked a lot about how this might actually make more states accessible to sports betting, because at the moment you can get 50 states with this predictions market, but you've got 25 at the moment for your offering, and you're about to have, and you also have DC, and then you're adding Missouri.
Yeah, I mean, I think you're exactly right that this will hopefully lead more states to decide that they might as well legalize sports betting. I think predictions are a powerful talking point for that because, it's same as the illegal market, same as anything, but in this case it's regulated. But the bottom line is it's activity that's already happening in the state at some level that they are not directly benefiting from and regulating. So I do think that'll motivate some states. But for us, really, the cannibalization thing isn't a huge concern. We haven't seen that happen, not just here, but as I mentioned, overseas, where there's long established, it's not a brand new thing like it is here. There's been predictions and sports exchanges around for decades in the UK, for example. So we feel like there's pretty good data out there to show that head-to-head, the traditional sports betting product is a much far superior product for customers.
Jason, you said that this is the most bullish you've ever felt about the company's future. What are the underlying trends, data points, behaviors of your customers that give you that conviction? And why do you have it now that you didn't have previously?
Well, I think if you take a step back, it really starts with the progress that we've made over the last few years and the position we put ourselves in. Remember, 2 years ago, we weren't even profitable. 3 years ago, we had nearly $1 billion adjusted EBITDA loss. At that point, we were getting killed in the market because people thought we were going to run out of money and go out of business. We really buckled down. We grew revenues. We managed costs. And, just a few years later, we've had a over $1.5 billion swing. So I think that shows that we are in a great position. But also, more importantly, now we're in a position to play offense. We are profitable. We have scale. We have the best product in the market. We have the absolute best partnerships and presence across the media landscape. We're about to launch sports predictions, which I believe represents a huge incremental opportunity for us. So a lot of really exciting things going on. And the only real negative on the quarter was the sport outcomes. I think all the hysteria over predictions is kind of nonsense. But the really only negative sport outcomes, but that's a temporary thing. That's not something that has anything to do with the fundamentals of the business.
DraftKings CEO, Jason Robbins.
All right, there we go. That was DraftKings CEO Jason Robbins speaking with BTech anchors Caroline Hyde and Ed Ludlow. Again, if you're into that sports betting business, hooking up with ESPN's probably a pretty good strategy.
Yeah, of course, ESPN had a deal with Penn before, and they kind of dissolved that before it was even due to expire because it wasn't getting them the traction that they wanted.
No, Penn doesn't have the presence that DraftKings does. All right, a red headline crossing the terminal that jumped out at me, and I'm sure it jumped out at you. Cornell reaches deal with U.S. to restore research funds. That's according to the New York Times. I think that's a good thing. Well, I take it back. It's probably the best outcome for a lot of these universities is to just try to settle your differences with whatever they are with the administration and just move on.
According to the New York Times, Cornell expected to pay a $30 million fine to the government and invest $30 million on programs designed to enhance efficiency and lower costs in agriculture and farming, which makes sense given that Cornell is a land-grant institution. It has a big ag school and has a lot of agricultural research programs.
Yep, and my time on the board of Duke, I learned firsthand just how important those funds are from the government, particularly from the National Institute of Health, because Duke has this huge global medical center and gets a lot of funds from the government. So I think for a lot of these schools, I think they're finding it, probably the best strategy is just to try to cut a deal, if you will, with this administration and move on. S&P 500 off 75 points. That's 1.1%. The NASDAQ up 440 points, almost 2% down on the NASDAQ. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Head over to youtube.com and search Bloomberg Podcast. That's where you'll find us. Wendy's, I guess the way Bloomberg News is reporting it, they reported better than feared 3Q results. So there's some concern out there about the consumer, particularly on the lower end of the consumer, and how that's impacting various industries, including the food industry, the restaurant business. And so we want to get the latest on what's happening out there in the world of food and restaurants. We go to Mike Halen. He covers the restaurants for Bloomberg Intelligence. Mike, talk to us about Wendy's. What did they say on their call? What did you learn with their results? And by the way, I'm a big fan of the Baconator.
Yeah, Baconator's great, chicken's great. Historically, Wendy's has been known for great food, but their food has suffered especially in the last year or two, mainly because the previous management team, who I said in a previous interview, lit this company on fire and then headed for the exits like George Costanza in Seinfeld, knocking over women and children on the way. And what they did was just flood the system with LTOs. And it didn't give people
flood the system with what?
Limited time offers,
okay.
LTOs. And every 2 weeks there was a new offer, a new value meal, a new food item. And it didn't give them ability to market it correctly. And people would come in and thinking they were going to be able to get one item and they'd have to switch to something else, right? And it led to complexity in the store, poor operations, which led to poor food quality, poor customer service down the line. So this company had a tough quarter. It's going to have a tough fourth quarter as well, but a lot of it is self-inflicted. They did speak about, their expectation for low-income consumers to continue to be pressured in these next 2 quarters.
So I know for McDonald's, the vast, vast majority of their stores are franchised. Is that the case for Wendy's as well?
Yeah, that's the case for Wendy's. One of the things that they mentioned on the call is that they're going to be closing, roughly 5% of their store base in the coming quarters because franchisees have not been performing very well, right? Sales have cratered, and when there's a lot of operating leverage in this model when you're a franchisee, so when your sales decline, your margins decline even faster. So they're going to be closing a bunch of stores, but we think that could actually accelerate the turnaround, right? So as they close underperforming stores, this should boost sales at the surrounding locations. And management has a pretty good plan. There's not a whole lot they still don't have a permanent CEO, and there's not a lot of restaurant experience at the top. The interim CEO was the CFO who came from outside of the restaurant industry. But we think he's pushing the right buttons. I think hiring Greg Creed, who was the previous CEO of Taco Bell and then Yum Brands, arguably the QSR GOAT, to do some consulting work, I think is a really good move. I think that's really going to help their marketing. And it's a great brand that has a lot of things it can market from the past, like Where's the Beef, And they're doing a lot less LTOs, and they're going to work on fixing the operations. They're spending money on training, doing things that we think can really make a difference in 2026.
The hamburger business has changed a lot since I was a kid, when it was basically, McDonald's, Burger King, then Wendy's came along. That was kind of it. Now you've got all these, I don't know what you guys call them, specialty burgers like Smash Burger, Five Guys, all that kind of stuff, Shake Shack. How's the burger business these days?
Man, people love burgers, but you're right. It is a saturated market with all of those burger better chains. I think it's good for the overall industry that Wendy's is closing some stores. Jack in the Box is going to be closing some stores, right? Like, to me, this is a part of the restaurant business that's oversupplied, and it's been growing faster than population growth. And so to see some chains start to close some stores, we think that's healthy, and we think it's going to improve results in the future.
How's the burger business been impacted by the cost of beef? I've been reading that, beef costs have been elevated for a while now. So how are they dealing with that?
Beef costs are a killer, especially if you're not able to drive traffic into your restaurants. So for Wendy's franchisees, it's been absolutely crushing. for them, right? They're more than 95% franchise, so the corporation is going to take a hit on the 5% of stores or so that it owns. But most of the inflation and the margin compression is going to come on the franchisee side, and they're the ones that are struggling, and they're the ones that are going to be closing stores.
What's where's the best value in your universe of restaurants, Mike?
You talking about
the stocks
valuation?
Yeah.
Well, this one is interesting. Right now, it's trading at 10 times 2026 EPS, right? Yep. And historically, these names trade at 15 to 30 times because being a franchise chain, you know, it's very easy to predict your earnings and your cash flow, right? And they're insulated against inflation. So historically, it's 15 to 20. So we think at some point when, you know, ahead of the sales inflection that we think is likely in the first quarter, that investors could look more closely at this name.
All right. Mike, good stuff. Always appreciate getting a couple minutes of your time. Michael Halen, he's a senior restaurant and food service analyst at Bloomberg Intelligence, just breaking down some of these numbers out of Wendy's. We heard it from McDonald's earlier in the week as well, where they had some decent performance there. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121, access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. Looking at the markets here, S&P plumbing the lows of the day, down 82 points, 1.2%. The NASDAQ down 466 points. That's 2%. More coming up on Bloomberg Radio. Good morning.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kafin. Airlines have cut hundreds of flights as ordered by the FAA to weather airport staff shortages caused by the government shutdown. Reagan National is one of 40 major airports affected.
Most of the passengers here at DCA have heard from their airlines about possible delays and cancellations.
Well, they sent me out a few emails indicating that there's a possibility.
This passenger got here early for his flight to Orlando. He does a lot of traveling for work.
So that could also affect our business.
This traveler says he is concerned.
I've got a wedding to get to, and I hope I get home in time.
Neil Augenstein for CBS News, Reagan National Airport.
To the north, CBS's Meg Oliver.
If you're flying out of Newark today, I've got to be honest, it's not a bad place to be. Less than 50 flights have been canceled. The other two major airports, LaGuardia and JFK, they're faring just as good. Most of the airlines are telling us that these impacts of about 4% of the cuts that started today are going to be felt at regional airports.
The Senate could vote today on a revamped Republican spending proposal designed to entice Democratic support. CBS's Caitlin Huey-Burns on Capitol Hill covering the shutdown.
Talking to Democrats, they are very emboldened from the election results on Tuesday and from the president's own comments the following morning, saying that Republicans were the ones getting the blame, and that, in his words, was evident from the election results. So there are a lot of Democrats up here who feel like they shouldn't give in at this point, that they've got some political capital and they want to use it.
The Trump administration will appeal a judge's order that called for SNAP food benefits to be paid out this month in their entirety. The number of people in ICE custody has hit a record high, as we hear from CBS's Michael Wallace.
Internal Department of Homeland Security data obtained by CBS News says the number of detainees climbed to 66,000 this week. That's a 70% increase since President Trump took office in January. Half of the detainees do not have criminal charges or convictions.
Several victims of the massive Eaton wildfire in Southern California earlier this year are calling on the state for help after testing showed the toxins remain in their homes despite remediation. Bill Malone lives there.
This house is contaminated. We're finding black soot and stuff like that in our drawers and our cabinets. And if it's in our drawers and our cabinets, we can't trust anything.
Denmark's government's announced a plan to ban social media access for anyone under 15. Grammy nominations today.
If this world were mine.
Kendrick Lamar leads the way. He has 9. Checking Wall Street. Right now the Dow is down 370. This is CBS News.
It seems they've got a problem in Switzerland. Too much milk.
Brown and white dairy cows that roam the Alps with their giant copper bells have produced a bumper harvest of milk thanks to spring rains that spawned an abundance of grass. But 39% tariffs are expected to lead to a drop in U.S. demand for fine Swiss cheeses like Emmentaler and Gruyere, as well as for prized chocolate like Toblerone. Farmers tell the New York Times they've begun sending herds to slaughterhouses earlier than usual. They're also floating the idea of making their own mozzarella instead of importing it from Italy. Deborah Rodriguez, CBS News.
Also from Switzerland, the government's looking for a shout-out from the UN Cultural Agency to include yodeling on its list of intangible cultural heritage. It will be considered next month. In recent times, yodeling has become a form of singing. I'm Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
800 flights so far today. Welcome to the Friday edition as the FAA cancels flights around the country on this day 38 of the government shutdown, bringing a whole new squeeze to Americans trying to live their lives going into the weekend, and it's going to get worse. We're going to get an update from the airport by Bloomberg's Nora Melendez. She's live in Newark with the latest for us, and we'll talk shutdown politics with Megan Scully from our Capital Influence team. There is some talk about a working weekend. We'll see if anything comes of it. The governor's race in New York just got real as Elise Stefanik throws her hat in the ring. We'll talk it out with our political panel. Bloomberg Politics contributors Rick Davis and Gidi Shanzano are with us for the hour. And we start, as always, on Wall Street. There's Charlie Pellet at World Headquarters in New York. He's got the latest on the Friday trade. Hey, Charlie.
Well, hello there, Joe Matthew. Happy Friday, and not such a happy day for the bulls today. The latest from Wall Street. Right now, we are just about at the lows of the day on the S&P. We stand at 66.38, looking at a drop right now of 82 points, down 1.2%, with the Dow Industrials down 380. That is a decline of 0.8%. NASDAQ down 2%. Now NASDAQ is dropping 466 points. The Russell 2000 index of small cap shares down 1.5%, and our Mag 7 index is down 2.5%. The 10-year at 4.06%, with a 2-year 3.53%. Gold now up $24 the ounce at $4,001, up by just about 0.6%. West Texas Intermediate crude 59.78 a barrel, up 0.6. Bitcoin down 0.1%, $100,970 on a Bitcoin. Bottom line here, stocks hit by a tech rout as worries about weakening in key areas of the economy lift bonds again. The 10-year 4.06%. BlackRock's Rick Reeder, who's among those being considered to succeed Fed Chair Jay Powell, says the labor market is softening and interest rates should be lowered to 3%. Now, he made the remark this morning in an interview on Bloomberg Open Interest.
I think we have a softening of the labor market that is quite significant. You see that playing out. You certainly see that when I look at all the corporate earnings in terms of that. We have a softening labor market, and if we had the number today, I think it would have been reflective thereof.
Indeed, a reference to what should have been Jobs Friday, but we didn't get it because of the government shutdown. Rick Reeder, by the way, Chief Investment Officer for Global Fixed Income at BlackRock. Tesla CEO Elon Musk says he expects China to fully approve the carmaker's advanced driver assistance capabilities that are similar to those marketed as full self-driving in the U.S. Now, his remarks came as Tesla shareholders approved the largest payout ever awarded to a corporate leader, $1 trillion. Right now, Tesla shares, they're lower by about 5%. Recapping, S&P down 87, down 1.3%. The 10-year this Friday, 4.06%. And Balance of Power continues right now. We say it every week at this time. What a week it has been. Back we go to Washington once again. Your host, here he is, Joe Matthew.
Yeah, we're pretty predictable, Charlie. It's great to see you. Happy Friday. Yeah, you made it, Charlie Pellet. He'll be back in about 15 minutes with more on the Friday trade. You made it to the threshold of the weekend. Thanks for being with us on the big Friday edition of Balance of Power. To think I was in the room with Charlie Pellet 2 days ago, I have lost all concept of time, but that's where we are in the world now, right? That's what they call flooding the zone. It's like living in a casino. No windows. You don't know what time of day it is. They're pumping oxygen in here. That's like the room I'm in. So thanks for being with us on the Friday edition of Balance of Power. Bloomberg Radio, satellite radio, channel 121 on YouTube. We're always streaming live Search Bloomberg Business News Live. I bet it already just goes there, right, when you start writing Bloomberg into YouTube. Bloomberg Originals carrying this program as well. You can find us everywhere. An hour from now, we'll add our global television audience to the conversation on day 38. The Senate just getting back together right now. Can you believe we've been closed for almost 40 days, the longest government shutdown of all time? The House has been out of session, I think, 49 days. What would happen, James, if we took 49 days off? Would someone else be hosting this thing when I got back? America's producer is at work, though. I will tell you what, straight through this shutdown, James Mahoney is in the seat. And we're going to have maybe something that comes out of the voting today based on what we're hearing. A possible new end date that would be in January, just like Sarah Chamberlain told us on the late edition of Balance of Power last evening. So you get the whiteout, you change November 21 to something in January, and you add a couple of appropriations bills. Is that enough with a promise to vote on an extension of Obamacare subsidies? We are about to find out, because in the meantime, it is not cool at the airport. 800 flights delayed today, and they told us it was coming, and this is the beginning of the squeeze. They're going to keep turning the dial on this. We start with a 4% reduction at 40 airports until we get to 10% in the middle of next week. Now, I would say that Nora Melinda drew the short straw today, but she's a real journalist, and she wants to be where the story is, and that happens to be at Newark International Airport. And with us right now, you've been seeing her all day on Bloomberg TV and radio. And here is Nora. Look at this. What are you hearing from people? Are they sleeping on the floor today, Nora? What's going on?
Well, Joe, Newark Liberty Airport is not the worst place to be right now. I mean, actually, if you're looking at the disruptions that we're seeing across the nation, really, we're seeing about 3% of U.S. flights canceled here. So really putting some size and scope there. About the 72nd worst day for U.S. flights canceled since January 2024. So this is not the worst day that we're seeing. Of course, there are a lot of concerns about the government shutdown and how this is really weighing on employment, weighing on TSA workers, of course, air traffic controllers, really in focus during this moment here. But it really isn't that catastrophic as a lot of expectations were coming into it.
All right, well, so this is good. This is why we actually go to the site to see what's happening. And we don't want to pretend that Newark speaks for every airport in the country. Some will be more affected than others. The problem, Nora, as I was just mentioning, is we get a little bit worse each day as we go into this, right? They're going to continue to cut capacity as the government remains closed.
Absolutely. And as we're thinking about the bottom line for a lot of these airline companies, that's something that still remains in focus. Of course, preliminary data that we're seeing right now doesn't necessarily illustrate anything concrete. But of course, to your point, if this continues, we're on day 38 right now, the longest U.S. government shutdown in history. If it prolongs here, that's when you're starting to hear people feel a bit more anxiety, a bit more angst here, especially given the fact that a lot of these government workers have not been paid since October 1st. Anecdotally here, hearing some of the TSA workers still talking about this. This is not the first government shutdown many of them have experienced, so a lot of them are still coming into work, still serving the U.S. consumer, the customers here. But of course, they want to see a paycheck, and they want to see an end. They want to see a resolution sometime soon.
Interesting looking at airline stocks here, Nora. American is actually higher. It's up almost 1%. United is down almost 1%. Delta's down over 1%. You and I talk about the markets a lot. Has this all been factored into these airline stocks, or could they be in more trouble?
I mean, so TD Cowen, the analysts over there, are saying that they actually don't expect too much of a hit here, especially as we're thinking about the actual metrics and the impact on these companies here. They're actually saying that this could be an opportunity to buy during this time period. And you actually called that American Airlines. That's actually the airline that we're seeing here in the U.S. with the most canceled flights right now, followed by Delta and then United Airlines, which, of course, we know one of the major hubs to be here for United at Newark Liberty International Airport.
All right, Nora, it's great to have you there. We'll check back in with Nora Melinda a little bit later on. I'll meet you at the Cinnabon, maybe around 1 o'clock. We'll do that again. I'm Joe Matthew in Washington. Yeah, it's day 38. That's going to get worse. This is what we're hearing from the FAA. 4% today, add 1% until by Wednesday, I believe. Yes, Wednesday, we're at 10%. We'll see what that feels like. You know, they targeted Teterboro Airport. That's where all the Learjets, all the private jets come out of. That's how you end this, isn't it? A couple more of those. How's Jim Justice going to get to work, by the way? Megan Scully is here to answer all these questions. She runs our Capital Influence team. And it's great to see you on day 38 now. Yes. I don't know if it feels any different than day 37. But it's interesting. We keep hearing that there might be a vote today. It might include a couple of appropriations bills. Then you talk to somebody else and they say, well, I don't know, it's a bunch of, we might even have a quorum because senators are leaving town. And does the leadership even know what's going on?
They do not.
All right.
There are tons of meetings going on in the Capitol today on the Senate side. Of course, the House remains out, as they have been since September 19th. But there are meetings happening. We were expecting a vote. I believe it would be the 15th on the House passed continuing resolution, but that even may not happen. And then they were talking about the Senate was talking about being in through the weekend to both work on that bill and also continue negotiations. Now, Senator Rounds, a Republican, just threw some cold water on that, saying, nope, people might go home, they have plans, which to me indicates we're nowhere near an end to this.
Got it. Right. That was the thought yesterday, is that the gears were turning.
Yeah.
I mentioned Sarah Chamberlain earlier from the Main Street, Republican Main Street partnership. She said, we're going to go into January and we're closer than you think. That was on the program last evening. Does that give us a sense that talks have broken down, or if it's disparate groups that might not be involving leadership?
I think it's the latter, disparate groups that may not be involving leadership. All of these negotiations have been happening at a much lower level. You know, moderates in the Senate on both parties talking. And what I believe we really need, and a lot of folks are talking about what really needs to happen to end this shutdown, is Trump weighing in. He has really kept congressional leaders, particularly congressional Democrats, at a distance. And what may end up ending this is a phone call between Chuck Schumer and Donald Trump, which has not happened.
That would be quite a call, wouldn't it? He's been busy again on Truth Social, a very efficient post a couple of hours ago. Just say no, in parentheses, nuclear option. You get it? Terminate the filibuster. That's the whole post. A little bit later on, that was around 8 in the morning, a little after 11, if Republicans kill the filibuster, they sail to victory for many years to come. If they don't, disaster waiting to happen, exclamation point. This is the only thing he's really weighed in on, is ending the filibuster, and that's not going to happen, is it?
I mean, I hate to say things aren't going to happen because I have been proven wrong so many times, but there is resistance among Senate Republican leaders and Senate Republicans writ large. The concern, of course, being that if they undo the filibuster for legislation, which the filibuster, sets that 60-vote threshold for most legislation, then the next time Democrats are in power, we could just have a wholesale rewrite of everything. And I have to say, the filibuster really protects the country from this seesaw effect. Because you need a super majority to pass legislation, to overturn legislation.
Last check in place.
Absolutely. So, and Democrats, there was a push during the Biden administration to undo the filibuster to protect abortion rights. And there was a pushback against doing that for the very same reasons.
That's why I find it interesting that some lawmakers, like Senator Ron Johnson was on with us last evening, he says, kill the filibuster because the second Democrats get in, they're going to do the same. Donald Trump has said that as well. They didn't when they owned Capitol Hill and the White House in 2020. Why would they do it now? Do we believe that's the case?
So I think once the legislative filibuster is nuked, to use the president's language, I think it's gone forever. We certainly saw that on nominees. There used to be a filibuster in place for nominees. That is gone. So it is once it's done, it's done.
Nuclear option. Got it. I don't know. He's going to keep calling for this, and we'll see if he moves the needle. Megan Scully may or may not be working this weekend. It sounds like that's where we are in Washington. At least we have jobs and we're getting paid. Bloomberg Capital Influence team leader. Find her on the terminal and online. I'm Joe Matthew. This is Bloomberg.
It's 12:20 on Wall Street. We do check markets all day long here at Bloomberg. We are just about at the lows of the session right now on the S&P 500 index, down 63, on track for a losing week. The S&P currently lower by 0.9% as we run the numbers right now on the Bloomberg, looking at a loss this week of roughly 2.7%. The Dow now lower by 274 points, down 0.6%. We've got NASDAQ lower today by 1.6%. The NASDAQ 100 index also down 1.6%. The Russell 2000 index of small cap shares down 1.2%. Our Mag 7 index down 2.1%. And a 10-year currently yielding 4.07%. Gold at $39.96 was trading this morning above 4,000. Right now, the precious metal up by 0.5%. West Texas Intermediate crude up 0.4%, below 60, 59.65 a barrel. And Bitcoin up 0.7%, 101,800 on Bitcoin. Sweetgreen shares are plunging. Shares of Sweetgreen down now by 12.4% after cutting its full-year outlook after third-quarter sales unexpectedly worsened at the salad chain. Also in the food sector, Wendy's trading higher after earnings. Wendy's shares are up by about 0.8%. Again, recapping here, stocks lower, S&P down 0.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash. Back we go to Washington. Balance of Power continues. Once again, your host, Joe Matthew.
All right, Charlie, many thanks. It was great to see Charlie Pellet in New York this week as we spent some time at World Headquarters for election coverage. There was concern we would both spontaneously combust by being in the same studio together, but in the fishbowl, that never happens. Thank you, Charlie. He'll be back in about 20 minutes with the latest on the Friday trade. You made it to the end of the week. We're almost there. We're grinding through a Friday that will include a state visit to the White House, and it looks like, however late, it is about to kick off. Did you hear Viktor Orban is in town today? And if you're with us on YouTube, there's a shot of the West Wing entrance. The photographers are running around giving us a sense that this might happen soon. And based on what we're hearing, they may not let the press inside. Yeah, it looks like he's leaving Blair House now. So he's staying right across the street inside the White House complex. You'll see the limousine roll up there in a moment, or the SUV, whatever he's in. No one more excited for this than Carrie Lake taking to Twitter. The globalists, she writes, are more than welcome to hate our ally, Viktor Orban. What they're not entitled to is the use of your money to destabilize the Hungarian regime via taxpayer-funded programming on what we used to call Radio Free Europe. We're putting a stop to that, she says, and the only reason I know that Carrie Lake was posting this on X is because she got a retweet from Viktor Orban saying thank you for killing Radio Free Europe Hungary. Not sure what they're going to be talking about beyond oil and potentially the purchase of American LNG. But there's the boss now, yeah. Donald Trump just walked out the door, standing by for his friend Viktor Orban, who's no stranger to Washington. He even spoke at CPAC. It was last year or the year earlier, I forget. SUV does appear to be the choice. The Marine Guard is at the door with the president. The photographer's behind them, so we'll see this shot from over the president's shoulder at some point soon. And there is the Prime Minister of Hungary. Quick, quiet word in his ear from the president. Let's see if they take any questions.
Sir, any chance you'll meet with Putin in Budapest at some point? Should Hungary be allowed to purchase Russian oil?
Great leader. Just a handshake on the way in. They've just gone inside the West Wing, where they will have lunch in the cabinet room. It's still unclear to us if there are going to be cameras in there. It looks like no, James. Is that still the case? He said, by the way, when asked about the Putin meeting, there's always a chance. Not a lot of news so far. If they get you in there in the cabinet room, you know producer James will bring us in there, because that'll be a fascinating conversation. One of the other stories we're following by way of the shares and the story around NVIDIA this week. What a back and forth. If you just tick through the headlines, I don't know how Mike Shepard follows this stuff. NVIDIA CEO says no plans to ship anything to China. That's today. Yesterday, NVIDIA's Jensen Huang says China will win the AI race with the U.S. And, of course, a couple of days before that, he was making the case to sell actual Blackwells to Beijing, which Got a lot of people upset in the White House, including the Secretary of State, Marco Rubio, who, according to the Wall Street Journal, peeled the president back from that idea to the extent that it wasn't even brought up in the president's meeting with Xi in South Korea. That was something that we were waiting for, bracing for. NVIDIA shares today are down about $6, down about 3%, and it's been a real loser over the past week. Of course, such an important stock to the market, having topped out, I believe, $208 a share. 207 was the high on the 29th of October. It's been pretty much straight down since then. So let's try to get our arms around this with the help of the aforementioned Mike Shepard with us here in Washington, D.C. Did he get a call, you think, from the White House telling him to pull back from this whole idea?
It's unclear whether he got a call, but we do know both Jensen Huang and Donald Trump have indicated that the two men have a line of communication. And Jensen, during the NVIDIA conference here in Washington and remarks with reporters, he acknowledged that he and the president do speak by phone, sometimes late at night, and no doubt go over some of these issues that we're about to talk about here. But it's unclear to what extent those entreaties have been recent and to what extent they have continued following the president's meeting with Xi Jinping in South Korea. One that many at NVIDIA, especially Jensen Huang, have been hoping might yield a path back into China for the company. It sees China as a crucial market. It is the world's largest market for semiconductors. And for NVIDIA alone, it is a $50 billion opportunity. Right. So they are really hoping to get that door opened at some point.
We're talking about Blackwell's. It was kind of that's the rainbow package right now, but they were supposed to be selling H20s to China. Those aren't being sold either?
Well, they're not being sold right now either. And I'm glad you brought that up, because it is not as if they don't have permission to sell some AI chips. The H20 is a chip that was designed specifically to meet earlier rounds of export restrictions aimed at China. But the Trump administration in April shut that down. They said, nope, even this is too advanced for China, and you're not allowed to sell that anymore. There was quite a bit of lobbying and pressure from NVIDIA and from others to try to get the door opened up. And it didn't just affect NVIDIA, it also affected NVIDIA's rival, Advanced Micro Devices, which had its own AI chip, the MI308, that it was cleared previously to sell into China, and it too was shut out. Now, Trump reversed course in July and allowed those chips to be sold. In August, he came out and said, look, in exchange for a 15% cut of those sales, I'll reopen the door on the H20s. But Beijing since has said no. No, thank you. What they would like to see is instead Chinese domestic manufacturers fill that gap. And they have been able to do so by taking advantage of their ability. China controls their grid nationally when it comes to electricity. They are able to supply power on an unlimited basis to data centers. And that takes away the advantage that the H20 has over its China rivals. The H20 is a very efficient chip when it comes to energy usage. And what that means is that, look, the Chinese chips, maybe they're not as energy efficient. Fine, we'll just provide you with more power as needed to make up for the difference.
Is that all coal-fired power in China?
Coal, solar.
They don't care.
China has gone heavily into renewables, but it really is everything.
Got it. We hear so much about the coal plants from President Trump. I don't know, you back off of this, the headlines have been so fast and furious, you're just constantly buffeted by change. Every day it's a different story. When you back away from this, Mike, and you do this for a living, 2 weeks ago was peak euphoria, right? When Jensen was in Washington, NVIDIA GTC, everybody was preaching gospel. This is not a bubble. It's real. There's no circular investing, and China's next. Now it feels bleak, and I'm looking at these charts that are starting to break down.
Well, what we've seen in the past week is really a few key developments. One is the man of Big Short fame, Michael Burry, announcing that he had...
Well, what does he know that no one else knows?
Well, what he is looking at is what a lot of other investors are wondering about, is whether there will be enough return, enough revenue generated by all of this AI investment to justify the capital expenditures that include massive purchases of NVIDIA's chips and the construction of all these data centers. Will that actually translate into revenue generation across the economy, not just for the hyperscalers, but for other companies that are trying to deploy AI? Can they do so in a way that generates revenue and also manages to preserve employment too? Because we saw the Challenger jobs report yesterday indicating that AI was a factor in some job cuts at various companies. What Jensen Huang was trying to do during the during the GPU technology conference here in DC last week was try to show that, look, we are trying to get our chips into every kind of industry. Yes. We're trying to get into robotics. We're trying to get into business automation, into vehicles, you name it. Healthcare. They want to be there as a way of showing that, look, AI is not just about chatbots. It is not just about agents. It is about finding ways to do things more efficiently behind the scenes in business automation, and also introducing revolutionary technologies like automated vehicles, like robots, that can do a lot of tasks that right now maybe don't go undone or are done less efficiently. And that was something that was really evident during this conference when he unveiled all these partnerships with different companies and ventures as a way of signaling that, look, we are trying to accelerate this technology and its adoption. And that is sort of his answer to the whole bubble question, Joe.
You mentioned Challenger's note. That was really interesting. Sweetgreen today making a purchase that will automate all of its making salads. You're going to have a robot making your salad, apparently, the next time you go in there. So we keep hearing, though, from Jensen Huang that, no, you're going to have a digital twin that's going to make you more productive, not replace you, but improve you. Somebody's going to be wrong here, Mike.
Well, and that's right, Joe. And this is one of the key questions. Is it a question of being replaced by technology or supported by technology? We're in one of those transition moments. You know, it's not unlike the one that the newspaper industry underwent about 40 or 50 years ago as it started to automate away from...
You were there, Mike.
I was there. I remember working in the composing room of the Washington Post with the printers who at one time had put together the pages with hot metal, with lead type. And, you know, within a decade, it was all,
those jobs are gone.
Those jobs are gone.
Were those people made more productive or were they eliminated?
Many of them retired. Some of them, though, did adapt and adopt into new positions within the Washington Post Company, and other newspapers around the world found similar transitions taking place. But we are now in one of those moments. We did hear Jamie Dimon talking about the importance of AI and how it was being adopted within J.P. Morgan Chase. And his view was that, look, we don't want to replace bankers. We just want to make them more efficient using artificial intelligence. So, but that will be a litmus test across the economy. How will this shake out? Company by company, how will they make those decisions in terms of deploying this technology to find new ways of enhancing that productivity, but also keeping people aboard?
I could talk to you about this stuff all day long. I do want to mention to our listeners and viewers on YouTube that they have, boy, we saw this coming. James told me it would happen. They've opened the event with Viktor Orban to press. You used to cover the White House. Can you imagine that you find out 5 minutes? So they're gathering in the pool right now.
It's a scramble.
When they get him in there in the cabinet room, we'll bring you in there for the conversation. I'm guessing that Orban will be on the president's side of the table here, as opposed to Zelensky, who had his back to the media, is looking up at everybody. But we'll find out. The visuals will be interesting. We'll describe them to you here, and we'll bring them to you, of course, live on YouTube. Watching Wall Street and the shares of NVIDIA, as we discussed this whole trend, down 3% today. I was struck, and I mentioned this earlier in the week, a friend forwarded me an article in The Atlantic that referred to the NVIDIA state, that we have put so much into one company. It's not just breadth on Wall Street, that the entire economy, GDP, 92% of GDP last quarter was the AI spend, Mike. I'm getting nervous just talking about it.
Well, we were talking about that, I think, the other day, this whole investment, the proportion of investment that has gone into data centers. And the president himself has made the AI economy and investment in this emerging technology a centerpiece of his domestic economic agenda. We've seen how many events at the White House where he's unveiled new projects, the Stargate project, for instance, with Sam Altman and the SoftBank chief and others, and we have seen TSMC come into the White House. All of this is centered around building the manufacturing infrastructure for chip making that would support artificial intelligence in this country. And yet it does run the risk of being a drag in other sectors too. That, you know, does it become the thing that ate the world when it comes to the economy? Does it end up taking so much capital away from other things too?
Yes, absolutely. NVIDIA doesn't report on the same cycle as all the other big techs. This is going to, again, be the most important quarterly report of its history, correct? With all of these questions emerging?
Really, every quarterly report from them.
Each one gets more intense than the one before. It gets more
intense than the one before. And it does put more pressure on Jensen Huang to continue to be able to show that not only he believes in the adaptability of this AI revolution, he has talked about this in terms of a new industrial revolution.
That's right.
But the question is going to be, Joe, will the proof be in the pudding? And how does he demonstrate it? And how do all of these partners that NVIDIA is finding across the economy, from Eli Lilly to Palantir to CrowdStrike Holdings, how do they deploy AI in the way that he is arguing for? And do they do so in a way that, you know, really generates that kind of growth and employment too?
I'm so fascinated by this whole thing that I'm delighted we get to continue talking about it. That earnings report is going to be a doozy. And boy, just in the next couple of days, we'll see if the buy the dip theory holds with all of these companies.
Absolutely.
You know this guy, Mike Shepard, with us in Washington. Many thanks to you, Mike, as always. He's Bloomberg's senior editor for technology and strategic industries. And yes, he survived the Industrial Revolution in newspapers. Hopefully we will the rest here. None of those industrial revolutions came without a lot of chaos, though, and a lot of pain for some people before things shook out. I mentioned the White House. Viktor Orban is inside the West Wing with President Trump, and at some point soon, maybe minutes, maybe not, the press pool will be invited into the cabinet room where they are. This will likely include some opening remarks. If they use the normal playbook, maybe we'll talk about the gold leaf, and then it'll go to questions with reporters who have been assembled there. So I'll apologize in advance to our panel if we are interrupted by this, but we want to bring it to you. And I'm pretty darn sure that Rick and Jeannie are going to want to hear this as well, with the extent to which we've talked about the war in Ukraine and the stabilization of NATO. That's why we're here today. So let's bring them in. Bloomberg Politics contributors Jeannie Shanzano, Democracy Visiting Fellow at Harvard Kennedy School's Ash Center, and Rick Davis, Republican Strategist Partner at Stone Court Capital. Great to see you both. Rick, what's going to happen in this room? We asked the Ukrainian ambassador to the U.S. if Viktor Orban would get similar treatment to President Zelensky in the White House. She didn't have much of an answer for us. What do you think?
Well, the question is that the first Zelensky meeting or the second Zelensky meeting? Because the two went significantly differently. Look, Viktor Orban is a favorite of the MAGA right. I would say the MAGA extreme right, because his views on Russia, very tolerant buddies with Vladimir Putin, are not reflected in the broader MAGA movement nor the Republican Party writ large. So, you know, I think the president has to be a little bit cautious here. He just got a thumping on Tuesday with an election that decidedly rolled back a lot of the gains he had made in the 2024 election. And so he's got to be considering what impact hosting the biggest fan of Vladimir Putin in NATO is going to have on his own political base. So it'll be interesting. I think there are a lot of big Ukraine-related issues at stake, whether or not they're going to get Tomahawk missiles that fly deep into the Russia motherland. And whether or not he's going to give a carve-out to Viktor Orban to be able to take Russian oil, a carve-out he's not willing to give to Europe or anybody else around the world.
And because they have no mercy on producer James or Cece, it looks like they're bringing the pool in the room. Are we doing this now, James, or you want to give them a minute? All right, Jeannie, forgive me in advance if I interrupt you here, but we did talk to the ambassador about this idea of Tomahawks. DOD's approved it. President Trump has not. Do you think he will?
I think he might. I'm not sure, but I don't even think it really matters at this point. I think the big thing under discussion today is going to be what Rick just mentioned. I think that's going to be the carve out on oil and the impact of that if Donald Trump does it. So, you know, the Tomahawks, it's not going to make as much of a difference for Ukraine on the ground as everybody seems to think. And I think Donald Trump realizes that.
All right, Jeannie, Rick, stand by. We're going to bring you in the room now. The president describing Viktor Orban as someone who's run a really great country, a special person. He's got no crime. He said he's got no problems like some countries do. He's probably got a couple things I don't know about, maybe that I don't want to know about. Let's listen live to President Trump.
Thanksgiving last year under Sleepy Joe Biden. So that's a big difference. That's a big difference. 25% less Thanksgiving. And I think that's a very good chart. They include everything that you need for Thanksgiving. So it's 25% less this year than it was last year. And that's true. That's emblematic of of the rest of prices. Energy prices are way down from what they were last year. Inflation is almost non-existent. We have inflation down to a very low number, whereas Biden, as you know, is the worst inflation in the history of our country. So we're doing very well. We have a shutdown, as you probably know, because the Democrats have gone, they're crazy. They're crazy, but they don't care if they hurt the country. But we've approved it 14 times. We've approved a opening up 14 times, and they keep rejecting it. And I guess maybe they will again. Let's see what happens. They want to have a lot of bad things happen, bad things for our country. We're not going to give $1.5 trillion to people that came into our country illegally. We're not going to do it. To people who came from prisons, they came from mental institutions, they're drug dealers. They want to give them medical care. $1.5 trillion. And we're not going to do other things that they're requesting also. So I just want to welcome this really good person. I know him very well. He's a good person, and he's a great leader, and he's loved in his country. And Victor, would you like to say a few words?
Thank you very much, President.
Thank you.
First of all, may I say that thank you very much for the invitation. It's good to see you, President, back to the White House. And good to be back after 6 years, in a way, again, to see you here.
Yeah.
As we have met last time. The reason why we are here to open a new chapter between the bilateral relation of the United States and Hungary, basically because during the Democrat administration, everything was ruined. So after your leaving president, everything was basically broke, ruined, cancelled, a lot of harm done by the previous administration. In the last 10 months, President, what you have done, we are very much grateful for that. You restored the old level of the relationship. You improved the bilateral relation. You repair what was done badly by the previous administration. So now we are in quite a good position to open up a new chapter, let's say a golden age between United States and Hungary. And we have plenty of suggestions for today: economic cooperation, military cooperation, and political cooperation. And the main issue, probably, President, you know, we are neighboring Ukraine, which is in war. It's the most important issue for us, and we would like to discuss with you how we can contribute to help you in your peace efforts. That's why we are here.
And you've taken a lot of Ukrainians that needed your help, and you've taken a lot of them in your country, and everybody appreciates that.
Thank you very much. Yeah, we do our best.
Thank you very much. Any questions, please? Go ahead.
Thank you, Mr. President. Mr. Orban has requested an exemption as it relates to oil that is coming from Russia. Is that something that you are prepared to do? And may I ask Mr. Orban a question in regards to that very issue?
Sure. We're looking at it because it's very difficult for him to get the oil and gas from other areas. As you know, they don't have the advantage of having sea. It's a great country. It's a big country, but they don't have sea. They don't have the ports. And so they have a difficult problem. There's another country that has that same problem, by the way. But when you look at what's happened with Europe, many of those countries, they don't have those problems, and they buy a lot of oil and gas from Russia. And as they know, I'm very disturbed by that because we're helping them, and they're going and buying oil and gas from Russia. So that question could be really asked maybe more accurately if you talked about many European countries, not Hungary necessarily, because Hungary is in a different position. But many European countries are buying oil and gas from Russia, and they have been for years. And I say, what's that all about, right? Thank you. Yeah,
so that will be one of the issues for today, to explain clearly what would be the consequences for the Hungarian people and for the Hungarian economy not to get oil and gas from Russia, because we are supplied by pipelines. Pipeline is not an ideological or political issue. It's a physical reality because we don't have port, exactly as the President explained to you. So we will negotiate on that point. It's vital for us anyway.
Mr. Orban, there are two pipelines, as I understand it. There's a pipeline from Ukraine and there's a pipeline from Croatia. And my understanding is that the pipeline from Croatia can provide all of Hungary's energy needs. As a result, why would you need an exemption if that's the case?
Okay. So when we discuss that issue, you should separate the gas and the oil. on the gas issue, which is very important for us. 90% of the Hungarian households based on heating system based on gas. So we have only one pipeline delivering gas to Hungary, which is the main pipeline, the Turkish one. What we got from Croatia is a very small volume supplementary gas pipeline. Okay, that's gas. Oil is another issue. So oil is coming from the Druzhba pipeline, which is the main supply, and that is a Croatian one, which is the secondary and supplementary pipeline. We would like to convince the Croatian government to enlarge it and make it possible to deliver more. Under these circumstances, it cannot be the main pipeline. It's just supplementary. But later on, with some big investments, it could serve better the interest of Hungary.
Yes, please go ahead.
Thank you. Many people see this meeting not just as an encounter between two countries, but as the symbol of the strengthening of a new conservative world alliance. Would you agree with that interpretation? And how do you see the future of Europe in the light of leaders like Viktor Orban stand up to Brussels bureaucracy and the globalist agenda?
Are you from Hungary?
Yes, I am.
I figured. The fact is that he's a great leader, and he's respected all over, not necessarily liked by some of the leaders, but, you know, those leaders have proven to be wrong. If you look at his stance on immigration and other things, you know, if you look at Europe, they've made tremendous mistakes on immigration. It's really hurting them very badly. He has not made a mistake on immigration. So he's respected by everybody. He's liked by some. And I can tell you, I like and respect. I'm a double. I like and respect him. And that's the way Hungary is being led. They're being led properly. And that's why he's going to be very successful in his upcoming election.
May I have a comment on that? You know, language is important because the Anglo-Saxon terminology is different from the European one. So to use categories can create some misunderstanding. So I would like to be clear as much as we can. We are the only government in Europe which consider itself as a modern Christian government. All the other governments in Europe are basically liberal leftist governments. So we try to do something from 2010, which is different from what the others are doing, even at the philosophical level and at the level of practice as well, as just the president described it, like migration. So we are kind of a special island of difference in a liberal ocean in Europe. And we consider ourselves as a modern Christian government. That's the proper category to describe what we are doing.
To both of you.
We're talking, but we'll report on that later. Meetings with Putin. We were talking about that with Victor. He understands Putin and knows him very well. And I feel that, I mean, I'm going to let you say what you think, but I think that Victor feels we're going to get that war ended in the not too distant future. Victor, do you want to talk about that?
Well, I'm strongly convinced. So the question is whether we Westerners are unified or not. The problem is that the president has huge peace efforts, which are just splendid and very positive for the European continent and all the peoples of Europe. But at the same time, we are not unified because Brussels and the Europeans has a different approach to the war. So the only pro-peace government is the United States government and the small Hungary in Europe anyway. All the other governments prefer to continue the war because many of them think that Ukraine can win on the front line, which is a misunderstanding of the situation. So it's a complicated issue. We will discuss it. It requests not just 2 minutes to respond to your question, but rather than our lecture. Sorry, not to continue more than that.
To both of you.
So you would say that Ukraine cannot win that war?
You know, miracle can happen.
Yeah, that's right.
Mr. President, Thank
you, Mr. President. What is your message to the EU, because from Hungary, and the EU want to impose their woke policies on Hungary? What is your message?
Well, I think they should respect Hungary and respect this leader very, very strongly because he's been right on immigration. Look what's happened to Europe with the immigration. They have people flooding Europe all over the place, and it's hurting it. It's the crime rates are way up. A lot of bad things are happening. His crime rates are very low. They're the same as they always were, which is very little crime, because he's kept it the way it should be. Europe, I mean, I don't want to go into individual countries. They're all friends of mine, everyone. As you know, in NATO, they voted to go from 2% to 5%, and you know that nobody thought that was possible. And we had just about almost, other than Spain, a unanimous vote. No, I think that I think they respect him a lot. They don't agree with him, but actually, inwardly, I think they probably do agree. What he was right on immigration. They were wrong. They are flooding Europe with people from all over the world, and Europe is becoming a different place. And I tell the leaders all the time, you better stop or you're not going to have Europe anymore. It's a very dangerous thing they're doing.
May I have a reflection on that? So on migration issue, just for clarification, in Hungary, the number of illegal migration is like that, zero, because we have a crystal clear system. If somebody would like to come to Hungary, first he should ask for that. If he gives the permission, they can step in. Nobody can step on the territory of Hungary without having a permission from the Hungarian authorities. This is the regulation, simple, well working. What is the consequence of that? We are under sanctions, financial sanctions of European Union, because we don't let the illegal migrations to come to Hungary and to the European Union as well. So we have to pay, just to inform you, we have to pay every day 1 million euro as a punishment to the Brazilian budget, because we stop the migrants. This is the absurd world we are living now in Europe.
Mr. President, to both of you.
Go ahead, please. Yes,
Thank
go
you
ahead.
so much. Thank you. I'd like to ask what do you think, what do you believe after this meeting? Can you have maybe, or the European Union will have another opinion about, just because of this penalty, another opinion about Hungary because of the immigration and because of this kind of politics, which is not that strictly as the European Union directs. What do you believe?
Yeah, where are you from?
I'm from Hungary.
Okay. I do have that conversation with them, and I respect and like them. You know, they're all friends of mine. I think pretty much every single leader in Europe is a friend of mine. We get along really well. They've done everything I've asked them to do with NATO, etc. The only thing they continue to do is buy oil from Russia. That's not too good. But I told them they should respect this man. They can also learn from Victor. Victor has had a very hard stance on, more than anything else, immigration or even illegal immigration. He literally has accepted no one over the years. Think of how much greater these countries would be if they didn't have the tremendous crime that has come in with the immigration. People just flowing into Europe. They've got to stop it. And not only stop it, they have to reverse it. They have to get them out. We've done that here. We have 0 people coming in now. The borders are closed. We take people, but we take them legally. But we've done it very strongly, and we're moving hundreds of thousands, millions of people out. We had, of the 20 million people, 25 million, nobody knows even what the number is. They never knew. Biden had no idea. He had no idea. I don't believe he had any idea what was happening, because he wasn't about open borders. But we had open borders, and we had millions of people come in, and they were coming in from jails. They were coming in from mental institutions. They were coming in as drug dealers. We had 11,888 murderers. Half of them committed more than one murder. We're getting them all out. We're getting them out. He doesn't have that problem, but Europe does have that problem. Other parts of Europe have that problem. So, I tell them all the time, I stick up for Viktor Orban. Not a lot of people do, because in many cases they're jealous. They wish they did what he did. They would have no problems if they did what he did. And I have a bigger heart than anybody, but, they've destroyed some of those countries. Some of those countries had no crime 10 years ago, and now they have quite a bit of crime. And I would say that I don't know anything about your crime levels, but I would imagine they're very low.
Down.
Huh?
Very
Not
down.
too high, right?
No, it's very down. One of the best in Europe.
I had a feeling.
Sorry, may I have one remark?
Sure, please.
No. Just a clarification as well. I'm not here to ask President Trump to manage my conflicts or our conflicts with the European Union. This is our matter, so we will do it. What we need is a golden age, to open a golden age of the United States-Hungary relationship. That's the biggest help we can get from United States.
And maybe Europe too. You know, we can include Europe, but it's going to get more difficult.
So inside the European Union, we will manage all of our affairs. To be the most possible humble guy, yeah? But I'm the longest-serving Prime Minister of Europe. I survived all the Prime Ministers who attacked us. And I'm sure we will survive next years as well. So we will manage our conflicts successfully.
Mr. President,
one question for you, Mr. President. One question for the Prime Minister. Speaking of Europe, last month you said that you would not withdraw U.S. troops from Europe. Yet, 2 weeks later, the Pentagon decided to withdraw significant number of troops from Romania. So have you changed your mind, or the Pentagon ignored your assurance?
No, they don't ignore anything that I say. What they do is we make changes. We move. It's the same number, total number, but we move people around. I happen to like the Romanian people. I think they're great people. And Pete, you may want to suggest something right there, please.
Absolutely. No, nothing was uncoordinated with the White House. It's all part of the view that we have of Europe, and there will remain troops in Romania, but there's some change in how we rotate and how many we rotate.
And the relationship with Romania is very good, right?
Very good, and we've coordinated all this with Secretary General Ruta, throughout EUCOM, throughout our allies. Everyone was notified in advance.
The relationship with Romania is very good. The relationship with Europe is very good. I disagree with what Europe is doing, having to do with immigration, but I agree with them on many other subjects. We just signed the biggest trade deal ever made with Europe, $950 billion. We were able to do it because of tariffs. It was a deal that was good, very good, but we had a very unfair deal. We were treated very badly before I came into office, but we just signed. It's the single biggest trade deal ever signed. So we have a very good relationship with Europe. Yeah.
What is the main dispute with the Russians which prevent the Budapest summit with Putin from taking place?
The basic dispute is they just don't want to stop yet. And I think they will. I think it's taken a big toll on Russia, big toll on both countries, obviously, but it's taken a big toll. They're losing 7,000 soldiers a week. That's a big toll. And between the two of them, divided, you know, with Russia losing more soldiers, actually. But they're both losing a lot of people. And that's the primary thing that, with me, it's not economic, it's not money. In fact, we don't spend any money. We send it to NATO. They pay us for our missiles and for our military and everything else. We don't. It's not a question of money. It was with Biden. He spent $350 billion. He got nothing for it. The war would have never happened. If I were president, the war would have never happened. I think you would agree with that. This war would never have happened if I were president. It's stupid that it happened. But it did happen. I inherited the war, and I think we're going to get it ended. Not too distant future.
Mr. President,
yes, please.
So no question that if that time the name of the United States president would have been Donald Trump, there would be no war between Ukraine and Russia. That's clear. But what we are speaking about here is more than that, because without the pressure coming from the United States government, I'm speaking 2022, the Europeans would not take that hard line what they have today on the war. Remember that big countries of Europe rejected to be involved more than just sending some, humanitarian issues. So the pressure coming from the United States to be more pro-war in Europe. So that's the fact of the history anyway. So we have to restore something which was ruined and created from here. And that's the reason why I understand absolutely the devotion of the president now to do everything to stop the war, because that would be not that deep without the previous government pressure from here. So the reason why I'm here to be as much as helpful I can to contribute to the peace efforts of the president, because that was an enormous mistake what we have done, the Western world several years ago, and we have to stop it, and it's common responsibility.
Biden actually pushed for that war to happen. Okay, if you can believe it. Nobody can believe it, but it's one of those things. And now look what happened. Look what's happened to Ukraine. It's a much smaller country. A lot of people are dead. You take a look at it's a whole different world over there. And Russia has not been helped very much by that war either. They lost a tremendous number of soldiers and people. And, you know, look, that war should have been a 1 week war. I don't know why it's taken. This is 4 years. Should have been 1 week. Should have been over with, but it would have never started. Should have never started. And I would have solved the problem without giving up anything. Ukraine would have remained as is. So there were tremendous mistakes long before I got there. I inherited that mess, and we're getting it solved, along with the 8 wars that we've already ended.
Mr. President,
what is America's interest cultivating better relations with the EU leader or Orban?
I think I can do both. I mean, there's no reason why I can't. I get along well with the European nations.
We are still a member of the European Union, so it's easy.
Yeah, and by the way, he's a member in good standing, I guess, although they penalize him every once in a while. But he's a member in good standing with the European Union, so he's a member. He's a part of it. But I get along great with him, and I get along very well with them. I agree with him on immigration much more than I agree with them, but I agree with, a lot of the things in Europe he also agrees with. But he had a difference, I would say, primarily on immigration more than anything else. And I happen to think he was right because their whole fabric has changed. I mean, you go to some of the countries, they're unrecognizable now because of what they've done. And Hungary is very recognizable. Yes, ma'am.
Mr. President. Yes, Mr. President. Will there be a peaceful meeting in Budapest still this year? What do you think?
You mean a meeting with President Putin?
Yes.
You mean in Hungary? Well, I'd like to keep it in Hungary, in Budapest. That meeting, it turned out I didn't want to do that meeting because I didn't think anything was going to be happening of significance. But if we have it, I'd like to do it in Budapest. Yeah, it'd be good.
Mr. President, you said many times to support Viktor Orban. Why is it important to win the next election, for example, for the United States, Hungary, and also Europe? Why is it important?
Well, I don't know his opponent. I don't know if he has an opponent yet. At some point he will, I guess. We always have opponents,
always.
right? Not much of an opponent. But I'll be supportive of him. He's done a fantastic job. We've had a great relationship. The United States, look, we had a country that had no leader. It had an auto pen, illegal auto pen, totally illegal. And that's coming out stronger and stronger. But we had no leader in the United States. I mean, Hungary, as an example, had no relationship with the United States, even though we do, billions of dollars in trade with Hungary. Hungary's a big country economically. We do, billions of dollars in trade with Hungary. Why would they give that up? And they gave up so much else. Look, they gave up everything. This country was poorly run. I think if I didn't win the election, we might not have a country, if you want to know the truth, not a recognizable country. But our relationship was immediately good as soon as I won the election because Victor's one of the people that's highly respected, and we had a great relationship with Hungary. We do again. That was an easy one. Yeah.
Do you and Prime Minister Orban agree on ways to put pressure on President Putin to come to the negotiating table to end the war in Ukraine?
I think we agree that the war is going to end. Sometimes people have to fight it out a little bit longer, but I think we agree that the war is going to end in the not too distant future. Do you want to talk about that, Victor?
I have some ideas, and I will present it to the president. How to stop it.
Mr. Prime Minister.
Mr. President, since you brought up the Walmart Thanksgiving meal, and it is cheaper, but it also contains less. As a
Well, I haven't heard that. You're telling me. Who are you with? Who are you with?
I'm with NBC News, sir.
Fake news. NBC. You're fake news. What a NBC's gone down the tubes along with most of the rest of them.
If I ask, why do you think there's such a disconnect between the economy that you're describing day to day and the way many Americans say they're feeling and they're concerned about?
Well, they feel better about our country right now, other than the shutdown, obviously, which is caused by the Democrats, could be ended by the Democrats in 2 minutes. They feel much better. We have more jobs. We just set a record on jobs. You do know that. We have more investment in our country than any country in history. We're over $18 trillion as of this moment, and we're going to be maybe at 20 or 21 trillion by the time I finish up my first year. And there's been no country, China, no country in the world that's done anywhere even close to that number. Your friend Biden, as an example, in 4 years was less than $1 trillion. We'll be at 21 trillion in 1 year. So there's no country that was even close to that, and our country was a laughing stock all over the world. We have more jobs, we have more potential than any other country, and frankly, we're the hottest country right now. Victor said to me before, we're the hottest country anywhere in the world. Think of it. We'll have $21 trillion invested. We have auto plants pouring back in. We have AI pouring back in. We're leading China in AI by a lot. We're leading everybody in every category. There's no category that we're in second place. So I just heard this yesterday that Walmart said that the Thanksgiving was 25% more expensive under Biden. That's a big, to me, that's a big number, because Walmart's respected. I mean, Walmart is Walmart, and, you know, they're giving you prices. So that would mean that the whole series of pricing and costs, you know, the groceries and everything else, it was a con job. It was a con job. Affordability, they call it, was a con job by the Democrats. The Democrats are good at a few things: cheating on elections and conning people with facts that aren't true. It was 25%. Walmart just announced it 2 days ago. 25% cheaper this year, will be cheaper to have Thanksgiving than it was a year ago under Sleepy Joe Biden.
You say that affordability is a con job, as you put it.
Say it.
You said affordability was a con job, and you didn't want to. You said last night you didn't want to talk about affordability.
I talked about it. When did I not want to talk about it? I talk about it all the time. We are much better than Biden and all of them. Now, just so you understand, do you remember that the Biden administration had the highest inflation in 48 years, but most people say ever recorded? Do you remember that? Right? Do you remember it? Did they have the highest inflation in 48 years? Did they? Just answer me the question. You know the answer. The answer is yes. They had the worst inflation in 48 years. We have almost no inflation. We're down now to 2%, and we'll be at maybe 1%. You want to always stay above 1%, actually. You want a little tiny bit of inflation. We're at a perfect number. They were at the highest level in recorded history, okay? And when you talk about affordability, that one fact. Now, let's talk about the second biggest subject after inflation, energy. We're going to be at $2 gasoline. We're going to be approximately $2 very soon. We're a little bit above $2 right now for gasoline. Now, under Biden, it was $4.50. It even hit $5, but it was $4, $3.50. We're going to be at $2 a gallon. So gasoline's much less. Energy costs are less. When you have energy and when you have gasoline less, everything else follows. It's such a big category. So when you have lower energy prices, which I think you admit we do substantially, that means everything else. So we are the victors on affordability. But if I watched that election, which I was not much involved in, I didn't support Virginia, the candidate, didn't do a lot of support for the other candidates. They asked me about Cuomo, and I said, well, it's a question, do you want a thug or do you want a communist? I mean, that was my response. So I wasn't involved in that stuff too much. But I will say this, if you look at affordability, which they campaigned on, they lied because they talked about, oh, prices are up. No, prices are down under the Trump administration, and they're down substantially. Energy prices are down by 30, 35, 40%. Gasoline is way down. And the other big thing is inflation is way down. The biggest thing is inflation. The second biggest thing is energy. Energy is way down. And what's also down? Gasoline. Also, the biggest thing is inflation, and it's way down. We took over a mess. The highest inflation in recorded history. Some people would say 48 years. I'll take either one of them. But I believe it's the highest inflation in recorded history. That alone makes it impossible for them to have done a good job affordability-wise. So one other thing. When I came into office, Victor, 2 days into office, they were screaming at me about the cost of eggs. I was there for 2 days. Eggs had quadrupled. And I said, listen, I just got here. Let me check it out. And they were right. Eggs had gone up by 3-4 times. Within a period of a few months, we had eggs down to a normal cost. We did a great job on groceries and affordability. The only problem is the fake news. You people don't want to report it. And in fact, I'd like to ask Caroline. Where's Caroline? I'd like to ask Caroline a question. Where is she? Did she? Uh-oh. She deserted us. She deserted me. Our great Caroline superstar deserted me. Anyway, she's right outside. She was going to talk about, because the fake news yesterday, they talked about that. They said, oh, I don't want to talk about affordability. The reason I don't want to talk about affordability is because everybody knows that it's far less expensive under Trump than it was under Sleepy Joe Biden. And the prices are way down. Caroline?
Yes, sir.
Could you discuss that question that was asked, and how it was asked in such a fake, disgusting manner by the fake news?
Yeah, and I just saw it asked again here, and it's very unfortunate that the reporters in this room refuse to address, sir, what you just said, which is that you inherited the worst inflation crisis in modern American history, and you are fixing it in 10 short months, and your entire administration has been tasked with this effort, from Treasury Department to Agriculture Department to the National Economic Council right here at the White House. They are slashing regulation. He signed the largest middle-class tax cut in 6 months. In 6 months, in record time, putting more money back into the American people's pockets. So affordability is what the American people elected this president to do, and he is doing it, and you guys refuse to cover it, and you refuse to cover that the previous administration created the worst unaffordability crisis in American history. And I've been watching the TV all day saying that he doesn't want to talk about affordability. That's what he's working on every day, and that's what
I'm talking about right now. But you know why they refuse to cover it? Because they're fake news. That's why. Go ahead.
Can I get her someone?
Sure. Caroline, the Prime Minister would like you to work for him in Hungary.
Please consider.
You know what? That's a very good decision you just made. Please don't leave us, Caroline. Yeah, please.
You spoke to Republican senators. They do not seem interested right now in getting rid of the filibuster.
That's too bad. They're making a big mistake. That's right. No, but they're coming my way. You're right. Wait a minute. The way to do it for the Republicans is to terminate the filibuster. They call it the nuclear option. This is the second form of nuclear. Very good. Very good. This is a good form. This is not a bad form. I would have been in favor of that a long time ago. But you know the Democrats are going to do that. And most of you will admit the Democrats are going to do that. So why aren't we doing it? And I think only a foolish person would be against that, especially when you realize that these are crazed people. These people are absolutely crazed, Trump derangement syndrome, whatever it may be. And I am totally in favor of terminating the filibuster. And we would be back to work within 10 minutes after that vote took place, and lots of other good things would happen. And it doesn't make any sense that a Republican would not want to do that.
If they're not going to do that, then it seems like you'd have to make a deal with Democrats to end the shutdown.
Here's some of the things that we'd pass if we terminated the filibuster. Voter ID, no mail-in voting, no cash bail, no men and women's sports, no welfare for illegals. You could go on and on. This is 2 pages of things we'd do if you did that. Without it, I don't know that you passed anything, because you can't deal with them. They're really irrational. They really are. But I was happy to see that a tremendous liability to this country, a woman that made herself rich in this country, Nancy Pelosi, has quit. And she'll be out of here pretty soon. And that I consider that to be a great asset for America, getting her out. Yeah, please go.
Are you really going to deal with Democrats? You're not interested in it?
I don't know. We'll see what they have. I mean, we'll see. But they're very destructive for the country. NBC, fake news. I'm not taking you. Go ahead.
President, are you worried about it backfiring in the future on Republicans? Should they get rid of the filibuster and then down the road, Democrats?
Well, normally I would say, well, a little bit. But the reason that I'm not is because if they ever took over power, they'll do it. Look, Joe Manchin and Sinema are 2 people that are no longer in politics because of this issue. They were opposed to what the Democrats wanted to do. They wanted to terminate the filibuster. They were opposed to it. They're no longer in politics. They're gone. The Democrats will do this. So if the Democrats are going to do it, I'm saying Republicans should do it before they get a chance. It's very simple. And if we do it, we will never lose the midterms, and we will never lose the general election, because we will have produced so many different things for our people, for the country, that it would be impossible to lose an election. No, I love AI. I think it's going to be very helpful. So many things are happening with it. And in addition to which, we're leading China, we're leading the world in AI. We're building massive electric plants that the companies themselves are building for their plant. I've given them the right because we need so much electricity for that. And just the word is electricity, believe it or not. Double the electricity that we currently have in the country for just the AI plants. And I've allowed those companies to rebuild and build electric plants along with their facility. We're getting approvals done in less than a month, sometimes in 2 weeks, for massive, beautiful, massive buildings. And no, I'm totally in favor of it. I think it's really going to be the wave of the future, and we're leading the world. We're leading everybody by a lot.
How long do you think the shutdown will last? Mr. President, how long do you think the shutdown will last?
I don't know. It's up to the Democrats. We voted, the Republicans have voted 14 times to open up the country, and the Democrats have voted 14 times to hurt the country, really. They should approve it, but they might not. That's why I like the fact that we terminate the filibuster. If we terminate the filibuster, the country will be open within 10 minutes after that termination, because we'll take a second vote, which is the opening of the country, and the Republicans will vote to open the country. That's one of the reasons, not the major reason, by the way. I think it's less important than the other things that we get. But if we terminate the filibuster, the second vote that we will take will be to open up the country. It'll take 10 minutes, and the country will be open.
Is there any room for bipartisanship? Because it seems like that's the main purpose of the filibuster, is to create some sort of compromise. So
Well, it didn't work, obviously.
So
You're right. That was the purpose of the filibuster, bipartisanship, but that didn't work.
So are you saying the next 3 years in Washington there shouldn't be?
Well, no. If the filibuster is terminated, we will have the most productive 3 years in the history of our country. If the filibuster is not terminated, then we will be in a slog with the Democrats, and very little for either party will be done. So it's a good thing. Thank you very much, everybody.
Thank you, Fred. Let's go. Thank you, Fred.
Will it take for
Let's go.
Okay, there you have it. The press being escorted out of the cabinet room after a whirlwind conversation with President Trump and Prime Minister Viktor Orban. We didn't know until right before that began if press would be allowed in the room. And I don't know if I should use the word devolved, but into a back and forth that required the press secretary to come in. The president called Caroline Leavitt from another room in the White House to chastise reporters for suggesting that the president was not acknowledging affordability. This is something we've talked about a lot this week, of course, coming off the election results on Tuesday. And we're going to talk about it quite a bit more here as well, including geopolitics. He's there to talk about the war in Ukraine and, of course, energy trade with Viktor Orban, which we're going to be discussing in just a moment with former ambassador to Ukraine, William Taylor. Thanks for joining us. If you're just getting into the cycle here on Balance of Power, I'm Joe Matthew in Washington alongside Tyler Kendall as we bring you politics from the nation's capital and connect the dots with what's happening today on Wall Street. Tyler, pretty remarkable visit there. The old saying about politics stopping at the water's edge might need to be updated. To hear the Prime Minister of Hungary sit in the cabinet room at the White House and denigrate the former president, the former administration, was pretty remarkable.
Right, and we know that these two leaders have a very warm relationship. I don't even think we have to say relatively warm. We know that they have been two allies, that the Hungarian prime minister did support President Trump when he was then candidate Trump, and it didn't seem like his re-election was going to happen. So these two have history here. And of course, the pivotal part of this meeting is that Hungary is trying to use that relationship and get an exemption when it comes to these Russian sanctions and to these U.S. sanctions on Russian oil. Hungary, of course, a major importer. About 90% of their crude imports come from Moscow.
I mentioned William Taylor, just the voice that we want for a day like this. Former U.S. ambassador to Ukraine with us live on Bloomberg TV and radio. Mr. Ambassador, thank you for joining us. Some of the language that we heard in the room today was striking. The president saying, I stick up for Viktor Orban. Not a lot of people do, because in many ways they are jealous. Viktor Orban speaking to the previous administration, saying after your leaving, president, everything was basically broke, ruined, and canceled. How important is this relationship for the United States' reputation abroad?
Well, it's the right question, Joe. Viktor Orban is the outlier in Europe. He supports, by and large, President Putin, and has been not shy about seeking approval of and friendship with and cooperation with President Putin, who is, as you pointed out over and over, invading and has invaded for 3.5 years Ukraine. So President Trump does have some leverage there with Prime Minister Orban to make it clear that Orban should not be buying that Russian oil. And so we will see the answer to your question after they've had this meeting as to whether or not Orban can get exemptions from the sanctions that President Trump has put on Russian oil.
Well, let's talk a little bit more about that, because we have reporting that Hungary's prime minister is going to float some energy deals to the president when it comes to importing more U.S. LNG, when it comes to putting up nuclear reactors. What does the diplomatic effort look like to wean Hungary off of Russian energy imports? What has to be done for a solution down the road to take place so that they're no longer bringing in those barrels from Moscow?
Well, Tyler, we know that that's possible. The rest of Europe has done that at great expense. I mean, this is not easy to go down from relying on Russian oil to almost weaned, as you say, from Russian oil. So it can be done. The Hungarians do get a lot of oil from pipelines from Russia. But there's another pipeline that doesn't come from Russia that they can use. So it is possible. It is possible, and it'll take a decision by the Hungarians to cut themselves off from that oil, and President Trump has the leverage to get them to do that.
Mr. Ambassador, what was France thinking? What was Germany thinking? What was the UK thinking watching this conversation?
They were all a little embarrassed, I imagine, that one of theirs, that is one of the EU members, indeed a NATO member, is apparently sticking up for the aggression that the Russians have inflicted on Ukraine. So the rest of Europe is almost unanimous in its determination to wean itself from Russian energy, and has done that amazingly successful. Orban is one of two exceptions to that. And so these other nations are hoping that President Trump will use the leverage that he has over Prime Minister Orban to force him to make the hard decisions. And then, yes, these other energy deals between Hungary and the United States can take place. But they should take place after Hungary weans itself from Russian oil.
We have data that shows that the average of Russia's crude exports for the 4 weeks ending on November 2nd, so essentially the last month or so, slumped by the most since January of 2024. So it would appear that these sanctions are causing a squeeze when it comes to Russian energy exports. But how should we really be quantifying progress when it comes to a potential solution to end the ongoing war? Are statistics like that enough when you hear President Trump saying it seems like there could be an end in the, quote, not so distant future, but we really haven't gotten any indications that there's been progress on the negotiations front?
And there probably won't be, Tyler, on negotiations front. What there could be, though, as what you've indicated, that is the pressure on Putin, the reduction of the revenues that he gets from selling oil and gas, some to Hungary, but more to India and China, when that pressure results in an understanding by Putin that he's going to lose this war. But you're also right, it's not just the economic pressure. It's going to, in addition to that economic pressure, which is important, and as you say, is already having an effect, reducing those revenues. But in addition to that, Putin has to understand that the Americans and the Europeans are going to continue to provide the Ukrainians with the weapons and the finance to allow them to keep going longer than he can, longer than Putin can. Putin is going to realize, once that happens, that the Americans and Europeans are going to provide Ukraine with the weapons and the finance to enable them to outlast him. At that point, Putin stops the war.
We asked the Ukrainian ambassador to the U.S. specifically about Tomahawk cruise missiles. When she joined us last evening, Ambassador Ola Stefanishnia told us, knowing that the DoD had approved this and the president is considering the deployment of Tomahawk cruise missiles, that they were actually in talks. There might be some progress here. Here's what she told us.
The discussion is still ongoing, but we have a lot of delegations working here, including Ukraine, to scale up the available financial resources to procure more military capabilities from U.S. And it's not only Tomahawks, different types of other long-range and short-range missiles. This dialogue is ongoing, and I can only say that it's rather positive.
Positive. Negotiations ongoing. That made were no talks underway. Do you think Ukraine
this would be a big boon. This would help Ukraine do what President Trump has said he wants to do, which is to stop the war. This is an indication that the Ukrainians would be able to strike deep into Russia to stop the war. So yes, I think this is eventually coming.
All right, William Taylor, former U.S. ambassador to Ukraine, we thank you so much for joining us here on Bloomberg Television and Radio today. And to extend the conversation, we want to bring in our political panel, Rick Davis, partner at Stone Court Capital and a Bloomberg Politics contributor, alongside another Bloomberg Politics contributor, Jeannie Shanzano, Democracy Visiting Fellow at Harvard Kennedy School's Ash Center, here with us today. Rick, I want to start with you and just get your overview of how we just saw this meeting play out in the cabinet room at the White House and your thoughts on President Trump and his relatively warm relationship with the Hungarian Prime Minister, Viktor Orban.
Yeah, Tyler, as has been already discussed, they have a long-term relationship that goes back for quite some time, and not just on a state-to-state basis, very politically simpatico. Viktor Orban has participated in a lot of events hosted by conservative groups in the United States, both here and in his own country. So there is a warm relationship that exists there. Highly criticized by the Democrats, Viktor Orban being seen as much more authoritarian than others in Europe. And of course, we know that Donald Trump doesn't hold that against other world leaders in his dealings. So yeah, this is a bit of a rally of like-minded individuals. But I must say, I was impressed by the fact that Donald Trump really didn't take the bait on a number of issues related to the Ukraine. Sure, he did his usual song and dance about how the war would have never happened and Biden screwed it up, and echoed by Viktor Orban in an incredible exchange where it defied all sensibilities for a foreign head of state to criticize a former president. I mean, pretty outrageous in the cabinet room of the White House.
Seemed outrageous, Jeannie. It was a Republican, a Republican senator. Mirrored version of this, where the foreign actor has crossed the water to come into the White House, to Rick's point, into the cabinet room, to criticize a former president of the United States. He said, after you're leaving president, everything was basically broke, ruined, and canceled. Was this a moment for you, Jeannie?
My, how things have changed. Yes, absolutely it was. It's enough to hear Donald Trump almost daily wanting to talk about Joe Biden and blame his own woes on Joe Biden, but then to have the leader of a foreign nation come over. But of course, on the issue of affordability. So to me, this was tone deaf to a degree that it would be very concerning if I was a Republican who was going to be running in 26, facing voters who are angry and a president saying affordability is a con job.
Well, Jeannie, I'm glad that you brought up affordability because we want to hit on that as well, since it did really prevail in that conversation that we just saw play out in the cabinet room. Of course, a big part of this is how Americans are feeling about the economy and the government. We did just get a redhead on the terminal that the U.S. Transportation Secretary Sean Duffy says that U.S. flight cuts could reach 20% if the situation worsens, and we haven't seen any indication, Joe, at this point that we're getting closer to resolving this ongoing government shutdown. Rick, I want to pose this to you. I know that you watch U.S. consumer sentiment really closely. We got the preliminary readings for November today from the University of Michigan showing that consumer sentiment hit a near record low today amid the government shutdown, amid uncertainty around tariffs. How are you reading how Americans are currently reading this economy as we see really no end in sight at this point for the government to reopen?
I love Fridays when we can get the Michigan Consumer Sentiment Index. Tyler, thank you so much. It's the second best poll that is taken in politics. The first best was Tuesday when voters actually voted, and it mirrors very significantly what we see today in the preliminary estimates for November, and that is a significant decrease, 6.2% on the Consumer Sentiment Index, 30% down from a year ago. Think about it. Donald Trump was elected 1 year ago this week, and the Consumer Sentiment Index has dropped 30% during that period of time. Now, nobody should then be surprised to see the kind of election outcomes that occurred on Tuesday, and it's all the way across the board. I mean, they're significantly down from a year ago on the future sentiment of people. How's it going to be a year from now? Their current situation down 11% in this one survey. This is one of the lowest levels the Michigan consumer sentiment has hit compared to even Joe Biden at the height of inflation. This is where people are. So when Donald Trump starts talking about inflation and how horrible it was, he ought to think about like how people are feeling today because they're in the same position.
We should note that the comments on gas prices didn't completely add up either. We actually took a look around here, and when it comes to gas prices, AAA still has the average above $3 a gallon, and it's only about 10 cents different than it was 1 year ago. So as much as we would all love to be paying $2 a gallon, that didn't seem to actually jive with what we're seeing from AAA and from Gas Buddy. Great panel as always. Rick Davis and Jeannie Shanzano, thank you so much for weighing in, and I hope you both have a great weekend here. I also hope you're not flying. We're going to talk about that coming up with Chris Sununu. How about that, Tyler? It could be 20%. Sean Duffy saying as much to Fox News this afternoon when it comes to capacity cuts. They start today at 4%, and people are already feeling the pain. Chris Sununu will join us next, speaking for the airline industry here on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story. The U.S. Transportation Secretary Sean Duffy says cuts to U.S. flights could reach 20% if the situation with the U.S. government gets worse. He made the comment on Fox News. Our Nora Melinda is out at Newark Airport. She will have the very latest on those delays coming up in just a moment. U.S. stocks well off session lows right now. We do have the Dow Jones Industrial Average back at 6680, down 40 now, lower by 0.6%. The Dow down 192, dropping 0.4%. Nasdaq down 255, a drop there of 1.1%. We are on track for a losing week for the S&P 500 index. On the week, we're looking at a loss right now of just about 2.4%. That will be the first decline in 4 trading weeks. Bottom line here, stocks sinking as economic angst brews amid the government shutdown. The 10-year currently yielding 4.07% with a 2-year right now, 3.53%. S&P again down by 0.6%. Spot gold up $28 the ounce to $4,006, back above 4K, up 0.7%. West Texas Intermediate crude 59.85 a barrel, up 0.7, and Bitcoin now up 1.5%, 102,656 on Bitcoin. After earnings, the salad chain Sweetgreen down 12.1%. After earnings, the burger chain Wendy's down 1.4%. Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, many thanks. Charlie will have the latest on Wall Street coming up at 2 p.m. Eastern Time as Bloomberg Business Week Daily kicks off on this Friday. Not looking so hot today on Wall Street with the volatility continuing here, although we have seen worse numbers. And we're keeping our eyes on airline stocks as well. They've been bouncing around a little bit today, not for the better, as we see these capacity cuts take effect. Tyler, it made a red head on the terminal when Sean Duffy said this could reach 20%, but there is no actual plan for that, right? That's depending on how long the government shutdown goes, and some people think it could end in the next week or so. But the fact is, we'll be at a full-on 10% cut by the middle of next week.
Right, exactly. This is phased in for now. It started today with 4% cut. The Transportation Secretary saying it could go as high as 20%. Of course, this is at 40 airports around the country that we've been watching very closely, not impacting international routes, but if you're flying anywhere domestically, you may get hit with a delay or a cancellation. Now, at one of those airports, we do find our very own Nora Melinda, who's reporting live all day today on Bloomberg at Newark International Airport. Nora, can you just give us any more context today as we get this announcement from the Transportation Secretary? Cuts could reach up to 20%. What are we seeing right now on the ground?
Well, Tyler, this remains to be a fluid situation. Of course, we have really been hearing a lot about the fact that this government shutdown really weighing on TSA workers, air traffic controllers, especially given the fact that they've been unpaid since October 1st when the shutdown began. When we think about size and scope here, this is a 72nd worst day in terms of airline cancellations here since January 2024. So not a catastrophe here, although there were a lot of fears of this potentially being the case. This is not the worst that we have seen as we're speaking on the ground to individuals, workers here. They're saying this is not the first government shutdown that they've had to deal with. So we are still hearing a lot of TSA workers here at Newark Liberty Airport actually still reporting to work, coming here, serving consumers, serving the U.S. customer here, despite the fact that they are not receiving a paycheck as of yet.
The 72nd worst day in just a couple of years, Nora, that sounds like any old day. Are you talking to travelers? Are they just getting along with their business?
I mean, some getting along with their business, but also we are speaking to some individuals just truly disgruntled, frustrated. I spoke to a woman earlier, a plastic surgeon, trying to fly from EWR, from Newark Liberty over to Barbados, and actually seeing that her flight was canceled and rescheduled to JFK. And it was an hour earlier, so she, of course, missed that flight as well. So she is frustrated, of course, blaming this on the U.S. government shutdown, but we do know that the majority of the disruption here is for regional and domestic flights here, not necessarily international. But you are seeing a broad-based frustration across the U.S. consumers.
Well, of course, that sounds awful, but I don't think the plastic surgeon not making it to Bermuda is going to get into the president's stump speech here. Nora, thank you. You've been great today. Pull on the short straw to hang out at Newark Airport for an entire day. We have a special voice for you here as we talk about this story. Let's get to the heart of the matter. Nora Melinda, thank you so much. The former governor of New Hampshire is with us, who is now one of the faces of the airline industry. And a couple of weeks ago, we had a great conversation about this with Chris Sununu, former Republican governor of New Hampshire, now the president of Airlines for America, president and CEO. What a time for you to start this job. Are you sure you want to do this?
I tell you, it's been great. Yeah. I love working for the industry in that there's obviously a challenge. It's a challenge on a normal day, but I effectively work for the 9 CEOs of the 9 largest air carriers in America.
And they're crying to reopen the government.
Oh, yeah. Well, they're not trying to reopen the government.
They're crying to
they're crying.
Yes.
Oh, no, absolutely. And it's everything from being on the phones to, talking to folks on Capitol Hill and letting them understand that, what's happening, especially with this new mandate to cut back, rolling up to 10% of flights. That'll hit them alone about $100 million a day, right? And then you look at the broader economic impact, which we estimate to be at least $250 million, if not, close to maybe $500 million a day. When you look at the hotel rooms and all the other things that go with travel, right? So it has a huge economic impact, as you can see from those images right there. These cuts that are being mandated really are going to effect starting today. Roll about 4% till Monday, and then that scales up to 10% by next week. All because not for anything that the airlines have done or anything the American public has done. Unfortunately, these are just the victims of bad politics up on Capitol Hill.
Were the airlines prepared? Was there already a contingency plan in place and set into motion? Because we knew that this government shutdown was coming and that it wasn't looking likely like it was going to end anytime soon.
So the airlines are prepared. They have amazing teams. They know how to adjust. I got to say, if you told me on day 38 that we were dealing with a few delays, as you could see from those, and I think the average TSA line today across the country was like 15 to 20 minutes. Some got up to 30 minutes, so it wasn't that bad. Some as quick as 2 minutes if you're going through pre-check. So both the airlines, I think, were prepared in terms of being able to move folks around. The mandated cancellations is different, right? Yes. Having delays, we've seen a lot of delays, but actually very few cancellations up until this point. Now the mandated cancellations being driven for safety, right? There's real data that show that the pressure on the system is going to continue to build. Last weekend was some real tough days. Halloween night was really, really tough. That's going to continue to grow as the call-outs, both on the TSA and the air traffic controller side, increase, and the demand builds as we get closer to Thanksgiving. So I think the FAA is being smart and saying, okay, we're not going to wait for this thing to come to a grinding halt. We're going to ask folks to proactively cancel a certain number of flights. The head of the FAA, Brian Bedford, he's terrific. He's a former CEO of an airline. He totally understands what this impact means. He understands that it isn't just we canceled the flight. Managing crews from point A to point B, knowing that folks could potentially be stranded because their first flight was fine, but the second leg is now canceled. Moving those folks. And the big message is, use your airline's apps to the American public. They're not going to cancel you last second. They're trying to do it as proactively as they can. This mandate really just came down in the last 24 hours. But it's going to hit some folks hard, and I think the airlines are doing everything they can and really successfully so far in managing that customer service aspect. But it's tough, and it's all because a bunch of folks down the street here, not too far from us, keep saying no to a continuing resolution.
Exactly why you didn't want to serve in the Senate, as I remember, was this kind of stuff. But I flew back and forth to New York this week. It took me hours to get up and hours to get back. But I actually felt safe in the process. And I will say, I really went out of my way to thank TSA workers for showing up. I can't thank air traffic controllers because they don't let me in the tower.
You can right now.
But thank you. Because, these are actually all patriots who are showing up to keep the country running. And that's really important. But you're also a politician. Well, you were anyway. And I'm wondering how you see this moment in time, because it might well be the air traffic control system that forces an end to this shutdown. Do you think in the next couple of weeks everybody gets to the table here? Because you just painted a pretty ugly picture.
Yeah, they absolutely have to, because the pressure on the aviation system and the national airspace as we hit Thanksgiving is going to be absolutely immense. And I don't like using the word disaster, but I think the Secretary's right. If it doesn't end probably in the next week or the next 10 days, there is a chance they have to ramp up beyond 10%.
What would Thanksgiving look like? Disaster is the word J.D. Vance used.
Complete gridlock. Complete gridlock. Because the demand on the system is well beyond, it'll hit about 3 million passengers a day. That forced cancellation and unintended delays will hit really just historic proportions at that point. So this is already completely unprecedented.
Totally.
They didn't want to do it. There's a lot. I know there were some folks saying, well, where's the data? There's plenty of data. Just look at the number of call-outs we have. Look at the slowdowns we have. We had a situation in Burbank a month ago where they literally had nobody in the tower left. Right? Now, thank God they got creative, and San Diego stepped up and was helping land those planes. We had the same thing in Nashville, and Memphis stepped up and was helping land those planes. So everyone is pitching in. As you said, God bless these workers. Every time you walk through a TSA line, please say thank you to these folks. They have not been paid in over 30 days. You know what? The average TSA worker, they're getting $35,000, $40,000 a year, maybe.
I don't think
these
most
are
people
not
know
very
that.
well-paid individuals, but they keep coming to work. They keep doing the forced overtime because they know how important their job is to the national airspace, and they're just at the tip of the spear of the victims on this one.
Well, one of the vulnerabilities of the air traffic system is that it doesn't actually take that many people calling out for us to see disruptions. This has long been an issue. We've spoken about it many times on this program. We like to talk about long-term economic impacts, long-term impacts to the workforce. Is there any concern among the airlines that the shutdown is going to have damaging impacts even once the government reopens? Is it going to be hard to get air traffic controllers back into work?
So a couple things. If you looked at the number of individuals who have already retired in the past month, air traffic controllers, every day. It could be up to, every day. It could be another dozen every single day this thing goes on, because they're saying, look, they don't want to be part of this frustration anymore in the system. Maybe they're taking their retirement, whatever it is. Now, God bless them. There's about 10, 11,000 of them out there. We probably need 13,000 in the system. Then you look at the number of people that are looking to come in, right? Maybe they were scheduled to come in to be part of the training programs for air traffic control. We've seen those numbers decrease quite a bit. The government workers that need to certify all that, those are government workers. Well, they're all furloughed right now, right? So now they can't do their job to get the back end of the pipeline to get people into those towers as fast. So that's really kind of jammed up. So every day that this goes on, you're disincentivizing people from entering the workforce, and it's a great job. They're wonderful jobs. We have great schools. This administration's put money with new technology all over the country for this. So the adverse effects, other than we have delays and a few cancellations, to your point, on the long term, could be absolutely huge. And on the economic side, if I may, you're already seeing pullback from people booking flights. Airlines tend to be a lead economic indicator as you go into holidays. That's where people spend dollars first, and as those dollars get pulled back, they then get pulled back in your regular spends, both regionally and nationally. So when I talk about the overall economic impact being somewhere in the $250 million to $500 million a day, that's going to have repercussions for months, all the way through the holiday season, undoubtedly. So. And the system just doesn't come back on like a light switch.
Well, that's what I want to ask you. By the way, you can't get a seat on Amtrak right now, but how long does it take? We all know what residual delays are like, right? Maybe there's a big impact on the air traffic control system for like 3 hours, and it takes the next day for everyone around the country to get back on time.
If they come, maybe they've gone on vacation. Maybe they're taking some time with family. Who knows? So it isn't just a light switch. You'll actually need to see that data and make sure folks come in. And it's anticipated. Usually it takes a day or two. Sure. But there is a little bit of a lag there. And then how close is that lag to that holiday weekend, and how much have people actually pulled back? And right now, because the airlines have so much flexibility for the customer, people aren't canceling just yet, nor should they. Nobody should cancel. The two big messages are: don't cancel your trip, because you can wait right up until the end, really, before you cancel, if you had to do that. Secondly, it's safe. The safety is not the concern, because that's why we're canceling flights. That's why we're slowing things down, to ensure that safety. So anyone who is traveling feel 100% safe and secure about the flights that they are taking. Think of it this way: no pilot would ever get in an airplane, and take off if they thought it wasn't safe, right? That would be crazy. So no, the system itself is safe. It is just in a bit of this inadvertent logjam. So it's frustrating, but you go back to your original question. I love the challenge. I've managed everything from a COVID pandemic to now, this is child's play.
Well, that's why you're here, I guess, as a problem solver. Tyler, I wouldn't want to have to put this jigsaw puzzle together, though, with all these routes.
I mean, definitely not. But to continue on your politics expertise, you mentioned these airlines are talking on Capitol Hill. We know that CEOs were at the White House. Can you give us any insight into what the talks are actually looking like when it comes to President Trump's involvement? We know to resolve the last shutdown, it really was pressure at the airports. Have you gotten any indication that this is going to be perhaps the thing that tips this over the edge to reopen the government when it comes to President Trump's view of the situation?
Interesting. So a couple aspects. Number one, we are definitely hearing, at least on Capitol Hill, that things are moving. There are discussions happening. The last I heard, and don't quote me on this, don't make it public or anything. But I believe the Senate is going to be here through the weekend working. So that's a good sign, right? So that's a good sign. They wouldn't be spending their time here if they didn't think they were making some real headway. They know what this new mandate out of FAA really means. Secondly, of course, whether you're President Trump or Schumer or Thune or the FAA, or everybody should be putting kind of pressure on the system, not on one side or the other, but whatever that next bill is, vote for that one. That next bill, I don't care what party you're from, vote for that one and get this thing opened back up.
A message direct to the lawmakers. Kristen Nunu, Airlines for America President and CEO, of course, the former New Hampshire governor. Thanks so much for joining us here on Bloomberg. We're going to have much more at 5 p.m. Eastern. Come back and join us in the late edition of Balanced Power. Stick with us. This is Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed, we are back from Denver, from Schwab Impact. We are back here at Bloomberg headquarters in New York City. Carol Master, Tim Stanovic. And I was going to say Friday, but I feel like it's not so Friday when it comes to the equity markets.
Although, if you're long.
Yeah, and we're off our worst levels, Tim.
We are still down 0.6% on the S&P 500, the NASDAQ composite down over 1%. Charlie Pellet's going to have a full update in just a minute. But like Carol said, not a Friday if you're long this market.
No, it's looking like we're down, 2.4% for the S&P 500 for the week overall. So we have seen, it feels like a little bit of a change in the narrative. A risk-off week. It saw stocks hitting a tech rout. Tech-heavy NASDAQ 100, by the way, on track for its worst week since April. So we have seen, going up for such a long time, hitting some records. And then as you can see in that chart, for those who are watching on TV and on YouTube, for those who are listening on radio, yeah, we've come off our best levels of the session when it comes to the NASDAQ 100. Keep in mind, it is on track for its worst week since April. Remember back then, Tim? That's when it hit a bear market.
Yeah, so-called Liberation Day. I'm not going to forget that anytime soon. So that's the backdrop for our conversations for the next hour right here on Bloomberg Business Week Daily. Also our backdrop, everything happening at the nation's airports. What's going on at some of the typically busiest airports because of the government shutdown, the effect on travelers, the U.S. economy, and on the airlines. And
Karen Kimbrough, she's chief economist over at Linked, and she's going to get into the U.S. labor market. This should have been a jobs Friday. It ain't because of the government shutdown, but we're going to see what she is seeing on their platform.
Also, the CEO of Axon Enterprises joins us on earnings, acquisitions, and investors just dumping shares this week.
Yeah, and then Perry Peltz and Matt O'Neill of Can't Look Away, the case against social media. This is a Bloomberg original investigation. It's based on Olivia Carville's reporting about social media and kids and teenagers. You're not going to want to miss this. So that's coming up a little bit later on this hour.
All that ahead on Bloomberg Business Week Daily over the next hour. First, though, a check on the day's trade and top business stories. He is glued to the terminal. Charlie Pellet.
Thank you very much. We are looking at a down day here. A lot of red on the screen. Not such a great day for the bulls as we've got 2 hours to go ahead of the closing bell. The Dow, the S&P, NASDAQ, all lower. You guys alluded to the weekly numbers, down 2.3% on the S&P 500 index. Here's what's going on right now. We've got the S&P down 41 at 66.78. That is a drop there of 0.6%. Dow Industrials down 174, lower by 0.4%. NASDAQ right now, the composite index down 1.1%. The final stretch of a risk-off week saw stocks hit by a tech rout. Worries about weakening in key areas of the economy, lifting bonds the 10-year. 4.07% with the 2-year, 3.53%. Gold up $30 the ounce, back above 4,000, 4,007 now on spot gold, up 0.8%. West Texas Intermediate crude up 0.6%, 59.78 the ounce, and Bitcoin 59.78 the barrel. We're talking gold here. Black gold right now, WTI up by 0.6%. Bitcoin now higher by 1.4%, 102,500 on Bitcoin. What about those travel stocks as an economic indicator? Expedia Group raising its full-year gross bookings and revenue outlook. Expedia shares surging now by 17.5%. Airbnb also reporting last night the stock lower. Airbnb down now by 1.3%. Recapping, S&P down 0.6%. Right now the S&P is at 66.78. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, got it, Charlie. We'll be back to Charlie a little bit later on. Hey, listen, I got to say, with what's going on around airlines across America, Tim and I saw it firsthand. We both had trips out of Denver, coming back from Schwab Impact. I was headed to Newark. You were headed to LaGuardia. And we were watching as we were finishing up our
flights
broadcast.
were supposed to leave 10 minutes apart.
Right. And you were like on time.
I was fine.
Everything was fine. Not so for me. At 2:48 p.m. Mountain Time yesterday, my flight from Denver to Newark, this is the text I got. It's got a new departure time due to air traffic control constraints and staffing during the government shutdown that are affecting operations for all of its airlines. I got to say, I ended up with 3 delays that would come my way. They did cite specifically the FAA and the air traffic control staffing shortages. I finally took off almost 8 o'clock from Denver. That was about 10 o'clock our time, 2 hours behind. I'm not alone in this, Tim.
No,
you know that.
You're not. Airlines across the U.S. have canceled flights scheduled for the coming days as the longest government shutdown in history has been snarling air travel and forces thousands of passengers to change their travel plans. Just in the last hour or so, we heard from Transportation Secretary Sean Duffy, who said that U.S. flight cuts could reach 20% if the situation worsens. It's at 10% as of today.
Yeah, all right. So we're watching this closely. I will say last night at Newark, it was so busy, just all these flights. It looked like people trying to get in. Let's get to Bloomberg TV markets correspondent Nora Melinda. She follows the markets, but she's also watching the nation's airports for us on this Friday. She's on the ground at Newark Liberty International since early this morning. So Nora, what are you seeing and hearing? Does it feel like there's stress and strain in the system?
Well, lots of disruptions in focus today as we look across the nation, but it is important to put this size and scope into perspective here. So we do have about 3% of flights across the United States that are canceled this today. But of course, this is not as bad as what we've seen, maybe 4 or 5% cancellations during a major weather disruption here. Here at Newark, I mean, things have been decent. I mean, we've seen some ebbs and flows, of course, in traffic, but I would say largely steady here. About a 5-minute wait if you're headed through security here. Of course, we do have long lines here at security because it is one security line here in Terminal A that leads to all of the airlines. So we have been talking to some people here on the ground, Carol, who've just been discussing and talking about, of course, the threats and anxieties heading into the holiday season as we are just a couple weeks away and a lot of people anxious about what that could mean for potential flights and delays if this were to continue here.
Yeah, it's kind of what everybody was talking about yesterday in line to get through security was that these TSA agents are not getting paid. They're going to work getting paid. Our experience over the last week was actually pretty great through TSA, and the agents were extremely helpful and they were courteous, and we were grateful that they were showing up to work, and certainly grateful to the air traffic controllers as well. You mentioned the passengers, Nora. As you mentioned, you've been speaking to some of them. Where are they trying to go? Are they able to get there? How are their spirits? Are things looking kind of okay today?
So there are some passengers that are getting some steady flow. We did see a lot of volume earlier in the day. You know, some of the speculation here being perhaps the fact that people are trying to get early flights just in case there are some delays. But I did talk to one woman in particular, a cosmetic surgeon here that is trying to go from EWR to Barbados, but accidentally was unable to get that flight due to a cancellation and was redirected to JFK Airport for a flight that was actually an hour earlier than what the initial intent was. So of course she didn't make that flight either. So very much disgruntled sentiments from some individuals that we were talking about here on the ground. But of course, you did mention, Tim, the workers here. We do have a lot of TSA agents that we are hearing anecdotally here at Newark Liberty Airport that are still coming into work despite the fact that they have not received a paycheck since the government shut down on October 1st.
Yeah, it doesn't seem right, which is why I know you and I, every time we saw a TSA agent, we're like, thank you, thank you, thank you.
What takes longer to get from Newark Liberty International Airport to JFK or to get from New York to Barbados?
I don't know.
That's the question.
That's a good question. Wouldn't we all like to find out, right? All right, Nora, thank you so much. Bloomberg TV markets correspondent Nora Melinda. She's on the ground at Newark International. All right, we want to stay on airlines, and we're curious about what's going on, you know, at Newark, but around the country, and, you know, ultimately, what could be the impact on the carriers themselves, especially if we see a reduced flight schedule. Also on the ground at Newark Liberty International Airport is Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst George Ferguson. George, there you are. You just flew in, right?
How you doing?
Hi.
I did. I just came in. Hi. Hello. I just came in from Miami. Yes.
How did it go?
Yeah, it was pretty smooth. Like I would expect when they knocked down, you know, the initial call was 10%. Nora Melinda said maybe less than that of flights to the 40 most important airports. I'd expect that things would run a little easier. I feel bad for people that had their flights canceled, but I think if you're going to a core market for an airline, and like, you know, I was coming up from Miami, that's pretty core for United. Airplane was absolutely full. I don't think there was another seat empty on it. They're going to get that, you know, that traffic through, right? Because that's they're going to look at the most efficient and you know, best profit making flights and make sure they push them through.
George, we are less than 3 weeks away from one of the busiest travel days of the year. That would be the time around Thanksgiving. And I'm wondering if we do see continued government shutdown, these workers not getting paid, if indeed what happens comes true, what Transportation Secretary Sean Duffy said earlier, that we could see up to 20% disruption. What does the holiday season look like for these air carriers?
Yeah, I mean, that's what we're concerned about, right? So we have a report that'll go out Monday on the Bloomberg terminal. Look, we were looking at sort of total seats put into the market during 4Q. 4Q isn't typically a very busy time for the business, right? It's not a high profit season for them. And November is actually the lowest of that season. It's got the least number of seats flown. But it's deceiving because, November's when the business traveler kind of stops, right? I was just down at a conference in Miami. That's about the last conference I think you'll see before we roll into Thanksgiving here in the U.S. So business kind of rolls off here in the middle of the month, and leisure picks up very big, in a big way by the end of the month. So I think if we don't have the government shutdown stopped, Thanksgiving will be an absolute mess because I would expect there'll be even more cancellations. And then you get another ebb between Thanksgiving and Christmas. Hopefully we're not talking about sort of Christmas year-end sort of celebrations, having the government still out by then. I don't think they can make it that long, but.
Hey, George, just real quickly, when do you start to kind of rewrite some of your, expectations in terms of earnings or revenues, the balance sheets, the financials for the airlines? Does this have to go on for several days, for several weeks before it becomes something material for the big airlines and all of them, really?
Yeah, I think you're right on it, right? I think if we get into Thanksgiving and this is still going on, we're cutting back capacity, then we're going to start to get much more concerned and start rethinking about where profitability, profits, cash flow go for 4Q. Right now, this could even be a slight pickup where airlines sort of knock down their least performing flights and get maybe a little bit of a margin pickup, maybe profit ebbs a little bit on it, but right now it's not major. Get into Thanksgiving and we've got an issue on it.
George, before we let you go, you were down in Miami. You were there for a conference on corporate jet travel. Just give us an update there. Yeah. It's an area that certainly you and other analysts watch. Those flights not disrupted right now.
No, and that's an advantage of having having your own airplane, private aviation. And one of the reasons people go there is because of that, less security issues. That market continues to stay strong. I'm pretty impressed. We've had earnings this week from Bombardier and Embraer. The backlogs continue they're steady. They're not declining, even as those manufacturers increase the number of airplanes they build. And there's been a number of people that came to private aviation after the pandemic, and it appears they've stuck around. And so that market doing pretty good. I'd say pretty nicely.
All right. Good to know. Good to know, especially, I guess when we get on our private jet for our next trip. Yeah.
Private jet?
Yeah, George, you have that, right?
I don't know. George is at Newark, not Teterboro right now, so we know how he got back from Miami.
All right, safe travels to the rest of your way home. George Ferguson, Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst. Of course, George Ferguson there at Newark Airport. Hey, we do want to mention a headline crossing. Oracle, a group of about 20 banks, is providing a roughly $18 billion project finance loan to help fund the construction of a data center campus tied to Oracle, marking the latest mega debt deal to help bankroll the AI, artificial intelligence boom. We know Meta has tapped the debt markets. Alphabet has tapped the debt markets. Shares of Alphabet, the market's been under pressure today. Still, shares of Oracle are down about 3.3%, but Tim, they've bounced off their worst levels of the session.
Yeah, some of the banks mentioned in this Bloomberg piece include BNP Paribas, Goldman Sachs Group, Mitsubishi UFJ Financial Group. Those are administrative agents on the deal. This according to people with knowledge of the matter who asked not to be named discussing a private transaction.
All right, we want to get back to kind of the things that are coming at investors in the U.S. economy. Certainly the economic activity, perhaps out of the airline industry, if it's prolonged, this impact as a result of the government shutdown could impact, and most expect it would if it's a prolonged, even further shutdown in terms of the impact on the U.S. economy. I will say we did get a data point, U.S. consumer sentiment tumbling to near the lowest on record today as the government shutdown weighed on the economy and the outlook, and high prices soured views about personal finances. Consumers perceive pressure on their personal finances from multiple directions and anticipate the labor markets will continue to weaken, Tim, in the future. That's according to Joanne Su, who's director of the survey. So there's concerns about the labor market.
I want to bring in Karen Kimbrough, chief economist at LinkedIn, for a check on the health of the U.S. labor market. She joins us from Dallas. Karen, you have incredible data, real-time data on LinkedIn. This is a source of alternative data today. In one word, how would you describe the state of the labor market in the U.S. right now?
Softening.
Softening.
It's been a really Yeah, it's continuing to soften. The data that we have through the end of October tells us that the labor market is just on its continued softening path. And that kind of means there's a little bit of fragility there.
How much? There's a little fragility, and like, where are you seeing the fragility? Especially when we constantly, Tim and I talk about the K-shaped economy, and we've had, we've seen resilience in the U.S. economy, but a lot of it is, spending by the higher income folks, and we've, it's kind of underlying weakness among low and middle income households. So those higher income Americans continue to drive growth. Are we seeing that disparity in the labor market, that higher paying jobs continuing to hire and lower not, or what are you seeing?
Yeah, actually, it's a little different than that. So I would say there's, as I said, some fragility, but actually some bright spots. So there are sectors, think of like construction, leisure and hospitality, that are hiring. And those are segments that often will hire, hourly workers, lower income workers. So ironically, in some sense, some of the sectors that are doing a little bit better in terms of hiring rates year over year are the ones where we see more hourly salaried workers. So there are bright spots. There are challenges. One thing I would kind of mention is that the story we're telling didn't change appreciably between last month and this month. It's not like it took another huge leg down. It's more like it's kind of continued same softening of decreased hiring rates. Confidence is down. I heard you mention the consumer confidence overall. The confidence we see in workers and their ability to find a job and keep a job is also a little bit weaker now because they can see how competitive the job market is.
What about trends that you're seeing in real time on the LinkedIn platform? Hiring trends. Hiring is down. We know that. What about other trends that you're seeing? What can you tell us?
Yeah, absolutely. So we are also seeing increased mentions of layoffs. And these are, of course, just mentions. These people engaging on the platform talking about it. We're seeing by our own measure of quits, so it mirrors the BLS's measure of quits. We are seeing quits that are also coming down just slightly. So people are kind of staying in place, not quitting as much. And that's usually a sign of a more fragile market. But I think the biggest trend that we're seeing right now is really this fact that every industry seems to be having a different experience. So if you think about what employers are looking for, they're posting jobs on the platform, and they are all really quite a lot of them are looking for skills like AI literacy. So that is one of the fastest growing skills. They want candidates who can come in and actually know how to use AI to increase their efficiency and productivity. So it's not like being scared of it. They're looking to extend their adoption. So 70% increase in jobs that are looking by employers looking for AI skills. We think more than 85% of the members on our platform are in roles that are going to be transformed by AI. So we're in this period of like evolution of the job market, but it's going to take some time.
All right, we've got to run. Hey, listen, great stuff, and so appreciate your time on what's supposed to be a monthly jobs report this morning, but it's a little bit of a different jobs, right? Welcome to Bizarro World, everybody. Karen Kimbrough, she's chief economist over at LinkedIn. Hey, coming up, the company best known for its tasers. It's been on fire over the past decade, but caught investors off guard. We'll explain.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all declining right now. Yes, off session lows, but still a lot of red on the screen right now. S&P 500 index on track for a losing week, looking at a loss this week of just about 2.3%. So here's where we stand again, underscoring we're off session lows, but the S&P right now is trading lower by 37 points, 67.83, drop there of 0.5%. The Dow down 144, decline there of 0.3%. NASDAQ Composite Index down by 1.1%. The Russell 2000 Index of small cap shares doing a little bit better, down just 0.2%, but the Mag 7 Index down now by 1.5%. 10-year yield, it is currently yielding 4.07%, with the 2-year 3.53%. Spot gold is up $29 the ounce, holding about 4,000 right now, 4,007 on the precious metal, up by about 0.7%. West Texas Intermediate crude up 0.6%, $59.80 for a barrel of WTI, and we have got Bitcoin right now pushing higher by 1.6%, 102,738 on a Bitcoin. Sweet Green shares after earnings plunging after cutting its full year outlook. The salad chain trading lower now by 10.8%. Also after earnings in the restaurant industry, quick service restaurant Wendy's reporting sales beating estimates by declining less than expected. Wendy's up today by about 0.4%. So again, recapping, the Dow, the S&P, NASDAQ, all off session lows, but the S&P down 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, folks, here's one stock that's actually bucking the downward trend in today's session. We're talking about Axon Enterprise. It's up about 2.5%. Keep in mind, it dropped about 8% yesterday. Let's lay it out for you, because we did see a bunch of analysts cutting their price targets on Thursday following earnings on Tuesday, late Tuesday. This is according to data compiled by Bloomberg. So 5 changing their price targets by an average of 16%. One did raise a price target by about 1%, no changing their investment recommendations. The company, most known for its tasers, but it's been expanding what it does. As I said, reported earnings Tuesday after the close. The stock's been under pressure, but it has had quite a run, up about 26% in the past year, down more than 30% since hitting a record in early August. And I do think it's worth noting, the stock is up more than 3,300% since the end of 2015, so roughly the last decade, when it was just a $17 stock. Now it trades at more than $600 a share. I wanted to lay it out because it has had quite a run, and there's been a lot going on at the company.
Well, back with us is Rick Smith. He's the founder and CEO of Axon Enterprise. He joins us from Scottsdale, Arizona. Rick, good to have you back on the program. How is business right now? And the reason we ask is because investors sent the stock down 20% intraday following the latest update and news of a second acquisition. So just give us a business update to sort of start out here.
Yeah, I'd say the business is the strongest it has ever been. I've been a public CEO for like 24 years now, and this is the 5th time we've come in, reported the business with really strong operating results, and then the stock drops. So I just tell our people, don't even look at the stock price. It's going to move around for a bunch of factors. Where we stay focused is building the long-term business, and every previous time it's recovered, and we're going to stick with that playbook. And if you look at where we're growing from some of our new investments, from counter drone and Fusus real-time crime centers and artificial intelligence, our bookings in those areas are up almost triple year over year. And then we just announced 2 new acquisitions that is our entry into the mission-critical voice space, which we think is going to be a huge opportunity over the next decade.
So what are you guys seeing that investors and analysts are not seeing? Because the narrative that you have and your tone doesn't necessarily match the reaction from the street.
Yeah, I mean, part of this, excuse me, was we did have a GAAP operating loss, a tiny one, but that's largely because we have this very unique incentive program we call the Exponential Stock Plan, and all of our employees participate. And when the stock does really well and we're hitting our operating targets, stock comp goes up. And so paradoxically, the better the operating business does, the more stock comp goes up. And that was the biggest mover. But if you look at the adjusted EBITDA, that if you take that noise out, we managed to turn in, we've got like 7 consecutive quarters, over 30% top line growth. And we turned in right at 25% or 24.9 adjusted EBITDA while maintaining the growth rate. And if you listen to our president, who used to be the head of sales, he's very close with the customer. He was pretty bullish on our conference call, telling people we think the fourth quarter is going to be a monster from a bookings perspective. So we're feeling really good.
All right, I want to come back to that monster for the fourth quarter in terms of bookings, but I want to say that, Rick, you get this. You've been a CEO for a long time. When you're kind of priced for perfection, investors can be like, well, wait a minute. Citizens, an investor there, Trevor Walsh, said the company had little room for error in its report and made investors' concerns about valuations. Stock trades at 398 times current earnings, or nearly 94 times future earnings. You've got a $47 billion market cap with projected 2025 earnings of $2.7 billion. So your price to sales, or at least in terms of your market expectations, I mean, there's a lot there that they expect everything to kind of just hit perfectly. There's also concerns about tariffs and the government shutdown. There's also concerns that you just did a second acquisition here less than 2 months after you did that agreement to acquire Prepare, which was an AI-powered emergency communications platform. So why is that valuation, or why is that, market cap versus sales justified?
Well, first, I'm probably going to get a note from my general counsel telling me not to use words like monster when talking about future performance. So we're really confident.
Is your phone going off right now next to you?
Yeah, it probably is. But look, the core business is really strong. GAAP EPS is a really hard way to value the business, because I talked about, the stronger the operating business, the more GAAP EPS gets punished with stock compensation expense. So I think something like looking at a multiple of revenue is probably a little more like going to be a little more instructive. But look, yes, we are valued as a growing company that's got to continue to deliver. And we've been delivering. I think we've had, like I said, 7 quarters of over 30% growth. And it's our job as a management team to keep delivering on that. And, if the stock takes a breather, that's kind of outside our control. And I'm an optimist. It creates a great entry point for some of our long-term investors. And we're just going to keep chugging away, working on the business to make sure we keep growing. And those 2 new acquisitions, they're a big piece of it. We made a very strategic move to move into mission-critical voice. We think AI plus voice now is a very magical moment. And there's a lot of AI hype out there. But look, 10% of our core business bookings this year are going to be on our AI services. So we're really delivering value to our customers. And we see doing that in 911 call centers and then extending across, any sort of mission-critical voice communication is going to be a huge business. And we found 2 very complementary businesses. Prepared allows us to go fast into any 911 call center. And then Carbine allows those customers to then go deep and get out of the business of running all the hardware and move their entire 911 infrastructure to the cloud. And those 2 together, we think, are like chocolate and peanut butter. It's going to be a great combo.
Well, I do want to ask you about those monster bookings for the fourth quarter. But having said that, tell us about, you said 10% of the bookings this year are going to be on AI services. How much is still tasers? Like, give us an idea of what the business is today and kind of where you guys are positioning it, especially as you take on these acquisitions.
Got it. Well, I'm terrible at details, but I can tell you the taser business it continues to grow, even though it is a fairly mature business in the U.S., where the real opportunity is our new Taser 10. For the first time, we have a weapon that some of our customers in Europe are saying is a better weapon for their officers than even a handgun. And if we can prove that out this winter, we'll be testing it above the Arctic Circle in heavy, cold conditions with heavy clothing, which is historically been our Achilles heel. If we succeed there, we could see Taser really become a driving force across Europe and the rest of the world outside of the U.S. So even though it's been our core business from the beginning, Taser, we think, could be the growth engine that pulls body cameras, drones, AI, and all our other services right along with it.
Well, let's talk about those other services, because if I go back into your earnings and look at 2017, connected devices accounted for close to 70% of your total revenue. Software and services was just over 30% of revenue. If we fast forward to just in recent years, last year, that pretty much flipped, where connected devices was 40% and software and services is now close to 61% of your business. How big does software and services get? What's the ultimate goal there?
Well, that's sort of like asking me which of my children is my favorite. I love them all.
But I mean, one of those has a higher margin, right?
Oh, yeah, one has a higher margin, but when you can do hardware and software together, when you can do body cameras, drones, in-car cameras, and the software layer, you can just do so much more magical things for the customer than if you're a pure software play. So yeah, investors love the software revenue and margins, and so do we, but the hardware is also growing and really contributing, and it's when you bring it all together that we think the magic happens, and that's our real competitive advantage.
Hey, one of the things I want to ask you about is there's been a bunch of reporting. There's a story about Flock Safety, which is one of your competitors, to be fair. And what's interesting is, I guess, you guys are all doing deals with the Amazon Ring and this camera. And, you know, footage is certainly being shared with law enforcement, whether it's ICE and others. Again, there's a lot of reporting that's being done about this. And at the same time, some community backlash. So are you concerned about community pushback as we have more and more surveillance that is out there, and that is a big part of your business?
So that's one reason we're really proud of the approach we take. We have an Equity and Ethics Advisory Council that is comprised of people from communities of concern, particularly Black and brown communities, right? If we're really talking about over-policing, I think that's the communities of most concern. And so all of our approaches, we run through this ethics review up front with people that are naturally very concerned and skeptical on these issues, and we build safeguards in that help minimize the risk of abuse while maximizing the opportunity. Look, when a private consumer buys a camera to keep their home safe, they're buying it not to watch their dog when they're at work. They want to stop criminals from stealing their stuff, breaking into their house. I actually had a vehicle stolen years ago, and it took me days to get the video from my home security system to the police. What we're doing with Ring, and by the way, we encourage open sharing standards, like Ring is sharing with our competitors. We openly share on a reciprocal basis with our competitors. We think this is like doing the right thing. With all these cameras out there, we should be using them to deter crime and criminal activity. And we think you can do that without having to track everybody, you know, where they go to in their personal lives. We're talking about detecting dangerous criminal acts and deterring those acts in the first place.
So that's with a lot of local law enforcement agencies. And I'm curious about the conversations that you have at the federal level with the Department of Homeland Security, for example, and the way that their officers do or do not use your products. What are the conversations that you have at the federal level with DHS?
Yep, we certainly work with the federal agencies as well. And I think where there is some controversy is like, look, people have different perspectives in different states and in different cities, and our system is built so that, like, hey, if you are, you know, a city in a very deep progressive area, you can choose who and how you share your data. And look, if you're in a border town in a red state and you want to be more collaborative with those federal agencies, one thing I'll tell you, it's not our position to try to dictate how government customers, and that's who we sell to. A private corporation shouldn't be telling government how to use their own data. But what we do is we enable them to make decisions so those elected officials can be responsive to their voters, and we can be responsive to their communities.
One last question. 2 acquisitions in as many months. Is there more to come?
We're probably going to take a little breather here. Okay. We were not expecting when we went into this. We thought we would make 1 acquisition, but we found that these 2 were really so complementary that, you know, sometimes you got to move quickly when opportunity knocks. And so, yeah, this was unexpected, but we're really excited about it.
All right, totally get that. Rick, thank you so much. As always, love checking in with you. Rick Smith, he is founder and CEO of Axon Enterprise, joining us there from, where is he?
He's in Arizona.
He is in Arizona.
It's nice and warm there.
Scottsdale.
Yeah.
Yeah. You know where else it was warm?
Where, Denver?
Denver.
It was warm in Denver.
It was probably warmer there than it was here in New York.
It's getting warmer here in New York right now if you're an equity trader, because stocks are actually off their worst levels of the day.
We're actually moving up towards our best levels of the session. So how about that after a week where we've seen basically a risk-off trade? Hey, speaking of the trade, let's head on over to Charlie Pellet for another check on the Friday session. Charlie.
Here's what's going on. We do have the Dow, the S&P, NASDAQ, as you guys pointed out, well off session lows right now, but still looking red on the screen. On the week, looking at a loss of roughly 2%, but the S&P right now trading lower by 24 points, 66.96 where we stand right now. We got the S&P down by roughly 0.4%. Dow Industrials now lower by 69, drop there of 0.1%. NASDAQ down 0.8%. And that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. I want to bring you now to Capitol Hill, where Senate Minority Leader Chuck Schumer is making comments on the government shutdown.
Negotiating longer-term solutions to health care costs. Let's do all 3. I've spoken with my caucus, and Democrats are offering a very simple compromise. Democrats are ready to clear the way to quickly pass a government funding bill that includes health care affordability. Leader Thune just needs to add a clean one-year extension of the ACA tax credits to the CR so that we can immediately address rising health care costs. That's not a negotiation. It's an extension of current law, something we do all the time around here, as we all know. But we also offer this. Let's create a bipartisan committee that will continue negotiations after the government reopens on reforms ahead of next year's enrollment period to provide long-term certainty that health care costs will be more affordable. This proposal reopens the government and ensures working families who are shopping right now for their health care get certainty and financial relief. While open enrollment has begun, insurers can update their rates after we pass a simple extension of the tax credits. With this approach, we do not negotiate health care in the shutdown as Leader Thune has maintained he wishes, and the American people get the tax credit extension they want. That is what many of our Republican colleagues have floated over the last 6 weeks as a compromise, a one-year tax credit extension and reforms to the credit beyond that. We will agree with the Republican request not to start negotiations until after the government reopens. All Republicans have to do is say yes to extend current law for 1 year. It makes sense. And since what we're proposing is only a simple extension of current law, the Senate could do this within a few hours. This is a reasonable offer that reopens the government, deals with health care affordability, and begins a process of negotiating reforms to the ACA tax credits for the future. Now, the ball is in the Republicans' court. We need Republicans to just say yes. I yield to Senator Peters.
Thank you, Leader Schumer.
Senator from Michigan.
Thank you, Madam President. Madam President, Republicans.
All right, folks, taking it to the floor of the Senate there. You are listening and watching Bloomberg Business Week Daily. Carol Master along with Tim Stanovic. You just heard from Senate Minority Leader Chuck Schumer with a proposal to end the government shutdown, now the longest in history, in U.S. history, 38 days and counting. The proposal reaching out to Senate Majority Leader John Thune, saying he needs to add an extension of the ACA. We're talking about the Affordable Care Act, ACA subsidy to stop the gap or to a stopgap. Yeah, so that's what he's looking. And he's basically saying the ball now is in the Republicans' court, but this is the back and forth that we have seen.
Yeah, meantime.
Or not seen really much of.
Yeah, I mean, he did say earlier this week, too, that he was not going to negotiate in public. He also said that, he spoke to the press this after the election earlier this week. But here he is, out with his proposal, out with Democrats' proposal. Meantime, Carol, stocks off their worst levels of the day. In fact, at their best levels of the day. The S&P 500 down only 0.2%. The NASDAQ composite down only 0.7%.
We will continue to monitor. And I will say we had very much a risk-off trade today. Now, most names in the S&P 500 are higher. All right, we want to switch gears for a moment. Something that we've been talking about a lot here at Bloomberg. It is Can't Look Away, The Dangers of Social Media. It is a documentary that follows a team of lawyers taking on the big tech giants, advocating for families whose children have been deeply impacted by social media. Now, the original reporting of Bloomberg News investigative reporter Olivia Carville is throughout this film, but there's a lot more reporting too as well. The Bloomberg original investigation exposing the real-world consequences of harmful social media algorithms. We've got a clip of the documentary, and we're hoping that we can actually share it with everybody. It's a little bit of a Friday here after a very busy week. Here we have it. This, folks, can't look away, the dangers of social media.
These companies have been gaslighting us for years.
This is all about money.
The purpose of all commercial ventures is to create a demand.
Our children are the casualties.
We need to take back the power from these companies.
They created a dangerous situation and then manipulated these kids.
They know the levels of addiction, sexual abuse. They know the levels of suicide. They're not showing our kids what they want to see. They're showing you what they can't look away from.
And that is the Bloomberg Original Investigation. Can't Look Away, the case against social media, which is now available across Bloomberg platforms. Perry Peltz and Matt O'Neill are the directors and producers of the documentary, and they join us here in studio. Welcome, welcome to both of you. I got to say, we've talked to Olivia a lot about her reporting. We know you did as well. Perry, let me start with you. When you guys decided, I don't know, I guess when you first started reading her reporting, what struck you?
What struck us, and first of all, thank you both for having us. We really appreciate it. What struck us is that what's happening is these companies are looking at families, at kids and parents, and putting the blame on them. This is actually a public health crisis, and there's nothing short of that. And I think that Olivia's reporting really speaks to the fact that this is an algorithm problem. It's not a bad parenting, it's not a bad kids issue.
Yeah, the big question that I have as a parent, and in a world where we're surrounded by this stuff, Matt, is what is the solution here? Because these companies don't necessarily have the incentive to get us to look away.
Well, I think the first part of the solution is exactly what we're doing, which is starting a conversation. Because a lot of these things, when we started this reporting, we had no idea. I had this vague sense that social media was bad. I'm a parent. I have 2 young boys.
We talk about it so much, like we understand like the problems of social media.
But what I didn't realize was that social media algorithms were feeding suicidation to children, body dysmorphia to children, that kids are being targeted with the absolute worst things on the internet, and it's relentless.
Unpack that. What do you mean by that?
Well, what happens is that these algorithms start off in a way, if someone lingers on a sad moment because they broke up with a girlfriend or a boyfriend, the algorithm catches that and it goes into what some people have called a TikTok hole, where it continues to feed more and more sad content that goes deeper and deeper. There's a whistleblower in the film that actually explains this in more detail who used to work at TikTok.
Well, this is what's interesting, Perry, right? It's not just about what you search on. It's basically what you linger on. And the social media companies, and we're so careful when we talk about this because it's alleged, but this is where the whistleblowers come in and provide some insight about what the companies actually knew.
The whistleblowers, as well as internal documentation from these companies. What they're prioritizing is having kids stay on these platforms, engagement. They're not prioritizing safety. So what happens is they bring in neuroscientists, they bring in behavioral scientists to actually program these algorithms so that kids stay on as long as possible. And thus the title, Can't Look Away From. They're being fed the material that they actually can't look away from.
Because that's good for business. Like I said, the incentives are not aligned with getting kids not to look at this stuff. If you show them what they don't want to see, they're going to do something else. We live in an attention economy. So is there a solution in a world where the incentives don't match from a public health perspective?
The incentives have got to change because we right now, unfortunately, have a legal system in Section 230 that protects these companies in a profound way. It treats them as passive pipelines. They are not passive pipelines. Algorithms are company driven.
So what that essentially says, Section 230, is that companies, these social media platforms, are not responsible for the content that's on their platforms.
That's exactly right. They are treating them like bulletin boards, which is if you go back historically to 1996, before social media was even around, and you had these sites that were more bulletin board driven, they would say, it's okay, you can post what you want. The company is not responsible. But that's not what our lawyers would argue, the lawyers that we follow in this film, is what's happening here.
Matt, talk to us about the lawyers, because they really are, when you go up against big tech, you're talking about high-powered, expensive lawyers. This group of lawyers, it's hard not to be impressed by them. And what they ultimately figured out was the argument to do here.
It's an incredible collection of lawyers led by Matt Bergman, also Laura Marquez Garrett, who was that corner office big firm lawyer who left because of what she saw happening with social media and her concern for her own children. What Matt and Laura and the other lawyers of the Social Media Victims Law Center came up with is a novel legal approach which holds the companies responsible under product liability law instead of under the idea of Section 230, where it's the content.
Is that promising?
Well, it's made its way through the courts. Snap, in the case that's followed in the film, tries to get it dismissed with Section 230, and they successfully argue and give these families a victory, the first of its kind, that they can be held responsible under product liability law, and they've moved to discovery, and that case is making its way through California.
So when we talk about product liability, you know, Perry, I think of things like the tobacco lawsuits. And this is what you can think about, right? And I think about so many products that are out there right now that are facing a lot of scrutiny.
Well, let's go back to tobacco, to your point. How about opioids? It is another page out of the same playbook, which is basically to blame, in this case, the parents and the kids, and to not hold these companies and the companies to say they're abusing good products. That is not what we are, at least that's not what the reporting is suggesting. This is very, very different. These are algorithms that need to be changed.
I want to just mention, because when you do a documentary and we're at the high level and sometimes we have headlines, you have to remember that there are people, right? And you guys tell these stories. Olivia told these stories, whether it's Alexander Neville, who died because of taking a pill laced with fentanyl that he got on Snapchat. England Roberts died after she copied a strangulation video she saw on Instagram. It was in her feed. Jordan DeMay, 6 hours from initial contact by who he thought was a young woman, but wasn't, but was rather a sextortionist. He killed himself. I mean, telling these stories. I mean, in the film, you're in the bedrooms, you're talking to the parents, Matt. There's a lot of people that were impacted, and there are thousands of cases.
This is just the tip of the iceberg, and I appreciate what you were doing there because you're saying their names. I'll add Mason Eden to that, a boy who died by suicide after a breakup because he went down one of these TikTok holes where he was being fed content that actually told him to blow his brains out with a shotgun. Actually, these are the shocking sorts of things that many of us adults don't know are happening on social media, and these parents are taking the most incredible tragedy in their lives and turning it into change. Yes, they're holding these companies liable and suing them. What they're looking for is not necessarily monetary damages. It's for real changes to how these companies work. You asked about a solution before. If Instagram can figure out that I want a lawnmower before I know I want a lawnmower, or that I need a hair cream to try to grow my hair back, it can figure out how not to send content that promotes suicide to children.
Because you know what? My understanding, and I know you and I, we did a panel here, we did a discussion. Is it TikTok in China do?
It's a great question, because TikTok, owned by ByteDance, the similar app in China, has a shut-off time at night so the children can't access it. Instead of promoting whatever the kids are lingering on, it actually promotes practicing your musical instrument and doing math problem sets.
Amazing. Perry, what do you hope people run with after this film? We've only got about a minute or so left. What do you hope they do? They ask either their kids, or I don't know. What do you hope they do?
It's a really important question, because we don't want to scare everybody and not give them anything that's solutions oriented. And when Matt's talking about these families